Louder gaining on trade gates. We'll watch them in Madrid. Also the chip stocks, especially Infineon. It's a customer of SK Hynix, and that's reported to be buying $8 billion of top-end ASML chip-making gear. So mind the whole space. And finally, Bayer out of Germany. You've got Inclusive Capital Partners, the investment firm led, of course, by the activist Jeff Ubben, looking to sell a stake in Bayer. So we could see that driving EMEA healthcare stocks across that sector this morning, Anna.
So markets then dealing with headline risks still, very much focused in yesterday's session on the different interpretations of what is or is not taking place between the US and Iran. That seemed to be worrying some in the markets. For others in the markets, they said they'd seen enough from President Trump and they knew the limits to which he would push this, and that was in some ways important. And so we saw some risk appetite return to markets. What are we going to get today then? It seems a little bit difficult to call this morning's session because, as I say, an hour ago, we had negative expectations for futures, and now we have slightly positive expectations. The FTSE 100, though, not expected to be the epicenter of any positivity because, of course, of its weighting towards energy stocks. And in yesterday's session, energy stocks were one of the laggards, of course, and we saw the FTSE 100, as a result, one of the laggards in terms of the geography of all of this. So the FTSE is lagging a little today, at least at the margin. It's up, actually, but it's up 0.1%, whereas the STOXX 600 is up 0.2%. Maybe we won't make too much of that divergence. So flat to positive does seem the right way to sum up where we are at the very start of Tuesday's trading session then, Lizzie. What do you see?
Well, for some insight into what's happening in London, let's take a look at the sectoral picture, because bottom of the basket, you've got basic resources down 0.7%. You've seen the likes of copper resuming its losses after that brief bounce yesterday. Banks, second bottom of the basket, down 0.2%. The gainers today are retail, autos and parts, energy. Of course, we've got oil prices higher again, telecoms as well, and consumer products and services. And when we talk about that, we have to check in on what's happening with Push, and indeed it isn't trading yet, nor is Bayer. So some of those individual names that we had our eye on, not quite ready to be checked yet.
Let's have a look at some of the individual names that could be in focus. And the retail sector is by far and away the best performer. Kingfisher has had an update out, and that stock tops that particular sector. So that is up by 1.2%. Telecoms also not doing too badly. We've seen some M&A talked about in the sector. That was part of yesterday's story, of course. So we see a bit of appetite returning there. Of course, bond market yields is going to be something we're watching with that kind of sector in mind. Basic resources, as you've talked about, Lizzie, are to the downside. And in fact, the sector itself is quite split between gainers and losers. But interestingly, we do have almost all sectors in positive territory, even if the overall gains for these markets are not stellar. We're up by 0.25%. A bit of risk appetite returning or ongoing in these markets this Tuesday after the turnaround we saw from President Trump during Monday. Let's get some broader market analysis. We're joined by Dorian Carrell, who is head of multi-asset income over at Schroders. Dorian, nice to have you with us. Thanks for joining us. So do you think we've learned something important this week about how far President Trump will let this run? We went to $100 a barrel on WTI, and maybe it was that, maybe it was something else, but then we got a change of tone, at least from President Trump, and a change of emphasis. What did you learn from that?
Yeah, we're not sure it's the oil price per se, but if you look at government bond yields, you look at the 30-year, it moved up to nearly 5%. And, in the past, that's been a kind of line in the sand. We don't know, whether that triggers decision-making in Washington, but, when you look at all the interested parties here, everyone who has something to gain from de-escalation, we do think in the medium term that's where things are going. We've got a kind of impasse here. We've got 5 days, a little bit of time out, if you like, and we think that that, we will get towards something over time, but judging it minute to minute, second to second is very difficult, and you can see the markets are struggling with that.
And so in that context, Dorian, I mean, how do you just try? We were talking with Ben Jones earlier on the program, our earlier guest, talking about how you maybe take a step back from the daily headlines and try and invest for, depending on your time horizon, try and invest for the longer term. How are you managing to do that in this sort of environment?
I mean, I think you have no choice, right? You cannot invest for the tomorrow or the next day at the moment. We're income investors. We're looking 6 months, 12 months out. And what we're seeing at the moment is you're seeing divergence in monetary policy and fiscal policy. These are structural things. You're seeing that the rate of financing, the cost of financing is going up, notwithstanding what we're seeing with energy markets. And we think that will persist. So, that's our kind of backdrop, our framework for the long term. And it means that you look at fixed income and you look at the safer areas. You look at off the beaten track, maybe Australian credit. And you look at asymmetry. You look at how to get call optionality into your portfolio, and the most obvious place for us is convertible. So all of those things are a medium to long-term perspective. We have no view over, whether semiconductors will go up today, software will suffer. But as we look forward, we think there are tremendous opportunities caused by the volatility, the dispersion that's building, both through geopolitics, through economic concerns as well.
So your base case is gradual de-escalation. We were discussing earlier about whether this is the crisis that killed the taco trade, because of course it's not totally in the US's hands to end this, unlike, for example, Greenland or tariff wars. Are you comfortable buying dips in this environment, believing that President Trump won't want to go to the midterms with higher oil prices, for example?
Yeah, I mean, I think we're comfortable buying dispersion, where we see opportunities within sectors. So one of our concerns for the last few years has been that the cost of financing has been so low, real rates have been so low, that pretty much everything has been fairly cheap, especially in fixed income. And now, thankfully, finally, you're beginning to see dispersion. You're seeing movement between cyclicals, people are concerned about the long term. So I would say that we see opportunities. I mean, the speed of de-escalation, the probability of de-escalation is linked, as you say, to the midterms. We do think that matters. We think the Senate particularly is something that the administration will be looking at. The House of Representatives was pretty much discounted for the Republicans, but we think if the Senate goes as well, there'll be more tension. And finally, it's not just the US, it's China, it's Korea, it's India, it's the UAE, it's Oman. Everyone has a stake in this not escalating too fast. So if logic is being followed, we would expect gradual de-escalation.
Let's say that logic isn't followed and the war drags on. You say that you'd increase your exposure to gold. I wonder why you have faith in it making a comeback as a haven when today it's down for a 10th straight day.
Yeah, I mean, gold obviously became very correlated with equities, with risk assets, and so, it's hedging properties geopolitically and so on, slightly took a back seat. But when you think about it, we think energy particularly will do well in the near to medium term. But longer term, you've got the debasement trade. You've got inflation running too hot in the US. You've got real rates more or less negative, and you've got Kevin Walsh promising to cut rates into an environment of full employment. So if you add all of those together, gold is quite a nice long-term hedge against debasement in the US and against geopolitical risk generally. So longer term, it's attractive.
So that's part of your, if it's not your base case, that's part of the sort of more extreme scenario. On your base case then, Dorian, what's the strategy you're leaning into right now with this gradual de-escalation? What kind of investment strategy does that leave room for?
I mean, I think, if we go back 2 months, broadening out was working very well, and we think that will continue to work. So we look at European equities, we look at Asian equities, but particularly within convertible bonds, because, again, we don't know how long this is going to take. So if you can buy equity sensitivity very cheaply on a discount both to fixed income and equities, and give yourself the optionality, give yourself time to be paid to wait. That's the way to go, we think. So we would therefore play cyclicals through convertibles. We would play broadening out through convertibles. But at the same time, the US market's been hit quite hard, and we do think that some of the tech names in the US have gone too far. So, you can see semiconductors, the sentiment comes and goes. They're affected by helium in the Gulf. And so we think there are huge opportunities there, but you've got to buy gradually, hold on to your positions, and generally be a bit patient in this environment. Tomorrow we can be contradicted again.
We've seen Apollo capping redemptions from one of its biggest non-traded private credit funds for retail investors, Dorian. Are you worried about a spillover from any potential deterioration in the private credit market?
Well, our flagship growth and income fund, we have no US high yield, no US investment grade, small amount of European high yield and no European IG, simply because spreads do not discount both the default rate rising, the recovery rate going to be lower on software, which could become obsolete. Data center usage may not be as strong, especially with geopolitical tensions. So if you add all that together, private credit does look a bit troublesome. We can't see through where the default rate is, where the fundamentals are really. We think you need more transparency, more valuations. Yes, it will spill over, but we think more into US credit, particularly US high yield, where we have a zero allocation for that reason. But it's mainly based on valuations. We don't think this is a disaster, but we think there's a lot of complacency in spreads.
Okay, that's interesting, because I was going to say, it doesn't. So it's all based on valuation,
yes,
not necessarily that you think all software is doomed.
No, absolutely.
But if there is a negative for software, where are the positives for AI that you are investing around? Where is that showing up in your income investment strategies?
It depends where you look. So outside the US, semis still offer value. You've got single multiples in Korea, for example, on the flagship names there. And then you have the enablers. You have the companies that will benefit most from productivity gains. So there's quite a few of those as well. And I think software is completely misunderstood, because software can complement AI, or rather AI can complement software and be integrated within software. And so when you look at some of the, if you want an extreme example, online travel agencies where they've been absolutely battered over the last few weeks, but they can simply integrate the best features of AI, offer a better customer experience. They may take a slight margin hit, but the amount that's been discounted, we think is extreme. So we're looking at all the areas that have been hit by the sentiment, and there's an awful lot of dispersion in the market around AI and around geopolitics.
Can I just pick up on what you said earlier about the Fed to end, Dorian? Yes. You said that things are going to change with Kevin Warsh. Do you think that the reaction function of the Fed changes with him as chair?
It's a tough question, because, when's he going to come in is question number one. So at the moment, Powell is still there. He might be there for some time longer as this legal proceedings carry on. Kevin Warsh has yet to be confirmed. So one, we think it's going to be slightly delayed. And so Powell will probably wait and see. But secondly, under Warsh, he has really sort of made his claim that he's going to cut rates on the basis of productivity gains of AI, on the basis of employment losses of AI. What we worry about is those may well come through, but it may well take some time. So Kevin Warsh may face a different situation, because it may come a bit later, and also the situation will be different in terms of financing costs and inflation as well. So it might not be as clear-cut as people think.
So cuts more likely than hikes this year?
We think that the Fed will stay pat. We'll see hikes elsewhere in the world. And if we were to go slightly against the grain, probably hikes next year.
Okay. Dorian, thanks for stopping by to see us. That's Dorian Carrell, Head of Multi-Asset Income over at Schroders. Well, let's take a look at the core six this morning. How are they shaping up? The likes of Rheinmetall, LVMH. So we have a mixed picture on the core six. Schneider Electric down 0.3%. Rheinmetall down as well, but gains for Novo, LVMH, ASML and Nestle. Let's take a look at some of the other individual stocks on the move with Jennifer Creary. Jennifer.
Morning. We're starting off with Push. Push shares soaring at the open, up almost 14%. That is, of course, after an FT report that Estée Lauder is in talks to acquire Push. Now, that deal would create a company with combined annual sales of $20 billion or a market value of $40 billion as well. So clearly, Push investors very happy with that news. Next up, flipping over to SAP. Those shares are down almost 2%. That's after SAP was cut to neutral by JP Morgan. Those analysts are expecting SAP's margin expansion to decelerate as it faces some headwinds due to its business model, but also some of the headwinds associated with the boom in AI spending. Next up, we're going to flip over to Bellway. Those shares are down almost 6% on the open. That's after the house builder reported first-year results. Adjusted profit fell short of expectations. It also raised its volume target and trimmed its margin goals. putting a bit of pressure on shares as well this morning. Finally, we're going to end on miners. Those are in the red this morning. Antofagasta down 2.3%, Anglo American down 1.4%, Glencore down almost 1%. That is, of course, over concerns over prolonged conflict in the Middle East, which could potentially dent copper prices. Back to you.
Jennifer, thank you very much. Jennifer Creary with some of the stocks that are moving this morning, including Push over in Madrid. Let's talk about some of the potential for other M&A narratives to develop in these markets. And this one involves the US and the US financial services sector. And pre-market, of course, US shares are now open in this 8 o'clock hour here in London because of the reduced time difference between us and New York at this time of year. And so we have Jefferies moving higher in pre-market, up by 7.5%. And this follows an FT report which says that Sumitomo Mitsui Financial Group is working on plans for a possible takeover. And the detail of this story, again, according to the FT, but we mention it because it's clearly having an impact in pre-market there. The detail here, according to this report, is that SMFG has tasked a small team with making sure that it's ready to act if Jefferies' share price presents an opportunity. And SMFG is a shareholder in Jefferies.
Yeah, Jefferies declining to comment to the Financial Times about that one, but we do have a spokesperson for SMFG saying that Jefferies is our important partner. We don't want to comment on hypothetical assumptions or rumours. So yes, as you say, Jefferies moving in the pre-market off the back of that M&A news.
Okay, just waiting for some data to drop out of France, waiting for the PMI data to come in. So we're keeping our eyes peeled for that. In the meantime, we've got European equity markets then up by 0.4%. The FTSE up by just about that much, actually. So not standing out as moving in a terribly different direction because today we have wider stocks going higher and we have energy stocks going higher, which seems like a fairly unusual couple of events to be happening simultaneously.
We do now have the breaking PMIs out of France. So for manufacturing, the preliminary number for March is 50.2. The expectation was 49.5. It's up from the previous reading of 50.1. In terms of services, 48.3 is the final number, is the preliminary number, and the expectation was 49. It's down from 49.6, and the composite reading 48.3, which is below the expectation of 49.3, but down from 49.9 the previous month. So in terms of the euro reaction, we are down about 0.1%. Yeah. 116 is where we are, but really hardly any reaction.
Absolutely. So is that because the number didn't miss by that much, or is it because the market is just simply focused very much on other things? And of course, dollar has been driven higher by risk sentiment in recent weeks. We will continue to watch that as the PMI story out of Europe develops this morning. Wait for the German numbers in around 15 minutes' time. Coming up on the programme, Spain's Push confirms talks with Estée Lauder on a possible multi-billion-dollar merger. Shares in Push move higher then this morning. More on M&A in the beauty space. That's next. This is Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade, 19 minutes into Tuesday's session, and it's the DAX that underperforms a little bit today. We're down by 0.2% on the Xetra DAX. The FTSE 100 up by 0.2%, and that's pretty much on par with what we're seeing across Europe. Energy stocks still the best performing sector this morning, but actually 2/3 of sectors in positive territory, despite the fact oil prices are a little bit firmer and energy stocks go higher. Let's pivot to the beauty space because we've got some M&A to talk about there, potentially. Shares in the Jean-Paul Gaultier and Charlotte Tilbury owner Puig are on the move after the Spanish group confirmed it is in talks with Estee Lauder on a potential merger that would create a cosmetics giant with about 20 billion in annual sales. Let's find out more about this. We're joined by Angelina Rascouet, who is in Paris for us. Angelina, good morning. What can you tell us about, well, first let's start with Puig, because it's not been in the market all that long, wasn't listed very many years ago. Tell us about that and anything we do know about the deal.
Yes, indeed, Anna. Hi. So far, I mean, investors in Puig seems to be extremely happy. The stock soared 17% this morning. As you said, it listed less than 2 years ago. I was looking at the price. It was at 26.50 euros at the close of trading, the first day of trading, and now it's about 15. I mean, before this announcement. So actually, it's been a disappointment when it comes to the share price performance. It's a family-controlled business. It's based in Barcelona. As you said, they own Charlotte Tilbury, they own Paco Rabanne fragrance. What's interesting is that it's mostly a fragrance and fashion business. 72% of the revenue comes from fragrance. They do have, makeup with Charlotte Tilbury and a little bit of skincare, but yeah, it's a big player in fragrance. And so we don't have many details when it comes to the deal terms. They just said that they're in talks about a business combination. So we'll have to see what comes out of it.
And Angelina, you've seen Estee Lauder shares down on the news. How should we read the market's instant skepticism? I mean, Estee Lauder has a relatively new CEO. Stéphane de la Favrie took over in January last year, and Bloomberg News actually reported in January 2025 that shortly after he took over, that Estee Lauder was looking at a strategic review of assets. So it's likely that investors were probably more expecting asset sales rather than Estee Lauder going, on the hunt for what would be a relatively transformational acquisition. I mean, it would bulk up definitely for their fragrance offering, and so I think that's why investors are sort of skeptical. I mean, shares yesterday in New York, they fell more than 7%. And it's and the company's in a turnaround mode because in the last few years, under the former management, it wasn't doing so well compared to the big leader, which is L'Oréal. Well, Puig shares on the flip side up 14% as things stand. Angelina, thank you for the update. That's Bloomberg's Angelina Rascouet out of Paris. Meanwhile, we have oil gaining again, having fallen steeply on Monday. A barrel of crude is above $100 a barrel today on Brent after plunging 11% following President Trump's comments. The concern now is that other countries will be drawn into the war with Iran. So let's bring in Anthony De Paula, Bloomberg's Middle East energy markets reporter in Dubai, for more. Anthony, good morning. Markets still very sensitive to every headline, it seems.
Good morning. That's right. Yeah, we've seen prices react today to a little bit more skepticism around the possibility of a ceasefire or a positive arrangement here. We did see the Iranians come out yesterday denying that they were in direct contact with President Trump about a ceasefire or a halt in the attacks. But the positive thing is that this morning we didn't see reciprocal attacks on energy assets, power plants, desalination in Iran and in the Gulf countries, because that would have been a massive escalation, of course. So we didn't see that. That's why we had that big sell-off yesterday, about 10% down in a very short time. And that came right as oil executives and administration officials were gathering in Houston yesterday for the start of the CERAWeek conference, which is the big annual conference for the oil industry there in Houston. And of course, the main topic of that was Iran and the Strait of Hormuz. What is going to happen in this conflict? When are we going to see Hormuz reopen? And when is that vital oil supply going to be flowing back into the market? So we're more than 10 million, roughly 15 million barrels down a day in terms of the supply that we've been getting to the market. We do have some supply coming out of Saudi Arabia, which has got a pipeline to the Red Sea coast, to the port of Yanbu, and Abu Dhabi's got its pipeline to the Emirate of Fujairah, again, which is just out of Hormuz. So that's giving us a little bit of more oil on the market, but it's really these headlines and the sentiment that's been moving the price so much these days, Lizzie.
And Anthony, it seems that yesterday we certainly saw the impact of that statement from President Trump, and 5 days pause or 5 days reprieve for energy assets in Iran certainly seemed to make a difference for energy markets. Moving from here, though, Anthony, is the market still very much focused then on the Straits of Hormuz and whether we see anything other than very Iran-friendly cargoes going through there? That will dictate whether we really see any movement downwards in the oil price.
Yeah, no, that's the key, is that opening of Hormuz to really get the massive flows going through there. Some trickle of vessels to countries like China, obviously that's still oil in the market. But even before this conflict had set up, we'd already been seeing kind of a bifurcation of the oil market, whereby places like China, some of the teapot refineries there, the non-government linked refineries, were able to take sanctioned crude. They were taking barrels from Russia, from Iran, and they were taking those highly discounted. So we had a lot of oil into the market. We've been talking about a glut coming in the market this year. Of course, that has evaporated with this conflict. But already when we were talking about that, we'd been seeing a lot of oil, but part of that oil was sanctioned crude going to a market like China solely, and not going into the larger markets. That was creating kind of a bifurcation of the market. We could see that come up again if we do see some of those barrels coming through to select countries and not getting that massive flow that we need back to the market and get the supplies really
Thanks for the analysis. Bloomberg's Anthony De Paula, live for us in Dubai. Thank you. Coming up, we'll get some geopolitical analysis from what to expect from Iran. Elizabeth Brewer will be joining us. This is Bloomberg.
The phone is what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade, 30 minutes into today's session, and we're gradually building a picture of the growth story around Europe based on the PMI data coming through. Let's get to the German number, the composite PMI number for Germany, falling to 51.9. The forecast was 52.2, so that is slightly weaker than had been anticipated. It's still well above 50, though, so it's still in expansion territory for the German economy with that fiscal push taking place. Has that moved the euro? Not discernibly by much. We saw the French data come in weaker than expected just half an hour, 15 minutes or so ago, in fact, and there's a little bit of a downward move in the euro as a result of that, perhaps, or in time with that, but not a huge amount of reaction to this German number. It comes in a little weaker than expected, but maybe this is just not cutting through with all of the focus on Iran and everything that happens there. With that in mind, let's have a look at the wider markets then and what we have for European equity markets. Lizzie, we're pretty flat, pretty undecided. We'd started the sort of overnight European session with expectations of a weaker European session. Then the futures picture pointed to something more positive. In the end, we've got something quite mixed. And the German DAX actually underperforming the rest, down by 0.5%. The FTSE and the CAC just into positive territory, but really emphasis on just.
Lana, you say it's a mixed picture. Indeed, we've got just as many members higher as lower almost, but as you can see, volumes are lower today. Perhaps investors sitting on the sidelines amidst all of this volatility. Yesterday was the most volatile trading day on Wall Street throughout this war in the Middle East. So volumes lower, as I say, here in Europe. Let's take a look at some of the leaders and laggards, shall we, in today's session. We mentioned that we should be watching the chip space earlier on, and Infineon and ASML are some of those that are in focus. Actually, Infineon dropping into the red, inconveniently for me, but ASML up 0.5% on that tech bounce that we saw yesterday. And energy names are also in focus, but Santander here down 1.5%. Flip over to the laggards and let's see what we've got there, shall we? SAP down 4.8%, cut to neutral over at JP Morgan. We also have HSBC and Santander in the red, banks leading the sell-off alongside materials in today's session, Anna.
So that's the markets. Let's have a look at some of the other stories that we're covering this morning. Apollo Global Management is curbing redemptions from one of its largest non-traded private credit funds for retail investors, becoming the latest alternative asset manager to grapple with a surge in such requests. According to a shareholder letter, the $25 billion fund is capping withdrawals at 5% of outstanding shares after clients sought to redeem more than 11%. The Financial Times is reporting that Japan's second largest lender, that is SMFG, is working on plans for a possible takeover of Jefferies. SMFG holds a minority stake in Jefferies and has tasked a small team with making sure it is ready to act if Jefferies' falling share price presents an opportunity. And fighting between Iran and the United States and Israel alliance continuing overnight, with Iran launching attacks on Israeli cities and US bases in the Middle East. President Donald Trump is claiming talks are underway to end the conflict, but Iranian officials are denying his claims of behind-the-scenes diplomacy. Lizzie.
Well, let's get more on the Middle East story. We're joined now by Elizabeth Broad, Senior Fellow at the Atlantic Council. Elizabeth, good morning. Thank you for making time for us. Is this just the US playing for time with this 5-day reprieve rather than trying to resolve the conflict?
It is an extraordinary situation, Lizzie, where we don't know where the talks are taking place. President Trump says that talks are taking place. Iran says that no talks are taking place, whether direct or indirect. And so what are we to make of that? And that's, I think, a problem for global markets. And we'll continue to see, for example, the oil price fluctuating as a result of that. And in addition, I think it's important to remember that there are real human lives that are in the balance, as it were, namely, in addition to people living in the region, the seafarers who are trapped in the Persian Gulf because they can't go anywhere until there is a cessation in hostilities.
Yeah, of course, this war started between rounds of nuclear talks between the US and Iran. Do you think that this deadline extension is just a ruse before re-escalation?
It's so difficult to predict what Donald Trump is going to do, but what seems to be the case is that he is spooked by the volatility of the oil market, and he's trying to bring the oil price down because it's affecting American consumers. And this extension in of the deadline seems to be part of that effort. But a deadline is a deadline. What happens when Friday rolls around if the Iranians haven't complied with whatever demands are being presented to them? Will we then see an escalation? And what will the result be on the market then? And on countries in the region, because we should remember that this has long stopped being simply a war between the United States and Israel on one hand, Iran on the other hand. Several other countries have been drawn into it as essentially casualties of this war in which they had originally had no involvement.
Good morning to you, Elizabeth. What's your take on who President Trump might be speaking to in Iran? Because maybe this is where some of the confusion comes from, if the US has reached out at least to some parts of the regime and other parts of the regime may be sidelined. I mean, what do we understand about the regime as it still exists in Iran to give us some sense of who really is wielding power there?
But what we do know is that the Americans, or Trump didn't say or said that America wasn't speaking to the new supreme leader, but the person who has been suggested as the Americans' interlocutor has apparently said that it's not him. So the question is, who is it they are speaking to if they are speaking to a top official? And the Iranians are saying, in fact, that what is coming from Washington regarding talks is fake news. It is an extraordinary situation. Either there are negotiations or there are not. And we, the global public, and not just us consumers of news, ordinary citizens around the world, but policymakers, government leaders, and business leaders are being left not knowing what's going on because there are two contradictory sets of statements. And so it looks like we're going to have to spend this week not knowing where the talks are taking place. But what we do know is that the deadline has been extended to Friday.
Yes, and so perhaps that takes the heat out of the situation in the very short term, Elizabeth, at least in terms of escalation around energy infrastructure. I wonder what you're watching, though, in the region for signs of re-escalation. I mean, we watch perhaps what other Gulf countries might decide to do, given that many of them have been attacked by Iran through this.
Indeed, and they have been attacked, and the damage is severe. So if we look at some of the energy infrastructure, it will take months or years to rebuild, and that will have, as a result, consequences for global energy prices for months and years to come. If you can't produce energy at the expected levels, then we're going to get less energy out of the Persian Gulf. And they are in a terrible situation, really. They are countries that built their future and their fortunes on being peaceful, on successfully navigating through really quite extraordinary diplomacy, navigating the complex landscape of the Middle East and of global tensions. And now that strategy is being undermined through no fault of their own. It's being undermined really through this war. And so they have been since the beginning of the war, and indeed before the war, pushing for de-escalation because they're the prime victims of this situation. But it's also a mystery to nobody that if Iran is attacked and the regime feels that it's a fight for its survival, it will attack its neighbors, it will block the Strait of Hormuz. That has been known for decades, which is why previous US presidents have been so reluctant to attack Iran because they knew that this kind of scenario would unfold.
Elizabeth, thank you very much. Thanks for your time. Elizabeth Braw, Senior Fellow at the Atlantic Council. Now, the European Union and Australia have agreed to a free trade deal after almost a decade of talks as the two sides push to deepen ties. The EU Commission President hailed the agreement, making a thinly veiled swipe at both the US and China.
Today, we are telling an important story to a world that is deeply changing. A world where great powers are using tariffs as a leverage and supply chains as vulnerabilities to be exploited. In our story, open, rules-based trade delivers positive sum outcomes. Trust matters more than transactions.
Let's bring in Oliver Crook, Bloomberg TV's chief Europe correspondent. And this story matters for what the deal contains, but also for the symbolism of it. And you heard some emphasis there around what this symbolises, Ollie. But do tell us about some of the detail as to what it is that Europe and Australia, after many years of talking, have agreed to.
Yeah, the symbolism, as you say, Anna, is very, very important here. And the EU will say that this is a sort of evidence of the fact that the rules-based system, the free trading, multilateralism is alive and well. And after 8 years of negotiations, the Australians and the Europeans managed to get this free trade agreement over the line. We should say that one of the biggest sticking issues, the sticking points that there were, was about beef exports. This was one of the big issues. They have resolved that with a sort of quota system about the volume of beef and sheep that can be exported into the European Union that will be phased in over a several-year period of time. For the Australians, they will also be touting that they get free market access on a lot of fruits and vegetables and nuts, and that about 87% of dairy items coming from Australia will now be able to enter into the European Union without a tariff. On the European side of things, this is a large market, the Australian market, for machinery, for automotive, and of course for pharmaceutical and for chemicals. And some of those products face basically up to a 5% tariff. That will come down to 0% with this agreement. Now, this still needs to go through the European Council. It still needs to be agreed to by European leaders. It needs to go through both parliaments. But again, the symbolism is very important. And the other point that Ursula von der Leyen made is that within the last 6 months, you've basically got a free trade agreement with the Australians. You've got one with India. You've got one with Latin America. That gives the European Union access to 2 billion additional people in terms of market. And that is the sort of the direction that the European Union is trying to take things, while, of course, the Trump administration taking things in another direction.
And Ollie, President Trump's not just writing the global trade story, he's also taking a starring role in the domestic politics of Denmark. You've got voters heading to the polls today. How's Greenland shaped that election?
Yeah, that's right, Lizzie. The polls opened about 2 hours ago over in Denmark. They'll be closing at 8 p.m. this evening, and they've sort of been, the Greenland story has been fundamental in shaping this election campaign for Mette Frederiksen, the prime minister. She was really dwindling in the polls going into the end of last year. Then you had the big blow up with Greenland in the early part of the year, and she was really able to step into the role that she likes to embody, seeing herself as a very sort of strong and hard leader in sort of difficult moments, and that is something that has cut through to the electorate. She called this snap election after those polls had boosted her. It is likely that she will win this election once again. There's a very fragmented political system over in Denmark, like many of the countries in the north, like the Netherlands, for example. So there will be a lot of sort of coalition building, but it's likely to emerge with her as the next prime minister. And for the European Union, this is a sort of important outcome. She's seen as a sort of known quantity, somebody that is very reliable on a lot of the issues that are very important to Europe, whether it's on defense, whether it's on Ukraine. But she's also sort of pioneered this model that we're seeing a lot more across Europe, particularly in the United Kingdom, of a sort of socialist leader that is also very hard on issues like immigration. So be very welcome from the European perspective. We should also say that the Americans are also quite fond of her, for even the Trump administration, and she was very fond of the Americans and transatlanticism. I spoke to her within 24 hours of Donald Trump being elected. She was one of the first people that Trump spoke to. That being said, after what we've seen over the last 12 months, she has said very openly she no longer sees the U.S. as the sort of closest ally to Denmark.
Okay, Ollie, thanks for the update. That's Bloomberg's chief Europe correspondent, Oliver Crook. Well, coming up on the programme, is Europe at risk of losing its AI edge? We'll speak to Tanuja Randeri from Amazon Web Services next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. This is the opening trade. Now, Europe risks losing its AI edge as startups look abroad. That is the conclusion of a new report from Amazon Web Services, AWS, that reveals a growing risk of founder flight as the global AI race accelerates. Joining us now is Tanisha Randari, EMEA Managing Director at Amazon Web Services, on set with us here in London this morning. Tanisha, nice to have you with us. So it's a big report, and you're probably much more familiar with the deep content of it than we are. So tell us what we need to take away from this report.
Yeah, let me pick up on the first point, actually, which is we are really at a tipping point in Europe in terms of the accelerated adoption that we're seeing of this technology. And when I was here last, we talked about it. This is our fourth report on the topic. And what we are seeing is that over half the businesses that we surveyed, and therefore half businesses, are using this technology at scale. There is a whole spectrum of usage. So you've got people that are using the AI technology in a very basic way, those that are using it in a more advanced way, and we can get into some of that and the differences. But the difference is clear, because if you're using AI, let's just say for chatbots or email summaries that you want to create, we all use it, right, in our daily lives. Or if you're using AI for really advanced usage, so for example, if you're an insurance company, claims management or fraud detection, the difference in productivity is significant. On the basic side, you can get up to 40% productivity, which is pretty good. On the advanced side, you can get up to 62% of productivity. So what we want to see is more and more companies adopting AI at scale. But there are some challenges, and I think those are the things that are impacting their ability to use the AI properly.
So what are the main challenges in Europe? Is it funding? Is it skills? Is it regulation? What's holding us back?
It's all of those three, actually, and frustratingly, since the last report, we haven't seen continued progress on this. So let me pick up the skills one, because I think it's the most important block, actually. Again, over half of the businesses we surveyed are saying that they cannot find people with the digital skills to be able to use this technology within their organizations. So part of what needs to happen is significant reskilling of businesses, of teams, but also making sure that our universities are actually being able to focus the students on AI. We're, by the way, investing a significant amount in training. I think the other one is regulation, and there's three aspects of the regulation that are coming in the way as an obstacle. One is it's very fragmented across Europe. The second is the uncertainty associated with, X Act or Y Act. And then I think the final point, which is stark, is businesses are telling us that they spend 42% of their IT budgets on compliance. Now, imagine if that could be invested in the technology to drive the productivity and benefits. So those are the three big ones. And of course, the warning signal that you called out, which is we're seeing 4 out of 10 startups are starting to think about relocating.
So that's where this leads then, and the relocation is part of this. I mean, interesting on the compliance side. I mean, I don't know what the right number is. 42% to spend on compliance sounds like a big number. I don't know what the right number is. I suppose European regulators would say that it's important to protect consumers in Europe, and that the compliance is there for a reason, and that Europe's okay with being different. It doesn't necessarily want to be like the rest of the world, like the United States on regulation. I mean, how does the tech industry respond to that?
Yeah, look, absolutely. We are extremely supportive of ensuring data security and the regulation around data. And in fact, the way that we've built out our cloud and AI infrastructure is we've got layers of technical safeguards to ensure that you can't have any unauthorized access to the data. Only our customers control the data. They decide where to put the data. They hold the keys, which are really critical in terms of the encryption of that data. So all of that is critical to ensure, plus responsible AI is very, very important. Having said that, what's also important is that innovation flourishes. And there is an opportunity to experiment with this technology, because what we're finding with this technology, as I said earlier, is the benefits are not only on efficiency, they're actually creating new models. I'll give you an example. A great startup in Sweden, you might know them, Lovable, for example. This Christmas, I decided to use Lovable. I'm not a coder. And I was able to create a website in a couple of hours. So those new applications are going to allow a lot of us to be a lot more productive in everything that we do, including, you and me on our daily lives. So those are the kinds of things. On the other hand, you've got Debenhams, for example. Everyone knows Debenhams. They are translating and producing and creating tens and thousands of listings using the technology 20 times faster then they could have done it. So we've got to unleash all of that and yet protect the data at the same time.
Okay, Tanuja, I have to ask you as well. Amazon Web Services has put out a statement today saying that you've suffered a disruption to your services in Bahrain due to drone activity. What more can you tell us?
Yes, look, we have overnight had drone activity and seen some physical disruption in our data centers in Bahrain. Our employees are our most important thing right now, and their security, and I will tell you everyone is safe, which is excellent. We're working very closely with the Bahrain government to restore services as quickly as possible. I think the advantage that we have on the global cloud that we operate means that we can move our customers out of the region and into other regions. So our primary thing is employee security, get those data centers back up and running, and get our customers replicating their data outside the region. That's where we are.
Okay, Tanuja, thank you very much. Thanks for joining us. Tanuja Randery, EMEA Managing Director at Amazon Web Services, talking there then, Lizzie, about the ecosystem for European tech and indeed about some of the challenges in the Middle East right now.
Indeed, it's interesting that infrastructure, tech infrastructure, is becoming part of that critical infrastructure targeted in war. But let's take a look at what else we're watching throughout the day. Of course, we have Ursula von der Leyen in Australia. We've been discussing that trade deal between the EU and Australia with Oliver Cook just earlier. We also have that Denmark snap election, and from 9 a.m. London time we have the Euro area and UK PMIs plus the US PMIs later on in the day. At 3 p.m. we're going to hear from the Bundesbank President Joachim Nagel, and then the Fed's Bar will be speaking later on stateside as well.
Let us get another market perspective as we bring this programme to a close. We're joined by Skylar Montgomery-Koning from our Bloomberg Markets Live team. Skylar, good morning to you. Well, plenty of investors led in all kinds of directions over the past 24 hours with regards to what's happening in Iran. What's been the increase in your understanding of the parameters of this conflict, I suppose, over the last 24 hours?
I mean, I think there's not a huge increase in the understanding. I think that we already knew President Trump had a reaction to equity selling off, had a reaction to higher yields. It's not something that the U.S. administration wants. So you have had this kind of headline before where the U.S. has backed down from kind of more aggressive chatter. And we had that over the weekend as well. We had this big flip-flopping. And I think it's natural for the markets to have to react to some extent because it is a bias from the administration that needs to be recognized, which is why you've had oil moves pare back, some of that undone, but you can't completely unwind it because the biggest issue isn't resolved. There's still not traffic going through the Strait of Hormuz. We don't have a clear view on what's happening from the Iran side of things, the Israel side of things. And so, yes, you can, price in a higher expectation of a ceasefire, I suppose, but I think it makes sense that oil prices are still kind of at levels that we had not a week ago. We've not, considerably declined. We've not undone some of those rate hike bets. And part of that is because there's also just been enough damage already.
Yeah. We were talking with earlier guests about the psychology of investing in an environment as volatile as this and how you resist the urge to just sit on your hands. But looking at the volume today in the European session, it looks like a lot of people are just sitting on the sidelines.
Well, this is the struggle, really. When we do have a ceasefire, you do start getting stuff transiting through. You know the move will be so big that you'll be able to participate in it. In the same way that if we have energy prices spiking higher, or we just maintain these higher levels for longer, you're going to get a central bank reaction function. You're going to get data that comes in and kind of tells you what the economic backdrop is. PMIs later today will kind of be an input into that, as well as we've already had French and German PMIs that show you that input prices are already a lot higher. So you know you can participate. And I think the issue is because you've had so much whipsawing, it's better to stay on your hands. And the issue with that for the market as a whole is if there are less people trading, that means that there's lower liquidity. And that means when you get these headlines, volatility is more likely to become kind of self-perpetuating and you'll get larger moves.
Just briefly, Skylar, it was interesting. I mean, the data dropped earlier, the PMIs, France and Germany, didn't seem to touch the sides really for markets, did it? Because of it's about other things right now.
Yeah, right now we're very much watching headline risk. We knew that input costs would rise. I think we'll get some more information of Europe and the UK later today. We'll get the PMIs there. But certainly what matters at the headline level is where energy prices.
Yeah, absolutely. And access through the Straits of Hormuz or not. That's clearly crucial for energy markets and wider risk appetite. Skylar Montgomery-Koning, thank you very much. Bloomberg Markets Live. Team, of course, that is it for the opening trade. European stocks just on the back foot right now, down 0.2%. The pulse is up next. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Iran disputes President Trump's claim that talks are underway on ending the war. Oil rebounds after a report that Gulf countries may be drawn into the conflict. Plus, fresh concerns for private credit. Apollo caps withdrawals after requests hit 11%, while a fund run by Future Standard and KKR is cut to junk. Also, a reminder, we'll be speaking exclusively with the chief executive of Telecom Italia as its board assesses a bid from state-owned Poste Italiane in about 15 minutes. Now, if you look at equities across the board, look, there's, of course, a lot going on. I have to say stocks are struggling a little bit for direction, probably is how I would best put it. Oil edging higher as optimism over war de-escalation fades. But again, there's a lot of chatter actually on trading floors that it's unclear what the way forward is. Contracts for oil remain above $100 a barrel, haven't risen about some 40% this month. If you look at some of the other things we're watching, look, the 10-year yield in the U.S. is 4.3599. Remember, yesterday it was really the UK gilts that were taking the most of the brunt, given rising expectations of what the BOE can or can't do. The European market map, again, struggling a little bit for direction, but the broad sentiment is still one of risk off, with most equities down. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Iran's parliamentary speaker has denied any negotiations with the U.S. are taking place, dismissing the reports as fake news. It comes after Trump told reporters that the U.S. would delay strikes against Iran's energy infrastructure after what he called productive conversations with the country.
I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us. And I would say at the end of this period, I think it could very well end up being a very good deal for everybody. As good as if we went all the way and just literally annihilated the place, which if we don't have to do that, that would be a good thing.
Well, with us now is Paul Wallace, Bloomberg's managing editor for the Middle East, of course, and Africa, economy and government. And then in a second, we'll be speaking to Christian Muller-Gleesman from Goldman Sachs. So first of all, Paul, what do we actually know happened? So Trump yesterday was claiming that there was some kind of resolution, a possible ceasefire, with the Iranians said, no, there aren't.
Yeah, exactly. And it is confusing all around. It seems as if talks have started at some level, probably indirect talks between the Iranians and the U.S. We're not exactly sure who the mediator is at this stage. The likes of Turkey and Pakistan are certainly involved at some level. But clearly what the remarks yesterday from Trump, I think, were the first time we've heard of him really, and seriously talking about de-escalation. Obviously, we've had the Iranian denials. Some of that is semantics because they don't want to say they're having direct talks with the U.S. At the moment. I think also Trump has probably got ahead of himself. As we heard in that clip, he's talking about 5 days to reach a deal. That's probably quite optimistic because the gap between the two sides remains wide. Of course, it is possible that they reach one, but it could well take longer, and there's no guarantee that they'll manage to get there.
So, Paul, first, oil has resumed advance because it's worried about what's happening in the Middle East, but also the Iranian strikes, have they changed in nature? Because they seem to be persisting.
That's another point. No, they haven't changed, and yes, they have persisted. So it was a bad night last night for Kuwait. It had a lot of strikes on its territory. Bahrain was the same. There was an Amazon data center that seems to have been hit or suffered at least minor damage in Bahrain overnight. Israel was hit this morning with a ballistic missile in Tel Aviv and some other areas. So the war continues at the moment. To be fair to Trump, he never said hostilities would end immediately or anything like that. He said he'd hold off strikes on Iran's power plants, but the war at the moment continues as normal.
Okay, Paul, thank you so much. And of course, the other question is, if the Gulf states get more involved, what that looks like. For the moment, I know our team is still trying to figure out exactly what happens next. Paul Wallace, they're in charge of our Middle Eastern coverage. Now, the incoming vice president of the ECB, Boris Vucic, says the bank must be very agile and vigilant to keep prices in check as the Iran war raises the risk of stagflation. Officials expecting to know soon if the fallout from the conflict will require higher interest rates. Well, joining us now is Christian Gleesman, head of asset allocation research at Goldman Sachs. Christian, thank you so much for being with us. I mean, when you look again, we were just talking with Paul, it's quite difficult to know where the conflict goes next. So what does it mean for how you build your portfolio right now? Is it risk off, or are you in a wait and see situation?
Well, you're still in this high-velocity phase of the conflict, and as a result of that, there is a case for being a bit more defensive. So we've been defensive. We shifted defensive pretty much a week after the conflict started, and I think the challenge you have is stagflationary shock. And we've been through this before. All of us sitting here, we've been through 2022, and that was the last big stagflationary shock that we've dealt with since the 70s, really. So I think we have a bit of a template that equities and bonds, they can't help each other. They're kind of positively correlated. There's very few safe havens that can protect the portfolio. So we are currently overweight cash. So short-dated fixed income is sadly where you can find some safety. Clearly, that's not an allocation you want to carry on too long. But in this high-velocity phase right now, unfortunately, that's where we are.
Christian, and the high velocity, how do you cut away from the noise from what's actually happening? I know there's been a lot of focus, for example, last week on a de-escalation.
Yeah.
We hadn't seen that in geopolitics. And then yesterday there was, again, talk about de-escalation, but it hasn't happened. So do you just say nimble?
So there's two issues here. There is the actual high velocity indicator, which is the oil price. So the oil price is the lead asset, and all markets are somewhat correlated with that. And based on what we've heard in the last few days, one would hope that we start to settle and range the oil price. The big challenge you have is that if you look across assets, the markets have treated this as a rate shock primarily. So like you haven't seen as much damage on the growth side. And before you kind of have seen that growth repricing, you're still in that high velocity phase where you have a lot of convexity risk. So we now have all the data coming out. You mentioned it earlier. We have the PMIs, and we will get the first read of the potential lasting damage. And we all know that the longer the conflicts last, the more stagflationary momentum we might get in the data. So if you get then this kind of growth repricing lower, that's the latter end of the high velocity phase.
How problematic is this, especially for the Bank of England and the UK? We saw a lot of UK assets being slammed because of what we may expect with inflation.
Well, it's a very tough spot for all central banks because you have a supply-side shock that is driving inflation, which is very unpredictable. Most people would argue, it could be done in a few days. So as a central bank, to make based on that kind of inflation-fighting decision based on a factor like oil that can really move a lot, not easy at all. But what they are very focused on is, of course, managing inflation expectations. I would actually argue that looking at longer-dated break-evens, looking at generally inflation expectations so far, it doesn't seem like they have unanchored. So if you look at the 5 to 10 year break-evens compared to 2022, they have actually been pretty unchanged. So I think we're actually in a good spot. This comes back to a lot of investors treating this as a conflict which could reverse very quickly. The longer it lasts, the more the risk is that inflation expectations unanchor, the more the risk is that growth expectations come under pressure. So central banks have come out of the door very quickly because they kind of, to some extent, were conditioned by 2022, saying that we were a bit too late there, let's be on the front foot. I would say it's a very tough spot to kind of make policy based on the information we currently have, and also based on the fact that actually the damage on the more medium-term inflation expectations is actually quite limited.
But Christian, I guess the other big question is, let's say there's a ceasefire, right, of hostilities, and even a diplomatic resolution, which at the moment feels far-fetched, but let's say there is, what happens to the price of oil? Because we don't really know the extent of the damage that certain infrastructure has gone through.
Yeah, I mean, it's a good question. I mean, going into the year, there was a certain element of oil supply glut, gas supply glut. People were actually bearish on energy. And I think now you have this supply shock where there is a certain amount of disruption which will carry on. And the longer it carries on, the higher you will settle potentially on the price where we end up in the second half. So our team is now expecting something in the low 80s on Brent. They've upgraded their gas a bit for Q2, but it comes down. So you get some lasting damage. There's possibly still enough supply, but there's also a lot of takeaways from this conflict. There might be more infrastructure build, more kind of repairs necessary, which means there's new drivers of demand for commodities, new drivers of potentially a bit higher prices. So I would say we can all safely assume that inflation will be a bit higher and growth will be a bit lower for the rest of the year. There's no witchcraft around that. But I would still say that if you get a resolution, the initial response will be significant relief, and then we'll have to see how kind of over time the equilibrium settles.
What's your take on dollars? So if you look at currencies, speaking about witchcrafts, I mean, do you look at Japanese yen? I know you like, for example, Australian dollar versus Japanese yen, or I mean, what are the kind of dynamics that you see with some of the Asian currencies? Because they've suffered immensely because of the price of oil.
Yeah, I mean, in line with what we discussed earlier on central banks, so central banks are fighting. They're fighting inflation faster and harder than most people expected. So as a result of that, gold has sold off a lot as well, because you essentially had earlier an FX debasement versus gold. Now the reverse, like the central banks are fighting back. And in 2022, the Fed was the first central bank and the most credible central bank in fighting inflation, and that meant the dollar became a key stagflation hedge. And I'm not sure that this will be the case this time around. Like, yes, I think the dollar has benefited from its energy independence, and that has helped a lot, the dollar, especially with the positioning as well, squeeze a bit in this conflict. But our fear is, like, all the central banks are out of the starting blocks this time around. So it's not as clean to say now that the dollar is in a multi-month uptrend if we face the stagflationary repricing that we discussed earlier. So we are still leaning more towards fading the dollar strength eventually, and we're leaning more into safe havens that so far haven't really helped you. So like the Swiss franc, for example, once you go out of this high velocity phase with the SNB feeling less compelled to intervene, that can help you with stagflationary pricing. And also the yen, if something goes wrong and we do face recession risk in the US in particular, we do think the yen can actually start helping you as well.
Christian, I mean, if you look at the behavior of the gold, I mean, it kind of pulls apart the thesis that the rise in gold was mainly due to people moving away from U.S. assets. Is that fair? Like, what does the behavior of gold teach you?
Well, there's a few things going on. I think you're right. People used gold to diversify the dollar, and the dollar has been strong, so people feel less compelled to hold gold maybe tactically. And also there's an element of positioning. So I think you build up a decent amount of gold positioning coming into the year. You know, it started with the central banks, and then eventually investor positioning really picked up kind of from the third quarter onwards last year. So some of that investor positioning is unwinding, possibly primarily to raise liquidity, because it's one of the last safe havens that to some extent has performed. So I think there's a decent amount of positioning, and I would actually argue the speed of the moves indicates there's some options involvement as well, and it does tell me that it probably is an opportunity for longer-term investors.
For private credit, again, is this a awkward or crunch time? Because if interest rates go up, you can potentially see who's swimming naked.
I think we definitely have more focus on private credit because obviously you had bad headlines. I would generally say that private credit is a very active form of credit. So there will be losses, there will be winners, and I think it's normal course of business. But they are currently having this kind of attention. And now when you add financial conditions tightening to that, there's very much possibility that there's more headlines. But I would still argue that at the margin, this ecosystem can potentially deal with credit shocks better than public markets. I would actually argue, and we're underweight credit in our asset allocation, that the public credit markets are also quite vulnerable. So it's not really about private credit only. It's the fact that you're dealing with a financial conditions shock. Yeah. And at the margin, credit spreads were incredibly tight for 2 years now. And I think now you have to rebuild a bit of risk premium.
Okay, so interesting. Christian, thank you so much for joining us. Christian Müller-Gleesman, the head of asset allocation research at Goldman Sachs. Now, coming up, I'll be joined by the chief executive of Telecom Italia after a 10.8 billion euro bid from Poste Italiane. That exclusive interview is up next, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Hazlinda Amin, only on Bloomberg.
Well, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. So Telecom Italia has confirmed that it's received a takeover bid from Poste Italiane and says its board has begun evaluating it. The 10.8 billion euro offer would return the phone operator to full government control after 30 years. Now, the acquisition also fits with the Prime Minister Giorgia Meloni's push to tighten oversight of digital infrastructure. Well, Pietro Labriola, the chief executive of Telecom Italia, joins us now for an exclusive conversation. Pietro Labriola, thank you so much and welcome to The Pulse. As always, I mean, first of all, strategically, what does this latest play mean for you? What does the bid change for you in the longer term?
But I think that this is something that happens usually in the market. This is not the first, neither the last public tender offer. So it is quite easy, if I can tell you, that the market will decide. Now we have to follow the process. what for me is very important to state is that our company worked in the last 5 years with a market-friendly approach, and we have to follow. Then it will be the market to take a decision about the fairness of this value.
But why do you think Poste is the right partner for you instead of, for example, another telecom partner?
But I think that this is something that already Poste stated yesterday. But again, I don't want to anticipate evaluation.
Yeah.
Let's talk like that. In Europe, we are telling everybody that we need a consolidation of the market. Before in country and then through Europe. Because today, the digitalization business, it's a scale or giant business. Yeah. You need to be fast and you need to have money. So you need financially, from a financial point of view, big shoulder. So how you can do that? Increase the footprint, horizontally wise, so you can grow outside, or you can vertically integrate it with different services. Now, it's not me that have to say today which is the right place, but we must have clear in mind that small is not necessarily nice. Whatever will be the decision that the market will take, because it will be the market that will decide, we are in front of a very important decision. The market is moving very fast. There's a collapse between different businesses, IT, content, cloud, everything under the word of digitalization. You have to play a role that, in which way the market will define.
But how much operational independence would Telecom Italia keep under this new Poste belonging?
It's too early to say, but it's more useful to hear what Matteo Del Fante, the Chief Executive Officer of Poste, told yesterday. But again, we are at the beginning of a process. What is important is also to remember what we did and how was also the shareholder Poste rational. But again, we must do everything that is market-friendly.
Does this take you out of the European consolidation story?
No. Why? If I'm not wrong, this is what was declared again by Matteo Del Fante, but I cannot place his place. Yesterday, he clearly stated that he continued to foresee the market consolidation as a key milestone. Again, we are too many in Europe. Also at European level, now everybody are starting to ask for a consolidation of the market. I'm used to do a stupid example that makes everything clear for everybody. I don't know if you have a daughter or a son. You can have a party, one cake of the same size. If there are 100 children, try to eat the cake of 3 children. Something changed.
Yeah, I tell you, we come from a big family. Even 3 people trying to eat the same cake is a little bit of a nightmare. Would Telecom Italia actually pursue cross-border consolidations? Like, if you give me some kind of timeline of what you think will happen at this point, what does it look like?
But we told that also in the past. Until today, we must try to increase and improve our number, because sometimes we forget that until I was here less than 2 years ago, and we were discussing if we should be able to survive. Now, we solved the issue of the debt, we refinanced the debt, we put the operation under control, and now we have in front of us some opportunity. Which are these opportunities that are more or less the same everywhere in Europe? In the consumer business, consolidation and customer platform strategy. On the enterprise segment, digital sovereignty. If I'm not wrong, is at EC level a tough discussion about what really means digital sovereignty. And these are 2 places in which we prepare the company to play the right role.
But when you find out about this offer, I mean, what's your first reaction? Is it, oh, we're going to be owned by, we're going to be going back to government control? Do you look at the synergy? So we heard about 700 billion. Is there going to be more? Like, what's your first reaction?
Unfortunately, I'm not the owner of the company. I'm an executive, and I used to say also to my team, we have to act in our company always if we are a management team that will stay here forever. Because if you start to take decision just in the short term, just to give an idea, for the renewal, you will never take the right decision. So keep calm. It's something that happened in the market. The market will evaluate. We have to continue to work on what we were good to do. Deliver the number and work for the future of the company.
Where do you see the real synergies?
But we already declared in the consumer, the sales channel, we were talking about customer platform. Together with Poste, with or without the public tender, we always declare that we can increase our footprint, we can increase our portfolio of services. On the digital sovereignty, it's clear that Poste can be a very powerful partner. Then I think that Matteo Del Fonte yesterday declared that he did that because he thinks that there will be synergy, and they want to take 100% of the synergy.
Are you expecting to stay if the merger goes through, if the acquisition goes through?
But today this is not important. What is important is the interest of all the shareholders. We are paid to do the best for our company in the medium and long term with a market-friendly approach. If you start to work thinking of what will happen to you, you will take the wrong decision.
I mean, what I feels very important is, can you go after the U.S.? Can you be a real competitor for China? Do you think this gives you the best chances, or Italian telecoms the best chance to really compete if you're not part of a European cross-border story?
I think that first of all, it's not against China or against U.S. It's a matter of reciprocity. If in US or in China they apply specific rule, it's important that we do the same in Europe. So we have to start to recover a kind of digital sovereignty. If you look around, whatever you see all around of you works on digital. And we have to manage the digitalization of our country and our continent, Europe. And this is the most important thing. To do that, we must invest.
But does Europe do enough to do that?
This is time to be brave. At European level, we must be brave to take a decision. Inaction is not an option. It's also Draghi that mentioned that. We don't have to be scared about some dogma that in the past could work. Consolidation is not necessarily a bad word. Companies are built to make money to be reinvested. And today, the telco business in Europe is not a so rich sector.
But you're talking about cross-border consolidation, right? Which we've heard a lot of. There's
Today
been
it's
quite a
too
lot of
late to do
pushback.
cross-border consolidation. Because if you see, there are already. So you have two approaches, vertical and horizontal. Horizontal, geography. Vertical, if you integrate the portfolio and you play a more important role in a single nation.
Well, thank you so much for a very interesting conversation. That was Pietro Labriola, the Chief Executive of Telecom Italia. And just to add, we've, of course, also reached out to Poste Italiane for an interview. Now, shares in the Spanish company Puig Brands jumped as much as 17% after Estée Lauder confirmed it's in talks to buy it. If the deal goes through, it would create a beauty giant with about $20 billion in annual sales, adding brands such as Byredo and Charlotte Tilbury to Estée Lauder's portfolio and helping it to compete against L'Oréal. Well, speaking with me last month, the chief executive of Estée Lauder said M&A is about more than just buying.
We are in a period of execution. It is very important that Beauty Reimagined, we are at the beginning of this journey. The first year we've delivered on our promises. The second year for me is about now accelerating the growth and making sure that we are simplifying the ways of working. We are rebuilding profitability, but at the same time we are looking at our portfolio. So we have, and I've been very public on that. Yeah. We are looking at the portfolio, and we will always be part of the M&A discussion. Like, if you look in our 80 years history, we've bought a lot of companies. Lately, obviously, The Ordinary and Tom Ford were part of it. But M&A is not only about buying something new, it's also about incubating new brands. And we are incubating a lot of new brands as part of like DCM or taking minority investment.
Well, that was the Estée Lauder CEO speaking to me in February. Now, this is a picture across the board for the markets. Now, stocks seem to be falling a little bit more, but again, trading is very volatile as the war drags on. Again, traders are now grappling with a wide range of possible outcomes for the war in the Middle East, continuing to juggle these barrage of headlines around the U.S.-Israeli war after President Trump signaled a possible end to hostilities. Coming up, we'll discuss whether diplomacy to end the Iran war is possible as Tehran denies talks are taking place with the U.S. That's next, and this is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Acqua here in London, and these are your top stories. Iran disputes President Trump's claim that talks are underway on ending the war, describing it as fake news. Brent crude continuing to trade above $100 after a report that Gulf countries, including Saudi Arabia and the UAE, may be drawn into the conflict. Plus, fresh concerns for private credit. Apollo caps withdrawals after requests hit 11%, while a fund run by Future Standard and KKR is cut to junk. So Iran's parliamentary speaker has denied any negotiations with the U.S. are taking place. That, as Trump said, the U.S. would delay strikes against Iran's energy infrastructure after what he called productive conversations with the country. Well, let's bring in Bloomberg Horizons anchor Jumana Bersetchi. Jumana, what do we know about the state of these negotiations?
Yes, well, President Trump has framed it as that the conversations have been very constructive and that there has been good progress. And of course, what we heard directly from some of these senior Iranian officials is that no direct negotiations have actually started to take place. And in fact, the Speaker of the Parliament went one step further and suggested that the reason that President Trump was suggesting that these negotiations are underway is to manipulate financial markets. Now, this is, of course, rhetoric that's being put out by Iran, but reporting overnight has suggested that actually mediation efforts are underway. This is being led by Egypt, by Turkey, by Oman. Of course, they had played a very important mediation role even in the run-up to this war, and Pakistan also looking to play a mediation role and possibly even to host talks later this week per some outlets reporting. But at this point, it is unclear what the substance of those negotiations are going to be about, who exactly is going to be attending. What we do know is that the Iranian Foreign Minister Abbas Araghchi has had several calls with his counterparts, but again, not really subscribing at any point to firm, direct discussions between the U.S. and Iran. I should also mention, Francine, that despite the push for diplomacy, the war is still very much still going on. We're day 25 now. Joint Israeli-U.S. operations have continued overnight, hitting various targets around central Tehran, around other parts of Iran as well, including some gas processing, near some gas processing facilities, I should say, causing limited damage. And in retaliation, Iran continues to strike back at key Gulf states, Kuwait, sirens being reported in Bahrain overnight, more interceptions coming through in Saudi Arabia. And the feeling from the region is that even though the very worst possible scenario has been avoided for at least the next 4 days, there's still a lot of question marks as to whether we may see a diplomatic breakthrough. But for now, the war continues.
Jumana, thank you so much. Jumana Borsechi there in Dubai. So is a diplomatic end to the war even possible? Well, joining us from Rome is Natalie Tocci, professor at Johns Hopkins University, and with me here in the studio, Brett Ruin, president of the Global Situation Room and former White House Global Engagement Director. So thank you both for joining us. Natalie, where do you see this going? Again, it's quite confusing to know what kind of conversation and talks have been taking place between the U.S. and Iran.
Right. I mean, and it sounds like there haven't been direct conversations, but rather there has been shuttle diplomacy going on through various regional actors. It seems fairly clear by what we're hearing that on the U.S. side, the overall goal of this war has essentially morphed over time. I mean, it was about regime change. It was about the nuclear program. It became about the missile program. Now it's about reopening the Strait of Hormuz. And I think as those goals have essentially changed, what we have also seen is that they have changed as Iran's bargaining power has increased, right? So having secured, in a sense, minimum goal, so far at least, of regime survival, essentially Iran is upping the ante, yeah? And it's upping the ante in its mind probably to try and avoid a third Iran war from breaking out maybe 6 months or 1 year's time from now. And so basically we see an increasingly hardened Iranian regime that essentially sees its own bargaining position having strengthened as the war has essentially refocused on the economy and therefore in particular the reopening of the Strait of Hormuz, which Iran knows there isn't a purely military solution to this, right? It necessarily needs to be a diplomatic one where it sees itself obviously at the table.
Brett, how do you see this evolving? Again, but you know, both sides have different endgame, but it's unclear what the U.S. want out of Iran. And actually, I mean, this is about survival for the Iranian regime. So what do they need?
You know, Francine, the key factor when you're doing these diplomatic negotiations is to look at who has the ability to outlast the other, who wants a deal faster. And I think in this case, it is pretty clear that Trump, both for domestic economic as well as political reasons, needs a deal, and Tehran knows it. So Tehran has a lot of leverage here. Obviously, a lot of pain has been inflicted on the Iranian people, on the Iranian regime, but they are willing to endure that because unlike what Trump faced in Venezuela, the Iranians are much more driven by ideology. There is a pretty firm structure in place that is going to allow them to take that sort of attack from the U.S. and from the Israelis.
But Natalie, so given all of that, how do you see the Iranians actually coming to the table with what kind of deal? Do we think that the U.S. and Iran are talking, but that Iranian officials cannot say it publicly?
Right. I mean, I actually see, I mean, frankly speaking, Francine, I don't see what the contours of this deal might be, because it seems fairly clear that the Iranian, in a sense, ask and, in a sense, bottom line is way, way higher than it was before this war broke out, right? You know, much as we see, you know, the Trump administration or Trump himself at some point folding, and much as we may think that he may be able to sell anything to his own base as a win, it's fairly clear that it's a loss, right? So at this point in time, I think we're still in an escalation trap when it comes to the Iran war. Even if, as Brett was rightly saying, it's fairly clear that the Trump administration and Trump himself, in one way or another, wants out.
But naturally, they want out because of gasoline prices. What does the future of Iran look like? Does the U.S. just let this regime stay as it is? Do the Gulf states let them live on?
Well, I mean, the thing is, Francine, that so long as the United States is unwilling to put very significant troops on the ground, and even then, it's obviously an open question whether they would actually succeed in regime change. But let's say, for the sake of argument, that that would be the necessary condition for regime change. That condition is not in place. So regime change does not seem to be on the cards any longer. And this is a hardened regime one with now a supreme leader that has not, sort of actually said that nuclear weapons are out. Let's remember that the edict of the former supreme leader that Iran would not have nuclear weapons probably died with him, right? So this is actually a much, much hardened Iran. And at the moment, as I said, they actually don't think that they are crumbling precisely because the war has become an economic war revolving around the price of oil and gas.
Natalie, thanks so much. Natalie Tocci, they're a professor at Johns Hopkins University, and we continue the conversation with Brett. Brett, when you look at the U.S., I mean, was this a gross miscalculation?
I think without question. And Trump was perhaps a little bit high after the Maduro operation in Caracas. He felt as though he had the momentum, he had the model that he could use if he took Khomeini out, that somehow the Iranian regime, like the Chavistas in Venezuela, would fold, would bow to his will. And this is where the subtlety is very much lost on Trump, and the strategy is absent. What's also interesting when we look at the question of what comes after this conflict, the Iranians will have withstood American-Israeli attacks. They'll have understood how we operate, and they will be able to build better defenses, which makes Iran more dangerous.
But again, the end game for Iran right now is inflicting maximum economic pain on the Trump administration, given the midterms are so close, or is it something else?
Yes, because ultimately the calculus for Iran is to recalibrate those negotiations. They were in a much weaker position before these attacks. They knew that they had to make more concessions. Now, we're in a position where Iran is talking about taking from the U.S., potentially the U.S. removing bases from the region, agreeing not to attack Iran. What does that do? That allows them a runway to rebuild surreptitiously a whole lot of strategies and structures.
Brett, there are many question marks on whether a lot of the Gulf states, including Saudi Arabia, will get much more involved in the conflict. Europe last week said, no, we don't want that much part of it. Will everyone have to be drawn in?
Well, I think Trump has lost a whole lot of goodwill, even influence in the Gulf and the broader region. He went into this very much cowboy style without consulting, without collaborating with our broader allies. So I think the Saudis, the Omanis certainly, as well as the Emiratis and the Qataris are going to say, you know what, Donald, we've gone along with you for long enough. Now, because of the pain that you've inflicted on our economies, you owe us concessions. So Trump is going to have to pay back, if you will, a lot of these regional governments in other favors.
What happens to China? I mean, does China China cannot deal with these prices, these high oil prices.
They can, but at the same time, they are sitting back, arms crossed, enjoying how America continues to lose that influence, that credibility. They look like the more serious partner, and yes, they certainly are going to have to take in the short term some economic pain. But again, the Chinese model, it's made to withstand that in a way that the American, the European models are not.
Brett, thank you so much for joining us. Brett Bruin, they're president of the Global Situation Room. Now, the European Union and Australia have agreed a free trade deal after almost a decade of talks. The president of the European Commission hailed the agreement, making a thinly veiled swipe at both the U.S. and China.
Today, we are telling an important story to a world that is deeply changing. A world where great powers are using tariffs as a leverage and supply chains as vulnerabilities to be exploited. In our story, open, rules-based trade delivers positive sum outcomes. Trust matters more than transactions.
Well, the two sides also signed a security and defense partnership to better facilitate cooperation on crises and security challenges.
It will bolster our collaboration on defense industry, maritime security, cyber security, countering terrorism, and combating hybrid threats such as disinformation. And it shows our shared commitment to global peace and security, including reaffirming our steadfast support for Ukraine in the face of Russia's illegal full-scale invasion.
Coming up, we'll talk to Anthony Jenkins, CEO and founder of 10X Banking, and how Britain can improve its productivity growth. That's next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Well, the conversations that matter, the insights you need. This is the Pulse in Francis Lacqua here in London. Now, Apollo Global Management is curbing redemptions from its Apollo Debt Solutions Fund, capping withdrawals at 5% of outstanding shares. It's the latest alternative asset manager to grapple with a surge in requests amid growing anxiety around the $1.8 trillion market's lending practice. I'm now joined by Silas Brown, Bloomberg's senior private credit reporter. Silas, thank you for joining us. So what more do we know about some of these stories that we're reading?
Yeah, look, I think Apollo is symptomatic of broader skittishness among everyday investors when it comes to private credit. I think they're concerned about AI and its impact on several industries that private credit funds lend to. And I think Apollo just joins the flock of BDCs that are using their right to curb withdrawals. There was a kind of eerie moment 3 or 4 weeks ago where they weren't using their kind of gating mechanisms. Now they all are.
And so, the other story, because they're on top right on the Bloomberg terminal, is Moody's has cut a private credit fund run by Future Standards and KKR to junk, and that's quite rare.
Yeah, and also quite significant. I mean, I think as the years have progressed, private credit funds have started borrowing in all manner of ways. They borrow from bond markets, they borrow from banks, they borrow from institutional investors through private placements as well. And so they are very rating sensitive. And this is of a rare occurrence of one fund moving down into junk territory, which obviously has borrowing cost implications quite significantly.
Yeah, Silas, thanks so much for joining us. Silas Brown, they're Bloomberg's senior private credit reporter. Now, the UK Prime Minister, Keir Starmer, says he's looking at wider measures to support Britain's economy through the Iran crisis. The Chancellor, Rachel Reeves, will announce new measures in Parliament later today. And that comes as UK government bonds head for their worst month since the historic rout that led to the ousting of former Prime Minister Liz Truss. It also comes as the war in the Middle East drives up energy costs and fuels bets on interest rate hikes. Well, Anthony Jenkins, the CEO and founder of 10X Banking, joins us now. He is, of course, also former Barclays CEO. So we've known each other for a long time. Anthony, I'm so happy to speak to you, actually. First of all, congratulations on rebuilding, right, this new 10X. What do you see the UK business landscape like at the moment? What could it do with?
So, let's be honest, it's not an easy situation. We face several very significant problems in the UK. The things that I worry about are just the lack of growth that we've had since the financial crisis. We all know about that. But the second thing that we talk less about is just the size of the national debt. The national debt to GDP ratio is now about the same as it was when I was born in the early 60s. And then when you combine that with all of this geopolitical instability, what you get is a lack of confidence. We know that the government doesn't have much capacity to spend in the economy, but businesses are frankly all risk off at the moment, and so are consumers. So we're in this position where we have these very difficult challenges in front of us. And for me, there's only one real solution that we have to drive hard at. Of course, everybody wants growth in the economy.
Everybody wants growth.
But how do you get growth? And it's really just two things, right? One is you can have more people working in the economy, and you can have higher productivity. What really matters, of course, is GDP per capita. So productivity is the critical thing. And I, over my long business career, have had lots of attempts to drive this, but I really feel now that's what we should be focused on. We can hold our hands up and say it's all too difficult, or we can actually dig in and try and drive productivity in the economy.
But Anthony, I mean, we've been talking about the productivity puzzle, especially in the UK, for the last decade or even 2 decades. How much does AI change things at a time where people are also just feeling uneasy? It's, inflation's going up. You think that the Bank of England will increase interest rates. It just doesn't feel good out there.
Yeah, I think productivity has this kind of aura of mystique about it, and then AI comes along and everybody's going crazy about it. But actually, productivity is a simple thing, right? It's about, I've got this much resource to create these outputs, and when all other things being equal, I want the relationship between the outputs and the inputs to increase. So how do we do that? One simple thing is stop doing things that don't add any value. I mean, in our normal working lives, how many things do we do that don't have any value?
Such as?
And I
Give
just
me an
give
example.
The example I love is, why are all meetings an hour long? Why? It's just habit, right? Try make it half an hour long. If you overrun, we'll make it 45 minutes. But if you think about it, if you cut every meeting you have in the week by 50%, think about the time that will give you back. That's just a very simple thing. But there's other things that we can do. Like in any activity, there are many, many steps there. Are there steps there that don't add any value? Take those steps out. Then there's training and upskilling. We've massively underinvested in that in this country. Can we get our people to do work more productively? And only then do you come to the point of automation through things like AI.
But again, are people very nervous about AI? So everyone's saying AI will make us 20% more productive. But I also see just a lot of anxiousness from employees across the board.
Yeah, that's sure. But I mean, this is the classic thing you see in all technologies. We overestimate the impact in the short term, we underestimate it in the long term, right? So what we need to do is be driving productivity through the economy now so that as AI seasons and gets more powerful, we can deploy it in the right ways. Simple thing in my business, I mean, we've used it to take out steps when we have an instance in the platform where an engineer has to gather a lot of data very quickly. Well, now AI does that for us. That's a 30-minute time save. But it's those sort of little point solutions that are working now, not some great big stabilization. I'm not saying it's not going to be profound in the long term, but I do think more importantly, when we look at jobs growth in this country, it's a lot more to do with confidence than it is to do with the impact of AI right now.
Do you worry? I mean, you mentioned debt, which means that it's going to be much more hard for the government to help maybe households when it comes to energy costs. It's also, if the Bank of England raises interest rates, maybe CEOs will hire less. Is this a worst-case scenario? I mean, are we looking at a stagflationary environment?
I mean, the problem with the debt is every other problem we encounter, it gives us less flexibility to deal with those problems, and that's what really worries me. And I don't think we're talking enough about that. I mean, if you look at our history over the last 300 years, there have been few times in our history as a nation when debt to GDP has been so high. And what it means is it puts pressure on the government for funding costs, and we see that in our debt funding costs versus other European countries. So it really is a very significant challenge. And the only way out of this, I think, is to be focusing on the things we can control as individuals, as organizations, and as the government, because we have to drive growth. If we drive growth, it will allow us to bring the debt down over time.
Yeah, how would you drive growth? I mean, if there's one priority for the government right now, what would make a big difference?
Well, actually, I think, we always look to the government for every solution. I think as businesses, we should be looking for those own solutions ourselves. What can we do? What do we control? Yeah. And one of the consequences of this, of course, is actually if you get more productive, you employ fewer people. That's a logical consequence. Or you do more work with the same people. But in my own business in TEDx, we employ many fewer people now than we did at the start, partly because we've built a lot of the software, but we're much more productive. Frankly, we're delivering more, we're delivering better, and it's a better place to work.
What's next for 10X, and what was, there must have been a lot of hurdles. I know we've talked about them in the past, but what's been hardest actually in building this company?
Well, yeah, I always say I've had two careers. I've had a kind of big bank career and the entrepreneurial career. I tell you, the entrepreneurial one is much harder. It's like walking on a high wire without a safety net. But, it's driving. First, you have an idea, then you have to bring the idea to life, then you have to be able to sell it, you have to make money out of it. And now we're at the point where we've deployed this software all around the world, from New Zealand to the United States, and it's about scaling the business now. And people always say, oh, what about AI? Well, I can assure you the last thing banks want is AI running around inside their core banking platforms.
I mean, can you see through that what regions are doing better than others? Does it feel, a lot of the Asian economies seem to be doing much more buoyant than some of the other G7s?
I mean, the US is always an outlier because people have been writing the US off for 40 years and it always comes back. It always comes back. But generally speaking, the further east you go, the more optimistic and positive things are, partly because you've got massive populations there, you've still got relatively high growth, and you've got emerging middle classes which always drive demand for goods and services. So, I think about my businesses in Australia, New Zealand, Southeast Asia, even in places in Africa, we're seeing much better dynamics for our business there.
Has the war in the Middle East changed any of your outlooks?
No, not in the short term. I think that's the problem. And you can see it in the markets as well. They can't calibrate what the impact is going to be. Is it just a short-term blip? Is there going to be a long tail on it? Nobody knows. So everybody's in a wait-and-see mode at the moment. But right now, and remember, we're only, 3 weeks into this, we haven't seen any pullback in demand for what we're doing.
Yeah, I mean, the longer this lasts, do you think customers will, you'll be less affected because it's software, but do you think customers will, either pull back or actually start thinking about their CapEx differently?
I mean, I think you definitely get second and third order effects of this, right? So, one of the consequences of this may be interest rates stay up for longer. That's actually generally good for banks as long as you don't get a credit downturn. So that could be more money to spend on what we do. But then there's always that thing where people go risk off and say, well, do I have to take that decision now, or can I kick it down the road for 6 or 12 months? So the longer this goes on, for sure, the more it's going to affect business confidence.
And I mean, the other thing that we talk about in the UK a lot is, does the Prime Minister survive? Does the Chancellor survive? I mean, how much does this play in the psyche of UK businesses?
I think in many ways, most people in business are fairly agnostic politically. They just want conditions in which their business can succeed. I think we saw the bond market react when there was talk about the Chancellor leaving. I think that was more to do actually with the fact that the attitude to spending might increase. And what the bond market's telling the government is, you have no flexibility. You can't spend 20, 30, 40, 50 billion more on whatever you want to spend it on. It's just not there. So again, all other things being equal, stability is good. But, of course, the politics is politics, right?
But did the Chancellor actually put too many barriers in what she could spend? Was it too that the market now kind of latches on to that?
No, I think it's really nothing to do with the policies of the government. It's to do with the fact that there just is no capacity.
No, there is not.
UK PLC has maxed out. And I know I don't like using personal finance analogies to talk about our economy. It's not really appropriate. But we have maxed out the capacity for the debt markets to support this country. Yeah, on the margin, you might be able to spend a bit more, but you can't do what happened in the last 5-6 years where people were spending 40 billion, 300 billion for COVID. I'm not necessarily saying that was the wrong decision, but we are where we are.
Anthony, thanks so much for joining us. As always, Anthony Jenkins, the CEO and founder of 10X Banking. Coming up, Bloomberg's Tom McKenzie has an exclusive interview with Renee Haas, the chief executive of ARM Holdings. Up next, it's Bloomberg Surveillance, and this is Bloomberg. Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
We're really seeing in real time just how much this war is impacting not just stock markets, bond markets, and energy markets as well.
We're at a point right now where it's on just about one big trade.
You've got to look past the daily news and the headlines.
We just don't know what resolution even looks like at this point.
It's not like this is a flip of a switch where everything is going to be great again.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, hoping to de-escalate.
My whole life has been a negotiation, but with Iran, we've been negotiating for a long time. And this time, they mean business. I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us.
Optimism hanging on a diplomatic push Iran is failing to recognize. As the Journal indicates, Saudi Arabia and the UAE are close to being pulled in. Crude oil is holding on to triple digits following further strikes across the Gulf. The tension is far from over.
Far from over. We have seen overnight an escalation when it comes to missile and drone attacks across the region. And on top of that, Jonathan, you do have potentially of this becoming a more regional conflict. Saudi Arabia, to the Wall Street Journal, according to their sources, potentially looking to set deterrents and may join in the attacks. We also have similar reporting in terms of the Saudis telling Washington that if our power or water plants were hit, then maybe then that would be a time to join. The Emiratis, maybe they're going to go after the financial ties this regime has in their country. So potentially you could see more countries getting involved as their stance hardened towards Tehran, not Washington.
We are all at the mercy of the Trump whipsaw in these headlines as they cross the start of the week. The range we've seen already in the last 24 hours. Anne-Marie at the lows. S&P 500 futures yesterday down by more than 1% at the highs. We were up by close to 3%. A 22 basis point range on a 2-year yield. Wild swings there too. And on crude, 101 on WTI to start the week, 84 at the lows. That's a 12-month trading range. Typically, now we're talking about a 24-hour trading range.
All of this being sent off, shock and awe, when it comes to Truth Social posts. And then the president went out and did brief reporters. And I wouldn't say that there aren't negotiations. I know the Iranians come out and said no talks are happening. Maybe no talks are happening directly. But there has been a lot of reporting, whether it's due Turkey, whether it's due Pakistan, that there are intermediaries that are willing to step in right now and are talking to both sides. And one thing I hear a lot from former officials is that anytime a third party gets involved, they always try to embellish. So maybe there's some embellishing to the Washington side and some embellishing to the Iranian side. Potentially no direct talks, but there could be a diplomatic channel.
Should we take a beat about who knew what and when ahead of that post by the president just yesterday? This is from the team here at Bloomberg. Here are some numbers for you. Futures corresponding to at least 6 million barrels of crude was sold in about 2 minutes, about 15 minutes before we got that post from the president yesterday. The average for the same time period over the previous 5 days, 700,000 barrels. That is a lot more volume, way more volume than we're typically used to going into a massive market-moving post by the president.
I've gotten a lot of outreach about this. Individuals messaging me who knew about what when ahead of the president's posting because of the wild moves, as you say, a range we normally see in 12 months whittled down to just minutes. The FT also spoke to someone who said, you know, this is hard to prove, but you have to wonder who would have been relatively aggressive at selling futures at that point, 15 minutes before Trump's post. This is what everyone in financial markets is wondering, even if they can't prove it.
Brent crude this morning, 101.60. Equity futures just about unchanged on the S&P. We're negative by 0.2%. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth, with stocks coming off their best day in 6 weeks. Dan Stroyven of Goldman Sachs raising his price target on crude, and Kay Herr of JP Morgan Asset Management on why the Fed could still cut rates this year. We begin this hour with our top story. Iran firing fresh attacks across the region after denying talks with the US. The Wall Street Journal reporting Saudi Arabia and the UAE are weighing getting involved in the war. Joining us now is Bloomberg's Jumana Basechi from Dubai. Jumana, welcome to the program. Always leaning on your expertise here to understand some of the reporting we're seeing so far. What's the reaction in the region to that reporting from the Journal?
Yeah, I mean, if I could summarize the last 24 hours, I would say that there are two things that have happened. Number one is an attempt to move towards diplomacy. And number two, an attempt to perhaps bring down the temperature, de-escalate, and remove the imminent threat of attacking power plants. And one thing that has really emerged, that is very clear in the last 24 hours, is attacking power plants, going after civilian infrastructure, desalination plants. All of those constitute red lines. And from our own reporting, it is also quite evident that Gulf states have put a lot of pressure on the Trump administration to dial back against some of those threats on Iranian civilian infrastructure out of fear of reprisal, because if Iran did respond, they would once again look to target energy and those desalination plants in the region as well. Now, that being said, what is very clear, too, is that the Gulf states' resolve has most definitely hardened over the course of the last week. And you've heard it from the likes of the Saudi foreign minister. The night of those Ras Laffan attacks, he was giving a speech and he said, look, Saudi patience is not unlimited. In the last couple of days, Saudi Arabia have literally kicked out the Iranian military attachés and deemed them to be persona non grata. Our own reporting also suggests that if Iran had retaliated and gone after a Saudi power plant or desalination plant, then that perhaps would be the red line for Saudi Arabia to get militarily involved. But the bar is still very, very high for these states to get militarily involved, and we're not there yet, according to many senior people that I've spoken to. But at the same time, I think it's also worth reminding people that an outcome in which Iran still maintains effective control over the Strait of Hormuz is something that is unacceptable. You heard from the likes of Sultan al-Jaber. He's the CEO of ADNOC, which is the state-owned energy company here in the UAE, and he likened the Iranian control or effective control of the Strait of Hormuz now to economic terror. So we don't take those words lightly. And I think while, yes, there's been a push for indirect discussions right now between the US and Iran, questions about whether this is going to lead to some sort of a breakthrough. And number two, especially for energy markets, what's going to be crucial from here onwards is who effectively is going to be controlling the Strait of Hormuz. So it's not just who militarily is going to win the war, but also more long-term, who is going to effectively be controlling the passage of those vessels passing through the strait.
Jumana, always good to catch up. Jumana Basechi there, leading our coverage out of Dubai this morning. There's always a home bias on Wall Street. I understand where it comes from. What led to the president removing short-term escalation risk yesterday morning? In markets, you believe it's about markets, the pressure coming from equities, from bond yields. When you listen to Jumana, what I'm hearing is the pressure coming from Gulf allies, pushing the president away from escalating things too quickly, too soon.
Gulf allies, intermediaries, but also I would say even some corporate America executives from the C-suite. You know, CERAWeek, you have Secretary Wright, Secretary Burgum there, and I'm told they did get a bit of an earful of what the tit-for-tat escalation could mean between Washington and Iran to their facilities in the region.
Here's the view on Wall Street this morning. Cameron Dawson of New Edge Wealth writes in the following: you can't predict the taco, but we see equity market volatility continuing in the coming weeks. Cam joins us now for more. Cam, good morning. Do your best. What was that yesterday?
Yeah, well, it was a form of a taco, and certainly we saw stress in markets. Whether we think the thing that probably was the most pressure from a market's perspective was the 2-year yield being above the Fed funds rate. We used to think the 10-year was the thing that got Trump to act back last year in the face of tariffs, but that surge in the 2-year yield suggesting that the Fed could be pushed to rate hikes certainly seemed to be the thing that possibly caused the most pressure.
There's a difference between pricing out escalation risk and pricing in long-term peace. Where do you think we are at the moment?
Well, when we think about oil prices, it's not where you go, it's ending up where you stay. And the really big question is how much damage has been done to infrastructure that could prevent us from getting back down to that $60, $70 a barrel where we were prior to this conflict. There was a great article in Bloomberg last week from Dylan Griffiths who went through all the different things of infrastructure that have been destroyed or damaged. And it just suggests that even if you do see a de-escalation, getting us back down to oil prices where they were before looks to be an unlikely scenario, which means that we have to price in more of the energy cost pressure on the broader economy and potentially earnings, which we have seen nothing yet.
You've surely got to reprice growth. I'm just going through the estimates quickly that we're seeing from the likes of UBS, the likes of Goldman Sachs. Goldman's saying we're going to average 85 this year on Brent. UBS putting that number at 86. For the second quarter, they put that number at 100. The number before was in the mid-70s. That's a major change. How are you repricing your outlook for growth with those numbers in mind?
The most interesting thing about the last month is how much analysts have held the line on their growth estimates. And that's a big difference from 2022 with Russia-Ukraine or 2025 with tariffs, where analysts were really quick to cut estimates and then ended up having to chase them higher as the economy and corporate earnings proved to be more resilient. So you've seen GDP estimates stay at about 2.4%, but more interestingly, you've actually seen earnings estimates go up in the last month. You've added $10 a share to 2027 earnings estimates in the last 3 weeks alone, which is now pricing in 16% growth for 2026 and 2027. So it raises the question, is this a sign of resiliency or is this a sign of complacency?
Well, you're right to point out that peace can't fix broken pipes. And it does feel like if this lingers, maybe the street individuals will have to go back and say, actually, this is going to have a bigger hit to corporate profit. When does that time come?
Yeah, maybe as we start getting into the first quarter earnings season. It's interesting, if you start pulling back the layers of where this upside to earnings estimates have come from, we think that there's a portion of it that is complacent. The everything else portion of the market where earnings estimates have stayed flat in response to this energy disruption. But the majority of the upside has come from areas like semiconductors and a little bit from energy prices. But remember, the entirety of the energy sector is less than half the weight in the S&P 500 than NVIDIA is. So NVIDIA and the broader semiconductor complex has been the source of all of this upside to earnings estimates, which we can say is idiosyncratic and resilient. But I think it's also interesting to note, despite the fact that you've increased earnings estimates for semis by 30% over the last 3 months, you've actually seen the stocks be flat. So it hasn't translated into better stock prices.
You can push around paper markets with headlines, and we saw plenty of that in the last 24 hours. Physical markets need to clear demand and supply at spot. And what we're seeing right now is real tightness. And in certain places like Asia, real shortages. Natasha Kaneva of JP Morgan said demand isn't being reduced by choice, but by the physical absence of inputs. That's about shortages. That's what you're seeing in physical markets.
And you're seeing that, you're right to point out, across Asia. And they are going after a number of measures they have in their toolbox, even telling individuals you have to work from home, or if you want to go out, you have to carpool. They are on the front lines of this energy shock, and they are doing anything they can to make this easier for the consumer.
So Cam, what are you advocating for right now? We often talk about dislocations and creating value in certain spots of the market off the back of big moves. You talked about the front end of the yield curve, 3-4% for the first time since last year on twos. Where's the opportunity at the moment for you?
Yeah, we think it's really important to stay disciplined with the technicals, mostly if this volatility continues. We got a slight bit of an oversold indication back on Friday, but if we continue to see this volatility, there likely will be long-term buying opportunities in the market, which means that it's important to take the emotion out of some of that decision-making. We always quote Walter Deemer, when it comes time to buy, you won't want to, but that's a really important reminder in times of very distinct uncertainty. So watching those things like breadth measures, watching oversold conditions will be so very important as we navigate through what we think could be continued volatility in coming weeks.
I think it's fair to say that at the moment there's a lack of trust. Can I just ask you your opinion on that and where we stand at the moment? Do you think that could lead to reduced liquidity? Just certain market participants saying, you know what, I don't want to play Not in this market. I don't know what to trust. I don't know when I'm going to be whipsawed next, and by what.
Well, look, we've been seeing liquidity start to pull away from this market for quite some time. Michael Howell has been writing a lot about this. It's really important that liquidity has been ebbing, and you've been seeing it in portions of the market. I think what will be fascinating is if you continue to see a little bit of an ebbing of inflows into U.S. equities, where we have seen a lot of inflows into international equities starting this year, which is very different than last year. If you recall, the whole narrative was about how people were selling America and going into international, and then you looked at the flows data, and people were still buying in record amounts U.S. stocks. So the question is, at what point do people get tipped over the edge and stop buying?
Cam, it's good to see you. As always, thank you. Cameron Dawson there of New Edge Wealth. If you are just joining us, following the biggest one-day gain in some 6 weeks on the S&P 500, futures this morning just about unchanged. Let's get you an update on stories worldwide with your Bloomberg Brief. Yahara has more. Hey, Yahara.
Hi, John. Day 25 of the Iran war, and attacks are continuing on both sides, even after President Donald Trump said he's holding off from striking Iran's energy infrastructure for 5 days. Trump saying U.S. envoys Steve Witkoff and Jared Kushner spoke with a top person in Iran on Sunday, but that it's not the new supreme leader. Iranian officials say they're ruling out discussions with the U.S. Meanwhile, Saudi Arabia and the UAE are considering becoming involved in the conflict. The Wall Street Journal reporting Saudi Arabia has agreed to give the U.S. access to King Fahd Air Base, and the UAE has closed a hospital and a club owned by Iran. The Journal also reporting that thousands of U.S. Marines are set to arrive in the Middle East on Friday. And New York's LaGuardia Airport reopening with reduced capacity following that deadly collision between an Air Canada express plane and a fire truck late Sunday night. Recordings reveal an air traffic controller ordering the truck to stop just before the impact with the plane, which was traveling at more than 130 miles an hour. That's your Bloomberg Brief, John.
Yahara, thank you. Thank you for the update. Up next on the program, Iran's last chance.
Iran has one more opportunity to end its threats to America and her allies, and we hope they take it. Either way, America and the entire world will soon be much safer.
Up next, we'll catch up with Stephen Kirk of the Council on Foreign Relations, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Compared to the manic price action just on Monday, things are a whole lot calmer. Equity futures unchanged on the S&P 500, on the NASDAQ 100, slightly positive by almost 1/10%. Under surveillance this morning, Iran's final chance.
Iran, we've been negotiating for a long time. And this time, they mean business. They want to settle, and we're going to get it done, I hope. Now, Iran has one more opportunity to end its threats to America and her allies, and we hope they take it. Either way, America and the entire world will soon be much safer.
So here's the latest this morning. Iran firing fresh strikes across the Gulf as President Trump claims talks are underway to end the conflict. Bloomberg's Mike Shepard joins us now from Washington for more. Shep, welcome to the program. What is the state of play? Who's talking to who, and how far along are we in those talks?
Well, John, this is maybe what we refer to as the fog of war, or perhaps the fog of diplomacy. We have, on the one hand, President Donald Trump yesterday claiming that talks involving his special envoy, Steve Witkoff, and son-in-law, Jared Kushner, with a top person in Iran, were moving ahead, and that Iran was actually looking to make a deal. Yet we just as quickly heard back from Tehran saying that no such talks were underway and that they wouldn't want to reach a deal with Trump at this point because they do not see any trust between Tehran and Washington at this point. At the same time, Iran's foreign minister has been discussing with some counterparts in the region, in Turkey, Oman, and elsewhere, who have served as intermediaries between the U.S. and Iran. So there may be some level, John, of discussions underway, very preliminary if they are really advancing at all. And we'll have to watch to see what the president says later today. He'll be appearing at 1:30 p.m. for a swearing-in ceremony for the new Homeland Security Secretary, Mark Wayne Mullen. It'll be in the Oval Office, a place where he likes to hold court and really talk about his next steps. So the question will be, will he tilt more toward diplomacy or tilt more in the direction of this ultimatum that he has given to Tehran by Friday to come to heel and accept the U.S. terms for some sort of peace agreement?
So, Shep, let's stay on the calendar. So in 5 days, that's when this period expires, in 5 days. Count yesterday as one, we get to Friday. Shep, also on the calendar, additional assets get to the region around the same time. Is that just a coincidence?
Well, that's a great question. And there are some observers who have wondered whether Trump is simply buying time to take perhaps another step. And that would be putting American boots on the ground. And in particular, one of the areas that he has weighed in the past, and even more recently, is whether American troops should take a presence on the energy hub of Karg Island. It is close to the Strait of Hormuz, or perhaps take some sort of a role in trying to reopen the strait by putting a military presence on the ground there. All of that is speculation. It's unclear whether he would move in that direction. But remember that when this conflict started right beforehand, Jared Kushner and Steve Witkoff had been engaged in talks with senior Iranian officials indirectly via Oman, and they found that the talks hadn't gone anywhere, and not to the satisfaction of the administration. And it was at that point that they walked away. So if there are talks underway, as the president says, there is not much time for Iran to make a move. So it will be interesting to see how those assets line up and what the president's next steps will be.
Hey, Shep, it's good to see you, buddy. As always, down in Washington, D.C., Mike Shepard. You'll hear more from Mike later on this morning. Stephen Cook of the Council on Foreign Relations writing the following: President Trump must get clear, verifiable constraints on Iran's nuclear program and re-establish freedom of navigation through the Strait of Hormuz, or it is a strategic defeat for the U.S. Stephen joins us now for more. Steve, welcome to the program. If I want to call Iran, who do I call right now? Who do I speak to?
Well, that's a very good question. The reporting is that the United States was able to reach the Speaker of Iran's parliament, who is quite powerful. He, of course, has denied that any negotiations are going on. There's also some indication that the Egyptian foreign minister was able to reach people within the Islamic Revolutionary Guard Corps. They have also denied the fact that there are going to be negotiations. Regardless of whether there are or there aren't, it does seem that the president is, in keeping with his timeline of 4 to 6 weeks, looking for a way to wind this conflict down.
Stephen, you know these countries really well, especially when it comes to Egypt, Pakistan. I know Turkey you spent a lot of time in. Who do you think could be a real viable intermediary right now between Tehran and Washington?
Well, it seems that the Pakistanis are taking the lead with a lot of help from the Egyptians. The Egyptians have improved their relations with Pakistan. Pakistan has improved its relations with Iran, and the Egyptians have also improved their relations with Iran in the run-up to this conflict. So those are the countries that seem to be playing the most behind-the-scenes role in trying to establish some type of communication between Washington and Tehran. But the Iranian position is we've been negotiating with Trump, and twice in the middle of negotiations, he has taken military action. So there's going to be a tremendous amount of skepticism within Tehran about getting to the table. And as we've seen, the Iranians still have a lot of fight in them. There doesn't seem to be a lot of incentive on their part, despite what the president is saying, to engage in negotiations to bring this to an end.
To picking up on your point that the U.S. needs to reestablish the freedom of navigation in the Strait of Hormuz, or it is a strategic failure, how do you perceive the Strait of Hormuz will be basically operate in the future? Because the president said yesterday, it was a little bit tongue-in-cheek, but he did say maybe me and the Ayatollah will do it together.
Yeah, this is a huge problem. The United States cannot come out of this war with the Iranian regime intact, Iran's ability to fire on its neighbors, no clear verifiable limits on Iran's nuclear program, and the Iranians in control of the Strait of Hormuz. That would be a worse position than the United States was in before the president started hostilities on February 28th. They're going to have to reestablish freedom of navigation through the Strait. That means that the Iranians will have no control over who goes through that waterway.
Isn't that genie already out of the bottle? The Iranians have control. They're not going to get out.
It is, and it's going to be extremely difficult to put that genie back into the bottle. And it seems to me that the way to do that is going to be through military action. It's hard to imagine a negotiation, given the position that the Iranians are in right now, where they have established essentially a new regime for passage through the Strait of Hormuz, that they're going to go back voluntarily.
Stephen, it's good to see you, sir. Thank you. Stephen Cook there, the Council on Foreign Relations, framing what these talks, if there are any, will be about, what the objectives need to be.
And to Stephen's point, the Iranians will say, we have been through these talks with the United States, and every time we've been through them, whether it was Midnight Hammer, whether it's right now Operation Epic Fury, we have been attacked. So why should they take these talks seriously? And to your point, is Trump just buying time until the tens of thousands, the thousands of Marines get to the Middle East, and potentially we could see even regional partners come in terms of backing up the United States?
It's something everybody's doing right now, trying to figure out the next phase of this war. Does it lead to de-escalation or ultimately escalation? Equity futures this morning a whole lot calmer on the S&P 500. Yesterday, anything but calm, particularly this time yesterday, when we were about 40, 50 minutes away from a market-moving statement from the President of the United States. Futures calmer. In the bond market, wild swings. Two-year yields briefly through 4% before retreating back to levels we haven't seen in about a week or so on a two-year yield. Still a major move this month so far, both in bonds and in crude. We'll talk about all next. Dan Stroiven at Goldman Sachs and why crude could stay higher for longer. Plus, Yahira has your morning movers. Netgear surging on a US ban of foreign-made routers. That stock is up by 14%.
for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've immune the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now off age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Revenue, for example, and Nuvia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Further Wave by empowering our customers across all our segments?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Coming off the back of the biggest one-day gain on the S&P 500 in some 6 weeks. On the S&P this morning, we're just about unchanged to negative by 0.1% on the S&P. On the Russell yesterday at more than 2%. Best day since early Feb. So the best days of the month of March to kick off the trading week so far. On the Russell this morning, we're down by 0.2%. In the commodity market, yesterday, of course, consumer discretionary stocks outperforming as energy retreating briefly. Brent is positive again this morning, up 1%, triple digits on Brent, $90 on WTI, by 2% on the session. And in the physical market, some very interesting buyers stepping in to purchase Iranian crude.
Yep, the Indians, Reliance Refineries, Reliance Industries purchasing 5 million barrels of Iranian crude. This is according to Reuters. And Jonathan, this line strikes me, especially given the fact that we are under a Trump administration, and for years the president has spoken about maximum pressure on Iran. The crude was priced at a premium of about $7 a barrel to Brent futures. This is much higher in terms of price per barrel the Iranians are getting than we were just a few weeks ago.
This Treasury Department leveled accusations at the Europeans, which I acknowledge are fair, that the Europeans were financing the war against themselves by buying Russian energy.
Yep.
Feels like a very similar situation given the setup of the sanction relief we've seen over the past 2 weeks.
Yep, there's been a lot of people messaging me saying this is very hypocritical. How can you unsanction Iranian crude when you are literally in the middle of a kinetic fight with the Iranians, and they are attacking energy installation of your partners, and some of those are joint ventures with U.S. companies in the region.
That's the setup for the oil market. Here's the bond market, 2s, 10s, 30s. Let's just pick out 2 points on the curve. We'll go with 2s and we'll go with 10s. New highs for the year, 4.01% on 2s, on 10s, 4.44. And those highs for the year struck yesterday. And then we pulled back dramatically following that social media post from the president. 2s back at 389. 10s this morning at 4.37. As we count you down to the opening bell, let's get you some single names. About 3 hours away from the cash open, Yahira has more. Hey, Yahira.
Hi, John. We start with Jeffrey. Shares are up 9.5% in the pre-market on a report in the FT that Japan's SMFG is exploring a possible takeover. SMFG has been quietly building its stake as Jeffries has traded well off its highs, weighed down by its exposure to First Brands and just more broadly questions around its underwriting standards. And for SMFG, this is all about bulking up its investment bank and getting a foothold on Wall Street. Turning to Netgear, those shares also rising nearly 14% in the pre-market after a major policy shift out of Washington that the FCC is moving to ban routers made outside the U.S. over national security concerns. Now, Netgear does make its products overseas, but investors are betting that it could win exemptions and actually benefits if rivals like TP-Link get pushed out. TP-Link is the world's largest router maker, but it has connections to China, so it has been under scrutiny for that. And we end over in Spain with Puig shares up nearly 15% in the pre-market after Estée Lauder said it is in talks to buy the company in a deal that would create a $20 billion beauty powerhouse. The deal would help Estée compete with L'Oreal, but investors are questioning the timing since Estée Lauder is in the midst of a turnaround. So I will note Estée Lauder shares barely moving this morning, though they were down more than 7% on the news yesterday. John?
Yahara, thank you. Thanks for the update. More from Yahara later this hour, about 15 minutes' time. On our radar this morning, Apollo curbing redemptions from one of its biggest private credit funds following a surge in requests. The $25 billion business development company, Apollo Debt Solutions, capping withdrawals of 5% of outstanding shares. Elsewhere, Iran launching missile and drone attacks on Israeli cities and U.S. bases in the Middle East overnight. President Trump saying talks to end the war are underway. Tehran denying that claim. And finally, U.S. allies across the Persian Gulf reportedly moving closer to joining the fight against Iran. The Wall Street Journal writing Saudi Arabia will allow American forces to use one of its air bases as the UAE begins cracking down on Iranian-owned assets.
And the Wall Street Journal went even further than that, saying right now Mohammed bin Salman, the Crown Prince of Saudi Arabia, is actually looking to set deterrence and may join in the attacks, while the Emiratis are really trying to cut off some of the financial benefits there are in the Emirates that are helping the regime. What is interesting, and a viewer actually messaged me about this, and we were discussing it, the Saudi Arabians recently, just months ago, signed a defense pact with Pakistan. How messy could those deliberations get on the diplomatic front if Islamabad is leading those talks, but also if Saudi Arabia were to join in this fight and they were attacked by the Iranians? That basically means Pakistan, which wants to lead the diplomatic deliberations, would have to join the fight and back up the kingdom.
Reading through the details of this reporting and our reporting too, and getting a decent understanding of what's going on here, any involvement of Saudi Arabia and the UAE, highly conditional, and conditional on something very, very specific, which is dramatic escalation from here. And that escalation would include damage being done to power plants and the likes, energy infrastructure that would really harm civilians. That was what was on the table potentially on Monday evening, the initial ultimatum that the president would strike those power plants, those energy assets in Iran. Iran in turn would retaliate. They put massive pressure on the US not to go forward with that. I think that's a decent way of thinking about where we are and what the UAE and Saudi Arabia does not want to do and doesn't want to see at the moment.
No, but would they be willing to do it, especially now? And I think the comments from Saudi Arabia's foreign minister recently basically saying we do have a limit into what we are willing to tolerate from Tehran. They have said a number of individuals in Riyadh, in terms of officials, are persona non grata. So the relationship is quite tense right now.
Crude this morning, 101, WTI around 90. Crude, of course, coming off the back of one of the biggest one-day swings we've ever seen. The Chevron CEO, Mike Wirth, warning that risks might not be fully priced in.
The markets are trading on scant information, I would say, and kind of perception. There are very real physical manifestations of the closure of the Strait of Hormuz that are working their way around the world and through the system that I don't think are fully priced into the futures curves.
Dan Stuyven of Goldman Sachs hiking his full-year forecast, writing, we now expect 26 averages for Brent of 85, 79 for WTI, reflecting a longer disruption assumption and a recognition of structurally high supply risks. Dan joins us now for more. Dan, good morning.
Morning.
Let's talk about how your assumptions have shifted in the past few weeks. What was the base case and what is it now?
Yeah, so we changed our forecasts on the back of an assumption that it will take longer for flows to the Strait of Hormuz to start to recover. We now look for a start of recovery in mid-April as opposed to late March previously. We're looking for a gradual recovery over 30 months. But it's an assumption, and I do think the risks are skewed towards longer periods for flows to recover. Second, more structurally, I think prices even by year-end in our base case where flows start to recover would be about $20 higher than where they would have been in the absence of this shock. Both because we're seeing significant damage to global commercial oil inventories. This is a very large shock, the largest supply shock ever. And second, a recognition of structurally higher risks to supply, I think will lead to faster strategic stockpiling from governments for years to come and a security premium in long-dated oil prices.
Let's just stick on that last point, the stockpiling point. Can you detail the physical shortages that are building right now in places like Asia in certain products and why that would lead them to basically look at the situation and say, you know what, we need to stockpile from here and for a long time to make sure this never happens again?
Yeah, so oil exports from the Persian Gulf are down 17 million barrels per day, even allowing for some redirection via pipelines. About 90% of the flows typically goes to Asia. And so we're seeing extreme prices, for instance, for jet fuel, fuel oil, pricing above $200 per barrel. This is particularly concerning for countries in Asia that have relatively low inventories, have limited strategic petroleum reserves, and are large net importers, and that have a very large share of their GDP accounted for by oil imports. And so even when we do a word count of articles that are related to fuel rationing using Bloomberg sources, our Asia economics team has identified, for instance, Thailand and India at the top of the list in terms of the risk of shortages.
Where were inventories and storage going into the conflict?
At the global level, inventories were somewhat above average, very high on water, but we're now seeing incredibly quick drawdowns in oil and water. We've essentially undone in 2.5 weeks the largest builds ever on water that we saw last year, and we're seeing large drawdowns also in Russian oil and water. At the moment, there is still this big divergence between actually slight builds of inventories in the US, massive draws on water, and large draws in Asia as well. That's the key reason why TI is at 90, and Dubai and Oman are well into triple-digit territory.
When you talk about what Asian countries are doing, Sinopec, which is China's biggest oil refiner, is basically saying we're going to have to cut how much we export because we need it for our domestic consumption. Are we going to see a lot more moves like that? And when does it start to really hit Europe?
Yes, so we already have seen at least 3 countries imposing restrictions of refined oil products. And so it's really a triple whammy for refined oil product markets. One, the Middle East is exporting less, especially the heavier products such as jet. Second, we're missing the heavier crude that the Middle East typically makes. That's the building block for the heavier refined oil products like jet, fuel oil, and diesel. And third, several countries are trying to reduce the risk of shortages by restricting exports. And so, you know, we're going to very low inventory levels for the heavy refined oil products if this disruption continues.
Mike Wirth of Chevron saying this, we played the sound moments ago. There are very real physical manifestations of the closure of the Strait of Hormuz that are working their way around the world and through the system that I don't think are fully priced into the futures curves. What's the difference between what's happening in physical markets right now and what you see out in the futures curve? And what do you make of that statement by one of the CEOs of one of the biggest companies in the energy sector in this country?
Yeah, so I would agree with Mike. I think while futures pricing is broadly consistent with our base case, where you start to see recovery of flow somewhere mid-April, the skew of risks is very much towards delays and sharper physical tightness, and therefore higher prices.
What are higher prices? What kind of numbers are you thinking about?
Yeah, so we laid out 2 risk scenarios beyond our base case. One in the adverse risk scenario. It takes 10 weeks for flows to recover rather than our base case of 6. You end the year at 100 for Brent, significantly higher in the spring. And in a severely adverse scenario, you also have 10 weeks of very low flows, and you have 2 million barrels per day of persistent oil production losses from the Middle East, as happened in some of the largest prior supply shocks. Then you end the year at around 115 with significantly higher prices in the summer.
We're at $3.97 a gallon of gas in America. How high is it going to get to in this conflict?
Yeah, in our base case, you know, you probably go a bit above 4, especially in the summertime when there's a premium, with risk skewed to the upside. That said, diesel prices, retail diesel prices, are already at 5.
Dan, it's good to see you. Thanks for dropping by. Dan Stroiven there of Goldman Sachs with his latest forecast on this oil market. We're basically at 4 for gasoline right now.
When he's talking about these other countries taking measures to ban exports, and I'm looking at what China is doing, at Sinopec is doing in their refinery, you have to think, if we get to a level close to $5 a gallon, will this White House come out and say, I know we said we weren't going to ban exports, but that was then, and this is now, and prices are too high, and it's a midterm election year, and we have to do something for these consumers?
I keep hearing this phrase that gets thrown around, demand destruction. What you're seeing right now, I don't think you can call demand destruction. Demand for energy, if you speak to people like Dan, is structurally inelastic. People will carry on using it so long as they can get it. And right now, they can't get it. It's the shortages right now that is really hitting demand, not the price. That's really, really important. The price reflects the shortages. It's the shortages that are hurting Asia at the moment.
It's a great point. And there's dual shortages. There's short-term in terms of Strait of Hormuz, the product can actually not move. And there's long-term concerns of this physical demand destruction, of it's going to take months and years for some of these installations in the region to be back up and running as normal.
Brent crude, 101.30 so far this morning, with an update on stories worldwide with your Bloomberg brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. The European Union and Australia agreeing to a free trade deal after almost a decade of negotiations. Both parties are working to shield their economies from U.S. tariffs and China's restrictions on critical minerals. European Commission President Ursula von der Leyen saying the agreement will need to be signed off by EU countries and approved by both parliaments. Mark Wayne Mullen has been confirmed as Department of Homeland Security Secretary. The Senate's voting mostly along party lines to confirm the first-term Republican senator who has been a staunch defender of President Trump's deportation campaign. Mullen replaces former DHS Secretary Christine Noem. And more on DHS, senators on both sides of the aisles expressing optimism about reaching an agreement to end the DHS's ongoing 5-week partial shutdown. Speaking after a meeting with President Donald Trump, Republican Senator Katie Britt saying she thought they had a solution to the impasse and she would be working through the night to, quote, land this plane. So maybe today. That's your Bloomberg Brief. John?
Yeah, Hara, we can only hope. Thanks for the update. We appreciate it. Up next on the program, cutting through the noise.
We shouldn't be making policy based on short-term headlines. These oil shocks have been things that the Fed has looked through for a long time. Looking 12 to 18 months out, there's still not enough clarity to think that monetary policy itself should adjust.
Kate Hare of JP Morgan Asset Management joins us next, live from New York City. You're watching Bloomberg TV.
Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
So here are your scores this morning. Equity futures slightly negative. We're down by about 0.1% on the S&P 500. Following the wild swings to start the trading week, the Nasdaq just about unchanged. The Russell negative by some 0.1%. That is nothing compared to where we were yesterday morning. Heading into that social media post from the president, just removing that short-term escalation risk. In the bond market, a new high for the year on 2s and on 10s. On 2s north of 4%, on 10s north of 440. We're back below those levels this morning at 388 on a 2-year, on a 10-year at 437, and in crude, staying elevated, remaining elevated on WTI and on Brent. WTI was triple digits to start the week, $90 now, and up 2% on the session. Brent crude at 101, just about holding on to triple digits this morning, but way off the highs of yesterday morning.
It's hard to keep track, but really that President's Truth Social post really depressed some of the risk premium we saw going into the week because we had, remember, a 7:45 p.m. deadline last night for increasing volatility and threats against the regime. The regime came out and said, well, we're going to counter that. Now we have a new deadline. Where are we going to be Friday at the close going into this week?
Absolutely no idea. And if I knew, I would not be here. I'd be putting that trade on, and I'm sure someone else was thinking about doing the same thing if they had the information they had ahead of that tweet, that message, that social media post by the president yesterday.
And that's a lot of controversy right now. I know the Financial Times, the Journal, Bloomberg, all looking into how big these trades were. Just a mere 10 minutes before the president came out with that Truth Social post. Knowing what he was going to say, some people suggest, if you knew what he was going to say, that's the trade you'd put on.
Without a doubt. And people are scrutinizing the amount of volume that was going through certain asset classes at certain times, and we'll keep doing our best to figure out just what was going on. Under surveillance this morning, attempting to cut through the noise.
We shouldn't be making policy based on short-term headlines. These oil shocks have been things that the Fed has looked through for a long time. We have to look 12 to 18 months out, not what happened to the oil price yesterday, right? And so looking 12 to 18 months out, there's still not enough clarity to think that monetary policy itself should adjust.
So here's the latest this morning. Bond yields whipsawed by conflicting claims on Iran. Treasuries seeing their biggest intraday swing since last August as traders reprice Fed rate cut bets. Caher of JP Morgan Asset Management writing the following. Our base case is range-bound rates and a gradual repricing of central bank policy rates back to 3%. Kay joins us now for more. Kay, good morning.
Good morning, John. Glad to be here, but I hate to confess it, but I'm happier to be here today than yesterday at 6:45 a.m.
I wish I'd taken yesterday morning off as well, particularly ahead of those headlines that crossed. The swings we have seen, we were pricing in cuts, then we started to price in hikes, then we priced them back out again. Where are we now?
John, this was supposed to be a quiet news week. There's no major economic data. All we have in terms of the Treasury markets is 2, 5, 7-year auctions. This was supposed to be quiet. And you know, I guess it was T.S. Eliot who said April's the cruelest month. It's feeling like March is a pretty cruel month. It's almost over. But I think what's really happened here is the market is vacillating wildly between what the Fed's going to do. It actually reminds us of last April. You remember tariffs? Remember that? That seemed so, the financial markets were so volatile. So go back to last April. And at the same time, people were worried about the inflationary aspects from tariffs. What did the Fed end up doing last year? 75 basis points worth of cuts. And if you look at what the Fed said, gosh, last Wednesday seems like a very long time ago, but what was it, 12 of 19 FOMC governors saying they expect at least one or more cuts. So I'm not exactly sure how much what we're going to get, but if you look at the bond markets, we vacillated from as recently as 3 weeks ago, pricing in 2 cuts, yesterday morning, pricing in a hike. And I think what's really important is to take a step back. To us, it continues to feel like a low hire, low fire market. And what we've had here, like I said, similar to last April, is another supply shock. Last year, it was the tariffs. This year, it's an energy supply shock. So I don't think people are really thinking about, people are focused on what's the reaction function of the Fed, what's the reaction function of the American consumer. You've had a significant tightening in financial conditions, not as high as they got to last April, but you've had a very rapid ratcheting up in financial conditions.
It's not a direct comparison, though, is it, though? Because that was a policy of choice when it comes to Liberation Day. This is actual demand destruction of supply chains. Can the Fed actually look through that?
Well, I think the Fed typically does, and you had Myron on before me. The Fed typically does look through any type of supply shocks, And I think we also need to look at what's the reaction of what's the American consumer going to do in the face of higher food prices, potentially higher, well, what we've seen already, higher gas prices. So
what are investors doing? Can I ask you that?
Yeah,
what are your
absolutely.
clients doing? When yields started to back up, we got through 4% of the front end, 440 on 10s. Were they stepping in?
People are stepping in. So I think there's a couple of things that are really important to look at. So this is an important week in the bond market in terms of supply. The high yield market's going to bring $12 billion worth of supply. So I think it's really important to see how that's digested. The investment grade market, I guess it was 3 weeks ago, had a record week. It was at $135 billion. So a little quieter this week, but I think yesterday priced $7-8 billion, and broadly over the last couple of weeks, deals are 4 times oversubscribed, and deals are coming with 4 basis points of concessions. So when I look at our ETF book, year to date in fixed income, we brought in almost $8 billion. So clients are seeing the attractive yields. You can get 5, 6, 7%. So, you know, I hate this expression, but value has been created. So value is being created on the front end of the spectrum. So you've seen those moves in 2s. Values have been created where supply has come on in some of the hyperscalers. So I think what's really important is to take a step back, not get too worked up about where the headlines are, not focus too much on intraday swings, be wary of catching falling knives.
Yeah.
But, you know, overall, broadly, yields can remain very attractive.
Or falling chainsaws at the moment, which kind of describes the
Falling chainsaws,
last
I like that one, John. I had not heard that before.
Let's go with that phrase, value creation. I can see the value creation in the Treasury curve. I understand that. I get that. What about the credit market, though? How much are you actually seeing?
So you're right. There has not been a lot of value created. I think from the tights to the wides in high yield, we've backed up about 100 basis points. In terms of IG markets, I think we're up to something like 87 basis points. We were in the low 70s. So the question really is a function of what does the economy do from here? You know, the reason that the high yield spreads have been as tight as they are is that default rates have been so low. So we're not going back to a 2020 type era because there's not nearly as much energy, and energy is actually a much better debt backdrop for, you know, for those companies here. But I think you've had some widening. If we are going to go into a recession, though, 10s aren't going to sit here where they are now. High yield spreads aren't going to sit here where they are now.
Yeah, that's the risk. That's the risk for sure.
That's the risk.
It's good to see you.
Always great to be here.
Thanks for being here. Thank you. Kay Herr there of JP Morgan Asset Management. That was far too calm relative to the craziness of the last 3 weeks.
Yesterday was one of those craziness of the last 3 weeks, and I love the way you put it, falling chainsaws. And I think you mean basically Truth Social post.
Hands in blenders, falling chainsaws. Not my lines. I remember them from London from another time of the Eurozone debt crisis.
Yeah, that's kind of what it feels
Similar
like.
feels.
But it almost is that times 10.
Don't do any of those things, okay? Coming up next on the program, Aaron Cannon of Clear Harbor Asset Management, the former Deputy National Security Advisor, Victoria Coates, Vikas Dwivedi of Macquarie, and Greg Peters of PGIM Fixed Income. The second hour of Bloomberg Surveillance is just around the corner.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, you know, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
The long-term implications for the economy hasn't been priced in completely.
This is a supply shock. It's going to mean higher prices, but it's also going to mean damp demand.
Higher inflation would tell you to raise rates. Lower growth would tell you to cut rates. So maybe you just don't do much.
I don't think there's any, certainly, reason for cutting at this juncture.
I think in the back part of the year, it's fairly likely we'll get a cut.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price section looks like this. Equity futures just about unchanged on the S&P 500, following some wild swings in the last 24 hours. The biggest one-day rally on the S&P in some 6 weeks, and a big move in crude, following a statement from the President of the United States about 24 hours ago, just removing near-term escalation risk for this market and putting on the table the prospect of talks completing in the next several days.
So basically what we have right now is the president opening up the window for diplomatic talks. You have a number of these countries coming in saying, I want to be the one to do that. Pakistan, maybe Egypt, Turkey. The problem is, Jonathan, how sustainable and real is this? And you made a really good point earlier, which is that you have an amphibious assault ship headed to the Middle East. They're about to arrive at the time of this new deadline. So there's a lot of speculation that potentially the president is just buying time.
There is a major difference between pricing out near-term escalation risk, just taking that off the table for a moment, and pricing in long-term enduring peace. We clearly did one yesterday and not the other. And I don't think anyone's getting too excited going into the weekend about the prospect of having something that takes all of this off the table. Whipsawed yesterday, yes, but remember where we were this time yesterday, before this post hit, in about 3 minutes' time. Before that post hit, there was a very real risk of real escalation in the Middle East, which would drag in Gulf partners across that region and lead to something even messier than what we're seeing already.
Because the president had a threat on the table for yesterday evening that he immediately took off with that post, and that is why we saw the whipsaw in financial markets. But how do you price in long-term peace when already overnight there was continued attacks when it comes to missiles and drones both ways? A number of countries were hit, Bahrain, Kuwait, Qatar. On top of that, there's reporting that we have, as well as goes a little bit further in the journal, about how Gulf partners Saudi Arabia and UAE may be willing to set some deterrents, and if pushed hard enough, would actually join this conflict.
So stocks are calm compared to the craziness of yesterday. Futures so far this morning negative by about 0.2% on the S&P 500. Here's a view on Wall Street this morning from Aaron Kennan of Clear Harbor Asset Management. He writes the following: volatility reduces risk-taking. We see opportunity to own the companies we believe are trading at depressed prices. Let's talk about some of those opportunities right now. Aaron joins us for more. Aaron, good morning.
Good morning.
That first line, volatility reduces risk-taking. Just how much of a reduction in risk-taking have we seen over the past few weeks, given how volatile these headlines have been?
I think we've seen quite a bit, but we are not at levels where I sort of view volatility as creating significant downside risk to the markets. And that vol number for me on just sort of headline VIX would probably be about a 30. So if you look at VIX over the last 3 weeks, we actually haven't hit 30. We've almost hit 30, but we're not there. So it gives me some pause that if the president is not looking for an off-ramp and he's delaying what may be a boots on the ground sort of scenario, we could have vol spike way above 30, and there could be significantly more downside risk to the equity markets in the near term.
There is a lot of speculation right now, and I want to stress the difference between reality, speculation, and perception. This is about speculation and perception. A lot of speculation at the moment in this market. There's some people have an edge that others don't. They have an inside line on what's going to happen, and other people don't know. That there will be statements coming out that they're not aware of. And when you get to that position, I wonder if we have a reduction right now in trust, and that there is a lot of speculation that we are at least perceiving that some people have an edge that we don't. And I want to understand whether that leads to a reduction in liquidity in this market. Because if I'm a financial market participant at the moment, and I begin to believe that someone might have an edge that I don't, do I really want to take risk in that kind of market? Do I really want to step in and put my money to work?
Right. Well, certainly you're alluding to what transpired yesterday, just prior to the president's announcement, which was, I would argue, very unfortunate and certainly didn't instill trust in myself or the market. And if it were some sort of communication that occurred within the administration prior to the president's announcement that there's going to be a 5-day hiatus, we saw significant selling of crude futures just before that announcement, just before we saw crude prices falter. We saw a significant purchase of S&P futures on the upside with the idea that the market was going to blow off top in a positive way. That was an embarrassing moment, potentially, if in fact, as an American, if in fact that was something that could have been avoided. Perhaps, however, there was a communication had across our allies, and perhaps some of these actions occurred from participants in the Middle East rather than within the administration. So I want to be super cautious about pointing fingers at anyone on that front, but it was highly suspicious.
Highly suspicious, and you're right. Very embarrassing as an American if this is true. But to Jonathan's point, if you see this happening, does it make you just want to say, I'm packing up, I don't want to be involved in this market right now?
Well, we can't do that. I do think that if you take a big step back, what drives markets ultimately are the ability for corporations to generate earnings. If you look at the S&P, earnings estimates have actually trended higher. The S&P, I think, estimates for the next 12 months are something like 16% growth rate. If you look at the equal weight, it's something like 10%. The market's trading at 20 and a half times on the S&P. The equal weighted S&P is trading at, 16 and a half times over the next 12 months. So we sort of think that there's the noise of the politics and the policy of the moment, and it has real implications for things like supply constraints on the energy side. What does it mean for inflation? How are consumers going to be thinking about this? And what does it mean for overall growth? But at the end of the day, as investors, we have to look at the companies, we have to look at the sectors, and we have to ask ourselves the questions whether or not these positive trends can continue after the war.
I'm always looking for pockets of tension, and that's where the pocket of tension is for me right now. We've repriced energy across the curve out to the end of the year, higher than where we were before, by some $20. We've repriced interest rates. We've taken out easing. On the margin, we've been starting to sniff out the prospect of rate hikes. Whether that's too far, that's a separate debate, but we've certainly priced out the rate cuts for now. So you've got higher energy prices, the prospect of tighter financial conditions, and then higher earnings. And that's the point of tension for me. Why has the earnings outlook improved at the same time that energy prices have gone up and financial conditions have arguably got tighter?
Well, I think one reality is that the elephant in the S&P 500 room remains technology. And if you look at the upside sort of trends over the last couple of weeks in terms of full-year earnings, it's come from semiconductors, hyperscaler growth, to some extent energy. So we're not seeing that broadening of the story. With that said, I still think the pro-cyclical equity trade hasn't broken down. Not just energy, which is up, 30-odd% on the year, but if you look at, other key areas within the economy, both home and abroad, Japan's up on the year. Emerging markets are up mid-single digits on the year. Yes, they've corrected more over the last month than, let's say, the Mag 7, but that pro-cyclical trade is not over, and we think that there are tailwinds. If this duration of this Iranian invasion can prove shorter and not longer, if it's another month and not another 6 months, then I think we can move back and focus on growth. We can focus on earnings, and we can probably think that the concept of inflation running away a la June 2022, where it peaked over 9% headline, is not going to transpire.
Drone activity yesterday in Bahrain also, though, showed that tech companies aren't immune to what is going on in the Middle East. AWS out with a statement that they've suffered. At some point, potentially, when it comes to those earnings, Mag 7, these companies that were in the Gulf investing billions of dollars, will that suffer?
It could, Anne-Marie. Unfortunately, war also tends to trigger more spending after the storm has passed, and we've seen that time and time again. The other thing we've seen is that usually during the first sort of initial phases of war, we see the greatest spikes in the fear factor, both on the VIX and on energy prices, and then we see a calming effect occur. Are we entering that phase now, and did it start yesterday? Only time will tell. Is this an off-ramp for the president, or is this a delay to bring in troops from Asia, to put boots on the ground, and for this to accelerate further? That latter thought would certainly be a negative for equity markets and for credit markets.
The two-way risk going into the weekend, that's for sure. Can we finish on gold? Big move in gold so far this month, down about double digits so far for the month of March. This headline crossed moments ago on Turkey. They're mulling tapping $135 billion gold reserves to defend the Turkish lira. There has been some speculation about this also over the last week, that the countries who have limited fiscal space, limited reserves to deal with moments like this, maybe the big oil exporters, maybe countries like Turkey, would have to monetize some of those gold reserves, those gold assets. You expecting to see some of that realized?
It could occur, Jonathan. I think that there's a lot of truth to that. Gold's off about $1,000 an ounce since it peaked earlier, in late January. And, it's at about 5,400, and now it's at about 4,400. And there are three thoughts that I have on this. One is central banks are not buying gold, and they may, to your point, actually be selling gold. But it's the second largest global reserve currency. We have to think about it that way. We have the dollar, and we have gold, and we have everything else. The other is retail speculation. When you have heightened volatility and you need to raise capital, where are you going to do it? You're going to do it in things that have gone up a lot. Gold was up 70% last year. So there's been a lot of rationale for liquidating gold. But I think in the long run, the dollar's stronger. Another reason why gold's weaker, but in the long run, my view is, gold remains a form of money. It's well tested for 4,500 years. If the dollar is super strong, gold's probably going to be under some pressure. If the dollar were to weaken, going back to your trust question right at the top, perhaps gold may be poised to gain a little bit of steam.
Given what you just said, though, what's the role in the portfolio right now of gold? Does it provide any risk mitigation? Doesn't sound like it. What is it providing at the moment?
I think from a longer-term ballast perspective, it is a currency diversification tool. In this market environment, what have we seen? The dollar strengthen. Gold's been off. Bonds have been off. Equities have been off. There's been very, very few places to hide other than cash.
Gold, little change so far this morning, down big time over the month so far. Aaron, it's good to see you, sir.
Good to see you.
Thank you. Aaron Canner there of Clear Harbor Asset Management. If you're just joining us, welcome to the program. Stocks just about unchanged on the S&P. Lots of headlines to catch up on. With your Bloomberg brief, with your stories worldwide, Yahara has more. Hey, Yahara.
Hi, John. Day 25 of the Iran war, and attacks are continuing on both sides, even after President Trump said he's holding off on going after Iran's energy infrastructure for 5 days. Trump saying U.S. envoy Steve Witkoff and Jared Kushner spoke with the top person in Iran on Sunday, but that it's not the new supreme leader. Iranian officials say they're ruling out discussions with the U.S. Indian refiner Reliance Industries has reportedly purchased 5 million barrels of Iranian oil. Reuters reporting the move after the U.S. temporarily halted sanctions on the oil. A source familiar with the matter told the news outlet the crude was priced at a premium of about $7 a barrel to ICE Brent futures. And Apollo is curbing redemptions from one of its largest non-traded private credit funds. According to a shareholder letter, the $25 billion business development company Apollo Debt Solutions capped withdrawals at 5% of outstanding shares yesterday after clients sought to redeem more than 11%. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, teeing up a deal with Iran.
I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us.
It's going to be quite a 5 days coming up. We'll catch up with the former Deputy National Security Advisor, Victoria Coates, from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I imagine there's a collective sigh of relief that this is what we're waking up this morning to. Equity futures just about unchanged on the S&P 500, negative by 1/10. Likewise on the Nasdaq, on the Russell, down by 0.11. In the commodity market at the moment, Brent and WTI fairly well behaved, relatively speaking, of course. Brent crude at 101.66, WTI at $90.50. A very different picture to what we were facing down yesterday morning.
Literally this time yesterday morning, we saw moves of 10, 12% on WTI and Brent. We went into yesterday going in with this ultimatum from the White House. You had 48 hours. That was supposed to be, Jonathan, last night at 7:45 p.m. Well, now the new deadline is Friday, potentially a window for diplomatic talks, or potentially this is just the president buying time because he has troops that are being sent to the region.
This morning could have been a very different morning. Under surveillance this morning, teeing up a deal with Iran.
I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us. And I would say at the end of this period, I think it could very well end up being a very good deal for everybody. As good as if we went all the way and just literally annihilated the place, which if we don't have to do that, that would be a good thing.
So here's the latest this morning. Crude prices hovering near 100 as President Trump pauses strikes on Iranian power. The president hailing very strong talks with Iran, a claim immediately denied by Tehran. Bloomberg's Mike Shepard joins us now for the more. Shep, welcome back to the program. Let's just frame these talks. Who is talking to who is mediating, and where are these talks taking place?
Well, it's unclear exactly what the state of the talks is, John, because the president has said that his special envoy, Steve Witkoff, and his son-in-law, Jared Kushner, have been engaging in talks with someone, a top person, he said, in Iran, but Iran has pushed back against any notion of these conversations taking place. We are aware, though, that the foreign minister of Iran has been engaging in negotiations with regional counterparts, and they have served in the past as intermediaries between Washington and Tehran. So that may be where things are getting started, at least in terms of a conversation. But look, John, 5 days from now, it may sound like a lot of time, but really, when you think about negotiations with Iran historically, that's really not much time at all. The 2015 Iran nuclear deal took nearly 2 years to reach, and of course, that was the agreement that President Donald Trump scrapped soon after taking office the first time around, and in part laid this groundwork for where we are right now. It is important to note that there is incentive on all sides to reach a deal. For one, of course, for Iran, the human toll there is rising. One human rights group has estimated as many as 3,200 casualties in Iran. That number is not confirmed by local sources. Two, the longer this goes on, there is the rising risk that this escalates militarily, and the prospect that the U.S. could enter in terms of a ground presence in Iran, either by trying to take Karg Island, a key energy hub controlled by Iran, is one possibility, or another move to perhaps try to wrest control of the critical choke point at the Strait of Hormuz is another question. And then there is the Gulf allies themselves, and whether, as Jamarna Bersetchi said earlier on the program, they may decide ultimately whether they need to enter the conflict militarily on their own terms. They have stayed on the sidelines and let the U.S. and Israel carry out a lot of the strikes for now. The challenge, though, is how the U.S. and Iran and Israel get there, and whether, for one, the U.S. and Israel will be on the same page when it comes to the terms. And those terms, what will Iran accept, and what will the U.S. In particular be asking for? For one, we can be sure that there will be a call for the U.S. to take control of Iran's nuclear stockpile. But then there is the question of the Strait of Hormuz. Will there be some sort of effort to try to include that and a guarantee of freedom of movement there as part of these talks? We'll have to see what the president says later today, this afternoon, during a swearing-in ceremony at the White House, and if he has anything more to add, John, on the status of those discussions.
Watch this space, Shep. Appreciate your time down in Washington, D.C. there. Mike Shepard, the former Deputy National Security Advisor, Victoria Coates, wrote the following. The 5-day pushback is a calculated pause from the president. Things are going very poorly for the Iranians, giving them all the incentive in the world to agree to a deal. Victoria joins us now for more. Victoria, welcome back. Always enjoy getting some time with you. Let's talk about the outlines of that deal. What do you envision that deal might look like?
Well, Jonathan, good to be with you. Good morning. The deal is actually fairly simple in its parameters, as I understand it. That nuclear stockpile Shep was just talking about has to get dealt with. About 850 pounds of highly enriched uranium that needs to come out of Iran. That is a material step toward preventing them from getting a nuclear weapon. Those nuclear facilities need to be disabled. We need to get after the dual-use facilities like academic institutions where a lot of that research happens. Then we also need to see the entirety of their missile program, which is so much deadlier than we thought it was just 3 days ago after the attack on Diego Garcia revealed they've got 4,000 kilometers of range, not 2,000 like they claimed. So we need that to all get cleaned up. A lot of that work has already been done. And then have a guarantee that the Iranian regime will not attack the Iranian people if they decide to protest. So those are the basic, I think, points that should be not that difficult for the Iranians to agree to if the regime wishes to survive in any form.
Victoria, as you know, in Washington, the saying is personnel is policy. And we understand that potentially an individual in Iran that they're speaking to is Mohammad Ghalibaf, the Iranian Speaker of Parliament. But who are the Iranians talking to on the American side? Because reports were flying yesterday that even maybe Vice President J.D. Vance might become part of the negotiating team.
Anne-Marie, good to see you too. It's a complicated, obviously, situation, and I think the administration is leaving it deliberately opaque. It's not clear if, as you say, Speaker Gaddafi, I'm going to get his name wrong, who's not a household name, clearly, but is well known in Iran. He's run for president a couple of times. He has deep ties to the Islamic Revolutionary Guard Corps, and so he could be a figure that has some credibility, but it really seems quite chaotic in Tehran. I mean, nobody knows if the new supreme leader is even alive. He hasn't been seen. There's no proof of life. We're not hearing from the president in any particularly consistent way, the president of Iran, that is. And so this may just be kind of a death spiral for this particular government of Iran. And one other point for your audience rather, is the economic problems in Iran are systemic and they're not fixable. 2 months ago, they announced their largest banknote ever, a 5 million rial note. Well, 2 days ago, they announced a $10 million rial note, which is worth about $7. And that is not a sustainable path for any kind of modern economy. So what happens to Iran economically is, in a way, the second front in this war.
Victoria, when it comes to the president putting out a 5-day deadline on potentially these negotiations, do you think he really wants a diplomatic route, or is he buying time?
I think he always wants a diplomatic route. And bear in mind, in the first term, we worked on the diplomatic channels for a year before we ceased compliance with the Joint Comprehensive Plan of Action, the Obama-era nuclear deal. So he gave diplomacy a year of chance in the second term as well. So I think that always is possible. But at the same time, I think you want to watch what President Trump does, not necessarily every word he says. And in this case, we have, the Tripoli, the Marine strike group steaming toward the region, elements of the 82nd Airborne are turning up, and the Gerald R. Ford, the aircraft carrier group, which had to go to Cyprus for some maintenance, is also coming back. So, as you say, 5 days is an awfully convenient amount of time for all those things to get into place. But if nothing else, that's additional leverage for any diplomacy that does take place.
The Iranians seeing the same thing, no doubt. The former Deputy National Security Advisor, Victoria Coates, there with the latest in the region. The calendar's set up, right? Potential for de-escalation and real potential for escalation over the weekend as well.
And we had seen this in the past, actually, when the Gerald Ford was headed to the region and the president said, we're going to have another round of talks, and then the Gerald Ford went to the region and then the strikes actually happened. So potentially looking at this, the president could be offering the Iranians an off-ramp. Come to the table, agree on these terms that Victoria just outlined, which are the core terms that this administration wants to see. Maybe there could be a deal, but if not, everything will be in place by Friday.
The economy's broken, leadership is fractured. It doesn't surprise me that we see headlines saying that Iran denies the talks. When we say Iran denies the talks, who in Iran is denying the talks? And who in Iran would be having the talks that wants to acknowledge they're having the talks right now? They're all problems that we're all grappling with, wrestling with in financial markets. It's difficult to really know what's going on.
It is, and it's a difficult moment. Obviously, the regime has been absolutely decimated, so trying to understand who's running it internally is very challenging. I know everyone is talking about the Iranian parliament speaker. We also have a new individual that is going to be the head of the National Security Council, replacing Ali Laranjani. All of these names potentially could be counterparts.
Coming up next on the program, we'll talk about crude. Vikas Dwivedi of Macquarie on what could drive Brent to $150 a barrel. That's next. You're watching Bloomberg TV.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Equities this morning down by, let's call it 0.1% on the S&P 500, just pulling back following yesterday's big gains, the biggest one-day gain on the S&P 500 in some 6 weeks. The Russell with a 2% move in yesterday's session, the best day since early February. Pulling back also on small caps, we're down by about 0.1%. In the bond market, 2s, 10s, 30s, let's talk about where 2s were yesterday. Wow, north of 4%, then pulling back following the president's statement that he's going to take off that near-term de-escalation, or rather near-term escalation risk for this market and push things back a few days. Now 5 days of talks coming up for the president of the U.S. and potentially Iran.
Potentially. Also, maybe 5 days of the president buying more time, as we do have more American hardware and thousands of Marines headed to the region. What strikes me is what the president troops and then what you hear from the energy sector. Mike Wirth of Chevron yesterday speaking at CERAWeek, talking about how the futures market and the physical market couldn't be further from the truth of each other in terms of what is happening with actual crude and product on the ground. And that is why you see Oman and Dubai, those grades, priced so much higher, closer to $200 a barrel than $100.
We said this yesterday. We said this earlier this morning. You can push around the paper market with headlines. The physical market needs to clear demand and supply at spot. And what you're seeing right now in certain places like Asia, certain countries and certain industries with crude product, you're seeing genuine shortages. Genuine shortages.
Absolutely genuine shortages. What we see from China's biggest oil company, biggest refiner, Sinopec, saying we are going to have to curb exports of product. What you're seeing in Indian wedding caterers saying we're going to have to cut back on your menus because we don't have enough liquefied petroleum gas. We get 90% that goes to the Strait of Hormuz. You're seeing genuine supply shocks in Asia. They're going to start to ripple through to Europe.
Brent crude just short of 102, positive this morning by 1.8%. WTI in the 90s this morning. As we count you down to the open, about 2 hours away. Your morning movers with Danny Berger. Hey, Danny.
Hey, John. Apollo shares this morning down 2.2%. After seeing about $1.6 billion worth of redemptions come from one of their BDCs. They didn't fully redeem that. That would be about 11% of the funds. These fund structures have a redemption gate of 5%, and that is what they enacted. It's something John Zito has talked about in the past, that funds should honor what they have in the perspective and what they tell investors, that it will only be 5%. They did get a downgrade from BMO, citing the redemptions as well as some pressure around asset-backed capital and at the same time volatility, which might contribute to more redemptions. Also looking at Jefferies this morning, an FT story that the Japanese bank SMFG is looking at a potential bid to take over Jefferies. It already owns a small minority stake, but they're looking at any opportunistic moment to buy more into Jefferies. Jefferies down about 40% from its peak last year. Shares are up 7.5% in the pre-market. Finally, wrapping things up with Netgear. Those shares also much higher this morning, up about 12.33% after a new FCC mandate that All routers made abroad should not be used in the U.S., a ban of them. Now, Netgear, Stiefel points out, they do make their routers abroad, but not in China, and that is key. The FCC will be giving some qualifications and allowing some through. And the fact that Netgear is an American company with a transparent supply chain, Stiefel says they're sitting in a pretty good position. John.
There we go. Thanks for the update. Danny, appreciate it. More from Danny in the next hour. On our radar this morning, warnings from U.S. allies in Gulf countries driving President Trump's decision to hold off on destroying Iranian power infrastructure. Sources telling us here at Bloomberg, some allies told the president the war was becoming a disaster. Elsewhere, the Pentagon weighing the deployment of about 3,000 troops into Iran. According to the New York Times, the soldiers could be used alongside Marines to seize Karg Island, the country's main oil export hub. And finally, Japan's finance ministry considering possible intervention in the crude futures market to ease pressure on the commodity. Tokyo saying it is ready to take, quote, all possible measures at all times and on all fronts to protect the yen from volatile commodity speculation.
It seems to be something that a number of capitals around the world are weighing. How do we get ahead of this in terms of what we are seeing in the energy shock, but what's happening in the paper market and the wild swings? It reminds me, Jonathan, remember when you had the Japanese officials going to market participants in terms of a rate check? Now they're going to market participants in terms of a crude check.
They're getting hits both ways. Currency's getting weaker, potentially more so, and you've got the crude price getting higher, priced in dollars. That's a problem for a lot of these big importers.
It's a massive problem, and that is why Asia, as we've been saying, is on the front lines when it comes to this energy shock. They are, a lot of these countries, most of them, by and large, are importers. They have to hoard these products, and their imports come from the Middle East, which is why you see WTI throughout this entire crisis still trading at quite a distinct distance from Brent. It is because we are somewhat immune to what is going on in the Middle East from a product side. Asia is not.
This is what the Department of Energy's got to say about things right now. The U.S. Energy Secretary Chris Wright downplaying the market impact of the war, urging energy companies to ramp up production.
Markets do what markets do. Prices went up to send signals to everyone that can produce more, please produce more. The prices have not risen high enough yet to drive meaningful demand destruction, but Americans and energy entrepreneurs around the world are ingenious. So things are being done, but these are mitigants of a situation that's temporary.
So Brent is holding near $100 a barrel as uncertainty lingers around the conflict's outcome. Vikas Trivedi of Macquarie writing, if the Strait of Hormuz remains effectively shut until the end of April, Brent could still reach $150 a barrel. Vikas joins us now before more. Vikas, welcome to the program. Can I start with this? What is your base case at the moment? And perhaps more importantly, what informs that base case?
Yeah, our base case is for Brent to revisit the 120 range. As you mentioned earlier, there is a big disconnect between the physical and the financial markets. We think that disconnect will close if the strait remains, largely shut. It's not completely shut. So we think 120, maybe 125 is kind of the most likely area that price will revisit. But to your other point, if the strait remains largely shut through April, even if you get a single day resolution, right? Like, hey, we're done. You won't get flows back to normal till May. By then, the amount of oil that didn't make it to refiners and petrochemical plants will have been so large that, we think 150 Brent, something that closes in on Oman pricing, Dubai pricing, some of the physical markets that you guys mentioned are considerably above Brent. We think that gap will have to close.
That's the base case if the Strait of Hormuz opens in the short term. What happens if it doesn't open in the short term and countries like Saudi Arabia or the UAE also engage in a more material way in this conflict?
Yeah, in that scenario, there are numerous mitigations that can come to the market to limit oil from going to 200 on the futures market. We've seen refined products go well above that already, but global strategic petroleum reserve releases, we think could reach about 3 million barrels a day. The East-West pipeline that crosses across Saudi Arabia to circumvent Hormuz, that could do another 3.5. You've got refining run cuts, which will then translate into even higher refined product prices, but it will alleviate some of the crude shortages. So there's a bunch of big ones, right? And OPEC also has about 200 million of storage outside of the Middle East. They can use that. So when we add, if everything can come to the market in a timely way, without all the normal bureaucratic friction, you can actually rebalance the market largely, not fully. You still are, cutting refining runs. So that's a, Peter to pay Paul situation. But you can close that deficit from what we estimated about 13 million a day. You can close it down to about 3 million, much more manageable. But you can't do that forever, right? Like even that has a time limit.
The East-West pipeline, I'm glad you mentioned it. It's looking very prudent of Saudi Arabia to have invested billions of dollars of this to bring their crude to Yanbu, to the Red Sea. But individuals I'm talking about are putting higher probability now that the Houthis would get involved and cut some of that production off. Are you starting to bake some of that concern in?
Absolutely. Yeah, we think that should be a big concern. We think where Yanbu is, the pipeline route, all of it is at risk. And to your point, the Houthis have been strangely quiet. The Red Sea issues have been strangely quiet. We don't know any reason why those cannot flare back up again and cause a real problem. So yeah, that's if you knock that out in any manner, you suddenly, roughly 6 million, 5.5 million a day of the mitigation around Hormuz would be gone, right? And then that's a whole different complexion to this market again.
Vikas, I think we're all thankful we're not there this morning, and hopefully we don't experience that in the coming days and weeks. Yeah. Because what we hear a lot about on this program is that even after this war is resolved itself, that from here we will have structurally higher demand through stockpiling, that countries will become conditioned to avoid this situation ever happening to them again, that particularly the nations in Asia, the big oil importers, like what we've experienced with China, will see elsewhere. Do you see that increase in structural demand, a regime shift following this experience?
We do. We think this will, if this didn't send the signal, then nothing would have to any country saying, hey, we need 90 days inside our own borders, right? Or whatever day they pick, but that 90 is the typical. And now China looks extremely prudent in doing what they did. I know there were a lot of theories about, are they doing it for an eventual Taiwan? But what they said is, look, we've imported an enormous amount of oil and it's far away. We have a fragile supply chain. We need the extra storage, right? And it looks very prudent today. I think everybody will follow that model.
Vikas, I know this is difficult to put a number on, but what kind of premium does that introduce? What kind of new floor does that introduce for this market for the time being?
Yeah, we think it could add, all else equal, about 500,000 a day of extra demand as countries refill and add new SPR storage. You can translate that to somewhere between $5 and $7 a barrel to what your previous base case might have been. So that would move us, kind of into the mid-60s instead of the high 50s, low 60s.
But does that mean this is for the rest of the world, barring the United States?
Yeah. We think, there might be aggregation as well, right? Where countries decide to have like a joint storage between themselves, right? So they don't necessarily all have to build new tanks in every single country, but there's a cooperation. In the U.S., we're at 400 million, 420 million. We're a net exporter, but of petroleum. So technically, we don't need anything by that normal rule of thumb. But there again, it would be imprudent, right? We probably should be around the 500 million range at all times.
Vikas, appreciate your time. As always, sir, it's good to see you. Vikas Trivedi there of Macquarie. Crude right now, Brent up by 2%, 102. WTI at around 90. Your thoughts on the Red Sea and the Houthis getting involved? I mean, I don't think people even want to envision what that might look like in the next several weeks.
Well, we're going to have an individual up in the next hour from Rapidan Energy who I know thinks that those chances have increased further. If this becomes more of a protracted tit-for-tat escalation between Washington, Tehran, and Israel, you can see the Iranian regime, which is in an existential moment right now, telling the Houthis, who they fund, that they need to get involved. And that would mean the closing of the Bab el-Mandeb Strait, and that is going to create a tremendous amount of headaches for oil companies and shipping companies.
That's the latest on the energy market. Let's get you an update on stories worldwide with your morning brief, your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Saudi Arabia and the UAE are taking steps toward joining the war. The Wall Street Journal reporting Saudi has agreed to give the U.S. access to King Fahd Air Base, and the UAE has closed a hospital and a club owned by Iran. The Journal also reporting that thousands of U.S. Marines are set to arrive in the Middle East on Friday. Turkey's central bank is preparing new defenses for the lira amid war-related volatility. Sources telling us here at Bloomberg the bank is weighing tapping into its $135 billion gold reserve and is discussing gold for cash swaps in the London market. Turkey has been one of the world's most aggressive gold buyers in the past decade. And more private credit fears. A private credit fund run by Future Standard and KKR downgraded to junk by Moody's. The ratings agency saying it downgraded the FS KKR Capital Fund because of what it described as continued asset quality challenges that have hurt profitability and the value of the fund's portfolio relative to peers. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next, attempting to balance risk.
Traditionally, you would look through an oil price shock like this, which means that my policy outlook from before is unchanged. The inflation risks have got a little more concerning, but the unemployment risks have gotten more concerning too. So the balance of risk changed, but I think it got worse on both sides.
In just a moment, we'll catch up with Greg Peters of PGIM from New York City. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
We are coming off the back of the best day of March so far. Equity futures this morning stalling somewhat. Futures just about unchanged on the S&P. Likewise on the Nasdaq. Likewise on the Russell. That's a snooze. And I imagine for many of you, after the last 3 weeks, that's a welcome snooze. In the bond market, 2s, 10s, 30s look like this. New highs for the year on 2s, north of 4%. On 10s, north of 440. This morning, 436 and 387 respectively. And in crude, holding on to triple digits on Brent, just about. Brent crude this morning, 101.75. WTI around 90 as these talks progress, I guess, going into the weekend.
They progress, but Jonathan, you also have to think, is this maybe the calm before the storm? How many individuals have come on this program? Unclear if the president really is looking for a diplomatic off-ramp and engagement, or if he just needs that time because there are Marines at the moment en route to the Middle East.
I think we're all familiar with the Canada and the potential for escalation and de-escalation into the weekend. Under surveillance this morning, attempting to balance risk.
Traditionally, you would look through an oil price shock like this, which means that my policy outlook from before is unchanged. I had about 6 cuts for the year at the last step in December. I reduced that to 4 cuts for the year in response to the inflation data. The inflation risks have got a little more concerning, but the unemployment risks have gotten more concerning too, because the negative supply shock that is the oil price is also a negative demand shock. So the balance of risk changed, but I think it got worse on both sides.
So here's the latest this morning. Traders searching for cues from the Fed as energy supply shocks reignite inflation woes. Greg Peters of PGIM writing, even with de-escalation, supply damage and uncertainty will persist, and the sequencing of events and policy response will matter greatly. Greg joins us now for more. Greg, welcome to the program. We've had the shock. Do you place more emphasis on the potential hit to growth or the potential fuel for inflation?
You know, it's really hard to say. But I have to be honest with you. I largely agreed with Steve Mirren. I mean, I think you do have to look through it, but the market reaction around the inflation potential is really notable. I mean, it's been all front end moving higher over the past, couple weeks. And I think that is really the story. In my mind, I think the markets are maybe focusing a little too much on the inflation. But at the end of the day, it's an open question, and we just don't know.
The governor maybe has the luxury of saying you can look through this. Can you imagine if the chairman came out and said what Governor Myron said and said we need 4 rate cuts this year, and you can look through the inflation shock? What do you think would happen to inflation expectations?
Well, exactly right, Johnson. They would just kind of move really quite high. He did say he moved from 6 to 4, so maybe there is some rationality there. But the interesting aspect is the reaction function, and so there's a lot of focus on inflation, which is rightful, of course. But the growth side, some dealers have moved their recessions odds higher, which makes sense in a vacuum, but this is an administration that will, I think, really aggressively respond, right? So you'll see additional stimulus. You'll see kind of this reflexive action out of the administration to do anything that they can to kind of boost growth heading into the midterms. And I think that's an important point that is lost.
So, Greg, that begs the question, should I be selling bonds or buying bonds based on what you just said? Because the growth shock's one thing, the prospect of them trying to support growth is quite another. Do you bet on the outcome, that they'll be successful and sell fixed income?
Yeah, I think it's pretty attractive in here, all else equal. Front ends, I think, have moved too much. So I do see some value in the front end. But I just look at, the 10-year yield at, 437. And that is a pretty attractive level here. So, I see value in the global bond market. You saw what happened in the gilt market, very violent moves higher. That seems attractive to me. So, there's lack of clarity, of course, but you look at these yield levels, and it seems pretty attractive to invest in the bond market.
Greg, you mentioned that maybe the market is underestimating what the administration could do. It's a midterm election year, and obviously they want to make sure the consumer is as insulated as possible. But tell me, what do you think they could do? Because the toolbox looks pretty dire right now.
More fiscal stimulus. Right, they have to come to fund the war. There's going to be a lot more thrown into it. Potentially you'll look at other deregulation aspects. So let your imagination run wild, and I think that's on the table.
But Greg, I'm trying to put two things together. This is the question I was asking. Does 437 on 10s compensate you for the risk of a government leaning into more fiscal stimulus?
I think the belly and end. So I still have concerns over the long ends globally. So do I necessarily want to own 30-year U.S. Treasuries? No, I don't. But do I want to own 10 years and in? Yes, I do. And for precisely that reason, right? I think the back ends will be exposed due to the fiscal, due to the kind of the unknown aspect, inflation expectations at all. But as you get kind of 10-year and in, the closer you get to the central bank policy setting rate, the more comfort I have.
And we've certainly seen that in the States, particularly at the front end of the curve, above where Fed funds is right now. Greg, that's the US. Does the same apply to the UK market that you mentioned? Does the same apply to other markets across Europe? Australia, there's been hiking rates in response to some of the inflation pressure domestically there before we even saw the energy hit. Does it apply to those markets too?
I think it does. I think this is a global phenomenon, right? So what you witnessed last year was this broad repricing of risk premium, term premium. And the U.S. actually behaved better than some other markets. So you could submit that there's better value outside the U.S. In the long end part of the curve, but I still think the rule applies. You want to be kind of in the belly and in globally. But the global bond market, I think, is the most attractive that it's been in a very long time. You're seeing not only yields, quite high, but correlations are much lighter. And I think that matters a lot.
Greg, good to touch base. No doubt we'll catch up again soon. Greg Peters there of PGIM Fixed Income, weighing in on some of these moves. Value creation, how many times have we heard that in fixed income? We've created value because yields have backed up just so much in the last few weeks.
And what we've seen in terms of the yield space is basically what you've talked about. What we see in the matter of days or weeks is what you normally see in a 12-month trading range. But what he's talking about in terms of what this administration might do in terms of fiscal policy, well, to spend more, you got to go through Congress. Congress at the moment can't even get TSA back up and running. So I'm not sure that's going to be the silver bullet maybe some investors are hoping for.
Coming up on the program, the conversation continues. Emily Rowland of John Hancock will join us. Rapid and Energy CEO Scott Modell will join us. Abigail Watt of UBS, plus the Cisco president, Jeetu Patel, to break down this market. And this market was breaking down at one point yesterday morning and then turned around big time as the president of the United States removed near-term escalation risk and put on the table 5 days of talks heading into the weekend. It's going to be a long week ahead with equity futures right now negative by 0.25% on the S&P 500. Similar move on the NASDAQ. In the bond market, yields slightly higher at the front end of the curve. Twos at 389. And in commodities, Brent holding on to triple digits, 102.50 on Brent crude.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content, and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're really seeing in real time just how much this war is impacting not just stock markets, bond markets, and energy markets as well.
We're at a point right now where it's on just about one big trade.
You've got to look past the daily news and the headlines.
We just don't know what resolution even looks like at this point.
It's not like this is a flip of a switch where everything is going to be great again.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
A market at the mercy of the next headline. Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Futures pulling back by just 0.1% on the S&P 500, likewise on the NASDAQ, likewise on the Russell. In a bond market, twos yesterday at 1 point north of 4%, tens north of 440 this morning, 388 and 437 respectively. And in the commodity market, wild swings, and I mean wild swings. Triple digits at 1 point on WTI in the last 24 hours, in the 70s at 1 point as well. Right now, 91 on WTI crude.
This time yesterday, remember, Jonathan, they were down 10% based off the president's Truth Social post de-escalating from what he had threatened as a deadline that evening, where he would go in and potentially go after Iranian power plants. Then I think a lot of individuals went to the president within the region, within corporate America, through outreach with secretary members, saying, look, this is what a tit-for-tat escalation would actually look like. Now we have a new deadline. So this entire week we've been working through what happens on Friday if diplomatic talks do not prevail.
What is going to happen? Because right now, the escalation's still on the table, isn't it? We've delayed it. Delayed the escalation risk, at least the near term, by several days, but it's still on the table. going into the weekend.
And that's why a lot of people think that actually the president wasn't actually looking for an off-ramp. What he was doing was buying time, because we have Marines that are headed to the region, and potentially he is buying some time to make the next move. At the same time, this is getting a lot of attention. This reporting from the Wall Street Journal that Gulf allies like the United Arab Emirates and Saudi Arabia potentially may take a more material impact when it comes to this war. Saudi Arabia, according to the Wall Street Journal, saying Mohammed bin Salman wants to set deterrents and may join those attacks. Our reporting is that Riyadh would join if their own desalination and power plants were hit.
We have been absolutely whipsawed across asset classes in the last 24 hours. Go through them one by one. Stocks on the S&P 500 futures down more than 1% at the lows, up by almost 3% at the highs. I mentioned WTI, 101 at the highs overnight, 84 at the lows, not the 70s. And the two-year yield, a 22 basis point trading range on the two-year yield in not 24 hours, more like 12 hours in a fixed income market. Just absolutely amazing.
And that is why a lot of people say that the president stepped in because he had a pressure point. Remember his pressure point on Liberation Day when the bond market, to his words, was getting, quote, yippee. Did he have a pressure point when it comes to financial markets? And then, of course, the follow-on conversation, as there's been a lot of speculation that this administration potentially was a little bit leaky to certain individuals. This is what allegations are. This is what the people are saying potentially this is happening. Very controversial, because there's reporting. We have reporting, Wall Street Journal, actually what took place. Not saying that something was definitive, but what took place in terms of trades 10 minutes before the president's truth.
Renmac, you can't taco when you're not the only party involved. Neil Dutta and the team, we're hanging our hopes on talks that Iran is denying is even happening right now. That's where the market is. Equity futures at the moment just about unchanged on the S&P 500. Coming up this hour, we'll catch up with Emily Rowland of Manulife, with stocks looking to build on momentum. Rapid Energy Group, the CEO, Scott Modell, on the tension in physical energy markets, and Cisco President Jeetu Patel discussing the future of AI security. We begin this hour with stocks searching for stability following a wild 24 hours. Emily Rowland of John Hancock Investments writing the following: we are trying to minimize geopolitics as an asset allocation input, especially now with talks moving markets so significantly. One thing we're sure of is that sentiment can change on a dime. Emily joins us now for more. Emily, welcome to the program. How avoidable is some of that at the moment?
It's so tricky right now, John. I mean, my heart sank when I saw I was going to be on the show this morning. Only kidding. But it's just so difficult to determine what's going to happen next in this market. You know, yesterday we're watching really mixed messages across asset classes. You have, you know, the dollar declining. You've got risk assets surging. It's back to the momentum darlings of the past 12 months or so, European banks, the Kospi. And meanwhile, bonds are telling you a different story, that the war is still going to be ongoing with yields remaining elevated here. So we're trying to control the things that we can control in this environment, and we're looking for opportunities in areas that have great earnings growth prospects. We're looking for income. We're trying to find things on sale. We're looking for diversifiers in portfolios in a world where the macro environment just remains sort of dazed and confused.
Well, bonds are on sale, and I know you like the bond market coming into this. Do you like it more now?
We do. I mean, we would, you know, look at opportunities where yields are backing up as an opportunity to lean in. Obviously, the myopic focus here is on energy prices and the potential impact to inflation, but we're focusing on the old adage: the cure for higher oil prices is higher oil prices. And what I mean by that is that it will likely lead to demand destruction. We're hearing from Asian economies that there's hoarding of you know, oil resources there. People are being told not to go to work. We're seeing it impacted in airline prices. I was hoping for a vacation coming up here, and those prices aren't looking good. So at some point, people are going to pull back in terms of demand as oil prices move higher here. The other element, John, that we're watching is the bigger components of inflation, which we think are significant, especially around shelter or housing. Zillow has home prices up 0%. Year over year. Rental prices are down about 1.5% year over year. We think that transmission into headline inflation and core inflation readings there is going to be significant, and it could be enough to overcome any potential inflationary impact we see here from commodity prices. For that reason, we think eventually that bonds are bond investors will kind of wake up and smell that disinflation coming. But for now, we're just continuing to see more volatility on the rate side.
Everything I just heard, Emily, was an argument for lower growth. It was a big argument for much lower growth, reflected in your call to buy the bond market. Now, this is where the stock market starts to get interesting. What's going to keep earnings insulated as you put a big bet on lower growth?
Yeah, we're not saying that growth is falling off a cliff, but we're seeing it in places like the labor market. It's not great. We had 6 negative jobs reports. The labor market, is holding in as it relates to things like initial claims. It's not terrible, but it's just difficult to see accelerating economic growth with a jobless backdrop. So we want to be really mindful of that. It's a key reason we still like quality in a decelerating growth environment. Quality sectors, quality stocks should hold up better. Things like looking at return on equity, looking at cash balances, free cash flow, companies that can really maintain that earnings growth prospect even in the despite slowing growth. And that's not what we're seeing get rewarded in this market. It's been about lower quality. It's been about technicals, momentum, sentiment, sort of driving these riskier parts of the market. And we want to trim into that strength and think about redeploying assets into more defensive parts of the market and higher quality areas. We're looking at areas like infrastructure related equities, utilities, even alternative type strategies that can do well in that slowing growth environment.
Emily, when you mentioned the fact that when it comes to the energy market, the cure is going to be potentially demand destruction, do you have prices in mind about how high prices would need to go until we actually see that demand destruction?
Yeah, that's the question of the day. I look back at history, in 2008 and 2022 were the last times that we saw significant spikes in oil prices. It's right around $120 a barrel that we've seen that demand destruction set in. We're not there yet, but certainly the war escalating could potentially bring us there. That's sort of the general price point that we'd be looking at.
Emily, appreciate your time as always. Emily Rowland there of Manulife, John Hancock Investments, on the outlook for the economy, for the bond market and for stocks. Clearly a bet on lower growth with that bet going into the bond market at the moment. It's the question about earnings here. With a lower growth story back up behind us, how are we forecasting a better earnings story 12 months out if you've got people betting that higher energy prices, tighter financial conditions lead to lower growth?
And there's lower growth. That's exactly right. How are you, as an executive, thinking that potentially you're going to be able to hit when it comes to all of your metrics running a company? This is an incredibly challenging time. A lot of these companies have to start to take into account of higher energy prices, because it's not just WTI and Brent. It is the product prices that are starting to hit. What we heard from Dan from Goldman Sachs, the fact that diesel now is already $5, above $5 a gallon in most places. That is a major input cost for a number of companies.
This is the pushback you get from the bulls, by the way. This is from Max Kettner of HSBC. Remains bullish. One pushback we repeatedly have faced is that even a swift resolution to the Middle East conflict wouldn't bring us back to normality quickly in terms of oil and gas supply. While that may well be true, this was also the case during the COVID-19 pandemic in 2020 and last year around Liberation Day. So basically the argument that you're getting right now from the likes of Max Kettner and the equity bulls is that we've looked through this kind of thing before. We can look out to a better story 12 months out. We can do that again.
Yeah, but this is a little bit more challenging. And I think Neil Dutta was the one that said you need, two to taco. President Trump is just one individual when it comes to this party. He cannot just turn it on and off like a light switch and say, we want to get back to normal as usual. There's a number of different players right now involved in this conflict, and potentially they're going to be the ones that prolong this.
Do you want to talk about the calendar? This is how the week is set up now. Secretary Rubio with an interesting one. So he's going to travel to France on March 27th, which I believe is this coming Friday. And Rubio's going to be meeting with G7 and foreign affairs ministers. I think that's an interesting conversation into the weekend at a time when the president has essentially set a deadline for talks with Iran before escalating things from here.
That is very interesting, especially given the fact that we haven't heard much from Secretary Rubio. Something that has been really striking to me is that we've heard from the Energy Secretary quite a lot, and he's still going to events, and we heard from the Treasury Secretary quite a lot when it comes to this war. And not just things like sanctions and unsanctioning Iranian fuel and product that is now at sea. Also things like maybe potentially Cargill Island would become a U.S. asset. We haven't heard a lot from Secretary Rubio.
Futures this morning down by about 1/3 of 1% on the S&P. Let's get you an update on news worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Day 25 of the Iran war, and attacks are continuing on both sides, even after President Trump said he's holding off on going after Iran's energy infrastructure for 5 days. Trump saying U.S. envoys Steve Witkoff and Jared Kushner spoke with a top person in Iran on Sunday, but that it's not the new supreme leader. Iranian officials, for their part, say they're ruling out discussions with the U.S. FedEx announcing a partnership with delivery platform OneRail to offer same-day shipping. The courier will utilize OneRail's national network of gig drivers to make deliveries from retail, stores, and fulfillment centers to customers. The rollout of the service will begin over the next few months. And Denmark is holding a general election today with Prime Minister Mette Frederiksen's ruling party leading polls. The election is said to be shaped by President Trump's threats over Greenland. Frederiksen's handling of the diplomatic crisis has boosted her image, with Denmark's security arrangements have risen to the top of voter concerns. That's your Bloomberg brief, John.
Yahara, thank you. What a year already for foreign policy, and I haven't said this in a while, so it's worth repeating. The first quarter's still not over. The longest first quarter ever continues. We had Maduro, now we've got this. Greenland feels like a lifetime ago.
Davos feels like a lifetime
right?
ago.
The tension over all of that.
And we were in a totally different place, and Maduro feels like literally a decade ago, and that was the very start of this year.
Q1, still going. Up next on the program, the Morning Calls Plus, we'll catch up with the Rapidan Energy Group CEO, Scott Mardell, on the tension in physical energy markets. That's next. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The skew of risks is very much towards delays and sharper physical tightness, and therefore higher prices. We laid out 2 risk scenarios beyond our base case. One, it takes 10 weeks for flows to recover rather than our base case of 6. You end the year at 100 for Brent, significantly higher in the spring. And in a severely adverse scenario, you end the year at around 115 with significantly higher prices in the summer.
That was Dan Stroyven at Goldman Sachs with a new outlook for crude. Check it out. On Brent, the average 85 for the year. That's the call from Goldman. This is the call from UBS. The average 86, in line with the team over at Goldman. For the second quarter, an average of $100 is now the forecast. That number was 74. That is a massive increase compared to where we were heading into this war.
When is this going to be baked in, to your earlier point? When is this going to be baked into corporate America, to equities? The fact that it is going to be higher for longer when it comes to energy costs, and when potentially is this going to be baked into the mindset of consumers? We're basically at $4 a gallon today. Where are we going to be when it comes to peak driving season in America this summer, Jonathan?
Let's turn to the price action. Equity futures on the S&P 500. Negative here by 1/3%. We're down by 1/3 also on the NASDAQ. On the Russell, we're down by 0.4. If you turn to the bond market, let's look at what's happening in fixed income right now. On the 2-year, 388. On a 10-year, 436. Off the highs of yesterday, north of 4% on 2s. On 10s, north of 440. So a big turnaround. And finally, on crude, WTI and Brent looks a little like something like this right now. WTI at 91.60. Brent crude at 102.82.
Massive difference from where we were this time exactly yesterday, when Brent WTI were down double digits in terms of percentage, Jonathan, based off that Truth Social post. We went into yesterday with this ultimatum from the White House that Tehran had 48 hours, and that was going to come up 7:44 p.m. yesterday. Now there's a new deadline that the market is looking forward to, and that is going to be Friday. And the big question is this a real diplomatic overture for the White House with the Iranians, with individuals in the middle like Pakistan or Turkey trying to mediate, or is the president just buying more time?
Let's turn down to the morning calls. Let's get you some right here. First up, Truist initiating coverage of Diamondback Energy with a buy, noting the potential for outsized returns due to the geopolitical backdrop. Your second call from Bank of America, reinstating coverage of Microsoft with a buy, citing durable crowd growth across artificial intelligence. And finally, BMO lowering its price target on Blackstone, saying issues are piling up in private credit. And potentially we're getting another one from the FT. Ares Management limiting withdrawals from one of its marquee private credit funds pitched to wealthy individuals as redemptions surged to 11.6% in the first quarter amid a broad fight from the asset class. This directly from the FT. I'm reading it verbatim for you. The $623 billion investment group said it's capped redemptions from the Strategic Income Fund at 5%.
And we have a statement to the FT, or in this letter, the FT is reporting that they're saying, we have made the decision, as with all capital allocation decisions, aligned with what we believe are the best interests of the fund and all of our stakeholders, including the overwhelming majority of shareholders who remain invested. They received $1.2 billion redemption requests at the $10.7 billion fund in the first 3 months, Jonathan, fulfilled just over $500 million of them.
That stock is down in the pre-market by 4%. That stock has been beaten up big time over the last 12 months. Let's turn back to energy. Brent crude holding on to triple digits following President Trump's decision to pause strikes on Iranian energy infrastructure. Scott Mardell, the CEO of Rapid Energy Group, writing verbal intervention buys days, maybe a few weeks. The physical market will soon start to respond to ship storage levels, refinery run cuts. April is when the words run out. Scott joins us now for more. Scott, welcome, and I'm pleased you've given us some time because this is a really important topic. We said this a few times this morning. You can push around the paper market all you like with headlines. The physical market is already screaming. What do you see right now?
Hey guys, good morning. Thanks for having me. The way I'm seeing it, we're on an escalatory pattern right now, and the trade flow signals are already moving up. I think you're starting to see the market move to a place where Atlantic Basin importers are going to have to compete with Asia for the same barrels, and then there's no choice but for prices they're going to have to move. So in the next 1 to 2 weeks, I think April is the inflection point. Early April is the inflection point. We're going to stop seeing arrivals currently on the water, and there are no new ships coming in behind them. So that's when physical shortages start to show up. Bottom line, as you said, verbal intervention buys days, maybe another week or so, but the physical market is soon going to respond to ships, storage levels, refinery run cuts. April, I think, is when the words start to run out.
Well, April's just around the corner, Scott. And when you say that's when the words run out and prices are going to go higher, how much higher are you looking at when it comes to Brent and also WTI?
Anne-Marie, it's a good question for us. If we find ourselves 2 weeks from now in the same situation where the Strait of Hormuz is not open, verbal intervention starts to fade away, the Iranians and the U.S. and Israel are still trading blows, and ships are not getting through, I don't see why we don't head up into the high triple digits. At some point, this is all going to change. Reality is going to set in, and there's no reason why we couldn't see 150 or higher.
Scott, you are not just an energy analyst. I know you worked at the agency. I know you speak fluent Farsi. What do you make of the negotiations going on right now? How are you reading the negotiations that are taking place potentially through Pakistan or Turkey between Tehran and Washington?
You know, it's a good question. Again, I don't think there's anything going on right now. I think there's probably some lines in the water through the usual suspects. I know the Omanis and the Qataris and the Turks have been actively involved, and there is a frenetic push among them to try to figure out how to bring the U.S., Israel, and Iran together to stop the fighting or slow it down. My understanding as of right now is it hasn't had much progress, but I can assure you that the CIA and others, among the other things they're trying to collect on with regard to Iranian, everything from drones and all the things they used to actually disrupt the Strait of Hormuz. Another thing, Anne-Marie, they'll be looking at is, what is the Iranian red line? What is their negotiation position? Will they actually come to the table, and what will their demands be? Their public demands have been absolutist, asking for reparations and so forth. But I think there's a realistic off-ramp, but we don't know what it is yet.
If you don't think anything is happening right now, why do you think the market reacted the way it did to the president's Truth Social post yesterday?
I think that most of the questions we get from the market, it surprises us, Anne-Marie, all the time. It really surprises us that people still seem to believe there's going to be an off-ramp. People still seem to believe this isn't going to last very long. The single most frequent question we get is, surely this is about to end. We're about to find an off-ramp. People use this acronym TACO. There's going to be Trump's going to find an excuse to de-escalate, call it a win, because he can't face high inflation, high pump prices, high stock market problems, everything. So this is going to end, but we keep saying that that's just not going to happen. I think it's going to continue to go on, and I think these quick reactions to Trump's tweets are going to start slowing down.
I know you also think potentially this can escalate in the Red Sea. What kind of probability do you think or put on the Houthis getting involved?
You know, we've made the mistake, I think, in the past of underestimating the Houthis. I think the Houthis they're ideologically motivated. They are resilient. They're gritty. I think, if you recall, even Trump had to tip his cap to the Houthis after 52 days of U.S. military strikes. And I think it's important to note the Red Sea isn't fully back to normal. I mean, it remains partially disrupted, and the Houthis aren't even attacking commercial vessels. There's persistent risk there. Based on that possibility, the Houthis can act up at any time, and companies are just choosing to avoid it. So for me, I'm about 60 to 70% that if we're into April and this is still going on, which I believe it will be, you will see the Houthis enter this conflict, and I think that's everything from resuming activity in the Red Sea to hitting Saudi oil infrastructure.
Scott, it's good to see you. That's a lot to be concerned about into the next several weeks. Thank you, sir. Scott Mydell there, the Rapid Energy Group CEO, on the risk this energy market still faces.
And guess what? April starts next week. Next Thursday is April 1st, and we are going into a weekend where a lot of people are starting to take stock on potentially diplomatic negotiations not really happening, and the president is just buying time.
Crude up by close to 4%, 91 on WTI. Up next on the program, Abigail Watt of UBS with Wall Street searching for clues on the path ahead for interest rates. Plus, Danny's back with your morning movers. Aries sinking as private credit concerns grow deeper. That name is down by 3% in the pre-market.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The opening about 60 minutes away. Equities declining by 0.25% on the S&P 500. On the Nasdaq so far down by 0.2. On the Russell negative 0.3. With your morning movers, Danny Berger has more. Hey, Danny.
Hey, John. Another filing from another private capital company, this time Ares, seeing redemptions that they are capping, as is in their prospectus, that they said they would do it at 5%. ASIF is the name of the fund from Ares, so capping it at 5%, despite the fact that they saw an 11.6% withdrawal request. We also heard from Apollo overnight as well, doing a similar thing, withdrawal requests of more than 11% and capping funds at 5%. Elsewhere on the move this morning, Jefferies, it's been a back and forth for them. The FT reporting that SMFG, the Japanese bank, looking at a potential takeover of Jefferies. They already own a minority stake. If they see an opportunity to dive in, if shares fall, then they would do so. However, our reporting this morning suggesting that that is not the case, that the Japanese bank is not in talks with Jefferies. Even so, you are still seeing shares higher by 7.5%. Finally, Janus Henderson in the takeover battle of this asset manager. Trian and General Catalyst upping their bid to $52 a share. You'll recall that Janus Henderson already agreed to be bought by them, but then Victory Capital came in and offered something closer to $57 per share. Now, to be fair, Victory Capital's offer is a mix of cash and stock. This one from Trian is just cash, and they already own a small portion of Janus Henderson. Janus Henderson has repeated that that is the more attractive bid for them. Shares up 3% in the pre-market, John.
Hey, Danny, thank you. Looking forward to the program alongside Matt Miller, guiding you into the opening bound. That kicks off at about 9 a.m. Eastern time, so around 30 minutes from now. Bramo said this a few times. If we weren't talking about the Middle East, no doubt we'd be talking about private markets and private credit, without a doubt, after some of these headlines this morning.
Without a doubt. And you think maybe potentially, actually, that would be moving some financial markets right now, but everyone is just squarely focused on a much bigger risk, and that is the conflict in the Middle East.
At the mercy of the headlines coming from the administration and out of the Middle East going into the weekend. A few more days of talks and then the prospect of real de-escalation or the potential for real escalation. Equity futures this morning softer by about 1/3 of 1%. Looking out to the week ahead, traders eyeing data and Fed speak this week for clues on the path ahead for interest rates. Mike McKee joins us now for more. Good morning, Mike.
Morning, John. Well, Fed officials are kind of in the same boat as everyone else, looking for clues as to the path ahead. It is very hard to figure out exactly where we are and where we are going, but we do have some numbers this morning that tell us the path is looking a little rocky. Philadelphia Fed's non-manufacturing index is out, and it was expected to be at negative 15.7, which would be an improvement from the prior month, but for March it is negative 23.9. And then the numbers that people are really watching around the world are the S&P global composite PMIs for March. Well, global, all of their PMIs, but I'm focusing on the composites, and you can see in every instance in Europe, they all went down, and all of them are reporting higher prices paid, lower orders, and lower employment. And so at this point, what it looks like is we are starting to see the red shoots. We always talk about green shoots for recoveries. In this case, we're talking about red shoots of the impact of what's going on in the Middle East. We get our numbers on the S&P PMIs at 9:45 this morning. They are also expected to show a decline, although not a big one, but we'll see how that plays out. Michael Barr of the Fed is going to be offering his views on the economy today. Tomorrow we get import prices, and on Thursday we get the jobless claims as always, and a lot of Fed speak. Cook, Myron, Jefferson, and Barr. Friday, Michigan sentiment. We want to see what consumers are thinking. Recent poll out from American Research Group yesterday showed 68% of Americans think the economy is getting worse. 70% say the economy will be worse a year from now. So what does the Fed do about it? Well, right now, they're all kind of stepping to the sidelines. Mary Daly out with an essay yesterday saying that she can't give guidance anymore. She can only talk about scenarios. Offering too much forward guidance in an uncertain world risks conveying a false sense of certainty, reducing rather than improving transparency and making it harder for the public to clearly predict how the FOMC will react. We don't know. We can't tell you. We're just going to tell you what the possibilities are, is basically that message there. And I think we'll hear much the same throughout the rest of this week from all of these Fed officials like us waiting for data.
So, Mike, can I ask you, in what scenario would they consider hiking interest rates? Because everyone we speak to in fixed income, basically everyone that comes on around the table, they say the bar to hikes is so high that it doesn't make sense the market is even beginning to price any kind of rate hike in from the Federal Reserve. What's the pushback to that?
Well, two things would have to happen. One is that inflation would have to rise significantly and fairly quickly and not be just headline oil related. If it starts to get into other aspects of the economy, which it could easily do, that would start to worry the Fed, and then they'll be looking at inflation expectations. If markets and consumers start to think that inflation is going to get embedded, that's a problem, and that would lead them to raise rates. But those are much farther down the road than the markets had been estimating earlier this week, earlier being yesterday morning. And I think it's going to be a while before you get any kind of hint from Fed officials there.
Mike, it already feels like Friday. And I was saying that yesterday morning. Mike McKee.
It's Tuesday, Lemon.
It's exhausting. Thank you, sir. Appreciate it. Abigail Watt of UBS writing the following. The odds for rate hike may be rising, but the odds of a lot of rate cuts are rising too. Abigail joins us now for more. Abigail, good morning.
Morning.
That is what's so difficult about this environment. If this Fed had to hike, surely they'd have to cut by even more, 12, 18 months out.
Yeah, look, I mean, I think, you know, our sense is that for the FOMC, it's obviously a difficult position to be in, to see your inflation continuing to move away from your target, while simultaneously you still have that kind of weakness persisting in the labour market. And at the same time, I think they have to think about the potential downside risks to activity and to growth from a higher, you know, oil price shock as well. So it's not necessarily one-sided. And I would say that the distribution has widened, but the tails are on both sides, right? So I think you know there is that potential that you have to see a more a stronger response on, I guess, the downside from the FOMC.
Can we start with your forecast, and let's start with, say, inflation. Matt Lazzetti at Deutsche Bank put these numbers out yesterday. They now expect year-over-year headline CPI to be closer to 4% in May before declining to around 3.7% by year end. Are you looking for a similar trajectory looking out the next 9 months or so?
Yeah, so I think, you know, we'll really start to see that energy price shock feeding through in the March data. You know, we've got the kind of headline print rising 1% in March and in headline CPI. And then by the end of the year, you know, we've taken up our expectations for headline inflation by around 50 basis points so far off the back of the energy price shock. I think the key thing to watch in terms of thinking about the feed through into inflation is not where the oil price is today. You know, I think everyone's focusing very much on the movements on the minute by minute, second by second basis, but really what matters is the persistence of that shock. So what we should be thinking about is how much that futures curve has shifted versus where it was before, right? And if you think about that, if you look at the end of 2026, it's about $15 above. So we've added about 50 basis points. That gets our Q4 over Q4 headline CPI to kind of 3.3%.
Is that what makes this crisis very different than what we saw in 2022? Because of the persistence?
I think the difference to 2022 is potentially less so on the kind of supply side and actually more so on the demand side in terms of the impact and the expectations in how this feeds through the economy, right? Because the starting point in 2022, you were in a very different economic situation. You know, you had payrolls growth running 377,000 a month on average. We had 10K a month added on average last year. So I think the starting point for the economy is very different. You had a point where, you know, you were coming out of the pandemic, you had relatively strong demand, you had big fiscal support for households, monetary policy was relatively loose. I think the starting point for the economy is very different on the demand side now versus where you were in 2022. And the supply constraints potentially, I think the question is kind of how broad they'll end up being, right? I think the supply constraints coming out of the pandemic in 2022, you had the oil price shock alongside a broader array of supply constraints that were off the back of the pandemic. So I think it's really going to depend on the breadth of those supply constraints and also kind of that starting point for demand in terms of how it feeds through.
Mike went through what Governor Mary Daley is talking about in terms of how difficult this moment is for the Fed to really dictate where they're going. Sprinkle on top of that new leadership at the Federal Reserve. The next few months, how challenging is it going to be to really understand the direction of policymakers?
Yeah, I think it's really challenging. And I think you saw this not just from Daley, but I think in Chair Powell's press conference, obviously, I think there was a lot of focus on inflation, you know, rightly so from the questioning. And I think that meant that when you got the kind of message from Chair Powell, it was very focused on the inflation side. But I think for them, it's really going to be about balancing that message of kind of what they're seeing in the data. You know, are they seeing activity slowing? Are they seeing the consumer slowing? Which is going to be a really key thing, I think, you know, as they're thinking about that kind of weakness in the labor market and the balance between the two.
It's not a great time to have contested leadership of the Federal Reserve. I've got no idea who's going to chair the meeting in June. Have you got any base case, any scenarios that you're pondering right now about what leadership looks like through the summer?
Yeah, so I mean, it's challenging, right? Because I think, you know, our base case is that Walsh is put in place and kind of takes over from Powell. That's the base case, but it's challenging to know kind of how that's gonna kind of come through and whether you see more of a holdup, I guess, in that Senate confirmation process. You know, obviously Chair Powell was quite clear last week that he plans to stay on, you know, as a governor as well until the kind of legal matters are dealt with. You know, he obviously could stay until January 2028. That's when his term as governor ends. So I think it's not unprecedented to see people remain on the board. It's not common, but it's not unprecedented. So I think it's interesting, and I think, you know, we knew that this year we were going to see a change in the mix of the FOMC and the composition of the FOMC. I think we knew that coming into this year. It was one of the things that we've been factoring as, you know, people are going to have to digest a new Fed chair, digest a change in the committee, right?
It's a quieter market morning, so we've got a little bit of time for this. I do wonder what this is actually going to look like. Let's say the chairman says he's staying on. DOJ investigation wrapped up. Walsh is confirmed. Chairman stays on as a governor. And he's worried about independence. And we all know that's basically why he's staying on, because he's worried about central bank independence. Does that change your thoughts about how easy policy could be under Chair Walsh? That we've got an individual on the board who's only there because he's worried about independence. Are others going to dig in with him as well? Does that contribute to how he votes on interest rates? They're the kind of things I'm trying to work out for the next 12 months or so.
I think they'll react to the economy, right? I think the FOMC will set monetary policy on the basis of the conditions of the economy and what the economy requires, right? I mean, we started this conversation with you talking about the risks of potentially much more cutting, right? Sure. So I think the committee will react to what they see in the economy and what they think is going to happen in the economy. So that's my sense. I think that actually is the best way for them to be independent, right? They react to what they think they need to set monetary policy to on the basis of what the U.S. economy needs.
It would be political, though, for Jay Powell to stay on. So the man that thinks he's then protecting Fed independence would then being the one that politicizes it. Because, yes, maybe it's not unprecedented, but it is highly unusual for the chairman to stay on the board. Usually, you exit, stage left, someone else comes in, and you give them some breathing room to run the Fed.
the optics wouldn't be good. Let's put it that way. Abigail, it's good to see you. Thank you. Abigail Watt there of UBS. If you're just joining us, welcome to the program. It is a quieter morning on Wall Street compared to yesterday, and compared to yesterday, everything's quiet. Equity futures right now, the S&P pulling back by 0.5% on the S&P 500. That is a small decline relative to some of the wild swings we've seen more recently. Yields are pushing higher once again, though. On twos, we're up by 4 basis points to 389. And in the commodity market, adding to gains. This is a bounce back now in WTI by 4%. WTI at 91.75. Brent crude around 103. With an update on stories worldwide this morning with your Bloomberg brief, let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Secretary of State Marco Rubio heading to France on Friday for a G7 foreign affairs meeting. According to an official statement, Rubio will discuss the situation in Iran as well as the Russia-Ukraine war with his G7 counterparts. United Airlines is launching its biggest fleet rejuvenation in its history. The airline is aiming to take delivery of more than 250 aircraft by April 2028 and upgrade flights with lie flat seats, typically reserved for international service. Our very own Lisa Abramowicz will be speaking with United CEO Scott Kirby today at 10:30 a.m. Eastern. And March Madness off to a strong start on TV. Viewership for the NCAA tournament off to its best start on record. Nielsen reporting a 5% increase in the first 3 days last week. The primetime games, which included VCU's win over North Carolina, averaged 12.5 million, making it the most watched first round in tournament history. That's your Bloomberg Brief, John.
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with the Cisco president and chief product officer, Jitu Patel, highlighting a massive AI transition.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth we've started with by empowering our customers across all our segments?
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The market is vacillating wildly between what the Fed's going to do. I think what's really important is to take a step back. To us, it continues to feel like a low hire, low fire market. And what we've had here is another supply shock.
That was Kay Herr of JP Morgan Asset Management on some of the value being created in fixed income. Some major moves across the curve. Twos briefly through 4% for the first time since last summer. Tens through 440. Then new highs for the year as well. So we've gone through the upper end of the range for the year 2026 and made a new high in the last 24 hours. We pulled back from those levels. We had a big turnaround in the equity market as well. Equity futures right now in the S&P 500 slightly softer going into the opening bell. We're negative by 0.5. Likewise on the Nasdaq, down by 0.7 on the Russell. So softening up going into the cash open 42 minutes away. In the bond market, 2s, 10s, 30s look like this. Yields bouncing back as well, up by 4 basis points. Twos back to about 390 at the moment, with crude picking up as well. It's a bounce back of more than 4% on WTI. We're back to about $92 a barrel so far this morning.
The market's starting to wake up that there still are more risks priced in, even though the president tried to de-escalate yesterday after what he said was going to be this threat. Now the big risk is going to be Friday, and a lot of individuals are waking up to the fact that potentially this isn't real earnest engagement. This is just the president of the United States trying to buy some time because there are Marines that are headed to that region right now, Jonathan.
That's the big event circled on the calendar going into the weekend. The other events look like this. The trading diary set up as follows. At 9:45 Eastern, PMI data. Mike McKee was talking about this. A stagflationary mix and some of the PMI data elsewhere. What will we see later on this morning? Look out for coverage of that on Bloomberg TV in about an hour from now. We'll get some Fed speak later on as well on Thursday. A G7 foreign ministers meeting over in Paris. Look out for that. Plus jobless claims, of course, on Thursday. Friday, UMich consumer sentiment. Lots of that sentiment story over at UMich shaped by what happens in energy. So I think we're looking for a dramatic read on that going into the weekend. I'd also point out Secretary Rubio, part of those conversations with G7 foreign ministers going into the weekend. That's key too.
That's going to be key, right? We heard from Keir Starmer in his office saying they do think that there are real negotiations underway. What are these European allies right now thinking and going to be saying directly to Secretary Rubio, who really hasn't been out front when it comes to this conflict? We've heard from Secretary Wright, the Energy Secretary. We heard from the Treasury Department. Scott Bessent has been making a lot of headlines in terms of this conflict. We haven't heard from the president's top diplomat.
Spare a thought for the Federal Reserve facing down an energy shock, and now Fed officials grappling also with a fragile labor market as more companies begin using agentic AI. The Cisco president and chief product officer Jeetu Patel delivering the keynote speech at the RSA conference, highlighting advances in artificial intelligence and saying a massive transition is happening, a transition from using passive chatbots to deploying autonomous agents capable of performing real-world workflows and tasks. I'm pleased to say that G2 joins us now for more. G2, buddy, it's good to see you. Thanks for making time for us. What was the essence of the message you've delivered just recently?
Jonathan, thank you for having me on the show. And, you know, this is an exciting time and at the same time a very disorienting and concerning time in AI, in the sense that we're moving squarely from this era of chatbots to now the second phase of AI, which is an era of agents, where these agents are going to conduct tasks and jobs for us almost fully autonomously. But the challenge with these agents, Jonathan, is they're kind of like teenagers. They're not completely mature yet. And if you don't, in a trusted way, delegate the work to them, the difference between delegation and trusted delegation could be the difference between bankruptcy and market leadership. And so what we wanted to do at the RSA conference was really talk about the of safety and security as it pertains to these agents, and make sure that these agents have guardrails so that they don't just go awry, and you also protect it from the world.
Well, that's the issue, and you've touched on it, the two dimensions to this. Which one do you think is harder, protecting the world from agents or protecting agents from the world?
So I think they're both equally hard, and we have to make sure that you actually don't choose one or the other. In fact, there's three areas that need to be thought about. The first one is protecting the world from agents, and what I mean by that is making sure that the agents can't be externally manipulated to go out and do things you don't want it to do. The second area is making sure that you have the world protected from agents, so that if the agents start going out and behaving in a way that you don't want them to behave, you can dynamically intercept and have some guardrails. And then the third one is these adversaries and threat actors that we see, they're also going to be using these agents, and these agents are going to work 7 by 24 to try to attack us. So we need to make sure that we can also handle those attacks at machine speed, not at human speed. So we need to have agents in our SOC, our Security Operations Center, to make sure that they can catch threats pretty efficiently as well. So all three of them are pretty necessary. And if you leave any one of them out, it actually doesn't, kind of bode out that well.
GT, there is a concern that as people throw more money at this will ultimately replace real people. What kind of scenario do you envision? Is this a situation of doing more with fewer people, doing more with the same amount of people, or do we get a bigger pie all over the place?
Look, Jonathan, the way I think about this, and you and I have talked about this for many, many years, but the way I think about this is there is definitively going to be a productivity increase. Now, there's two ways that a productivity increase can manifest. One is you do the same amount of work with less people, and second is you do infinitely more amount of work with the number of people you have. And the truth is going to be somewhere in the middle. And the way I see it is some jobs will be lost. Virtually every job is going to get reconfigured. And then you'll have entirely new industries that get created, which wouldn't have gotten created if AI weren't around.
G2, at the moment, we're dealing with a massive energy shock. And I want to understand from your perspective how cyclical the spend is at the moment. Because there is a hope in technology and people who are along these stories that these are secular tailwinds, that the cycle doesn't really matter here, the money will keep flowing. Do you think there is some doubt here? Could it be disrupted by the shock we're witnessing over in the Middle East?
The way I think about this, Jonathan, is this is a secular tailwind, but we have to keep a few things in mind. The first thing is, what are the impediments that could hold AI back? And we think there are 3 impediments that could hold AI back. The first one is an infrastructure constraint. We just don't have enough power, compute, and network bandwidth in the world to satiate the needs of AI. So that's the first one. The second one is we have a huge trust deficit. If people don't trust these systems, they're not going to use them. So actually, trust becomes a prerequisite for an accelerated adoption cycle. And the third is we have a data gap. These agents need to be enriched with context. You and I, on a daily basis, take trillions of tokens of context, and from our vision, from our sensory, from our sound, or from language, and that's how we actually operate in a day. If you don't give that enrichment of context to these agents, they'll still make decisions. They'll just make decisions that are uninformed. So we need to make sure that we actually enrich it with context. Those are the 3 big areas. Now, to your question, do we have, are these secular or are these, spikes? The way I see it is, in the long run, 7 to 10 year window, I think we are underestimating the amount of infrastructure that's going to be needed. Right now, it's actually anticipated that there'll be about a $5 trillion build-out that happens over the course of the next few years.
Yeah.
We are underestimating the build-out if over the course of the long run, if you think of over the course of the long run. For the short term, there might be some spikes.
G2, we've got to go. It's got to catch up. It's good to see you, buddy. Thanks for the update. G2 Patel there, the Cisco President and Chief Product Officer from New York City this morning. Good morning. We'll see you tomorrow morning. This was Bloomberg Surveillance.
Day 7 at the Miami Open. Coco Gauff moved into the quarterfinals at her home event for the first time after she took out Sorana Castella. After splitting the opening 2 sets, the 2-time major champ found her A-game in the decider, closing it out in style 6-2 after just over 2 hours.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Bloomberg has learned that there are discussions around a potential all-cash offer for Warner's studio and streaming businesses.
For the past few years, we hadn't really seen any deals above $30 billion. And now we're seeing, Warner Brothers, $80 billion, the big railroad deal. And what we're hearing from sources is that next year we're going to see more of the same. It's just going to be the mega deal.
I would expect next year will be an even better year for M&A and IPOs.
That's just kind of what we do at Serena Ventures, is just kind of learn how we can fill in different gaps in different areas that are being missed. And by the way, these gaps tend to be really, really massive.
I know you've been very bullish on the return of M&A. Do you expect more deals, if they are of this size, to have the same sort of structure and contours?
I think we're going to see the return of large transactions, and I think they're going to avail themselves of both private credit options and public options.
There's a lot of merger talk. There's a lot of firepower.
Investors wanted to know at what price would this deal be, and now they answered that question at $70 a share.
So congratulations to Bloomberg's deals team for getting it first.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
My wife was like, no. All right, 30 minutes until the start of trading today. Futures are down. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, stocks struggle and Brent clings to triple digits as traders navigate a wide range of war scenarios in the Middle East.
And in deal news, Nelson Peltz's Chai and General Catalyst sweeten their bid for Janus, while Japan's Sumitomo Mitsui pushes back on takeover talks around Jefferies.
Plus, Michael Dell's family office sees the turmoil in private credit markets turning into a buying opportunity. We'll delve into that.
Oh, there might be some selling today. At least people want redemptions in some of their retail-oriented private credit funds. I'm watching those specifically this morning, Matt, because we're seeing them declining. Ares, Apollo, and KKR. Ares and Apollo both out with similar filings for their BDCs, their retail funds, saying that they had redemption requests of more than 11%. They're putting the gates up, as is in their perspective, of just 5%. A little bit of a different story for KKR, a fund managed by them and Future Standard. Lost its investment grade rating from Moody's, downgrading it to junk. Moody's saying that there is continued asset quality challenges.
All right, so this story continues to unravel. Trian and General Catalyst, as Danny mentioned, boosting their offer for Janus Henderson to $52 a share compared to Victory Capital's $40 a share offering plus incentives. And Japan's Sumitomo Mitsui has no immediate plans to take over Jefferies, despite a report by the Financial Times about getting ready for a potential acquisition. As a result, we're seeing moves in the target shares here that you can see Jefferies up 8% in pre-market trading, Danny.
Back to our top story this morning. Fighting in the Middle East continues unabated a day after President Trump said talks were underway to end the conflict. The president spoke yesterday in Memphis.
I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us. And I would say at the end of this period, I think it could very well end up being a very good deal. for everybody, as good as if we went all the way and just literally annihilated the place, which if we don't have to do that, that would be a good thing.
Joining us now is Bloomberg senior editor Wendy Benjaminson in Washington. Wendy, we're now over 24 hours since Trump first put out that Truth Social post saying that talks have been taking place with Iran. What have we learned in the time since?
Well, Danny, we are getting some clarity about what he actually meant, what is actually happening. And because Iran came out with a vehement denial that they were talking to Trump and that they had no interest in talking to Trump whatsoever. But what appears to be happening now is that lots of other countries in the region who are not targets of Iran, Egypt, Pakistan, Turkey to a certain extent, and some countries even far away like South Korea, all have been urging the U.S. and Iran to get to a table. And so they are acting as intermediaries. They are talking to Witkoff and Kushner, who are Trump's, global negotiators, and then they are ferrying messages, I guess, to the Iranians. But one of the troubles is that, remember, this is a U.S.-Israeli war on Iran, and the Israelis have said that they have no interest in talks, they have no interest in a deal, they have goals they're going to militarily achieve, and that's what's going to happen. So even if, which I think is unlikely at this point, that the U.S. and Iran come to terms in 5 days, the Israelis are still going whole hog. So, there's no sign of peace in the Middle East right around the corner.
Well, I continue to bring this up, but to me it's so fascinating that the president has said publicly, has tweeted, there will be no deal except an unconditional surrender, and it doesn't look like it's going that way. Wall Street also facing what looks like a lot of trading, or questions about a lot of trading, in the minutes before the president backed off of his 48-hour ultimatum yesterday. What are you hearing in Washington about the fact that it looks like, at least in notional terms, billions of dollars were bet on that sort of taco from President Trump?
Hi, Matt. Well, I'm sorry. I'm not as familiar with that story as perhaps I should be. But to your point about Trump, saying that he doesn't want a deal, we've seen him look very eagerly at times for an off-ramp from this crisis. And he is really looking for some way to get out of this, because Wall Street and the American people, including the American midterm campaign voters, are really looking for gas prices to come down, for this to whole settle out, and and Republicans want to keep their jobs. So I think he may be talking tough, no deal, but I think he's really looking for a way out of this at this point.
All right, Bloomberg's Wendy Benjaminson in Washington, D.C. As I mentioned, we have market data showing unusual trading spikes in terms of volumes yesterday, in terms of index futures, in terms of oil futures, worth billions of dollars in notional value, changing hands in just the 5, 10, or 15 minutes before President Trump's Truth Social post sent crude prices tumbling and equity index futures soaring. And Aaron Kennan from Clear Harbor had this reaction to the data.
That was an embarrassing moment, potentially, if in fact, as an American, if in fact that was something that could have been avoided. Perhaps, however, there was a communication had across our allies, and perhaps some of these actions occurred from participants in the Middle East rather than within the administration. So I want to be super cautious about pointing fingers at anyone on that front, but it was highly suspicious.
Joining us now is JP Barnert, Bloomberg senior strategist out of Frankfurt. And JP, we also saw moves like this in DAX futures and natural gas futures, really across a range of contracts, didn't we?
Yeah, absolutely. I mean, some of this might be spillover in the way of how markets works these days, that when one position is put in one market, then the other markets move in tandem. But it's a very unusual thing to see that we have such a huge amount of contracts moving, especially in the US pre-market, when the market was relatively calm. And then 15 minutes later, you get a major announcement that sparked some of the biggest intraday swings in oil and in stock futures that we have seen since the COVID crisis. So I mean, there is no hard evidence of wrongdoing, but it's something where you feel like, okay, this is not normal. Either it's like a very lucky or unlucky coincidence for somebody, or there was an information leak and somebody just knew about it, that something will come and positioned accordingly. And I think that's something that the authorities should look into, investigate, and tell the world what's going on.
Something we're perhaps more used to these days of seeing on betting markets, not in stock and oil futures. JP, elsewhere, with a rebound yesterday of more than 1%, to what extent have risk assets been pricing in the move higher in oil? What exists in this market right now?
Well, I mean, like, I guess what we are seeing is that the U.S. administration is trying to draw a line here and get out of it with the elections coming up in a couple of months, and the things are getting a little bit out of hand, especially in the past week. I mean, like, for stocks, it's still like a bit tricky to price all the stuff that is going on, and I guess we are seeing a little bit more a market that is similar to what was happening in 2022, when people need to figure out, okay, how is supply chain disruptions and higher energy prices feeding into corporate earnings and inflation, and at the end, like in consumer behavior. So I guess like yesterday was a first attempt to try to calm things down and kind of like start a ramp off. But I wouldn't go so far as to say this isn't all clear and that stocks can go higher from here.
JP, thanks so much for joining us. Bloomberg's JP Barnard in Frankfurt. In corporate news, the Financial Times reporting that Japanese bank Sumitomo Mitsui is planning a takeover of Jefferies, but are they? Let's get details from Bloomberg finance reporter Catherine Doherty. It does seem, Catherine, like there's been some denials that this is actually what's happening.
Well, I think that the key here is that there's no immediate or actionable plans that are coming through. There has been a buildup of the Japanese-based bank, their stake in Jefferies. They have been very public about the partnership, and this is giving both banks exposure to both new countries, new business lines that they have tried to bolster up internally, but really working together. This is an immediate access point for Jefferies going into Asia and vice versa. You have SMBC immediately getting some of Jefferies' US-based clients. So this has been a story that has been evolving and developing. What makes this moment in time interesting now is the pressure that Jefferies stock has been under. Jefferies stock has fallen. Before this news dropped, it was about a 36% decline in the year, and that's just because of all the headlines and all of the credit risks that the company has been caught up in. And so really what you're seeing here today is a lot of speculation around what does that mean for SMBC when they have this stake that they are gradually increasing to that 20% that they already had disclosed. The real question then becomes, will that go further? What does that mean for Jefferies? But I think that there's a lot of hurdles that are presented in terms of a full takeover of Jefferies. You have regulatory questions. You also have a lot of questions around the partnership right now is very amicable, and the two companies are working together. When you have a full takeover, that means that the management and the leaders in place would have to presumably change hands, or they would have to figure out an entirely new structure. So I believe, just based on the sources that I've talked to in the industry, that these are the types of things that really need to be worked out that make the plans for a takeover today very unlikely.
We do have Jefferies reporting earnings, I think, after the bell. Tomorrow, and they're seen lately as a bellwether for the rest of Wall Street. But as you mentioned, they've been caught up in a lot of things in a larger way, like First Brands, that the other big banks haven't really had the same stake in. So are we going to see those numbers come through in the earnings that they publish?
We already started to in last quarter. So yes, I do believe that there could be some updates in terms of other hits that this has taken to the business. But the company has also, over time, not just at earnings, but when these moments in the credit market do pop up, they've come forward publicly to disclose what the potential hit is. And that is to calm down investors in these moments of questions. How much of that money is actually going to go towards Jefferies' bottom line? And the bank has come forth and said, and been very, very clear on the millions and not anything that they couldn't handle. So it's really been an interesting time for Jefferies in that it's not just earnings that we've heard from them, but tomorrow will be a good indication of outside of the asset management business, which is where some of these credit investments have popped up. We'll get some updates on trading, investment banking, and that is an indication of what we'll hear from the rest of Wall Street, the rest of the big U.S. banks that will be reporting in a few weeks. And so it's really going to be a moment in time to hear from the leaders of these banks and to see we've been reporting on all the volatility, which is good for the trading desks. For investment banking, that's, I think, going to be a big question mark right now. Are some of these geopolitical risks slowing down the M&A? We might not see that in the results tomorrow, but the executives and what they have to say about the future is also going to be something that analysts will be closely watching.
It's like every year is the year of M&A, and then we question it a couple months in. Catherine, thank you so much for joining. We'll have you back on when those earnings come. Looking forward to that conversation. Catherine Doherty, and catch Bloomberg Deals every Wednesday at 12 p.m. New York time. We're going to be speaking with Goldman's head of M&A and ask these exact questions. A quick check on markets as we head to the break. The gains in equities from yesterday starting to peter out, down 0.6%. Yields move higher. Your 10-year yield at 439.56 as Brent crude, everything being driven by that at $103 a barrel as we question whether there is escalation, as the New York Times reports that the Saudi prince is said to push Trump to continue the war in Iran. Coming up on the show, asset manager shares fall after Apollo and Ares announced that they are the latest to curb redemptions from some of their private credit funds. They've put up the gates. We're going to have more on that next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for StartupWave by empowering our customers across all our segments?
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. BlackRock's Rick Rieder is pursuing investor cash for his first hedge fund in years. Rieder wants in the running for Fed chair, says the fund will bundle investment ideas from across BlackRock's fixed income business into one unified strategy. But it isn't Reeder's first foray into hedge funds. He founded R3 Capital Management in 2008 with money from Lehman Brothers, where he had spent a couple of decades. JP Morgan says the U.S. power grid is a national security risk, citing decades-old infrastructure that leaves it exposed to extreme weather and cyber attacks. The warning comes as energy markets face daily shocks tied to the Iran war, adding yet another layer of risk for investors and policymakers. And private credit woes are creating buying opportunities, according to Alyssa Mall, the CIO for Michael Dell's family office. Our own Danny Berger spoke with Alyssa yesterday at a Bloomberg New Voices event here in New York.
Many of the big asset management firms have to meet redemptions, so they're going to be selling things to meet the redemption queues. You're going to have a number of institutions that need to generate liquidity. We've seen this in other asset classes, certainly in private equity and venture capital. They need liquidity. They haven't had distributions for some time. So we're looking for the gems that we can access because somebody is effectively a non-economic seller.
Alyssa Mall there of DFO, but concerns about private credit continue to play out at the largest of asset managers. Both Apollo and Ares announcing this morning that they're curbing redemptions at their retail funds at 5%, that despite requests exceeding 11%. Meanwhile, Moody's cut another BDC, this time run by FS and KKR, to junk, citing continued asset qualities that have hurt profitability. Joining us now is Bloomberg credit editor Bruce Douglas. Bruce, I guess we need to separate any of the underlying asset concerns and the redemptions. Let's start with the redemptions. What are these funds saying as to why they're going through with this 5% cap when we've seen the likes of Blackstone, for example, meet all of the redemptions that have come their way?
Yeah, well, they're basically playing it by the book. I mean, if you look at the small print, this is what their gating requirements allow. Blackstone obviously exceeded their cap on redemptions and were criticized by some in the industry for doing so, whereas when the redemptions were capped at 5% before, Apollo's John Zito said that they were acting exactly as they were supposed to act. This is what the small print says. It's supposed to prevent a fire sale, but obviously from the investor's point of view, who are hoping for liquid product and that they'd be able to get their hands on their cash quite easily, and this has obviously come for some, perhaps not as a surprise, but with everyone crowding for the exits at once, it has meant these firms have had to limit how many of these redemptions they actually honor.
Well, and they can do that. I mean, that's in the contract, I imagine, that the investors make with the fund manager. Are many of them holding at the 5% level that they're entitled to, or do you see more allowing 7, 10% redemptions when they only need to allow 5%?
Yeah, we've seen a couple kind of straying over that 5% cap. Cliffwater, I believe, was around 7%. They had requests equivalent to around 14%. And Blackstone before, I think, went up to around 7.9% when they had redemption requests in the low double digits. So we've seen some attempting to keep their customers happy by honoring more of these redemption requests. But overall, it seems that 5% mark appears to be kind of holding steady. And again, defenders of the private credit model, of these kind of semi-liquid fund model, would say, well, that's exactly how it's supposed to work and is supposed to present a fire sale of these assets. And by holding at this level, they can actually continue to dole out liquidity in lumps for the foreseeable future.
Hey, Bruce, I got less than a minute here, but I want to ask on the fundamentals itself following this Moody's downgrade. Is there more than just redemption requests? Are there genuine concerns about the underlying quality of these assets?
Yeah, well, clearly that's another interesting development. And yes, there have been concerns, partly stimulated by developments in artificial intelligence, which have obviously led many investors to question the business model of software companies. And software companies borrowed heavily in the private credit market. So there is this question about the value of the underlying loans. This downgrade was the latest sign of that. We've also seen in today's Big Take story some questions about the underlying assets in Cliffwater, its fund of funds, which is another reason why some investors, particularly retail investors, are clamoring for an exit and why we're seeing these redemptions.
Bruce, thank you very much for joining us. That's Bloomberg credit editor Bruce Douglas. And we're going to have more on private credit in the next hour. Brad Pilcher, partner at Bonaccord Capital, who himself invests in private capital GPs. We'll see how he sees the landscape. Coming up, Callan Family Office, Rayanne Mitrione on inflation fears and earnings growth. This is Bloomberg.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this field forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Strategists see the war in the Middle East entering a new phase of demand destruction. Marco Papich of BCA Research says if this doesn't get resolved over the next 7 to 10 days, we're looking at a pandemic-style shutdown of the global economy, and Trump is aware the real economy could fall off the cliff. Joining us now is Callan Family Office market strategist and founding partner Rayanne Mitrione. Rayanne, do you share the same concern that if this doesn't get resolved in over a week's time, we could be looking at some real damage to the American economy?
Good morning, Danny. The risks are certainly rising day by day, but we don't view it quite as dire as that would suggest. We do need to see some progress, and we need to see some resolution and some traffic starting to resume through the Strait of Hormuz, because if oil prices stay elevated, the risks around the world do continue to rise. We're a little bit more insulated in the U.S. because of our position as a net energy exporter, but the risks are rising as we move forward.
Yeah, I mean, to be fair, we chose that quote because it's so shocking, right? He seems to imply that kind of binary. Either, you know, we go into pandemic style lockdown or things get resolved. Rayanne, you're going to stay with us through the market open. We're going to show you the bells next. Take a look at futures right now. We're down after we had yesterday one of the biggest gains that we've had, I think the biggest gain in 6 weeks at the close. So it was a good day for the cash trade. That's opening up next as we look at a drop of 0.6% on futures. The U.S. 10-year yield coming up another 5 or 6 basis points, getting to 4.40 pretty soon. And Brent crude right now trading back up to $103.41 a barrel. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest. And this is Bloomberg.
All right, we're moments away from the start of trading on this Tuesday morning. This is Bloomberg Open Interest. I'm Matt Miller, looking at futures that are down now 0.7% on the S&P. NASDAQ futures down about the same, and the small caps falling about 0.8%. You hear the opening bell. You see on the New York Stock Exchange, you have Banco Macro, an Argentinian bank, ringing the opening bell, and the stock is down 22% year to date. But over the last 5 years, it's up 600%. That's why they're smiling so much. Down at the NASDAQ market site, you've got the Situation Project, which apparently has nothing to do with the situation. I was hoping for Mike the Situation to be down there. I have no idea what they do. It's some kind of like fashion thing, maybe a charity. It's a nonprofit, I know that, and it's about fashion.
And maybe there's some people from Jersey there, but not related to the Jersey.
Not from the shore.
At all. Yes, correct. So here at the opening bell, I am looking at the stocks of the private credit giants. A lot is going on. Both Ares and Apollo, they both have BDCs that saw redemption requests that exceeded 11%. Both of them, and Matt and I have been talking to folks at both of these funds who say, look at the contract. 5% is clearly what we told you that we would gate redemptions at, and that is what they've done. They've gated redemptions at 5%. The argument goes is that it's kind of for your own good. These are illiquid assets. You shouldn't keep pulling things out of them. But both Ares and Apollo are down this morning by more than 3%. KKR, a little bit of a different story. They have another BDC. It's managed by FS and KKR. Moody's downgrading it, cutting to junk, saying that there is continued asset quality challenges, and those challenges, Matt, would harm profitability.
All right. It's a story that continues on, and I think some people say we over-report this story, and they maintain that this has no structural or systemic risk, I should say. But every day, if we get new headlines out of giants like Apollo, out of companies like Blue Owl, out of Cliffwater, we got to report it. So it continues.
Well, also, if it's hitting share prices, there's not no impact beyond the redemptions themselves.
That is right. There's no impact. Trian and General Catalyst boosted their offer for Janus Henderson to $52 a share compared to Victory Capital's 40-plus incentives. So it's not really apples to apples, but you get that basically Trian is raising its offer. And we know that Janus Henderson employees, at least some of them, prefer Trian. We've been talking about this takeover for a long time. Sumitomo Mitsui says it has no immediate plans to take over Jefferies. But there was a report in the Financial Times that said Sumitomo Mitsui was preparing for a Jefferies takeover, and it already is a significant shareholder. As a result, Jefferies shares in the cash trade up 4 1/3%. Let's bring back Callan Family Office market strategist and founding partner Rayanne Mitrione. And Rayanne, we kicked it off with kind of an alarmist, maybe binary scenario from Marco Papich, but you have to recognize that there are definitely inflation risks out there. Goldman Sachs out today warning that we could see global inflation up to 4.9% on the back of the jumps that we've seen in oil already. How do you price this into growth? How do you price this into earnings?
There's no question that elevated oil prices are going to factor in and have an effect on inflation, on growth, on earnings, clearly on Fed policy. But it's really going to be just dependent on how long this continues. I mean, we saw yesterday on some positive news how quickly oil prices dropped back down. So you can't reverse the damage that's been done over the last few weeks. But if this gets resolved, we could see oil prices come back to a more normalized range and the effects not be as severe as some are currently predicting.
Rand, even a more normalized range, though, might be higher than we were used to before the war broke out, just because of all the damage to energy infrastructure. So if you do have sustained higher oil prices, what would that do to your outlook? How do you adjust for that?
It would mean that we would see an uptick to some degree in inflation, which means that we would likely not see rate cuts that we were predicting at the beginning of this year. And now, the market's not predicting any rate cuts over the next 12 months and looking maybe even a higher probability of a rate hike than a cut at this point, even though that's, still a small probability. So not having that support for the markets will have somewhat of an impact, but there are still a number of other tailwinds. But if we see inflation stay high and that gas prices stay elevated, or that factors into other parts of the market, we will see likely spending pull back in other areas.
So where do you see opportunities to buy things maybe that have now a lower valuation where you won't see spending pull back? Like which babies have been thrown out with the bathwater that you want to pick up?
That's a great question. I mean, we're big believers in having diversified portfolios and rebalanced coming into this year from some of the higher price parts of the market, the tech, the growth. But now you have seen valuations come down across the board. I mean, where the most attractive valuations are now that are not overpriced relative to historical averages are really in small caps, even mid caps, and emerging markets are generally in line with historical averages. But even within large cap, I mean, we've come down. The S&P forward PE now is around 19.5 from up around 23 late last year. So there really are opportunities if you have rebalancing that you want to do that you haven't done yet, to do that now at a lower tax cost, or to take advantage of opportunities for loss harvesting in client portfolios as well.
The market volatility, though, has been pretty stunning. And there's also been, add to that, unusual trading just before Trump's Truth Social post yesterday. Does that kind of market action, be it the uncertainty underneath the surface, be it unusual trading activity, does it make it harder or at least more hesitant when you do want to jump in and buy certain parts of the market, just given the whiplash we're consistently given?
It does feel like that lately, and you have to have really a long-term perspective and be comfortable at the level in which you're coming in, because the headlines are moving markets, but over the long term, we do expect that will revert back to stock prices moving with earnings. And so buying things that you think have more of a long-term upside possibility, it may still make sense, and you just have to expect that the volatility will be there and make sure that you have the appropriate risk that you're comfortable with in your portfolio, because we certainly could go down more from here just based on what news we get from day to day.
All right, Rayanne, great having you on the program. Thanks so much for joining us. Callan Family Office market strategist, founding partner Rayanne Mitrione. Let's get a check of what's going on in the markets right now. A little bit of a drop after the gains that we saw at the close yesterday. As I said, the biggest rise that we had, Danny, in 6 weeks at yesterday's close.
We undo some of that this morning. Questions to really where this war is going, whether there's going to be a bigger involvement from Gulf states, as some other outlets have been reporting. So what you see is more or less an inverse of yesterday. As oil prices move up, energy stocks move up too. The best performers, Exxon, Chevron, ConocoPhillips is in there too, some other Marathon as well. When we look at the GRR screen, you'll see that energy is doing really well. To the downside, it was the tech giants that led us up yesterday, so it's the tech giants that are leading us lower this morning. Microsoft erasing 4 points from the S&P 500. Amazon erasing 3 points from the S&P 500. It's a who's who of the Mag 7 at the top. You can see NVIDIA just floating around down over here. That's running away from me. Some of the financials having a bad day too. So if you look at the sectors, the energy index trading at a new record high this morning, up 1.7%. Utilities just barely making it into the green. Consumer discretionary, that's at the bottom. I showed you financials. Those are having a not so good day, despite the fact Jefferies is up on those reportings of will the Japanese bank, will they not buy Jefferies? Either way, we're looking at a decline of about 0.5% so far, 8 minutes into the open, Matt.
All right, coming up, Jefferies, we're going to talk about that becoming a potential takeover target after shares fall more than 30% over the past year. Sumitomo Mitsui says it's not preparing for a takeover, but after a drop like that, you would think maybe someone is. We'll discuss next. This is Bloomberg Open Interest.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
A check on your markets 10 minutes into your trading day. We're being dictated by the price of oil, which is up 3.6% on Brent crude. The S&P falls by 0.8. The NASDAQ by more than 1%, a reconsideration of yesterday's trade, where at least the removal of a near-term escalation threat in Iran allowed markets to rally, but still 5 days. That ends at the end of this week, and there are Marines reportedly being sent to Iran. Let's look at some of the top calls, what the sell side is talking about this morning. First up, Bank of America reinstates CoreWeave to a buy with $100 at the price target, saying it's in a strong spot as demand for AI computing keeps rising. Shares are only up 0.3. Next up, BMO Capital starts JetBlue at market perform. The firm likes its strategy and upside potential, but it flags debt, fuel price swings as near-term risks. We're going to take a deeper dive into airlines in the next hour, as Matt mentioned, with United Airlines CEO Scott Kirby. Finally, Citi upgrading Ralph Lauren, saying that the brand is getting stronger and its wealthier customers will keep business steady even in a shaky economy. Not a huge reaction from shares this morning, Matt. Up only 0.2%.
All right, let's get to that Jeffries story, because the stock is climbing on a report in the Financial Times that Japanese bank Sumitomo Mitsui is working on a potential takeover, or at least getting ready for a potential takeover of the investment bank. Now, Bloomberg News reports there are no immediate plans for an acquisition, but Sumitomo Mitsui owns 15% already, and Bloomberg Intelligence financial analyst Neil Sipes says it could be a credible end state, these two banks together. So, Neil, talk us through the relationship the two have now, and if a takeover would make sense.
Yeah, so this relationship has sort of been building over time, over the past handful of years now, as Japanese banks look to sort of enter the U.S. market, particularly in a capital markets fashion, Jeffries being the story here for Sumitomo. So this isn't necessarily a new sort of development of them getting involved with Jeffries. We've pushed up to 15% stake now, potential to go to 20%. And, you could argue in a longer term period, it's always possible that this could have happened. But right now we're looking at this more as sort of an opportunistic potential and story rather than an imminent action. And really, when you look at Jeffries, we've sort of been caught up in a couple of the credit concerns in the clouds, and those headlines around it that have weighed pretty dramatically on the stock. So the stock's sort of in the penalty box right now for some of these sort of non-core items, we'll call them, because when you think about it, most of it has emanated from the smaller asset management business, which is less than 5% of revenue for Jeffries. When you think of Jeffries, you're thinking about the investment banking, the trading side of the business, which is over 90% of revenue today.
Yeah, although I'm thinking about, when I think about Jeffries, I think about a stock that's lost almost half its value in half a year.
Yeah.
I mean, that is an incredible drop.
Yeah.
Regardless of what's causing that, it's just worth far less. And if something is worth that much less, more people who are potential buyers may actually act on that.
Right, and someone who has a strategic stake may see the true value in the franchise there, maybe not what the market is currently assigning it based on, again, some of the, we'll call them financially manageable credit concerns out there around Jefferies with the First Brands and MFS. Those are pretty small and manageable in the whole context of the earnings power and the capital that we see at Jefferies. When you have a strategic partner like Sumitomo, this sort of opportunity can arise. Obviously, we're working through these headlines like you are, so we'll have to see what actually develops from it. But possible, but you know, again, looks more opportunistic, just based on where things are trading today than sort of the long-term strategic goal.
Now, another little bit of deal news in the financial world is that Janus Henderson, which already agreed to be bought by Trian and General Catalyst, got a bid from Victory Capital. They come in, I think they're somewhere near $57 a share. They don't want to be bought by them. Janus Henderson gets an increased bid from Trian. I mean, why is Victory still trying here? What is the back and forth? Because it seems not great to try to buy a fund where the employees don't want to work for you.
Yeah, so and when you look at someone like Victory, who's been doing a handful of acquisitions in the space over time now, they're really trying to build scale. When you think about scale M&A in this space, that comes with cost cuts, right? And so I think that's where you see some of these headlines stemming from is, you know, the Victory proposal, which is, you know, less attractive, at least in the employees' eyes. You see about 90% of employees or managing 90% of the assets, at least against the Victory transaction. 33% of managers, or managers running 33% of the revenue, I should say, are opposed to the transaction. And I think that stems from the idea that there's uncertainty as to where those cuts are going to come. And when you think about a non-financial transaction like the one that Trian's proposing, perhaps more strategic with less cuts on the other side, you got to make sure that the asset that you're buying is still going to be there once that transaction's complete. And I think that's where the questions stem around the Victory proposal.
Right, and to be clear, the people are the asset. I mean, right? It's nothing more than the actual fund managers. That,
good way to cut costs is just let all of them leave.
I mean, you're not buying them for IP.
Right, well, you could be, but in some sense, that's actually the managers who are the IP, right? So that stems the argument as well. And so when you think about that, you look at prior transactions in the asset management space, a lot of financial type transactions, we've seen 20 to 30% of the cost base taken out. What you've also seen is subsequent outflows from some of the flagship funds. And frankly, you end up with a smaller franchise and perhaps less powerful franchise moving forward. So things to weigh there as you sort of had a pretty interesting bidding war developing.
Neil, thank you very much for joining us. That's Neil Sipes of Bloomberg Intelligence. Coming up on the show, long delays up to many hours at LaGuardia after a deadly crash, and the latest drama with TSA and higher jet fuel prices. All of the pressure on airlines coming up right here on Bloomberg Open Interest.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Breaking news
news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on with stocks right now after big gains yesterday, the biggest gains we've seen in 6 weeks. We're looking at a drop today of 0.8% now on the S&P 500, right back down to 6,500, 6,527. To be fair, the NASDAQ off 1 full percent, 23,941. I heard President Trump yesterday talking about 50,000. It's not just Pam Bondi. President Trump loves it as well. But the Dow right now trading at 45,827. Take a look at Brent crude. This is one of the reasons for the decline. We're back up, not to 110 or more, but 103.44, the level on Brent. WTI rising as well, and NVIDIA's down. So that's a bad setup for the equity index. SanDisk also, which has been a big mover up and down lately. Obviously, it was a massive gainer last year and the beginning of this year. Apollo is down on redemption news. Jefferies is up on reporting the FT that Mitsui Sumitomo wants to take it over. Sumitomo Mitsui, I should say, but it doesn't look like that's imminent. United Airlines is off 2.7% when jet fuel, when crude and jet fuel rise. It hurts these airlines, and we're going to hear from United Airlines in just about 40 minutes' time, so stay with us for that. Plus, we have more right now on the airport disasters across the country.
Yeah, it's not a great time to be flying. The FAA has begun a ground delay program at LaGuardia Airport after a deadly crash. That will create at least 4-hour delays as TSA lines are already stretched. Joining us now is Bloomberg's global aviation correspondent, Sid Phillip. Sid, so is this both a mix of the DHS lack of funding plus the deadly crash yesterday? Is this just like all the things come together?
It's all of it coming together. DHS funding has not gone through, and so TSA is unfunded, so security screeners are not being paid, and that's really causing them not to show up for work, and that's why those long queues that we've seen at some airports, although it's sort of varied and it's not really one size fits all. It sort of varies by time of day and by airport. And I mean, we've seen long queues in some airports like Houston and others, while in JFK at the moment it's showing 1 minute wait times.
So 1 minute, as if, dude, even when TSA is at full capacity, it's never been that.
I've made it through security in a minute before.
Have you?
Yeah, like touchless ID. Like I definitely have made it through maybe 2 minutes.
Right.
I absolutely have.
That's their website that says. I'm not sure.
So I'm hearing about people with 4, 5-hour waits, 7-hour waits. So I'm wondering how long it's going to take to get through this. Like, will we be back to normal tomorrow? Is it going to be back? I saw tomorrow in one of our stories. Will we be back to normal on Thursday by this weekend?
If you're talking about TSA, I mean, we're still looking to see what the Democrats and the Republicans come up with.
Well, President Trump said he doesn't want any kind of deal with the Democrats unless he gets his Save America Act.
So then we're going to be waiting a while to get through those TSA lines. But in terms of LaGuardia Airport, the delays should actually start clearing up once they get that second runway operational. They get the debris off the runway. They get that. The investigation wraps up, then we can see operations slowly go back to normal.
How is this hitting the airlines themselves? Because they're already dealing with higher jet fuel costs.
I mean, jet fuel is the biggest expense for an airline. And so, like, airlines are having to come up with strategies. I mean, we heard from United over the weekend talking about how they would cut back on some non-profitable flying in order to sort of save money on those jet fuel bills. So the U.S. airlines are in a different position because they are unhedged on jet fuel, unlike their peers in Europe and other places. And so they are more exposed to the sort of daily volatility in the jet fuel prices.
Sid, I mean, and that's your focus, right? The earnings, the stock, the business case here. I wonder, though, what the experience is like right now with ICE. And I hear it's only a dozen airports or so, but I guess President Trump has asked them not to wear masks. he's asked nicely, right?
Yes.
Whereas he directs other people to do things. And they're still touting like M16s. Is that the case?
I mean, we've seen pictures on social media of like ICE standing around with guns in the airport, but we haven't yet seen any pictures of them standing around in masks. So hopefully that will continue to be the case. And
you're both too young to remember, but at one point there was a rock and roll festival at Altamont in 1969, and the organizers and the Rolling Stones made the decision to hire the Hells Angels as security.
How was that?
It didn't go well.
Yeah, I could imagine.
All right, Sid, thanks so much for joining us. We'll continue to follow this airline story with Sid Phillip. He covers the industry for us. Right now, we're looking at headline crossing the terminal that Trian and General Catalyst are going to buy Janus Henderson for $52 a share. We've been reporting that that was the raised offer, and it says, and the headlines say that this deal has now been accepted again. But they've already accepted.
I was going to say, this isn't like revolutionary news. They already said, yeah, Trion and General Catalyst, you can buy us. They offer more money. I don't see why they wouldn't accept that.
The deal on track apparently to close in mid-26. And we're close to that now. Coming up in the next hour, United Airlines CEO Scott Kirby joins the show to discuss the travel outlook. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
is CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. ICE agents are on duty at U.S. airports for a second day, but there's no sign it's helping with those hours-long waits as TSA workers decide to sick out en masse instead of working without paychecks. This passenger spoke to KHOU-TV at Houston's Bush Intercontinental.
We tried to get here extra early because we heard about everything going on with the airport and everything like that. So.
Wait, y'all got here at 9 p.m., so you've been waiting here all, night and morning?
Yes, sir.
Transportation correspondent Chris Van Cleve reports on a ray of hope. Congress is set to end the partial government shutdown.
There are finally some signs that there may be a framework coming together to fund most of DHS, which would include TSA.
NASA's just announced it'll spend $20 billion over the next 7 years to fast-track a permanent base on the surface of the moon. NASA Administrator Jarek Isaacman.
The moon base will not appear overnight. We will invest approximately $20 billion over the next 7 years and build it through dozens of missions, working together with commercial and international partners towards a deliberate and achievable plan.
He's also outlined plans to deploy a fleet of helicopters on Mars. Airstrikes are battering Iran. Iranian missiles and drones targeting Tel Aviv and other sites across the Mideast, despite President Trump's stated efforts to reach an agreement with Tehran. Correspondent Ed O'Keefe is at the White House.
President Trump insisted the U.S. is talking to what he called a, quote, top person.
We're dealing with the man who I believe is the most respected and the leader.
A senior Iranian foreign ministry official says Iran is reviewing points sent by the U.S. through a mediator, but no formal talks are underway.
New reports suggest this spring's job market for college grads is the worst since the pandemic.
The Federal Reserve Bank of New York says the unemployment rate for graduates ages 22 to 27 jumped to 5.6% at the end of last year. The overall jobless rate was 4.2%. One big factor is AI. In November, Anthropic CEO Dario Amodei warned 60 Minutes that AI could wipe out half of all entry-level white-collar jobs within 5 years.
And my worry is that it'll be broad and it'll be faster than what we've seen with previous technology.
Michael Wallace, CBS News.
Supreme Court takes up a case today that could decide whether migrants can claim asylum protections before they set foot on U.S. soil. Loyola Law's Lori Levinson.
The government's arguing that these individuals had not actually arrived because they had not entered the United States. And the asylum seekers were being turned away at ports of entry until they could actually physically be in the United States.
This is CBS News. An actress who made it big in 1970s movies has died.
Valerie Perrine started out as a Las Vegas showgirl. An agent thought she'd be perfect for a role in the film Slaughterhouse-Five.
This is it?
I'm afraid so.
3 years later, she received nominations for an Oscar and Golden Globe, playing opposite Dustin Hoffman in Lenny.
You still love me?
Sure.
Because I still love you, and as soon as I'm straight.
I gotta hang up.
In 1978, she was Lex Luthor's accomplice in Superman.
Lex, what has chewing gum got to do with the secrets of the universe?
A filmmaker who worked with her says Perrine had Parkinson's disease. She was 82 years old. Steve Kathan, CBS News.
A first for a major fashion chain. CNBC reports Gap is partnering with Google's Gemini to allow shoppers to check out instantly within the AI platform. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live as well on YouTube and on Bloomberg.com. We got red on the screen today. Coming up, we're going to check in with Dan Williams. He's a reporter for Bloomberg News. He is based in Jerusalem. We'll get the latest reporting coming out of that part of the world. Are the U.S. and Iran talking? Are they not talking? Who's doing the talking? It's really unclear here, so we'll see if we can get a little bit of clarity there. Joanne Feeney is going to join us, partner and portfolio manager at Advisors Capital Management, get her thoughts on these markets. And then we're going to join Bloomberg Television. We're going to do a simulcast with them. Scott Kirby, United Airlines CEO, speaking with Bloomberg's Lisa Abramowitz out there in Los Angeles. We'll bring that to you, get the state of play in the aviation industry. Paul Goldberg, he's Bloomberg Intelligence equity analyst. He covers a lot of the asset managers. We'll talk to him about the concern about private credit and redemptions over there. So that's a story that's front and center. Clara Lizarraga, Bloomberg Companies reporter on Estee Lauder, talking to buy Puig. That's the pronunciation, Puig, to create a beauty giant. So
Thank you. I was wondering about that.
Yeah, well, Alexis set it straight during surveillance.
Of course.
Well, I just listened to it on YouTube,
it's
really,
Catalan.
but yes.
Yeah,
you did your research.
Yeah, exactly. So we got a lot of stuff coming up over the next couple hours. Let's kick it off with Alexis Christopherson in a Bloomberg Business Flash.
All right, thanks so much, Paul. And this Bloomberg Business Flash is brought to you by IBKR. Financial advisors switch to interactive brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest. Learn more at ibkr.com/RIA. Well, it's becoming a familiar story on Wall Street as the war with Iran rages on. Stocks are lower. Oil is rallying. We've got Brent crude now up about 3% at 102.64 the barrel. WTI crude up nearly 4% now at 91.48 the barrel. As for stocks, the S&P 500 off its lows of the morning, down 23 points. Dow Jones Industrial Average down about 158. That's after being down more than 350 earlier. And the NASDAQ Composite off about 137 points. Russell 2000 down now just 11 points. And the Bloomberg Dollar Spot Index 1208.59. The conflict in the Middle East and issues in the private credit market have led to a risk-reward equation in the marketplace that is still decidedly weighted towards risk. We've got shares of Apollo Global Management down 4.5%. It is now the latest firm to cap its private credit fund withdrawals as requests for redemptions there hit 11%. And we've got shares of Tesla snapping a recent losing streak up about 1%. Tesla saw its first monthly sales increase in Europe in more than a year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophorous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett, Phil, and Paul Sweeney live here in our Bloomberg Intelligence radio program. As Alexis was just reporting, we got selling in the marketplace today, but let's take a look at where some of the stocks on the move are today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at in the marketplace today?
Well, to start, we can look at Concentrix. That's ticker CNXC. It's falling about 23% to hit a record low and most ever. That's after the firm's second quarter forecast was way weaker than expected. As adjusted EPS guidance missed expectations, and the midpoint of its revenue range also fell short. That's kind of ill-timed as investors continue to question what structural threats AI will pose to its business. And Bloomberg Intelligence is out with a note today saying that while Concentrix has touted momentum in large deals, clients seeking, to leverage that autonomous AI solutions, those deals continue to weigh on margins. So definitely something we'll keep an eye out for.
Yet another enterprise software company under attack. All right, what's next on your list?
Next up, Netgear, that's ticker NTGR, gaining about 11% for most intraday since October. That's after the FCC banned wireless router imports, citing some security concerns, which on its face, you would think that would actually be bad for this company. However, analysts are saying that the move could dramatically shake up the market for routers, which are primarily made overseas. That being said, Stifel says that Netgear is very well positioned to navigate this regulatory change because it does not manufacture in China.
M&A trade in the beauty business. Estee Lauder, what's going on there?
Yes, Estee Lauder, ticker EL, sliding about 7.3% right now. That's after it's been confirming that it's going to be having talks with Puig Brands, that they're potentially going to merge. For those unfamiliar, Puig is the parent company behind brands like Charlotte Tilbury and also Carolina Herrera. Estee Lauder has a pretty wide portfolio of about 24 brands, including MAC, Bobbi Brown, La Mer, and also The Ordinary. Investors continue to question how adding more fragrances potentially to Estee Lauder's existing portfolio will help fix a business that's continues to be in the early stages of its turnaround. However, TD Cowen is writing in a note that while the deal could help fragrance, the integration and execution risk would be very high. So the exact terms of the deal are still unknown, and obviously nothing is set in stone, but we'll continue to keep an eye out.
Yeah, this is all about trying to catch up with L'Oreal and maybe take a little bit of market share, but it's been a struggle. All right, thank you so much. Alon Purnell is joining us for our Stocks to Watch. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We are now day 25 of this war in Iran, and you and I just talked about how we're confused on the state of talks. Are there any ceasefire talks taking place? I mean, President Trump claims that there was a weekend of productive talks. Iran denied that. I'm not sure where we are.
Yeah, and I don't think the markets are. So we had, the markets move higher yesterday on President Trump's social post, giving some back today because it's less clear. And we have not heard from the president today via social media. But let's go to somebody who's following this closely. Dan Williams, he's a Bloomberg News reporter based in Jerusalem. Dan, it seems like we're back to almost normal here. We've got attacks by Israel, by Iran, by the U.S. on selected targets here. Was yesterday just a little bit of a blip in an otherwise steady as she goes kind of war here?
The bombing continues apace, as you noted, despite that diplomatic bombshell dropped by the U.S. president just 24 hours ago. However, despite his assertions, repeated assertions, quite detailed assertions about where things could go in terms of potential accommodation between the warring parties, about what he said were 2 days of back-channel talks with Iran that had led him to make that announcement, the Iranians have yet to acknowledge or confirm that such talks have taken place. In fact, they flatly denied it. What they have said is that they've received approaches by intermediaries, 2 or 3 countries with ties to both of those warring parties, apparently very concerned about the deep destabilizing effect on the region, on global energy from this war, who've been trying to get them together. There are indications that one of those countries, Pakistan, may soon be hosting some kind of summit, some kind of peacemaking talks between senior aides to the U.S. president, to Trump, and delegates from Iran. Again, that has yet to be confirmed. And for the time being, the U.S. junior partner in this war, operationally a full partner in this war, Israel itself seems to have been in the dark. We have one Israeli minister, a member of Prime Minister Netanyahu's security cabinet, saying that Israel had an idea that there would be a Trump announcement coming about yesterday. It didn't know the content, he said. Another minister saying that while both sides, both the allies, hope to keep and meet and realize their commitments, the commitments on the basis of which they went to war, including, for example, an end to the nuclear program, a withdrawal of all enriched uranium from Iran, an end to the ballistic missile program in Iran, an end to Iran's support for proxy groups, that this minister, was not hopeful that would come to pass. So for now, we know the war continues. In fact, the Israelis are saying it continues at full intensity. And I think everyone is waiting to see what will happen within this 5-day grace period set out by President Trump and yet to be acknowledged by Iran.
Yeah, it certainly sets us up for an interesting Friday, no doubt. At the same time, we know the president has ordered Marines to head to the Middle East, including the 31st Marine Expeditionary Unit from Japan, which has more than 2,000 troops. Does that signal boots on the ground, Dan?
Again, I don't want to get ahead of ourselves. We shouldn't get ahead of ourselves, but there's no secret now that Kharg Island, that major depot about 13 miles or so, I believe, off the Iranian coast, where some 90% of its oil exports are loaded onto ships, This island is potentially in the crosshairs of the U.S. military. To board that island, to storm that island after President Trump ordered a bombing of its military facilities would presumably require a marine landing party, an amphibious landing party. And I think it's no mistake that we're seeing reports indicating that that landing party, that Marines detachment, could be in place in the region by Friday. Friday is when this 5-day grace period offered and proposed and instituted by the U.S. president, basically postponing his threatened attacks by the U.S. on energy sites in Iran. That comes out to Fridays when it expires. Is this a coincidence? I don't know. Is it possible that the U.S. rethought its energy strikes and instead is opting for a storming of Hug Island? Potentially. Again, we should be very careful about speculating here, but it appears that of these moving parts, the moving parts that include heavy military machinery are still moving in one direction, and that direction is continued war.
Dan, what is the view of Israel these days? Do they want to continue to fight to maximize their ultimate position here? Will they do what the U.S. Wants them to do if it is, in fact, end the war?
The Israeli Prime Minister Netanyahu at a press conference last week said openly and explicitly that Trump is the leader. That was the word that Netanyahu used, while Israel is the ally. Clearly, there's a pecking order there. Clearly, the United States calls the shots here. I find it very hard to believe the Israelis would continue on what is a very difficult long-range campaign for them. And keep in mind, they have a very lean Air Force, no strategic bombers. They have fighter bombers, F-15s, F-16s, F-35s. It'd be very hard to sustain that campaign without U.S. military support when it comes to suppressing air defenses and the like. Also, the Israelis are very busy in a second front to this war in neighboring Lebanon against Hezbollah, a major ally of Iran. So when it comes to the war in Iran, I don't see Israel continuing it, should the Americans call it quits. However, war will continue on Israel's northern front, where it intends to get the job done vis-a-vis Hezbollah, if it can't get the job done vis-a-vis Hezbollah's sponsor in Tehran.
Dan Williams, reporter for Bloomberg News, based in Jerusalem, reporting on the ground events here in this day 25 of this war in Iran. You know, the fighting continues, as we discussed, Paul, and Iran carrying out missile and drone attacks on not just Israeli cities, but also U.S. bases in the Middle East. Yes. Israel launching strikes at the western and central Iran, including Tehran. So no indications that
Okay, thank you.
The delay of any kind of military strike on Iranian energy infrastructure has resulted in any let-up on the actual attacks and missiles attacks.
That's what it seems like the reporting is, that the attacks are continuing on both sides. What we haven't heard is, we have not heard from President Trump today via social media posts, and that was just shortly after 7 a.m. yesterday that he posted that and really moved the markets as it relates to maybe leading to an off-ramp for this war. So we'll stay on top of that. The markets are selling off at the S&P off 35 points. That's 0.5%. The Nasdaq's off about 0.8%. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Alexis Christoforous. Stocks are lower, oil is higher as hopes for a de-escalation on the war with Iran begins to fade. Investors still waiting for some sort of talks to be confirmed between Iran and the U.S. The S&P 500 is down about 27 points at 65.53. Dow Jones Industrial Average slipping 157 points at 46,050. NASDAQ Composite down about 170 points now at 21,779. And the Russell 2000 off just about 10 points at the moment. Over in the oil pits, Brent crude now at 102.78 the barrel. That's up about 3%. And West Texas Intermediate crude, 91.62 the barrel, again up about 4%. Moving over to some stocks making headlines today, Japanese lender Sumitomo Mitsui is reportedly working toward a takeover of Jefferies Financial Group if its share price continues to fall. It's down about 40% year to date. Shares of Jefferies, though, up 2% right now. And shares of Janus Henderson rallying 2.5%. Tryon Fund and General Catalyst confirming they will now buy Janus Henderson for $52 a share in cash. The investment firms say this is their best and final offer. Again, S&P 500 down 35 points. Brent crude at 103 the barrel. That's your Bloomberg Business Flash. Paul and Scarlett?
All right, thank you very much, Alexis. It is Scarlett Fu and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in New York City, and we're streaming live on YouTube and on Bloomberg.com here. Let's get back to these markets here. We do have a sell-off here today, as Alexis was just reporting. But let's see what the pros are doing. How do the pros navigate all this volatility out there as it relates to the geopolitics over the last 4 or 5 weeks? Joanne Feeney joins us, partner and portfolio manager at Advisors Capital Management. Joanne, what's the conversations you're having with your clients over the last 4 weeks as we've got markets just whipping around on the geopolitics coming out of Iran?
Well, I think people are getting a little bit nervous, Paul, but they are sitting on multiple years of pretty strong gains in their portfolios. So that tends to delay the response to the rise in risk. But there's no question, people are not just nervous about their portfolios, they're nervous about the state of geopolitics, and, with good reason.
With good reason. And I guess my question here is, does it matter to investors and to the markets whether the two sides, Iran and the U.S., are actually holding talks or not? We're not clear on what the situation is. President Trump says one thing, Iran denies it. At this point, does it matter, or just the fact that there has been a climb down is what markets are kind of taking relief from?
Yeah, I think there's been a lack of clarity all along, which doesn't help do anything to reduce the degree of risk that market participants have to bear. Clearly, yesterday's comments created the hope that this might be winding down, but the activities over the last 24 hours don't suggest that's the case. And so we're seeing a little bit of a pullback today, a little bit more caution, which is appropriate. I really don't think we're going to know until we know. You sort of watch the action in the Middle East, and it doesn't seem to be, falling off in any significant ways. And, the 5-day delay coincides with the arrival of more forces, Marines in particular, in the region on Friday. So I think people have learned to wait and see. And of course, all the shut-ins and the lack of storage indicates that no matter when this ends, there's going to be a delay in restarting shipping and getting that to the ports where it needs to go and getting it into the refineries. So I think this is probably more drawn out than a lot of folks want to recognize at this point. And there's always it might be over in 2 weeks, or it might be over in 4 weeks, and
yep.
And if that proves to be the case, by the way, then it is just a short-term blip, and that small delay in shortages and in arrivals will be overcome within a matter of months, and then we'll be back to normal. But it's hard to see that happening at this point, given the stance that Iran seems to be taking, which is still pretty bellicose.
So, all right, let's get away from the war. Let's focus on some fundamentals. One of the themes before the war was AI, and stories kind of evolved from just buy everything AI related. The more you're spending on AI, the better. Now the market's trying to differentiate and and try to find winners and losers. And boy, before, earlier this year, it was the software stocks that were considered to be potential losers to AI. How do you think about the AI story and the winners and losers?
I think you have to let the AI situation in stages, right? First stage, build the capacity to do this, get the models up and running, develop applications. And we're seeing more and more of those happening. And then, of course, the second stage is, as you put it, Paul, who are the potential losers? And everything in software has been thrown into the loser bucket, which, we believe is really a misunderstanding of the moat that software companies have created and can create. And that moat was never about their ability to write the code. In fact, they should be among the best beneficiaries, because if code writing gets faster and cheaper and better, then they're going to be the first ones to adopt it. And we're certainly not yet seeing any really significant headwinds for software companies in their sales and in their profits. And I think over time, as they report again this coming, reporting season and onwards, we're going to see their numbers for a lot of the companies, the ones that we like anyway, hold up pretty well. So, I think that's a misread. I think there's been a little bit of a pullback across the board as folks diversify their portfolios, because they probably got pretty overweight. And diversification is generally a good thing. You're missing out on other opportunities if you're really concentrated.
All right, Joanne Feeney, thank you so much. Partner and portfolio manager at Advisors Capital Management. And it's not just, of course, the software companies. Investors are also discerning the difference between chip makers, right? Memory chip makers have become kind of the go-to play right now, because their memory chips are so in demand by all the AI chip makers and all the hyperscalers, and they can't make enough memory chips, the old school memory chips, to meet demand for all the other things that require those parts.
Yeah, and we had a guest on earlier today from Alger, and he made just a very another bullish case for AI and how they're continuing to focus on that as a major theme. And so it's good to get away from the war talk and say, let's focus on some fundamentals here, drive the market.
No, absolutely. Having said all of that, you look at what is happening across markets. Yields are now rising once again. So we had a little bit of relief yesterday, but you see the 10-year yield now back to 4.38%. What was it on Friday that it ended at? About 4.45?
Yeah.
4.44?
Yeah, okay.
Okay, the 2-year yield inching up to 3.89%. Equities taking a little bit of a hit today, but certainly not giving back all of yesterday's advance.
Yep, absolutely. All right, let's head out to Los Angeles. United is having a press day out there, United Airlines. There's lots of news crossing the tape here. Scott Kirby, United Airlines CEO, he's going to be speaking in just a moment with Bloomberg Television's Lisa Abramowitz. And again, we've heard from a lot of the airlines, strong consumer demand, but again, they're now dealing with rising fuel costs. Let's go out to Los Angeles. Lisa Abramowitz, Scott Kirby, United Airlines.
I would like to welcome everyone on Bloomberg Television and Bloomberg Radio. I am here in Los Angeles with the CEO of United Airlines, Scott Kirby. There is an incredible airline behind us. There are incredible exhibits here. We would be talking about all these new planes that United just bought. But instead, the world has sent some other things. I really want to start with this question of how you plan for the future with a backdrop that is probably the most uncertain for airlines in particular since COVID.
Well, thanks for having me, Lisa, and I love the United Blue. But
it was a coincidence, but carry on.
Really, the way we plan is being prepared in advance. And when we came out of COVID, I made a commitment to our employees. I was going to do everything possible to put United in a position where we never again furlough employees, which has happened over decades, multiple times at United. And to do that, we knew there was some industry crisis would come. I didn't know what it was that would eventually come, but we're carrying triple the cash on the balance sheet that we had pre-COVID. We've moved to the top of the industry in terms of margins, and we have the best credit rating that we've had in over 30 years. And what that does is give us the financial resources to look to the other side of the crisis, to continue investing in airplanes like this, to continue a full speed investing in the future, while we make tactical adjustments in the short term, but have the financial resources that we can look through the crisis to the recovery on the other side.
You keep calling it a crisis. Last week, we heard from American, we heard from Delta. They were talking about even upgrading their forecasts for the year, saying that consumer demand was so strong it could overcome whatever short-term shock this is. You have a very different forecast. Why do you think it's not going to be that short-term and not that moderate?
So first, I say exactly the same thing about demand. Demand is the strongest it's been ever. The top 10 booking weeks of the year have all been in 2026 so far. So demand is incredibly strong right now. But I do think that oil prices are, I think they're higher for longer. It's reasonable for us to plan for that regardless, because the downside is pretty limited. Like, we leave a little bit of demand on the table by not flying quite as much this summer. So what? That's not a big deal. But it gives us more optionality on the other side for the recovery. And so we're really focused on what the recovery is going to look like. And I think our forecast of oil going to 175 and staying through up to 100 to the end of next year is reasonable. I hope it's better, and there's a good chance it's better. But I think it's also reasonable. And planning and preparing for that really lets us come out stronger as we go through it and on the other side.
You've talked about how you're cutting about 5% of capacity, in particular in the Middle East and some of the routes there, in order to reduce capacity, preserve margins. Do you think that's it? Or if prices go even higher, do you expect that to actually be an even bigger cut to capacity?
Well, we'll watch and see what happens, particularly with demand. If our forecast of fuel prices is correct, then my guess is there's going to be an impact to the economy as well. And I hope not, but we'll watch that as it goes along. But what we're doing right now really is taking out flying that, is pretty marginal even in good times. And when oil prices double, it would lose money. And so there's just no point in flying flights that are going to lose money, that can't cover the cost of fuel. So it just seems reasonable to do it. We'll be nimble and see what happens with prices and demand.
The Middle East has been an area of expansion for a while. I know that a number of the airlines have really been moving heavily into the region. Are you adjusting any of your thinking longer term as a result of the conflict and potentially how long it could go on?
Well, we'll see. But I would guess that when this is over, that places like Dubai come back 100%. I don't know. We'll watch and see. But I would bet on Dubai for the long term.
Going forward, you've talked about how you want to take advantage of this time, how you see this as a crisis not unlike what we saw during the pandemic, and that you'd be even interested in potentially picking up some assets.
Yeah.
What does that mean? Airplanes, routes?
Yeah. So first, I don't think it's a crisis like COVID, but it's going to be a stress event. That's the word I use more, is stress event for the industry, if our fuel forecast is right. But it's nowhere near the magnitude of what happened in COVID. And in a stress event like that, I want us to be, we start in the strongest position. I want us to be consistently ahead of the curve. Like every time there's something happening, I want us to be first, let everyone else follow. And when we're doing that, and others take longer to adjust, it is going to amp up the stress on them. Many of them start with weak income statements, weak balance sheets. And we'll be there to pick up some of those assets, and might be a win-win for them, but we'll be there to pick up some of those assets as we go through the crisis.
Wholesale acquisition of a company, or just piece by piece?
We'll see. There's lots of rumors about that.
Going forward, I'm curious also, there's been questions about hedging against oil prices. I know a lot of the airlines have really moved away from that because it hasn't been profitable. Delta has a refinery investment that has helped somewhat to offset some of these costs. Do you have any plans around that in any capacity?
We're so big, it's hard to effectively hedge. We're just so big. We move the market if we try to hedge. It's really hard to hedge the crack spread. Oil prices have gone up. The crack spread has gone up even more. It's really hard to hedge there. So probably not. I actually tried to do a deal with ADNOC years ago when I was at American, and it foundered over a force majeure clause where they wanted, it had just been a swap. Founded over a force majeure where they said, well, we need a force majeure. And I said, well, that's the whole point. Like, what if the Straits of Hormuz closes? I said this 10 years ago. Like, that's when I want your hedge, and you can't get out of it. So it's just really hard for us to hedge.
Meanwhile, if this were the only crisis you'd be dealing with, probably you'd be watching this carefully, but you'd be grateful. There is also this question around all of the scenes that we see in social media, et cetera, of TSA lines getting longer and longer. Have you noticed people missing their flights? I mean, how big of a problem has this been for United?
Thank you to the TSA agents. The vast majority of them are showing up to work, and I understand. Like, it's unconscionable that our politicians put our TSA agents, safety professionals, in a situation like this. But they're showing up to work. I love saying thank you to them every time I go through. They're doing a great job. Yes, there are places where we've had long lines. It's really the last week that it's started to increase a little bit. I am hopeful that we're near the finish line. I'm on my way back to D.C. after here, but I've been talking to folks in the Senate on both sides of the aisle. It does feel to me like we're close. This feels like kind of like the FAA felt, where we're 48 hours away when we got the FAA reopened. Feels very similar to me that we're close, I hope, to having it resolved.
Does having ICE agents there help things or hurt things?
I don't know. We're all trying to provide resources to TSA. You know, we and other airlines are doing things like providing meals and offering to use our staff to help with lines or to help with the exit, you know, monitoring the exits. Those are the kinds of things that that the other government officials are doing. So
You've run
the key, though, is like get TSA funded and pay the people.
You've run companies for a long time. Have you ever spent more time in Washington, D.C. as a CEO?
Boy, I spent a lot of time there. I've spent more there probably this year than any other year, though.
Do you feel like the system is fraying in terms of also like safety issues? I mean, there's been a lot of concern about what happened with LaGuardia Airport.
Yeah, you know, the system is safe. It really is safe. It's by far the safest way to travel of any mode of transportation. And I do think that we need to invest more in the FAA, both in staffing and then the technology. And I am like, this is the first time in my career we've had an administration, Secretary Duffy, Administrator Bedford, that are fully committed to doing that. And they are doing it. And like staffing in Newark, for example, it's the best it's been, you know, in my career. And we think we're going to be 100%. It's going to be the first time ever, I think, that we'll be 100% staffed later this year. So on that road, the Secretary is about to ask, I think, for another $6 to $7 billion for technology. I will encourage everyone on both sides of the aisle. Let's do a bipartisan deal to get that done. That's what we need to invest in our.
In the meantime, we have consumers that have been incredibly resilient through all of this. They still want to travel. I mean, at what point do you start to see cannibalization? Are you starting to see any pushback?
You know, I'm sure there will be some. There is always a price elasticity, but we're starting from a perspective where airfares in 2025 were 2% lower than they were in 2019, even though inflation was up 25%. So airfares are up 15 to 20% in the last few weeks, but that's sort of covering half to 60% of the inflationary increase. So I think we have some room to go. But I also think, like, you know, there will be less demand. There'll be fewer people traveling as prices go up. That's part of our cut capacity 5%. Like, you know, when airfares have to go up because of oil prices, there are going to be some people that choose not to fly, and to be naive not to realize that. And so pulling back some of that capacity is a rational response.
How much do you expect prices to have to go up just to adjust to the oil prices?
Well, you know, if oil prices stayed where they are today, that's $11 billion of expense for us. And that would require prices to be up 20% to break even, to cover that cost.
Meanwhile, you are announcing all of these new planes. A lot of them have put a real emphasis on the premium customer, Polaris, on the both states, the bi-coastal kind of transit. You've talked a lot about how premium is the future. Can you talk about how much it really is the growth sector and whether demand there continues to be robust?
Well, the truth is we're investing nose to tail for all customers. I mean, everybody gets the best technology, best app technology in the world, Starlink, Seaback Entertainment. So it's not just premium. Premium gets a lot of the press, but we're investing nose to tail to win customers, brand loyal customers everywhere. But clearly the premium demand has been much stronger than anyone ever realized. What I really think, it's not that premium demand is higher today than it was always there. We didn't have the product to serve it. And once we create the product, we realized that there's demand that was in excess of what we knew. Also at United, like we were born on third base when it comes to premium, with hubs in Newark, Dulles, Chicago, San Francisco. Like, you know, like sometimes it's good to be lucky. We were born on third base where there's far more premium demand for our product, and so it lets us be the leader.
Scott Kirby, wonderful for you to take the time. Thank you so much for being here.
Lisa.
Wonderful to speak with you. That was Scott Kirby, the Chief Executive Officer of United Airlines, and I'll send it back to you.
All right, that was Lisa Abramowitz speaking with Scott Kirby, United Airlines out in Los Angeles. And again, one of my takeaways there is just demand remains strong. We've heard that from, you know, many of the airlines out there. Now, the fuel issue is an issue, you know, near-term issue for margins, but boy, the top line remains strong.
But if the fuel prices continue to escalate, at some point that's going to filter through to ticket prices more than it already has, and that demand is going to start to taper off a bit.
Yep, absolutely. So again, just another industry paying close attention to what's happening in the Middle East. All right, let's get a little bit of a reset here. We'll go over to Alexis Christophers for Bloomberg Business Flash. Alexis.
All right, thanks very much. And growth in U.S. business activity slowed in March to an almost one-year low, while prices paid for materials and other inputs picked up in the wake of the U.S.-Israel war with Iran. On Wall Street right now, stocks are lower, although coming off their lows of the morning, oil prices are climbing as the war in the Middle East stretches into the 25th day. The S&P 500 is down 24 points. Dow Jones Industrial Average now down just about 88 points after being down nearly 4 400 points earlier. The NASDAQ Composite off about 171 points. We've got Brent crude up about 3.5% at 103.35 a barrel, and West Texas Intermediate crude up 4.5% now at 92.12 the barrel. We've got yields higher this morning. The 2-year yield now at 3.90%. 10-year yield up 4 basis points at 4.38%. Spot gold up fractionally at 44.13 the ounce. In stock news, Amazon says its cloud service business experienced disruptions to its Bahrain data centers amid the Iran war. We've got shares of Amazon up just fractionally. And Bloomberg reports Nintendo is cutting production of its Switch 2 gaming console. That's amid weak sales in the U.S. And we've got shares of Nintendo on the move today and now down about 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thanks so much. Appreciate that. Tom Keene made a really good point a few days ago. He said, hey, if it weren't for this war in Iran, it probably the #1 topic out there for global Wall Street would be private credit. Do we have systemic risk in private credit? That would be the issue. I don't know, but there's a lot of news out there. Paul Goldberg, he's an expert on this stuff. He's a senior equity analyst for Bloomberg Intelligence. He covers all the financial companies out there. Paul, we're seeing big names like Apollo, Ares, TPG, like household, high-quality, blue-chip private equity folks and private credit folks kind of halting some redemptions in some of their private credit funds. Is this just a classic run on the bank, or are there fundamental credit issues in private credit?
Hi, thank you, Paul. First of all, I would say that these are not necessarily bank runs. This is very different. So this is only available to the semi-liquid funds, which is a small portion of the private credit that the managers operate. The largest 8 managers operate almost $1 trillion of private credit. Nice. Half of it is actually the insurance money. Yep. So these funds, and we published a note on this about a week ago, are only about 5% of their private credit business, less than 3% of the overall total. So that's where the clients, this is more retail products designed for family offices and smaller investors, where clients can take out the money. So that's only the portion.
Do we know who exactly is requesting these redemptions? I mean, you talk about family offices and retail investors, but are retail investors that big a client base of some of these private credit funds?
It is a big client base. It's also approaching $1 trillion, but it's spread out over different products, not just private credit, it's private equity, real estate. There are many different products. We're hearing anecdotally some things, some very small investors. Yes, we've heard from Ares this morning that supposedly those are some of the family offices, a handful of them.
These are sophisticated investors who understood that there was a lockup, right?
Absolutely, absolutely. They should have. I think a lot of people are saying, look at the small print that you can only take out 5% per quarter. I just printed out the Ares Strategic Fund, just for a fact sheet. It's one of the bullets on the front page in bold. So these people should understand it.
See, we all saw this coming. We said, once you let retail in, that's fine. It's a great new pool of money for the private equity, private credit managers to tap. But now you got to deal with retail mom and pop, and that's going to be a hassle. And boom, here we go.
It is very true, and it's kind of a self-fulfilling prophecy. If you know exactly that you can only take 5%, and you're going to be prorated based on what the fund requests are, and you're in 3 or 4 different funds, you're going to request from all of them, regardless what's in them.
All right, so bigger picture, do you feel like there's a credit quality concern in private credit broadly defined, whether it's limited to software companies or other areas?
I believe there is some. Well, there is obviously some to a large extent, but not very much different necessarily what could be done by the banks. Yep. There is some concern that there's less transparency in the private credit, although these kind of BDC companies that we've seen, those semi-liquid funds, they've actually do monthly mark-to-market. So we've seen Ares, we've seen BCRED, the big Blackstone fund, they were down. They already reported to be down several percent on the mark-to-market. So there is some transparency. Certain areas have more exposure to software, like the BDC companies, where some of them go up to 20+% in the software segment. But if you look at the overall manager, that's typically in single digits.
What's the best way to respond to these redemption requests? I mean, some of these firms have limited or capped their withdrawal at exactly what the preset level was. Others have, basically allowed for more redemptions than what they had set out to do. I mean, does one engender more confidence or, generate more concern than the other? What's the preferred response?
I think it's a little bit hard to define. We've seen three firms like Blackstone, Blue Owl, and Cliffwater paying out a little bit more than 5%. The bulk of the other firms are capping their redemptions at 5%. I don't think it's necessarily about the sentiment, but I think that those that are staying within 5% are probably playing it safer. Because if we remember several years ago when there was a lot of redemption requests from a BREIT, the real estate fund that Blackstone operates, it took several quarters for the redemption to balance out. So you kind of suggested one quarter, the next quarter it's going to be much more difficult to do.
If I went to go out and raise a private credit fund today, could I do that?
You probably can. You can go to institutional investors, and when the company is going to report next month, we're probably still going to see some private credit money coming in, but it's definitely going to be a lot
How about
more
a retail-oriented BDC? Remind me what that stands for again? Business Development. Okay, BDC. Could I do a big BDC?
Well, the BDCs are sold. If you are publicly traded, you're traded on the market.
Okay.
If you're private, you are distributed through the financial advisors.
Okay.
You're a financial advisor and calling your client who's seeing all these headlines, it's going to be very hard to sell something right now.
So, Paul, you don't sound very worried. You sound pretty calm about this. What would make you worry?
More systemic issues. And the systemic issues, I'm talking about a real credit cycle, which we haven't probably seen in almost 20 years.
Yeah, it feels like it's been, what is a credit cycle at this point?
I mean, you do see delinquencies increasing, and it's been happening for a number of quarters now. Not just in the BDCs, but also we've seen a little bit from the banks.
But nothing that's changed the overall tenor and overall demand for credit.
So the economy is doing okay, the GDP is doing okay, the unemployment is doing okay, the major drivers of the serious credit cycle is there, and the liquidity is there. A lot of the credit cycles are started through the liquidity problems. Liquidity is still there.
All right, just staying within your remit of the private equity side, are they finally getting some exits from their deals? Because for a long time, it was tough to get exits, and they were hanging on to investments more than the 5 to 7 year horizon they typically like to, much longer. How is that exit environment today?
It has improved quite a bit in the second half of last year. Okay. We've anecdotally seen commentary from some of the managers that things are still doing okay. KKR actually disclosed their redemptions last night, and those were doing okay. A little bit better, a little bit less than they expected, but not terrible. I think in terms of the redemption, it's more of a market sentiment, volatility, and anything that's more related to tariffs and potential war. So that's something that might have an effect on M&A.
I should have gone to private equity. I had the chance. All right, that's the great career mistake. Paul Goldberg, thanks so much. Appreciate it. Paul Goldberg, Senior Equity Analyst at Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Brokers.
You did pretty well for yourself, though, I think.
Yeah, but there was a pivot point. When you leave the sell side, you can make that pivot to private equity because you've got a lot of value in the marketplace, which deteriorates very quickly over time. But just didn't for a variety.
But then you came here, you met us.
Oh, yeah, exactly. How cool is that? Okay. We got the markets here looking at S&P down 23 points. So we're coming off of the lows for sure. Down about 0.4%. The Nasdaq's off about 0.7%. It's all about oil here, and oil is higher. Brent crude up 3.3%, $103. WTI crude's up 4%, just under $92 per barrel. This is crude.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, and we are streaming live on YouTube and on Bloomberg.com. Kind of a merger Tuesday, if you will. Estee Lauder Companies is in talk to buy Puig Brands in a deal that would create a cosmetic giant with about $20 billion in annual sales here. Let's get some more details on this transaction. We're joined by Clara Lizarraga. She is companies reporter for Bloomberg News. She is based in Madrid. Clara, tell us a little bit about Puig Brands. Who are they, and why do you think Estee Lauder is in talks to acquire them?
Hi, Paul. Thank you for having me. So Puig, unlike Estee Lauder, gets most of its revenues from fragrances. It owns major brands like Carolina Herrera, Rabanne, Jean Paul Gaultier, and these are brands that have products that have consistently been amongst the top 10 best-selling fragrances. So for Estee Lauder, it would help strengthen their position in this category of fragrances where they currently get about 17% of their revenues. And as you said, it would create a much larger company with a stronger exposure to Europe and Latin America and help it compete more efficiently against rivals like L'Oreal, for example.
So, Clara, I guess the thing with Estee Lauder is that this is a company in reorganization mode. It's got this plan to focus on niche, luxury-priced fragrances. Does buying Puig fit into that very specific strategy?
Well, exactly. So this is these are some of the questions that have been asked today. So whether this is the right time for Estee Lauder because they're in the middle of streamlining operations. They were at some point reviewing underperforming brands to see if they could divest from some of them and focusing on higher and more profitable products. So there are questions about whether a deal with Puig now would, one, be the right fit and also would be the right timing, considering these other complex problems need to be resolved. The reaction so far, so Estee Lauder's shares have been falling yesterday and again today. So it would seem that these concerns are definitely weighing in.
And Puig is a family-owned. I know the CEO, Mark Puig, a member of the founding family, did give up that role, but he is executive chairman. What role does the family play in this company?
So the family owns most of the capital and over 90% of their voting rights.
Okay.
This is the third generation of the family, and part of the reasons behind the IPO that happened less than 2 years ago was that they wanted to plan succession and prevent any tensions that could arise relating to generational change by listing the company and making sure that the future generations would be owners of the company, but not necessarily in operational roles. So in that sense, a deal could go in further in that direction. But it also is surprising to think that the family would relinquish control over this company, which is over 100 years old.
Yeah, there's so many things to have to kind of reconcile here. We talked about how Estee Lauder would want to add to its fragrance line to widen that portfolio. But the thing about Puig is that it also operates, as you mentioned, Carolina Herrera, Nina Ricci. These are all fashion brands. They present collections during the Paris Fashion Week. Is that something Estee Lauder wants to get into, or is that something that Estee Lauder might, I don't know, divest, or would that be part of the acquisition?
I think it would, because, so in essence, the Puig strategy has been to buy brands. They make fashion, but they also create this image around the brand, and then thanks to that, they sell the fragrances. So it sort of goes together, and it's hard to separate the fashion from the fragrances. I think in that sense, it would be complementary to Estee Lauder. I guess the question is, Puig also has a smaller part of the business that's called niche brands, so things like Byredo, another one called L'Artisan Parfumeur, and these are much smaller brands with higher prices that the company's been wanting to scale, but currently account for roughly 10 to 15% of revenues, according to analysts. So that's something that would be interesting to Estée Lauder, but there are questions about really how much can that grow, and well, would they want all of these kinds of fragrances or only certain brands?
Is there any regulatory concern here about this deal getting approved?
There's some concerns on the makeup side. So Pooja owns Charlotte Tilbury, which I believe is the third largest makeup brand in the US, and so there could be issues on that front. But on the fragrance front, I think it's not a problem.
Very good. Clara, thank you so much for your reporting. Appreciate it. Clara Lizarraga, she is a reporter for Bloomberg News. She is based in Madrid and getting the latest reporting on this potential M&A trade in the fragrances business. Again, Estée Lauder is in talks to buy Puig Brands, a Spanish company, in a deal that would create a cosmetic giant with about $20 billion in annual sales. I'm looking at the stock of Estée Lauder, down 7% today, down 29% year to date. So again, investors not reacting well to this transaction. We'll see how that plays out going forward. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments with stocks continuing their sell-off, although we are off the lows. The S&P's off 17 points. It's about 0.2%. The Nasdaq's up down about 0.7%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good turnaround Tuesday morning here from the Bloomberg Intelligence team, Paul Sweeney and Scarlett Fu. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are also streaming live on YouTube. In this second hour of Bloomberg Intelligence, we are going to take you live to the Bloomberg Intelligence Farm, Food, and Fuel Conference. And we're going to check in with Jason Miner. He's head of Global Ag here at Bloomberg Intelligence. A lot to talk about with rising costs, especially affecting all the farmers and changing the way that they're thinking about how they're going to do their plantings. Sam Fazeli is our Director of Research for Global Industries, but he is our go-to guy on pharma, and he's going to talk to us about Pfizer and its long-awaited Lyme vaccine not getting the job done necessarily. Steve Mann, he is our Global Autos and Industrials Research Analyst, will talk to us about what a prolonged war with the prospect of a recession, or at least worries of a recession, means for auto sales globally. And Nate Kaufman, Senior Vice President, Economist, and Omaha Branch Executive at the Federal Reserve Bank of Kansas City, will give us his outlook for the farm economy, again, from that Bloomberg Intelligence Farm, Food, and Fuel Conference. All that coming up in this next hour of Bloomberg Intelligence. First, we want to bring in Alexis Christophorous for our Bloomberg Business Flash.
All right, thanks a lot, Scarlett. Stocks have turned mixed here in the past few minutes. Oil, though, does remain elevated as the war with Iran rages on, despite President Trump's move to postpone strikes on Iranian energy plants and infrastructure. The S&P 500 now down just about 3.5 points. Dow Jones Industrial Average in the green by 80 points at 46,283, and the Nasdaq Composite now down 97 points at 21,847. Brent crude, though, up more than 2% off its best level of the morning at 102.27 the barrel. WTI crude up 3% at $90.66 the barrel. And the Bloomberg Dollar Spot Index at 1208.39. Shares of Smithfield Foods jumping 4.5% after quarterly earnings beat on both the top and bottom line. Alibaba is launching a new chip for agentic AI and inference computing. We've got shares of Alibaba down about 1%. And Netgear, shares of this company, big winner of the day, jumping more than 50% 15%. The FCC has ordered a ban on the import of new models of foreign-produced consumer wireless routers due to national security concerns. And of course, Netgear based here in the U.S., so that's a beneficiary. We've got GameStop on deck to report quarterly results after the closing bell. Shares of GameStop down 1.5% ahead of that report. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio in New York City, streaming live on YouTube and now streaming live on Bloomberg.com. Yeah, I mean, boy, you blink and now this market's turned a little bit positive in the Dow. So we got red and green on the screen as Alexis was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, Bloomberg News. She joins us here in studio. Avalon, what are you looking at?
Yeah, we can go ahead and start off with Concentrix. That's ticker CNXC, down about 23% to hit a record low. That's after the firm's second quarter forecast was weaker than expected. Its adjusted earnings per share guidance missed expectations, and also the midpoint of its revenue range also fell short of what investors are expecting, which is kind of poorly timed considering investors already have a ton of questions about what structural threats AI will pose to its business.
All right, next up on your list?
Yes, Jefferies, ticker JEF, which is up about 3.7%. That's after the Financial Times reported a little bit earlier today that the Japan-based bank SMFG is working on plans for a possible Jefferies buyout. It's kind of interesting timing considering Jefferies has been under a lot of pressure this year, considering all of the credit risk that the company has been caught up in. I'm thinking about like First Brands, Market Financial Solutions. But before this news, it was down about 36% this year. And Bloomberg Intelligence actually out with a note saying that the potential takeover by SMFG appears more opportunistic as opposed to imminent, as we continue to report that there are no active talks.
And that bank already owns, I looked it up on the Bloomberg terminal, about 4.5% of Jefferies already. So this might be an opportunity to take advantage of some weakness and up that stake here. Jefferies is, having competed against them for many years, are very, very good at what they do. They have their niches, and they hire and they throw resources at those niches, and they compete well. One more.
Yes, Immunity Bio, that's ticker IBRX, thinking about 22% for its biggest tumble since 2024. That's after the FDA issued a warning letter to the biotech for false and potentially misleading promotion of its bladder cancer drug, Anktiva. At issue is a recent TV ad and also the firm's billionaire executive chairman, Patrick Soon-Shiong's rhetoric on the Sean Spicer show. He said the drug could treat all cancers. However, it's currently only approved for a very specific kind of bladder cancer. Still worth noting that before today, the stock was up 375% this year. So I don't think people are going to be that worried.
All right, good stuff. Thank you so much, Avalon Purnell. And of course, we're going to be talking about more biotech with Sam Fazeli a little bit later in the program. But for more conversations like what you just heard, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. One of the great things about being at the 731 Lexington Avenue in Midtown Manhattan is all the things that are taking place at this office. We have a Bloomberg Intelligence Farm, Food, and Fuel Conference that's happening here.
No, it's actually out in Kansas City, Missouri.
Ah, okay, my mistake. But it feels like it's happening here.
I mean, with this, one of the reasons this is such a great conference, because if you want to learn anything about farming, food economics, all that kind of stuff, you go out to where the farmers are in Kansas, and you know Mike McGlone's out there with this whole crew because he's a farmer.
That just proves sometimes you can't do everything from 731 Lexington. All right, let's go out there to Kansas City then, right? Jason Miner is head of global agriculture at Bloomberg Intelligence to talk to us a little bit more about the setup heading into this conference. Jason, just give us the lay of the land here. I imagine that surging fuel costs is a big, big topic of conversation, is kind of casting a pall over the conference.
Yeah. First, let me say go big red. Okay. If you're not aware, Farmageddon coming to Houston for the Sweet 16. Everybody should be. I live in Omaha, so there's that. If you're not watching online, I'm wearing my Husker
Nebraska.
Hat
there you go, Huskers.
There you go.
Oh, because you're
now,
actually
set up at the conference.
He's actually based now in Omaha.
Is he? Okay.
Yep.
You need to come
as
visit
you
us
said,
here.
you got to go where the farmers are, but I absolutely will bring it back to you. I promise. The conference setup, we call it Farm, Food, and Fuel because this chain is more interconnected than perhaps any industry on earth. And when you do things that affect fuels, you do things that affect food. And then upstream, you asked about fuel on the other side. So there's two sides to it, right? Ethanol prices, renewable diesel prices, yes, are a plus. The real concern that's been coming up lately is the spike in fertilizer costs. Now, we've done this conference for 3 years. U.S. farmers are going into a 4th year of losses for corn and soybeans, which is almost in 25 years hasn't happened. So it is a crowd that wants to focus on basketball more than farming at the moment. Those fertilizer prices are a real pressure, and yeah, that's causing a squeeze. And we're worried about what'll happen as we go into planting. If you don't plant enough because it looks unprofitable, you could tighten the markets. Or if you don't fertilize enough later in the season, you can lower the yields, and we could face rising crop prices later in the year. So all these things are happening.
So what's the state of the U.S. farmer here, Jason? You mentioned, we've had some really tough years. I know the federal government is providing some subsidies and some bailouts, but that's not what the farmer really wants, is it?
No. So, and yeah, everybody will say, because it's not a business model you can plan around, right? And the real challenge we're facing at the moment is very cyclical industry. We're in a down cycle long enough that we'll hear from Nate Kaufman later. We're starting to see some signs of balance sheet strain, but we're losing farmers. In the last 5 years, we lost 140,000 in the U.S. There's only 2 million. And if you think of the institutional knowledge loss, it's kind of like the pandemic when all those pilots retired. When the demand comes back, you don't just pop farmers right out of the soil like corn, right? You got to find them, you got to teach them. It's a generational business. So the bailouts help a little, but we're really looking for a long-term model. And the biofuel story is a lot of that, by the way.
Yeah, bailouts can't be a long-term solution here. So having said all of this, Jason, what parts of the ag chain are positioned better this year?
Well, starting upstream. So we look at it as upstream and downstream. Upstream, the seed business never goes away. That the seed folks are doing well. I would point out that there's some risk from robotics in chemicals that we talk a lot about. The machinery guys have been down for quite a while. And last year was the year everyone thought it would turn. Chris Giolino, our machinery analyst, really thinks this will be the year the machinery guys start to come back. And there's a ton of enthusiasm in the biofuels stocks. The policy remains TBD. We're looking at the crowd here voted it would be out by the end of March. So that policy should be getting firm. But either way, those margins are looking really good. Soy crush margins for the ADMs and bungies are headed back toward record levels. So we're starting to see everywhere but on the farm, unfortunately, in the field, a lot of the suppliers are doing pretty well. Protein, by the way, I'll lastly say, beef price is very high. The guys who have it are selling well. Poultry is flying off the shelves like crazy too. So there is a turn afoot, and we think the second half of the year, a lot of things will start to look better, but it has been a long slog.
You mentioned beef here, Jason. I mean, my solution for the chicken problem we had a few years ago was just make more chickens, and that's in fact what happened. It's a little different with beef, isn't it? What are the big cattle ranchers, what are they saying about the size of the herd, when it can come back, maybe when beef prices might be able to peak and come down?
Yeah, so Jen Bartashis, of course, is our excellent analyst on that. But this is like an 18-month cycle. It gets worse before it gets better because the first thing you do is you have to retain heifers for breeding.
Yep.
And so you actually lessen the supply. That's happening now. By the way, I'll mention another problem that no one's talking about is over 700,000 acres of ranch land just is now burning in western Nebraska. And so there's a lot of risk to just the range herd at the moment. That just raises feed costs, by the way, for everybody. But yeah, that cycle's underway. It's going to take a while and probably more than a year before you really see it help you on the shelves. And that's why people are trading down to poultry. It's a cheaper protein, I have to admit.
Wouldn't at some point poultry prices then go up because of the increased demand as people trade down to it?
Yeah. That should be coming. There's the supply demand on that is very tight. I mean, it's surprising prices haven't come up faster. There have been some big capacity additions, and there are a few more coming on. So it's not yet, but that's on the horizon. True that any part of the protein complex that rises will eventually drag the rest with it. So inflationary risk there, yeah.
So at Bloomberg and at Bloomberg Intelligence, for very exceptional cases, we'll allow an employee to work at a remote location.
Mm-hmm.
So, for example, Mike McGlone in Miami Beach, Jason Miner, Nebraska. I mean,
made the right choice. I made the right choice.
It does happen.
Exactly right. All right, Jason, thanks so much. Appreciate it as always. Jason Miner, he's head of our global agricultural research at Bloomberg Intelligence. They are hosting all at the Westin Kansas City at Crown Center in Kansas City, Missouri. They're bringing together all the folks involved in the global agricultural business, and there's a lot of issues to deal with, as Jason was just mentioning, so we appreciate getting a few minutes of his time. Switch gears, we'll go to healthcare, as we like to do. There's always news coming out of the healthcare business. There's always M&A trades, and this is no different. Pfizer, they've been working on a Lyme disease drug here, and they recently had, I think they had a study that didn't really impress too much, but I'll tell you, in this part of the country, Lyme disease is no joke, boy. A lot of people get it.
Debilitating.
And it's bad.
And it affects you for life.
Yep.
Even if you get over the worst of it in the first 2 years.
So there's just another area where you're kind of waiting for the great science of the pharmaceutical and biotech industry to come to the rescue. Sam Fazeli joins us, Bloomberg Intelligence Director of Research for Global Industries and a senior pharma analyst for Bloomberg. So, Sam, what's going on with Pfizer? What's going on broadly with this little niche field of Lyme disease?
Lyme disease, Paul. So all those farmers and folks who go out into fields have a risk of that. Of course, anyone who goes out into a green space. I mean, you know, I've got a bit of a garden. I'm sure you do. And those ticks, man, they do like your legs and anything that's nice and hidden in there to go and have a bite at, and all your animals suffer from it, etc. So those animals can take drugs to prevent ticks. But there's really no such thing for humans. And I mean, the vaccines have been around, but Lyme disease vaccine is something that would really be quite an attractive option for those who are at risk. The question is, who would take a Lyme disease vaccine? But these guys had some data. It's data from a vaccine that they're developing with a French partner called Valneva. It's been in development for a while. And I'm just reading the details here again off the screen on the Bloomberg terminal. 73% effective against the tick-borne illness, which of course can be as bad as encephalitis and causing major, then longer term issues. So the problem is 73%. I mean, you know, is that good enough these days? I mean, think about the COVID vaccines now on a background of people having lots of COVID infections are in the 50 to 60 to 70% range effective against hospitalization. Now, that's on the background of lots of COVID infections. Here, you're testing it literally against somebody having no immunity. So 73% is not particularly high. So it'd be very interesting to see what the regulators say about this.
Sam, I'm kind of confused. Why are there no current human vaccines for Lyme disease on the market? I mean, there was something, I believe, back in the late 1990s from GSK, but this seems like something that there's a real demand for.
Efficacy. We need efficacy. We need the effectiveness. Sorry, in vaccine world, I've forgotten now all those years of writing about COVID. You need vaccine effectiveness, which is how much does it protect you? How long does it protect you for? So this is something that I think would be interesting to see whether this result is better than what folks had been used to. But again, if you took this, you're only 3/4 of the way, let's say, protected. And I'd like to see the data. How long does it last? Do you need another shot? Who takes this? I mean, do we want everybody? I mean, people are hardly taking infectious disease vaccines where they can pick it up in the subway.
Yep.
Are they going to worry about this, take this? So those are questions, right?
Hey, Sam, at the beginning of President Trump's second term, there really a lot of threats towards universities and maybe some of their medical research. Has that, in fact, come to fruition? Are funds being withheld? Are funds being pulled? Is that impacting university research?
There has been some more uncertainty created, funds not being released. There's been a lot of those situations arising. Of course, it's not just grants going to universities, it's also direct investments, for instance, by the NIH, which has a huge budget. NIH gives out grants, but they also have research institutes, the Institute for this, the Institute for that. So there has been some effects. People are worried. The number of people seeking to do PhDs in the STEM world has declined. I don't know what the latest statistic is, but it's definitely declined. And that's really not helpful because it is this foundation of science that then builds the future innovations, right? I don't think that I don't think that's rocket science, right? So I don't know why this became such a big thing, but I'm wondering whether it was just noise and it was playing to the public and it's kind of eventually going to dissipate and go back to what it normally was. And of course, Congress needs to get in there.
Yeah.
We've seen, for instance, courts coming back saying what the HHS has done isn't right for vaccines, etc. So maybe this will happen here too.
Sam Fazeli, Director of Research for Global Industries, our Senior Pharmaceuticals Analyst at Bloomberg Intelligence, joining us live from London. All right, we have the equity market now, little change. The S&P unched at the moment, the NASDAQ off by about 0.4%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous, and this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, just go to goldencrestmetals.com/ goldandcrestmetals.com/guide. That's goldandcrestmetals.com/guide. Well, after a brief respite yesterday, oil is back on the rise, and stocks are mixed as Iran launched overnight attacks on several targets across the region, including in Bahrain and Kuwait. The S&P 500 now in the green by 6 points. Dow Jones Industrial Average climbing 148. The NASDAQ trying to make a comeback, down just about 60 points. Brent crude is up nearly 3% at 102.73 a barrel, and WTI crude at 91.18 the barrel. We've got spot gold basically unchanged at 44.07 the ounce. Turkey is considering tapping its $135 billion gold reserves as it looks to defend the lira from volatility due to the Iran war. It also is trying to bring down its inflation rate, which tops 30%. In stock news, Ares Management and Apollo Global Management have limited withdrawals from their private credit funds to 5% of shares after a jump in client redemption requests. Shares of Ares down 1.33%, Apollo off nearly 2%. Meantime, Moody's downgraded a private credit fund run by KKR and Future Standard to junk. That's amid rising bad loans and a string of weak earnings. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, good stuff. Thank you so much, Alexis Christoforous, with our Bloomberg Business Flash. This is Bloomberg Intelligence. We are now looking at equity markets making a bit of a comeback here with the S&P 500 just barely in the green, but it is positive at the moment, Paul.
Yep, absolutely. We've got the Dow up 125 points. The NASDAQ still a little bit weak out there. But again, given where we were earlier in the morning with futures, this is a turnaround for sure.
This is even as oil prices continue to stay higher.
Yep, absolutely. One of the things that the Bloomberg Intelligence folks are looking at is gaming out a recession scenario that may be a little bit more on the front burner now with what's happening in Iran. And one of those industries that you really have to be on the outlook for should the economy soften is the U.S. auto business. And Steve Mann joins us here, Global Autos and Industrials Research Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. So, Steve, I mean, the auto business, I mean, cyclical business, but also one that's undergoing a profound transformation, trying to make this transformation to electric vehicles. Probably not a lot of spare capital lying around to cushion during if the economy were to soften. How do you guys think about it?
Well, yeah, the industry did take a lot of write-offs because, you know, the EV sales are not going to be what it expected, especially in the U.S. And we were actually coming into 2026 relatively positive for the big Detroit Big Three, because Trump eliminated, you know, the penalties on gas guzzlers. We thought, you know, they're going to, you know, these automakers are going to push out these, you know, pickup trucks, SUVs with high margins. And that's how we came in looking at the industry at the beginning of 2026. But then the war broke out, right? And gas prices are at where they're at. If you talk to the people that actually buy and sell oil, it's like $150, right, on the ground. So it's having a huge impact. Gasoline prices are up 30-40% where I'm at. So now the talk is, you know, are they going to sell that many pickup trucks and SUVs?
Yeah.
You know?
Especially with interest rates rising, that means auto loans also become more expensive for consumers. But people will still need cars, and they will still need to upgrade or replace their aging vehicles. Where does that leave the automakers? I mean, do people go to secondhand cars? Do they take another look at hybrids and EVs in this environment?
I think it's a combination of both. The third thing that could happen is they keep their cars a little bit longer. You know, that's going to benefit companies like O'Reilly, AutoZone, that actually sells aftermarket parts. You know, a lot of consumers, especially in this K economy, those who are looking for value and affordable vehicles will hold off. You know, even if interest rates are lower, you know, they want to make sure, you know, the jobs are stable and before they spend $20,000, $30,000, $40,000.
How much is a new car again, on average?
Average is $50,000.
Yeah, and I tell you, my boy Joe, in his car repair shop in Massaquoi, his lot is packed, man. I mean, he's got more business he knows what to do with. So that goes to your point.
Yeah,
people are keeping their cars longer. You know, if we get higher for longer fuel prices, does that revive maybe some demand in EVs and the hybrids?
It might. Look, we actually looked at looked at what the worst case scenario is. We looked at past oil shock all the way back to, the Iranian Revolution back in the 70s. And we're coming up with, okay, worst case, sales in the US could drop as much as 15%. Now, the pie is shrinking, but even within that pie, the split is changing. Definitely, I think it's no surprise. If oil prices are high, it has happened in the past, people will be more interested in hybrids. And this time around, battery EVs as well.
All right, Steve Mann, giving us a lot to think about here, especially those of us who need to maybe replace our vehicles or upgrade our vehicles. Keep bringing it back to the
we did the hybrid
mechanic.
for the number 4 Offspring.
Well,
That's
the
pretty
number
cool.
4 Offspring is in California, so that makes a big difference, right?
Yep, absolutely.
All right, Steve Mann, really appreciate it. Thank you so much. As we mentioned, Bloomberg Intelligence is hosting a farm, food, and fuel conference in Kansas City, Missouri, taking place at the Westin Kansas City there at Crown Center. And we want to focus in on the farm economy. The farm economy certainly matters to elected leaders like President Trump, who has a lot of support from that demographic. But given what's happening in the global economy with interest rates rising, with oil prices moving higher, and that, of course, leads to higher fertilizer rates, prices as well. What does this all mean for the farm economy going forward? Let's bring in Nate Kaufman. He is Senior Vice President and Economist and an Omaha branch executive at the Kansas City Fed, joining us from the BI conference right now. Nate, good to speak with you. Just give us the lay of the land right now from what you see with the farm economy. How much has this war in Iran changed the trajectory of the farm economy?
Good morning, and thanks for having me. Glad to be here with the conference. I think what I would start with is to say that the farm economy is in a couple of different places. It's important to recognize that there's a pretty wide variety of products that ultimately go into the farm economy, and specifically, I mean thinking about the split between crops and livestock. We've been in an environment with subdued grain prices for the past couple of years, where the crop side of that economy has been pressured, but livestock and other components of that industry have actually been quite strong. So not all of those components have been negative. It has been a relatively bleak outlook for the past couple of years on the grain side. Of course, with the conflict, you're looking at increases in fertilizer and fuel prices, but to some extent that's been mitigated by some increases that we've seen in grain prices.
So trade barriers, trade tariffs, how has that kind of rippled through the farm economy?
I think where you tend to see that is primarily by way of commodity prices that come through demand for U.S. products. Even there, I would say it's an uneven picture, because you need to think about this being obviously a global market. If there's an incentive, for example, to secure product from, let's say, South America, in the case of corn and soybeans, that has the potential to open up other markets for the United States that Brazil may not be able to supply, just given some of that demand from those locations. The other thing I would say is it depends a little bit on infrastructure and transportation. There will be some parts of the United States, for example, in North Dakota, South Dakota, that have been oriented toward moving product west to then go to China. Well, obviously, if that market is more subdued, that's going to have an impact on local prices there, whereas markets in other parts of the country could still be strong based on regional and local demand.
We were talking earlier about the state of credit markets, private credit, of course, feeling some stress right now. Are credit markets showing signs of financial strain in the farm sector at all? What are you seeing?
We've seen some gradual increase in financial stress, but I would say that it's really been the past couple of years. It isn't just because of what we've seen over the past year or so, but I say gradual because when we look at different measures of farm financial health, it's only been a modest increase in stress. Delinquency rates are up a bit in terms of repayment on farm loans, but land values are really pretty strong still, suggesting that there's been a large amount of wealth that has been built up in agriculture that are holding things at a strong level. And once again, support from the livestock sector is part of that. So I would suggest that it actually looks pretty similar to some of the conditions we may have seen just prior to the pandemic, when we were seeing some gradual tightening. But for the most part, in total, not obviously for every producer, but in total, conditions have been relatively stable.
Nate, from a policy perspective, what would the farmer like to see from this administration, from this Congress, from a policy perspective going forward?
I think that what we hear from a lot of farm groups is a focus ultimately on what drives profitability, understandably profit margins being a main focus. So thinking about what potentially drives commodity prices higher, and I think what they will typically say is a focus on things that will push demand higher for U.S. crops. So that could be, for example, domestic demand. So we hear from farm groups a lot about biofuels and things like that might connect to that, but then obviously also focused on opening up global markets and export activity to ultimately drive profitability that comes by way of that more persistent demand, as opposed to things that might just move from one year to the next that are more weather or short-term related.
How big a role have U.S. soft commodities played in the trade talks and in all the negotiations with our trading partners thus far?
And by soft commodities, which commodities in particular?
Like soybeans, wheat, all of that. I know soybeans was a big sticking point in any kind of U.S.-China trade discussions, but beyond that.
Yeah, I think that definitely soybeans were a major factor simply because of the prominence of China as it relates to export of U.S. products to that destination. But, going back, even I would say back to 2022, wheat was a primary market given some of the disruption involved with Ukraine. So, we're really looking at a prolonged period of multiple places of disruption that started with the pandemic. Ukraine was a major factor. You've had a number of different developments since then over the past year. So I think it's complicated to pin that to necessarily any one factor. I think what I would say as it relates going back to the tariff discussion, some of those markets, prices actually are just as good, if not higher than what they would have been before that tariff environment. So it's not immediately clear, at least in aggregate, that's been the primary driver.
Nate, 30 seconds. The beef market prices are very high. Is there a way to get those prices down?
Ultimately, that's going to depend on when we start to see more rebuilding of herds. It's been a prolonged environment of producers selling in that market. I think partly because prices are so high, partly because costs are a factor. To some extent, it may be drought or regional factors that are driving that. We haven't really heard of a lot of strong indications yet that we're seeing that herd rebuilding taking place. Now, there's some nuance to that because dairy has filled some of the void in terms of beef on dairy. So I think that it's still going to be a bit before we start to see some of that supply start to catch up.
All right, Nate Kaufman, Senior Vice President, Economist, and Omaha Branch Executive at the Kansas City Fed, joining us from the BI Farm, Food, and Fuel Conference. Paul, it looks like you're going to have to pay up for your burgers for a while yet.
I think so.
I think so. All of us.
Yep.
Maybe time to go veggie burger.
No, that thing passed. And what happened to the Beyond Meat stuff?
That thing passed as well.
That passed, okay. All right.
This is Bloomberg Intelligence on Bloomberg Radio.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Also streaming on Bloomberg.com. You just go /video, and that's where you'll find us. One of the challenges for investors really over the last 4 to 5 weeks is trying to look through the noise, if you will, from the Iran war, potential impacts on inflation, potential impacts on economic growth, and try to focus on the fundamentals of these markets. Michelle Martin does that for a living. Michelle, President of Prosperity and Eisner Amper Company. She joins us from Minneapolis via the Zoom thing here. Michelle, how are you approaching kind of stepping back, looking at the markets, and trying to get a sense of where we go from here, given all this black swan uncertainty that we're dealing with?
You sum it up incredibly well, Paul, and thank you for having me today. You know, stepping back is probably the key word and the key activity to be thinking about when you're looking at investing and really thinking about your portfolio right now. There is so much going on in the headlines, and it's changing each and every day. So I think that really being mindful of overall what does diversification look like in your portfolio? How can you continue to influence that and just really think about the long term, looking a bit beyond the headlines and the headline risk that we're seeing right now?
So let's take out some of that headline risk here, and let's just start with asset allocation. How do you think about stocks, bonds, alternatives, commodities? Where do you guys stand there?
We think it's really important, Paul, to have a fully diversified portfolio and to really start with what your goals are and where you're at as it relates to the needs that you have from your portfolio. Are you taking income from it? Are you in accumulation mode? That impacts your goals and the allocation that you have. Obviously, you can take more risk if you're thinking about a long-term perspective, 5 to 10 years. Obviously, markets tend to even themselves out and perform really well. But we see alternatives as a very core part of our portfolios because they tend to mute the volatility and provide a steady stream of return, kind of in that 7 to 9% versus the equity markets, where over the long term you're looking at 8 to 10 in a normalized market, and then also fixed income is just a diversifier if the correlations aren't out of whack, which they haven't been. We've actually seen fixed income, particularly in the municipal bond market, performing quite well. I think that we have to realize that right now, nothing in particular is working incredibly well. That's why diversification continues to be even more important.
You mentioned alternatives. Can you be more specific on that? Are you referring to gold? Are you referring to Bitcoin? Are you referring to private credit, private assets, for instance? Because there's been a lot of stress seen in the private credit part of alternative investments with more redemptions than those business development companies are able to give out.
Scarlett, you're exactly right. And we are seeing that pressure in private credit. We do have for our high net worth investors exposure to private credit. We are very thoughtful, as many advisors are, around the credit quality and really understanding under the covers what the structure looks like. And also kind of the whole underwriting and the risk profile that they're taking. I think what we're seeing in private credit right now is definitely a run and some concern. The whole concern around private credit also goes back to the fact that there's been a real focus on software companies and cash flow companies. And so understanding that there's a slowdown and that there might be some risk from AI, that really goes straight to the core underwriting of what does debt service look like? What is the underlying collateral? Those are all the things that the bankers are looking at. And then also redemptions put pressure on these sponsors and these investors because these are meant to be longer-term investments, and so having those redemption requests really does put a lot of pressure on these loans that, quite frankly, many firms are now limiting their distributions.
In the fixed income space, Michelle, it's, you can sit there at a 2-year treasury, get 3.90%. We had 4% handle just, a week or so ago. That seems like a pretty decent return. Do you suggest to your clients that they take credit risk on top of that?
I think the core of the portfolio, Paul, in terms of fixed income right now is really around that core treasury, core bonds, not taking a ton of credit risk, looking at high quality bonds. We have actually moved away and reduced our exposure from high yield. We have reduced our exposure to private credit. We still have exposure, but not to the same degree. And for clients that are more conservative in their approach, we are simply looking at very, very high grade credit and T-bills. And, because just like you said, municipals have also shown a really nice return in this current market. So we've really stuck with kind of the core because we are seeing returns in that 4 handle. And with our overall fixed income portfolio, it's running between 4 and 5%. Again, not taking outsized risk on that just because we don't have to.
Right. What is the number one question, Michelle, that your clients are asking you?
The number one question, that's a great thought, Scarlett. I think that it's really interesting. I think that most of our clients are looking beyond some of the noise in the market. I think that clients are looking at it and saying, what is this going to look like in a year or 5 years? And what does this mean for us? People have become so accustomed to these really amazing returns that we've had, really historic returns over the last 50 years. These last 3 years have been extraordinary. So I think it's more about, okay, so if the markets are more subdued going forward, what does that mean for us and for what we should expect in terms of portfolio returns, and what does that mean for retirement goals and other things that we're trying to save for?
How important are taxes in your discussion for investment options for your clients?
Can you repeat that, Paul? I'm sorry.
Just how important is tax planning and taxability of certain investments? How important is that in your conversations with your clients?
We see that as really a central conversation, Paul, with our clients. And one of the reasons for that is when you are investing over time and you have strong returns, you're going to have capital gains in your portfolio as a matter of course. You're going to have capital gains as you take distributions, things that you've been saving for. And when you liquidate, you're going to see that. Alongside of that, for people that have outside investments, taxes become a real factor. So we also think direct indexing strategies can make really great sense for the right client, someone who has a portfolio that consistently generates gains, and also business owners, individuals that see that. So we pay a lot of attention to the type of investments that we make, the location of those investments, and also really being very thoughtful around distribution strategies and how we're filling up those tax buckets, and also planning from year to year based upon anticipating events that clients are going to have on their balance sheet.
All right, Michelle, thank you so much for joining us today. Michelle Martin is president of Prosperity. It's an Eisner Amper company, and of course, joining us from Minneapolis. And while she was speaking, I was looking at the markets. We are now at session highs, with the Russell 2000, of all things, up 0.8%, and the Dow and the S&P 500 in the green.
Yeah, absolutely. Got the S&P up 10 points. We'll take it. Again, it says 65.91. The low today was 65.25 in the S&P. The Dow's up 180 points. That's 0.4%. The NASDAQ still negative here, but a nice turnaround from early trading.
And I guess the narrative continues to be hope that talks are underway to end the conflict, although it's unclear exactly who's talking and how much they're really talking.
And we haven't heard anything social media-wise from the president today to give us kind of a leaning one way or the other, but we'll stay on top of that. We'll have more coming up. This is Bloomberg.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of the issues from an M&A perspective with the second Trump administration is this is going to be a very good time to get M&A done. The regulators, whether it be the Federal Trade Commission, Department of Justice, maybe be more accommodative, and that was certainly the expectation. And from what I understand, that's turning out to be the truth. And we want to focus on one particular deal because it's a deal that I'm very familiar with, having covered the media industry for a while, and that is Nexstar, big TV station owner, buying Tegna, another big TV station owner. Jennifer Reed joins us. She's senior litigation analyst for Bloomberg Intelligence, joining us live here in our studio. So as I understand it, Nexstar, again, a huge owner of TV stations across the country, hundreds of them, closed its purchase of Tegna, which are the old TV stations owned by Gannett company, the newspaper company. That closed.
Yes.
From the regulators. Like the Federal Communication Commission, the Justice Department blessed the deal as people thought they would.
That's right.
That's this administration. But there's still some suits going on. What's going on with that?
Right. So that expectation that the Department of Justice and Federal Communications Commission would go ahead and allow that deal to go forward, I think ramped up a group of states to be ready to try to go after this deal. And it's because the states have been saying, many states have been saying, and not just Democratic state attorneys general, but in a bipartisan way, the states have been saying, if this administration lacks antitrust enforcement, if they start allowing a lot of consolidation across many industries, we're going to pick up the slack, because states have the right to enforce federal antitrust laws, and they have the right to go after a merger that they believe is unlawful under the antitrust laws, just as the Department of Justice or Federal Trade Commission do. So that's what we're seeing here. You have 8 states that have said this wasn't right for different reasons. The FCC approval was improper for certain reasons. The Department of Justice clearance was improper for other reasons, and we're going to go ahead and go to court to try to see what we can do here.
I've been doing this media M&A thing for a long time. I've never really seen this before. I'm sure it's been out there. So this is basically the state saying, for whatever reason, the federal government, from our perspective, from our point of view, is not as strong a regulator as it needs to be. Therefore, we're going to pick up the slack and do it from a state level.
Yes.
Have we seen this before?
Not a lot.
Okay.
Normally, the states are sort of aligned with the Department of Justice or any of these agencies that are reviewing a deal. We have one example from several years ago when T-Mobile and Sprint merged. That they settled with the Department of Justice. They divested some assets to Dish, and the Department of Justice went ahead and cleared the deal. The FCC cleared the deal, and the states went to court. A group of states, I don't remember exactly how many, I think it might have been around 10, went to court to try to block that deal. And, you know, a lot of people would say, and I'll say in this case too for Nexstar, that once you have the federal regulators that have approved these deals, it is very difficult for the states to then go into court and convince a judge that the experts that cleared the deal were wrong. The states lost in the T-Mobile Sprint effort, and you know, we don't know yet what's going to happen with Nexstar, but they do go in with a tough case to make once the FCC and DOJ have approved, which they have.
So are they doing this, these states, and you say it's bipartisan, so it's not just Democratic states that maybe wanted to just go against this administration's regulatory policy?
I think in this case, it may simply be Democratic states, the ones that have sued Nexstar. We also have states that are continuing litigation against Live Nation that originally the Department of Justice had joined them with, was the lead plaintiff. The Department of Justice settled with 1 week of trial. The states in a bipartisan way have gone forward to continue that litigation. So we are seeing bipartisan efforts in that area. With the Nexstar Tegna, I'd have to look at those 8 states to see the attorney generals, whether they are Democrats or Republicans.
If you're Nexstar, you close this deal, you pay Tegna the money.
Yes.
Is there any risk to Nexstar that some judge could say, you got to unwind this thing?
I think that risk is low. I think actually getting an order saying you must unwind this is low. If there's some kind of a liability decision, this deal was anti-competitive, my guess would be the more likely outcome would be some divestitures of stations, which is honestly what I thought would have happened with this deal with the Department of Justice to start if it had followed kind of its long-standing tradition with respect to TV broadcaster deals. Usually the Department of Justice would ask these companies, including Nexstar, which has divested all sorts of stations doing deals in the past, to divest in a local area called a DMA, in this case, to divest if they would own more than one of the local affiliates of the big 4, which are NBC, CBS, Fox, ABC.
And that rule today, having done 1 million broadcasting M&A deals in my life, seems so antiquated today. It was antiquated 20 years ago, but now with all this streaming and, I mean, it's like, who cares?
Well, that's the argument the defendants will make, and that's what the Federal Communications Commission said in part in approving this deal. But I will say that there was an 8th Circuit decision about the FCC's every 4 years it reviews its rules, about its review of its rules. And that narrow market definition focused on those broadcast stations in the big 4 was challenged. And the 8th Circuit didn't reject that. They rejected rules changes for different reasons, but not because of that market definition. And the thing is, Paul, I know viewership has changed radically, right, in the last 10, 20 years. You've got all the cord cutters. You have people who've never even heard of a cable subscription. But you still have a set of consumers that get those cable subscriptions or Fios or whatever it is. They want those local stations. They want sports. They want the local programming they can get. And if you have a discrete set of consumers that could be harmed because prices go up, it can still be an antitrust harm.
All right, very good. Jennifer Rhee, always great stuff. Jennifer Rhee, Senior Litigation Analyst for Bloomberg Intelligence, getting us the latest on what's happening in the world of broadcasting. and getting some of these merger deals done. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. S&P unchanged, the Dow up 60 points, the NASDAQ minus 98 points. This is Bloomberg. Good morning.
CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. ICE agents are on duty at several airports, but TSA security lines are still long in many places. WNCN TV reporter Mary Smith at the Raleigh-Durham Airport.
Passengers tell us they saw officers at a few airports, including Houston and Atlanta. Did you see ICE officers at the Houston airport today?
Yes, we saw lots of them. They all were just standing mostly in groups with their hands in their pockets. I don't think they really knew what to do.
They were really pretty much just standing around. A statement from DHS says more than 400 TSA officers have quit and thousands called out of work during a partial shutdown that has left them without paychecks.
Well, CBS's Torian Small has more on the effort to strike a deal to pay TSA staffers.
Quite a few Republicans left that meeting feeling a little bit more optimistic. Senator Katie Brick said that she believes they have a deal. I talked to Senator John Kennedy from Louisiana. He didn't meet with the president, but he says his understanding is that the president did agree to a concept of a deal.
Overseas, airstrikes pounded Iran, and Tehran fired missiles at Israel and U.S. allies. CBS's Natalie Brand on diplomatic efforts.
President Trump over the past 24 hours has expressed considerable optimism that a deal could potentially be reached with Iran. Yesterday, he said that there were productive talks happening, discussions with his special envoy, Steve Witkoff, and his son-in-law, Jared Kushner, even though Iran's regime denied that those talks were happening. But now we do have this acknowledgement from an official within the foreign ministry saying that Iran has, in fact, received some points passed along from the United States through mediators.
Well, President Trump called mail-in voting cheating, just days after personally casting a ballot by mail.
President Trump has long claimed without evidence that widespread voter fraud led to his 2020 election loss, and mail-in balloting was partially to blame. But during Tuesday's special election in Palm Beach County, Florida, the president voted by mail-in ballot. The Palm Beach County Supervisor of Elections website shows Trump, who is registered to vote in Florida, voted by mail ballot. The president has been pushing for passage of the Save America Act, which, among other things, would set election rules at the federal level and would allow very narrow exceptions to mail-in ballots. Lindy Kenyon, CBS News, the White House.
NASA Administrator Jared Isaacman says the agency will commit $20 billion for a moon base.
We intend to work with no fewer than 2 launch providers with the aim of crewed landings every 6 months, with additional opportunities for new entrants in the years ahead.
This is CBS News. recall at Trader Joe's is expanding.
The FDA has added 1-pound bags of Trader Joe's vegetable fried rice to the list of frozen meals sold in 43 states that may contain glass shards. The best buy dates range from February 28th of this year to November 19th. Ajinoto's chicken fried rice, Japanese-style fried rice, and chicken shumai had already been recalled. An investigation revealed the likely source of the glass in the 10 million pounds of product, the carrots. So far, no injuries reported. The only states not included in the warning are Hawaii, Maine, New Mexico, South Dakota, Vermont, West Virginia, and Iowa. Deborah Rodriguez, CBS News.
A company that evaluates news outlets and websites for reliable journalism says it's under attack by the Trump administration in an FTC investigation. Some allege NewsGuard rating system censors conservatives. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Day 25 of airstrikes, despite the president's talk of peace. Welcome to the Tuesday edition, with both sides here continuing the fighting, and Israel adding the campaign will continue at full intensity, even as the president pursues negotiations with Iran. We're going to get the latest in just a moment from Bloomberg's diplomacy expert Ian Marlowe. There could be a deal at hand to reopen the Department of Homeland Security. It's evolving as we speak here, and we're going to talk about it with Jim Kessler from Third Way. He's got new polling, by the way, on the midterms, and with our political panel. It's all ahead this hour. After we take a look at Wall Street, let's start right there, right now, with Amy Morris and her view of the markets. Amy, what do you have?
All right, Joe, thanks so much. A renewed oil advance stoked fears the war in Iran will exacerbate a global energy crunch, and that has caused stocks to drop a bit. WTI, by the way, now $92 a barrel. Brent crude has now topped $104 a barrel. We check markets for you all day long here at Bloomberg. The S&P 500 is down just a fraction, about 0.2%. NASDAQ down 0.6%. The Dow's pretty much flat. 10-year Treasury yield at 4.38% and the 2-year yield at 3.9%. Bitcoin now 1.5% lower, now less than $70,000. Canadian Energy Minister Tim Hodgson says he's discussed increasing natural gas flows to the U.S., both for Gulf Coast LNG exports and to support AI data center demand, with his U.S. officials at CERAWeek. This happening in Houston.
We talked about how we could help send more gas down to help you export more off the Gulf Coast and to help you with your AI strategy. Obviously, a key component of winning the AI race is building more data centers. That requires more natural gas. We can provide that natural gas.
Canada's Energy Minister Tim Hodgson tells Bloomberg at the CERAWeek conference in Houston he had a, quote, wonderful conversation with U.S. Energy Secretary Chris Wright and Interior Secretary Doug Burgum. Growth in U.S. business activity slowed in March to an almost one-year low. Prices paid for materials and other inputs rose, this after the start of the war with Iran. Companies passed on higher costs to their customers, with the survey showing the steepest rise in selling prices in more than 3.5 years. Headcount in March also contracted for the first time in a year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris. We'll have more on the markets coming up in about 15 minutes' time as we keep tabs on the Tuesday trade. Thanks for joining us for the Tuesday edition of Balance of Power on Bloomberg Radio, streaming live every day on YouTube. Search Bloomberg Business News Live. Unless you're already watching us on Bloomberg Originals, we'll save a seat for you in the studio here every day. With our eyes on peak bloom here in Washington. I've got a lot of bad stuff to talk about. I come packing every day with it, but just days from now, peak bloom will be upon us. The National Park Service says the trees are still holding at stage 5. Puffy white, they call it. Peak bloom could arrive in the next day or two. We're talking about, of course, the cherry blossoms here in the nation's capital. It's a great time to be in D.C. every year, even if the news brings dark clouds over both ends of Pennsylvania Avenue. We're going to start here with Iran. We've got news on DHS as well. We could be on the verge. Maybe that's a bit of a piece of good news as well, of reopening of DHS, depending on how things go. Before this day is over, there will be a new Secretary of Homeland Security in Mark Wayne Mullen. And we might just bring you to the White House about an hour and a half from now for the swearing in. As far as Iran is going, not a lot has changed since we spoke last, when the president kind of tipped the whole narrative upside down with his claim of negotiations, intense diplomacy, and progress. Sent the markets higher yesterday until Iran, of course, said, well, there are no negotiations going on. And then we tempered our gains, and the oil prices that were falling came off their lows. Not a lot has changed since then. There's been some reports of back channels. The president says Jared Kushner and Steve Witkoff are in talks. It's not entirely clear with whom. That's why we called Ian Marlowe to spend some time with us. The president, before we talked to Ian, bringing us up to date when he spoke to troops yesterday in Memphis, Tennessee. Listen.
I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us. And I would say at the end of this period, I think it could very well end up being a very good deal for everybody. As good as if we went all the way and just literally annihilated the place, which if we don't have to do that, that would be a good thing.
Well, that, I guess, would be a good thing. As Iran continues the fighting, launching overnight missile and drone attacks on the several Israeli cities, including Tel Aviv, as well as U.S. bases in the Middle East. Ian Marlowe covers diplomacy, as I try to remind everybody when he joins us here on the program. It's just been a little bit difficult to find the diplomacy to cover. Bloomberg national security reporter. Ian, great to see you back. I don't know what you make of these talks that are underway, if we can call them negotiations. There's certainly been nothing formal announced between the two sides, and we're really still just going on what the president said yesterday, right? How do you describe this moment?
Yeah, I mean, from the very beginning, you've seen lots of different statements from U.S. officials that have moved markets in particular directions. At the moment, there's a real desire to move markets in a particular direction, oil prices in a particular direction. It's not clear exactly what kind of talks we're talking about, at what stage these talks are at, whether they involve any of the things that were discussed in the previous talks, which ended in war. You can see from Iran's side that if they were engaging in talks with a lot of the leadership decapitated, instability at home, you might not want to admit that you're talking with the enemy while you're trying to motivate troops to continue fighting. So it's not clear exactly where we are. It's clear that the U.S. would like energy prices to go lower, would like, equity markets to go higher. Some of the statements we saw on Monday before the market opened pushed things in those directions. Iran has an interest in saying perhaps that these talks are not happening, but it's unclear. Pakistan has come forward and said they're happy to mediate talks. We don't know necessarily what that means. Pakistan has been trying to cozy up to Trump, since he returned to the White House, so it's not clear if there's some of that involved there. But at the moment, we see that Israel continues the war, and there's comments from Israeli officials sort of suggesting take what Trump is saying with a grain of salt. They have a domestic audience of their own. It's less about energy prices there and more about Iran as an existential threat. And so that looks like it's continuing. So we're in a strange sort of gray area right now.
Impossible to define. To your point, Israeli officials say the country will persist with its campaign. The defense minister, Katz, saying the campaign would continue, quote, at full intensity. We've had a couple of headlines pop while you were just speaking, Ian. First of all, the USS Nimitz aircraft carrier and the destroyer Gridley are deploying to the Southcom area, according to the Pentagon. And we've got another headline here. The 82nd Airborne Division commander ordered to deploy to the Middle East. That according to Fox News. How do you put these headlines together, realizing the president's still trying to apply pressure, presumably at a negotiating table?
Yeah, I mean, so it's interesting here. I mean, obviously, Southcom is Cuba, and there's been lots of talk there about there's both the Venezuela oil embargo, blockade effective. Those operations are still ongoing, as far as we're all aware. And there's obviously been a lot of talk about Cuba being next from Trump himself. that they'd like to see that regime fall in Havana. So the other thing is that everyone has been on edge about troops moving to the Middle East. We know that there's been some Marine expeditionary units heading there as well. That's just raising the idea of, is the U.S. going to try and seize Karg Island, this sort of key Iranian oil export hub off the coast? That's something that would be extremely risky. That freaks markets out in the sense that you then, it's just tit for tat escalation all over the place. If the U.S. moves in, that's something that's key to Iranian revenues. Iran has a stake in, we have some reporting out today suggesting that, from quoting an Iranian official saying, if they try to seize Karg, we're going to bomb it. Wow. And you can imagine what that would do in terms of U.S. escalation.
That's your $200 a barrel oil, right?
Exactly.
So let's just pick through these. 82nd Airborne, I get there had been reports that this might take place, and we know that we've got Marines on the way as well. Whether they are going to be used at a place like Karg Island or along the Strait, we'll have to find out. If we're sending a carrier strike group to Southcom now, there has been a question about whether the president would make a move in Cuba like we saw in Venezuela while this operation is underway in Iran. Does this say yes?
It's he likes to keep his options on the table, as everyone is saying.
To what extent would that stretch resources? Can we pull that off?
Yeah, I mean, one of the things, actually, one of the interesting things, and we just put a piece out on this today, is the Ford, the Gerald Ford, the aircraft carrier. It's the most expensive warship ever built.
Yes.
It was in Southcom, off the coast of Venezuela, and then it was ordered to deploy to the Middle East, which, as some viewers and listeners may be aware, it then had a pretty serious fire in its laundry area, and then had to leave the theater, go to Crete and where it arrived yesterday to get repairs and resupply. And that's there's been some criticism that sort of extended deployment, that reliance on very literal gunboat diplomacy, putting a ship off the coast and saying, do what we want or we will attack you.
Literal gunboat diplomacy.
They're now trying to do it again.
Apparently, for like 650 toilets were malfunctioning on board.
It doesn't sound like
that's tough.
Yeah.
They need to get back to Norfolk to update the boat.
Yeah.
A tanker carrying diesel, believed to be bound for Cuba. People have been watching this thing make its way closer, has updated its destination to a port in Venezuela. Obviously, this is all in the same region that we're talking about here, and the president has essentially employed an embargo here around Cuba. Do we know this is a Russian flagged tanker? What happens to it?
Yeah, I mean, they've been chasing Russian tankers en route to Venezuela or leaving Venezuela. That was the main thing that we were seeing that was spooking oil markets before the Iran war. It's kind of a reminder that the U.S. is doing some things down in Venezuela that we're not paying close attention to anymore. I mean, Chris Wright was there. Other U.S. officials have been. I believe Ratcliffe went. You can't necessarily start something and then move on quickly, as Trump wants to do, without deploying resources again and again. And I think we're sort of seeing that. What's happened to the Ford, seeing these different ground troop units, head out to the Middle East. It's expensive. It's a strain on U.S. resources, and all these things have costs. Yeah. And I think some of the previous operations that we've seen from the U.S., one-off bombings in Nigeria, elsewhere, this is not that anymore. Venezuela, Iran, very different.
Still waiting for that supplemental budget request to find out exactly how expensive it is. Ian, thank you so much. Ian Marlowe with us live from Washington as we add another log on the fire here and another carrier group on the move, apparently headed for Southcom waters, and we'll keep tabs on that. Jim Kessler's up next on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Fighting between the U.S.-Israeli alliance and Iran continues, even as President Trump claims talks are underway to end the conflict. Iran started charging transit fees on some commercial vessels passing through the Strait of Hormuz. That's another sign of Tehran's control over the world's most important maritime energy channel. Oil prices rose, stocks giving back some gains. WTI topping $92 a barrel. Now Brent topping $104 a barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 pretty much flat. NASDAQ down 0.3%. The Dow is up 0.25%. The 10-year Treasury yield at 4.37% and the 2-year yield at 3.89%. Bitcoin is now just about 1.5% lower, now less than $70,000. Spot gold was set for a 10th straight day of losses. At the moment, it's about 0.25% higher. Alternative asset managers fell as Apollo Global Management and Ares Management became the latest firms to curb withdrawals from some of their private credit funds. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
Amy Morris, thank you so much. We'll have more on the markets with Amy in about 20 minutes as we round the bend here in hour one of Balance of Power. It's the Tuesday edition. Thank you for being with us. I'm Joe Matthew in Washington, where we will soon have a new Secretary of Homeland Security. About an hour from now, at least reads the schedule, Senator Mark Wayne Mullen will become Secretary Mullen in a swearing-in at the White House. They cleared the nomination last evening in the Senate. Not that it should come as a huge surprise here. 54-45, the confirmation vote. This is said to be a dear friend of the president. He said they talk more as friends than they do as, well, co-workers. And this could unlock a new age in the Department of Homeland Security. Some Democrats are skeptical, but there is real talk of a deal today that feels different than it did even 24 hours ago, with a flurry of folks. Everyone noticed Katie Britt running down the driveway of the White House. Then she's on the floor of the Senate here, trying to manage both sides on what could, in fact, be a deal that you heard us talk about weeks ago. None of this would have been necessary on, what is this, day 38, I think, of the shutdown? Remember, I think it was Rosa DeLauro wrote the first piece of legislation that would carve out ICE from the rest of DHS, knowing ICE has lots of money for years from the big, beautiful bill. So you fund FEMA, you fund the TSA, the guys who are about to miss their second paycheck, and the Coast Guard, and everyone is happy, at least for a minute. But the answer was no, not only from some Republicans on Capitol Hill and even a couple of Democrats we spoke to, but the president was not on board with that idea. John Thune brought it to him just as recently as Sunday. The answer was no. He wanted to tie Homeland Security to voter ID, as a matter of fact, the Save America Act. He talked about it yesterday in Memphis, remember?
So I'm tying Homeland Security into voter identification with picture and proof of citizenship in order to vote. And those two items are the most important thing having to do with Homeland Security. So it should be part of the Homeland Security bill. And I'm requesting that the Republican senators do that immediately. You don't have to take a fast vote. Don't worry about Easter going home. In fact, make this one for Jesus, okay? Make this one for Jesus. That's what I tell them. That would be a damn good thing.
Well, no need to call Jesus. Katie Britt took care of it, it turns out. I don't know what they talked about in the Oval Office, but the president agreed following the meeting to back off that pledge. The idea didn't even last 24 hours on the condition that the SAVE Act be tied. What they're going to do, however, is it's going to come back around in a reconciliation bill. And we're going to talk about how this works with Jim Kessler here. And I'm glad to say that Jim is packing some news. The executive vice president for policy at Third Way has conducted an exhaustive survey on the midterms, and we're going to talk strategy as well. But Jim, welcome back. It's great to see you. You spent many years working with Chuck Schumer, and he appears to be on the verge of a breakthrough here with Republicans in his chamber and the president. How do you see this ending?
It looks like a huge victory for Schumer, for Rosa DeLauro, for mainstream Democrats. This is what they called for 6-7 weeks ago. With some minor alterations, this looks like what the deal is going to be. We're going to split off, the parts of Homeland Security and customs enforcement, border enforcement from the rest of the bill, everything else is going to get funded. So big win for the Democrats.
Have you seen something like that happen where they split a funding bill, splinter a funding bill to please one side or the other politically here, let the other? I mean, this is kind of an interesting maneuver.
I don't know if I've ever seen this before.
That says something.
Look, everyone says like we're in unprecedented times.
Yeah,
so,
here we are.
Like, we're in unprecedented times. That's what's happening.
So the government's funded presumably then for the rest of the year, right? ICE has money for several years.
Right.
What will Mark Wayne Mullen mean at the head of this agency, if anything? The demasking was not accomplished. I don't know where we are with judicial warrants, for instance, and all that still needs to be hammered out.
Right. So look, I think Democrats wanted a couple of things. One is to split off the funding here.
Yep.
The other is they wanted to get rid of Kristi Noem, who was unqualified, media addicted, tried to please the boss, like should not have had the job. Who knows how well Senator Mullen's going to be, but it is a departure. It is going to be presumably a more professional running of Department of Homeland Security. I do believe there is some desire among the administration and Republicans to tame ICE. They don't want to admit it too loudly, but this issue has rebounded poorly for them in the last 6 months.
I wonder if the next couple of weeks or days at airports might change the way people view ICE with no masks and apparently getting along fairly well with people, with some exceptions. Everybody wants to get out of here in time for recess, I realize, so they're kind of fast walking this potentially right now. But what about the parliamentarian? How do you take portions of the SAVE Act and put that in a reconciliation bill and get that through the parliamentarian? Is that possible?
I don't think it's possible. Now, somebody, just like lawyers can argue on all sides, somebody is going to draft up legislation on the Republican side and make the argument to the parliamentarian that this is principally a revenue matter, not a policy matter. And for those not familiar, reconciliation is a special procedure in the Senate that allows you to avoid a filibuster in rare occasions when it is a purely
budgetary matter,
budgetary revenue, revenue associated, legislation. So they've got to go through budget resolution first, take it through the budget committee, instructions to committees, and then put this on, and then it has to clear the parliamentarian. I don't see how that gets done.
So it'll end up being something under the guise of funding for states to enact voter ID policy or something like that. If that'll be the swing.
Even that
we'll see.
May not work because that sounds like an appropriation, not mandatory spending, which is really where reconciliation comes in.
All right, keep this in mind. Just pack that away. We're not there yet. I want to talk about this important poll that you conducted at Third Way. That you were kind to bring to us here. You guys worked with a global strategy group. It was an online survey, 1,400 registered voters back in February, and this is not the first swing that you've made with this group, right? Who say they are likely to vote in a Democratic presidential primary. So it brings us to the headline here. The truth about Democratic primary voters. And you can't find the truth without first identifying who they are. And you went to great lengths to tell us who Democratic primary voters are. What did you learn?
Yeah, so these are voters that say they're going to vote in a Democratic primary. They're taking from, voter lists as well. What we learned is Democratic primary voters are not nearly as progressive as the media, certainly online media, portrays them. Yeah. They are looking for a Democrat, to elect a Democrat who is a fighter, but more a fighter for reform, more of a fighter in the moderate lane than the progressive lane. And their number one issue, frankly, is electability. They want to be able to, they're so concerned about Trump, they're concerned about Republicans in Congress. They want someone who can win over someone that, let's say, they agree with every checklist item on the policy list.
I was fascinated by this dichotomy of fights for or fights against. People want a fighter. You established that. But there are, depending on where you fall on the spectrum here of Democrat, it depends where you're going to fall on this particular issue. For moderates, you're going to be a fighter for. And we always hear people come on the program, well, you can't just run against Trump. Well, a lot of people want to. Progressives and even socialists, as you find, want someone who's going to fight against a certain issue, person, or thing. How does that shake out when you're managing a campaign?
Right. So when we ask people to sort of identify where they are ideologically, among Democratic primary voters, about 16% say I'm either a progressive or socialist. About 40% say I'm a moderate, another 30-some% say that I'm a liberal, and they fall kind of in between. But so there's a 2-to-1 margin of moderates over progressives and socialists, and the moderates want someone like fight for an economy that is going to work for me, fight for affordability, fight for schools that teach, fight for government that is accountable, fight for a balanced approach at the border, with strong border and humane interior policy on immigration. On the progressive side, a lot of it is like take on Trump, take on Republicans, fighting for certain things like democracy, and moderates are concerned about democracy, but it's far lower on the list. So there's a, dare I say, more fight for the optimistic side of politics among the moderates.
So this is interesting that we're having this conversation. You and your colleagues at Third Way are known for being dangerously centrist, right? In Washington, that upsets some people. And you're seeing this sort of bias in media coverage and the assumptions that we make that, well, progressives and left-leaning Democrats are going to be more likely to vote in primaries, just like, hard right voters are going to, that's the base. MAGA is going to show up at the primary. You clearly feel like this is a narrative that needs to be corrected.
It does. And look, when you get to the general election, both parties have a different dynamic. For a Democrat to win in a typical swing district or state, at a minimum, that Democrat needs to win 60, more likely 65% of the self-identified moderate vote. Republicans only need to win 40, even some like 38% of the moderate vote to win their races. So Democrats need to appeal more to the center to win in the general electorate. But it also means in the primary electorate, our primary electorate is much more dominated by moderates than progressives and socialists, certainly, but those moderates are not online. They don't post on social media. 53% of moderate Democratic primary voters never post online about politics.
How about
never. That? So they don't want to be part of that crazy debate out there about whether Bad Bunny is good for America or bad for America.
I hope they're still listening. And I'm really taken by the conclusion, this whole poll, to what you say. This is what commentators and candidates alike should be reminded of. Twitter is not real life. Primary voters are pragmatic. They don't want their nominee to go so far left, you say, in a primary that they cannot win against MAGA in the general. Twitter is not real life. Put that on your tombstone, maybe, Jim Kessler.
Absolutely, because I have a Twitter addiction problem
you
myself.
Do?
Oh, I'm on all the time.
But you have to tell campaigns this, right?
Absolutely.
Stay off Twitter.
And it's very hard because you can raise money on Twitter, too.
But that's for sure. Yeah. My God. It's great to share this with us, and when you learn more, come back and see us. Jim Kessler at Third Way, of course, the Democratic strategist you normally see in our panels, with us one-on-one with some important information. We will assemble our political panel next, right here on Balance of Power on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Chevron plans to buy some of the first shipments of crude from Sable Offshore's platforms off the coast of Santa Barbara. They'll start with 20,000 barrels a day and run it at the company's Los Angeles fuel-making plant in April. Shell CEO Wael Sawan says they're watching the disrupted energy flows in Europe and Asia caused by the war in Iran, and they're trying to find a workaround.
What we are focused on at the moment is how to work in what are increasingly clogged arteries of energy supply to make sure that not just crude, not just LNG, but the products that the world needs are delivered.
Shell CEO Wael Sawan spoke to Bloomberg at the CERAWeek conference in Houston. WTI now topping $92 a barrel and Brent crude topping $104 per barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 down 0.2%, NASDAQ down 0.7%, and the Dow is little changed on the upside. 10-year Treasury yield at 4.38%, the 2-year yield at 3.89%. Bitcoin little less than Bitcoin now more than 2% lower, now less than $69,000. Growth in U.S. business activity slowed in March to an almost one-year low. Prices paid for materials and other inputs rose after the start of the war with Iran. Companies passed on those higher costs to customers, with the survey showing the steepest rise in selling prices in more than 3.5 years. Headcount in March also contracted for the first time in a year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy, thanks so much. We'll have more on the markets with Amy Morris coming up at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the conversation. Thank you for being with us already on the Tuesday edition of Balance of Power. We've got a quick update on the story involving the Pentagon press. Remember yesterday we talked right around this time with Tony Capaccio about the court ruling that overturned the Pentagon policy that turned the screws on reporters and, well, the court said in an unconstitutional way, that violated their First Amendment rights, forced them all out of the building. And the court said, no, we're not going to stand by. This was a suit brought by the New York Times. And of course, we knew that the Department of Defense was going to appeal. But at some point, it seemed like Tony Capaccio was going to get back in the building, have a badge, get the desk again, get the terminal back in there, start reporting along the corridor. The Defense Department now says it's taken a whole new approach. In light of this ruling, which they will appeal, they've tweaked the policy, and they're kicking everyone out of the building. The workspace that has been used for years, for decades, by journalists will be shut down, and a new area for the press will be set up, according to the Washington Post, in an annex. You don't want to be in an annex, ever. Outside the main Pentagon building. So they're building an outhouse for the press on the other side of the Potomac. We'll see where this goes as they appeal the ruling. Big stuff happening at the White House about 45 minutes away. You're going to get a new Secretary of Homeland Security. Senator Mark Wayne Mullen got the vote last evening. Did pretty well. 54 to 45 confirmed the president will swear him in at 1:30 p.m. Eastern Time. There are big questions, though, about what will happen to the department that he is going to be running. Remembering, it's still closed. And members of the TSA who work, of course, for DHS are now coming up on their second missed paycheck. There is news of a deal in the works, though. We were just talking about it with Jim Kessler, and we're going to play it to the panel. Because remember, the president decided he wanted to tie the Save America Act, voter ID, to the Homeland Security funding bill. He wanted to do a lot of things with the SAVE Act that John Thune said they simply did not have the votes for. And it's something that we spoke about last evening with Senator Mike Rounds. Of course, this is a senior Republican in the Senate with his view here on DHS and the prospect of that working out. Here's what he told us.
The president continues to lobby as hard as he can and to tell the American people that it's always important that our elections be free and fair, and that the only people that should vote in them are Americans. And Senator Thune is correct when he says that we simply don't have the votes in the United States Senate today. We're going to do the best we can to get at least in front of the American people clear evidence that our Democrat colleagues simply at this stage of the game are not in support of the voter IDs that the vast majority of states already agree on right now today.
And so they have been decoupled. Important as Katie Britt, the Republican from Alabama, apparently leading the charge here on negotiations back and forth, the White House, the Senate. President Trump agreed in the meeting to back off his demand to link the bills. Further, there is an agreement. You're going to laugh when I say this if you've been listening to this show at all for the last couple of months. To carve out ICE funding. They're going to pass everything else. Would restore funding for all of DHS except for the arm of Immigration and Customs Enforcement that carries out arrests and deportations. So we could have avoided, once again, this entire thing because that had been proposed weeks and months ago. Let's assemble the panel and get their take. They're probably both shaking their heads. Republican strategist Maura Gillespie is with us, BlueStack Strategies founder and Bloomberg Politics contributor and Democratic analyst Jeannie Shanzano, democracy visiting fellow at Harvard Kennedy School's Ash Center. I don't know what to say here, guys, but this sure seemed to be avoidable. And if you're a TSA agent who's been driving Uber at night to pay, for your rent or whatever the situation is, it's kind of outrageous. Jeannie, Rosa DeLauro, a Democrat, wrote this bill 2 months ago. How come they didn't pass it?
Joe, am I to believe that Donald Trump is capitulating? He's tacoing now on this. I have to hear him say it and admit it to believe it. But because just yesterday he was so committed to the fact that the SAVE Act had to be coupled with this DHS funding. So I really am holding my breath and my reaction until we hear it directly from the horse's mouth, as it were. But yeah, apparently this could have all been avoided. And, Donald Trump had said, even as recently as a few hours ago, that you needed to pass the SAVE Act, that Democrats needed to pass it rather, and that he was going to essentially own this shutdown. I'm not sure what happened since then that he's decided he doesn't need to own it. Maybe some pressure from Britt and Thune, although I find that hard to believe. So I'm in a wait and see sort of mood, Joe, on how this pans out. But yes, apparently all could have been avoided.
Well, so the idea here, I guess I should have dropped the punchline on this. There's more to the plan, Maura. They would actually pay for, I guess, the rest of DHS and get the Save America stuff on board and to become law by putting it in a reconciliation bill. But the Save America Act doesn't have anything to do with reconciliation, does it? Will the president find himself wanting at the end of this game?
I think partially, yes. To answer your question directly, yes, I think so. Because, yes, the argument that the Republicans are making regarding the voter ID, most Americans agree that voter ID is a, pretty something that we use for a lot of things, right? We have to show ID for a lot of things in this country, and so showing your ID to vote seems pretty common sense. The problem is the additives that are in this bill. The Save America Act is not just voter ID, and I think that's what's been misleading to most people. It creates burdens not just on Democrats, but on Republicans as well, and so it actually would end up hurting Republicans' ability to be able to vote because a lot of Republican majority states use mail-in ballots and mail-in voting. And so that's just one example of the things that would be problematic. So I do think the president, looking ahead, he needs to get out of the situation that he has more or less made upon himself by putting these demands around what Congress can do and what bills he will sign. And so Jeannie, I understand her wanting to be hesitant here, but I do believe the president is capitulating because of the backlash of what we're seeing play out at airports across the country. But also when you have these TSA agents saying next to ICE agents who are funded more or less through the same mechanism, but TSA agents are not getting paid right now because of the boon in immigration enforcement that came last year through tax cuts that the president's able to pay ICE agents and not TSA agents. It feels very much directly related to what Trump is deciding is important and what's not important. And that becomes problematic for voters.
All right, so we got two tacos, it sounds like. Two Taco Tuesdays in Maura and Jeannie. Just quickly, Maura, you worked for a Speaker of the House in John Boehner. Do you think the HS is about to reopen?
I think it needs to. I think that people are calling Republicans and Democrats and saying, enough, I don't care whose fault it is, fix this problem.
Okay. I want to ask you about the new secretary because in the next hour, Jeannie, it will be Secretary Mark Wayne Mullen, who in his confirmation hearing described his relationship with the president to be friends first. He said, we speak usually as friends. And I know the president went out of his way to help Mullen's family over the years. They have a long relationship. What is this going to mean to have, well, I guess the former senator from Oklahoma at the helm?
Well, I think for members of Congress who voted for him, including 2 Democrats, I think they're hoping to put behind them what has been a very chaotic and at least by the way it's been presented in the press, an inhumane treatment of many people, both in and out of DHS, under Kristi Noem and Corey Lewandowski. Corey Lewandowski, who in the last just few days has been the subject of enormous investigative journalism uncovering what is purported to be bribes. And we know the House Oversight Dems have launched an investigation into that. So chaos was reigning at DHS. It's a critically important, obviously, area for Donald Trump politically and for all of us as Americans. So I think that's the hope that, and we should say Markwayne Mullin during his confirmation hearing said he was open to and in fact negotiating prior to being named about issues like the judicial warrants, being more open to that kind of thing. So, you know, Heinrich, who voted for him and is also a friend of his, said those were some of the reasons that he voted for him as a Democrat. But I think we have to take a wait and see attitude. For my money, I think the most important questioning he got during the hearing was from Melissa Slotkin, who said, are you going to allow ICE agents to go into polling booths in November? Are you going to allow them at our polling sites? As we have now seen ICE agents in places they shouldn't be, like airports. This is an enormous concern, and I don't think we got a real clear answer to that. So those are the kinds of things I think we have to take a wait and see attitude. And Joe, I have to say on the SAVE Act, finally, that the president, as part of the SAVE Act, has been trying to end mail-in ballots. Well, Joe and Maura, guess who just voted by mail-in ballot in Palm Beach?
I noticed that.
Day? The President of the United States. So what's good for the goose should be good for the rest of us, but apparently not. Pesky
facts that you point out here, Jeannie. Maura, what do you think about this this MMA fighter, millionaire, former plumber turned senator becoming the Secretary of Homeland Security? Is he going to bring the leadership that some people say is an agency in disarray needs right now?
Well, I think for Donald Trump, you know, it's probably an idea of his mind of central casting, and it's something that he likes to have, this vision of strength. He likes to have that around him, especially right now. You're watching that. The president really loves to have this idea of power and strength. And so for him, that's right there is Markwayne Mullin. And so, but I think for people who work within and around the DHS, they're probably hoping that it's a calm and not the scandal-ridden DHS under Kristi Noem and Corey Lewandowski. And, you know, I would lump in Stephen Miller in that department as well. He's been relatively quiet, and I think there's a reason for that. I think that there is hopes there that the administration to gain back control over DHS in a more, you know, not as heavy-handed as Kristi Noem was trying to do, but in a more streamlined process. And I think between Tom Homan and Markwayne Mullin, that's probably the hope there.
You know, it turns out Gregory Bovino is not a big fan of Tom Homan, Jeannie. The profile today in the New York Times, Bovino's final days, harsh words and few regrets. He mocked Homan, the administration's border czar, referencing accusations. You remember the $50,000 in the bag? You're not going to see me talking to anyone for a bag of money, he said. Some of the quotes are really something. I wish I'd caught even more illegal aliens, he said. I mean, we went as hard as we could, but there's always a creative and innovative solution to catching even more. Jeannie, that's the kind of public relations battle that the incoming secretary is going to have to fight here, right, in our remaining moment. What does he do about it?
He absolutely is. I think he should say good riddance to Bovino with his jacket that we all remain. Tom Homan has at least been able to introduce some more civility in Minneapolis, and hopefully that continues elsewhere. And I do think that we're going to see Mullin try to just lean on Homan, say goodbye to Bovino, and push back on Miller, to Maura's point, as much as he can. At least that's my hope. But again, the question is, does he allow ICE agents in other areas of our lives?
Well, we're going to find out here in about a half hour. He'll be sworn in as the secretary. Our panel's going to stick with us as we witness this in our second hour on Balance of Power. Jeannie Shanzano and Maura Gillespie, many thanks for the insights. They'll have a lot more as Kaylee Lyons joins us and our global television audience, all moments away here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Strikes continue on day 25 of the war with Iran. Welcome to the Tuesday edition as the market waits for progress on negotiations the president says are underway. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, both sides still fighting here more than 24 hours after the president said that we were engaged in talks.
Yeah, perhaps engaging in talks, at least if the U.S. is trying to, does not mean that anything militarily is slowing down, as Israel is also saying that strikes are continuing at full intensity, and clearly a number of Gulf states were on the receiving end of missiles and drones from Iran today as well. So nothing is slowing down at all. And as for those talks, of course, Iran has denied any direct talks between Tehran and Washington. Maybe intermediaries are what are in play here, though, Joe, as Pakistan is now directly offering to host conversations between the two sides.
Making us wonder how formal these talks might be if there is actually no host yet. We know that Steve Witkoff and Jared Kushner's names have been invoked, but we don't know exactly this moment who they're talking to. And it's been a full day since this was revealed by the president. He did spend some time in front of cameras and microphones yesterday, Kaylee, but we still don't have names, times, or places.
Yeah, there's a lot of unanswered questions. Now, the president will be spending some time in front of a microphone later this hour. 1:30 p.m. Eastern time is when he's expected to attend the swearing-in ceremony for the new Homeland Security Secretary, Markwayne Mullin. So while that primarily will be focused on his role incoming at DHS, I'm sure the president may take the opportunity to answer a question or two about this conflict.
Yeah, we'll sneak inside the Oval Office for that event, assuming it happens on time. That's about a half hour away, and it'll bring us to our conversation later this hour about the potential for the Department of Homeland Security to be reopened, Kaylee. There's talk of a deal at hand, I guess, on both sides of the Atlantic today.
Indeed, deal-making at home and abroad. But while we await our conversations on both of those potential deals, we also need to check on financial markets as they're working their way through these headlines as well. So for a check, we turn to Amy Morris, who's here with us in Washington. Hey, Amy.
Hey, Kaylee, this is just now crossing the Bloomberg terminal. ARM Holdings will begin selling its own chips called AGI CPUs. It's for the first time, aiming to claim a bigger piece of the massive spending on AI gear. The AGI CPU will have as many as 136 cores and draw 300 watts of electricity. It will be produced by TSMC with Meta Platforms as its first major customer. ARM shares are less than 1% higher. They're calling it the Tehran toll booth. Iran is allowing vessels to pass through the Strait of Hormuz if they pay up to $2 million. Sources tell Bloomberg the payments have been handled quietly. The lack of transparency and uncertainty over who might be targeted next is adding a fresh layer of friction to the shipping lane. Stocks fluctuated, oil rose, traders grappling with a range of possible outcomes for the war in the Middle East, with President Trump claiming talks are underway to end the conflict. We check those markets for you all day long here at Bloomberg. The S&P 500 is little changed on the downside. NASDAQ down about 0.5%. The Dow up about 0.1%. 10-year Treasury yield at 4.39% and the 2-year yield at 3.92%. WTI now topping $92 per barrel, approaching $93 per barrel, and Brent crude now topping $104 per barrel. Ares Management and Apollo Global Management limited withdrawals from their funds to 5% of shares after clients sought to redeem a larger percentage. This suggests that investors are starting to get anxious about a liquidity squeeze in the private credit market. Limiting redemptions could increase negative sentiment and constrain liquidity further for the fund. That would make it harder to underwrite new loans. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris here with us in Washington. Thank you so much. Here in Washington, of course, we're waiting to hear from President Trump later this hour, as in the Oval Office, he is expected to swear in the new Homeland Security Secretary, Markwayne Mullin, after his confirmation in the Senate last night. But that does present an opportunity as well for President Trump to provide any update, if there is one, on negotiations with Iran to potentially end the conflict and reopen the Strait of Hormuz, knowing the president has extended a deadline that was supposed to expire last night to Friday, the expiration of a 5-day period before he would consider targeting Iranian energy infrastructure. But the president contends that he wants to make a deal and that Iran wants to make a deal, as he emphasized when speaking in Memphis yesterday.
I think there's a very good chance we're going to end up in a deal. And so we're giving it 5 days, and then we're going to see where that takes us. And I would say at the end of this period, I think it could very well end up being a very good deal for everybody, as good as if we went all the way and just literally annihilated the place, which if we don't have to do that, that would be a good thing.
That was right at this time yesterday when the president was speaking in Memphis. And as Kaylee indicated, not much has been learned since about the negotiating process that he says is underway, and fighting continues. with Israel now suggesting that it does not plan to pull back in its campaign, still running at full intensity. Michelle Jamrisco joins us from our Washington bureau with the latest, Bloomberg White House and national security editor. Michelle, I know the president could add some color to this in the next hour here when he addresses reporters in the Oval Office for the swearing in of soon-to-be Secretary Mark Wayne Mullen. But are we learning anything through Bloomberg's reporting or elsewhere about the veracity or the status of these talks?
Well, there are a lot of questions, Joe, about who is involved in the talks still. We had those questions yesterday, but as you say, there are some details trickling in, at least some rumors of folks that are being spoken with. Certainly, Pakistan is one that has come forward and said, yes, we would be eager, we would be honored, in the Prime Minister's words there, to host immediate mediation talks. Iran still giving signals that it is not on board, at least from certain parts of the government, of the regime right now. We had the Iranian parliament speaker and the deputy speaker both saying they are not and will not be involved in talks. So there is a certain line coming from the Iranian regime that they are not willing to negotiate at this point, but also some behind the scenes perhaps posturing, as certainly claimed by Trump, that his diplomatic duo of Witkoff and Kushner are trying to get inroads with some Iranians, and they wouldn't identify who, of course, because as they say, those people could be under threat from within if they are seen to be negotiating on the side with the U.S. So a lot of questions still. Other countries trying to get involved, jockeying for some sway in either ending the conflict or moving it forward in a different manner. So we've heard about Saudi Arabia, as the New York Times has reported today, maybe pushing to continue the conflict in order to help remake the region, as they put it, inciting some U.S. people familiar with negotiations. But we just don't know yet. And so it'll be good to have the president weigh in and say whether or not he's having these talks. But of course, we're not taking anything at face value from any side at this point, which everybody has their own motive here to claim or to not claim the talks are ongoing.
Well, Michelle, as we are having this conversation, we're getting some fresh reporting out from the Wall Street Journal. In fact, this is in keeping with what Fox had reported earlier, but the U.S. is ordering 3,082nd Airborne soldiers to the Middle East, according to the Journal, also planning to deploy brigade combat team to support Iran operations. Though the Wall Street Journal has also reported that while this order to deploy the unit is expected to come in the coming hours, the decision to put boots on the ground in Iran has not yet been made. But when we consider the deployment of more soldiers, of more assets to the Middle East, knowing as well that there's 2,000 Marines coming from Japan that are expected to arrive on Friday, right around the expiration of the president's new 5-day deadline for Iran, Michelle, how should we be reading into that?
Yeah, well, that's another hot area, Kaylee, that we're looking at is what do you do with these additional troops that are coming into the region? We do know, as you mentioned, that MEU from Japan on its way should arrive in a couple days, and certainly a lot of firepower within that unit of more than 2,000 troops. But how and whether they will be used is still up for grabs. And in addition, we are hearing the same rumors as you mentioned about perhaps the 82nd Airborne, other units that may have to support if there is a potential ground invasion of any kind or takeover of Karg Island, as has been rumored. Those types of operations certainly would need a lot of different units, which, as the president probably would say, he's keeping options open. He's not promising anything one way or the other, and he won't tell reporters, first off, whether or not they would do such a thing. But, one thing I do want to remind everyone is in his 5-day reprieve, if you will, of attacks, he was very careful to say this is only for energy sites. So we could see we can't rule out any possibility of further kinetic action on the U.S.'s part in the region, not associated with energy sites. And even after that 5-day period ends, all options are on the table as they are right now.
All right. Bloomberg's Michelle Jamrisco covering the White House and national security for us. Thank you so much. I would note as well that we are seeing some escalating market action, specifically in the bond market. The 2-year yield, the 5-year yield, both up about 10 basis points on the day. And part of that may actually be, Joe, because of the weaker than expected 2-year auction, the drawing 3.936% compared to the 3.918 pre-sale when issued yield. That's the highest auction stop actually since May. So that may be what's going on on in the markets, though certainly the bond market and the oil market have been having to contend with these varying headlines coming from the Middle East as to whether or not there is going to be progress in stopping something that could be an inflationary supply shock.
Yeah, there's some obviously turn south here in terms of stocks reaching to their lowest levels of the day. Not that it's a big sell-off, Kaylee. We just seem to get back to the bottom here. Gold turned negative, gave up an early lead. The VIX back above 27, so we're not feeling too great today as we wait for more news from Iran.
Yeah, this market may not be that confident in the prospect of a diplomatic off-ramp here, but let's see if our next guest is or not. Ambassador Daniel Fried is with us. He is now a distinguished fellow at the Atlantic Council and former U.S. ambassador to Poland, as well as Assistant Secretary of State for Europe, and he's here with us in our Washington, D.C. studio. Ambassador, welcome back to Bloomberg TV and radio. You obviously have vast experience in diplomacy. Are you feeling optimistic about the chance diplomacy prevails in this conflict in particular?
Optimistic, no, though there is a chance. I don't think that U.S.-Iranian discussions are advanced. I think the president was exaggerating, but there is a chance that we will negotiate something with Iran. But ask yourself, what then? If this war becomes about opening the Strait of Hormuz, we've already lost, because the Strait of Hormuz is only closed because we started the war. We started the war for the purpose of regime change or obliterating Iran's military, and we have not succeeded in doing that. So the president is improvising, which is another way of saying making it up. Starting a war is to enter a dark cave. You never know what you're going to find. We're still in that cave.
Wow. Well, as we improvise our way through this conversation, then I recall yesterday the president suggesting that part of a deal would include the handing over of the highly enriched uranium that has, well, gone missing, according to some, since the strikes last summer. Would that be an aim that you could coalesce around, separate from the Strait, to your point? That's something that we may have provoked. How about getting our hands on that uranium? Is that a goal for talks?
It's a perfectly good goal. I hope we get it. The trouble is, suppose we don't. The Iranians may have hidden that uranium. They're not going to give it up because it's their leverage against a new U.S. attack. So, yeah, a perfectly reasonable goal. I've no sympathy, and I don't think Americans should have any sympathy toward the Iranian regime. It's an awful regime with blood on its hands, and its end would be a good thing. The question is not whether our objectives might leave us better off, but whether those objectives are achievable with the resources we've got, and that is not clear.
Well, when we consider what the U.S. is willing to do in order to achieve those objectives, again, we have fresh reporting from the Wall Street Journal about some 3,000 more troops being deployed to the Middle East, specifically 82nd Airborne soldiers, though no decision to put troops on the ground, boots on the ground, rather, has been made yet. But you are seeing oil markets reacting to this. We're back around the highs of the session, as Joe was pointing out earlier. We're back at around $105 a barrel on Brent crude specifically, knowing that oil is the lever that Iran is able to pull here. I just wonder what your expectation is, knowing as well that countries that have been more allied with Iran, if you will, China, Russia, have kind of, they have a stake in the oil game as well. And I wonder if you think those pressures are being considered by Tehran right now.
Well, the Russians have every interest in the price of oil going up. It benefits them. It puts money in their pocket. And we might have thought of that before we started the conflict with Iran. China probably wants a stable oil supply, lower prices, because it's a vast oil importer. So Russian and Chinese interests are different, but the Chinese stand to benefit from this latest Iranian offer to allow ships to go through the strait if they pay a $2 million fee. So the Russians and Chinese, for different reasons, are not going to help out the United States. The Europeans may help us out, especially if President Trump accepts their help and stops insulting them.
How about Gulf states that are now reportedly considering getting involved in this conflict? How important is it for the United States to keep that from happening?
Well, if we decide to escalate against Iran, another roll of the dice, we would probably welcome all the help we could get. And the Gulf states certainly don't like Iran. Iran has attacked them. So they're no friend. Iran has no friends in the region.
But a widening conflict doesn't make you nervous.
It all makes me concerned because I don't see where the other side is. It's not that I have sympathy for the Iranian regime. As I said, I don't. The question is whether our objectives can be met in a reasonable way that leaves us better off, and that is not clear. The war was supposed to be quick and easy. My sense of it is that the president gambled that he would attack Iran, decapitate its leadership, there would be a quick rebellion and regime change, and he would claim a glorious victory, a bigger version of what he achieved in Venezuela. Well, if that had happened, he might have bragging rights, but it didn't happen. That's the problem.
Yeah, Venezuela, perhaps this is not. To go back to your point on the role Europe may or may not play here, how do you think that calculus changes now that we know Iran may have missile capability that can reach far beyond just the Gulf states who have always had reason to be concerned? But if they can get to Diego Garcia, they can get to a number of European capitals as well.
Right. And the Europeans, after their initial hesitation to help us at all and their irritation at not being consulted are actually coalescing around a pretty reasonable position. The British organized a statement by 22 governments, including some in Asia, Japanese, Australians signed onto it, saying that they will take steps not further defined to help open the strait. And this could be the beginning of a coalition. I don't know that the Europeans are going to join with us in the war, but there are things that they could do to help. They could put pressure on Iran. They are working with us, and they have, let's say, swallowed their understandable irritation for the sake of their interests, and I think that's the right call.
Ambassador Fried, you're a career diplomat, as opposed to the two gentlemen who have been put at the table repeatedly and could be again here, Steve Witkoff and Jared Kushner, know more about real estate and investment than they do about diplomacy. What does it mean for potential outcomes when you continue to send the same two people, in one case someone who's not a government employee, instead of experts in a region with a staff that's read in?
Well, if the president trusts Steve Witkoff and Jared Kushner, that's a good reason to have them active. But they need experts, particularly on the nuclear side, and other technical experts advising them so they understand what the Iranians are saying to them. It's not bad for the president to have somebody he trusts leading sensitive negotiations. It's bad when that person doesn't have the expert advice to understand what he's being told.
Well, it's great to spend some time with you, and we appreciate your sharing your diplomatic experience. That's Daniel Fried, of course, the former Ambassador Weiser Family Distinguished Fellow at the Atlantic Council. Ambassador, we thank you so much for your help. We're going to play all of this to the panel coming up. Jeannie Shanzano is with us, Bloomberg Politics contributor and Democratic analyst, along with Republican strategist Maura Gillespie from Blue Stack Strategies. And we do have some news on a potential breakthrough with the Department of Homeland Security. A short time from now, Mark Wayne Mullen, the senator from Oklahoma, will become the Secretary of Homeland Security when he's sworn in at the White House. And it does appear that lawmakers have a deal with the White House to resume funding after some 38 days without. We'll have much more on this straight ahead here on Balance of Power, only on Bloomberg.
It's 1:21 on Wall Street. I'm Amy Morris. ARM Holdings says it will sell its own chips for the first time, aiming to claim a bigger piece of the AI market. ARM's new chip is designed to work alongside accelerator chips and offers greater power efficiency compared with traditional CPU designs from Intel and Advanced Micro devices. ARM Holdings shares are now 1.5% higher. The Pentagon is reportedly planning to deploy a brigade combat team to the Middle East to support operations against Iran. Iran has started charging transit fees on some commercial vessels passing through the Strait of Hormuz. That's another sign of Tehran's control over the strait. Wall Street watching these developments very closely. WTI now around $93 a barrel. Brent approaching $105 a barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 is down 0.4%. NASDAQ down nearly 1%. The Dow down 0.1%. 10-year Treasury yield at 4.41%. The 2-year yield at 3.94%. Bitcoin is now more than 2.5% lower, now about $69,000. And spot gold is now set for a 10th straight day of losses, about 0.1% lower. Alternative asset managers fell as Apollo Global Management and Ares Management became the latest firms to curb withdrawals from some of their private credit funds. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We return to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. Amy walking us through the market reaction to the headlines that have just crossed from the Wall Street Journal about the Pentagon planning to deploy the 82nd Airborne Division to the Middle East, a brigade combat team that, Joe, it's important to note what exactly it may be that they are asked to do. This is specifically a force that can be deployed anywhere in the world in under 24 hours, trained to parachute into hostile or contested territory to secure airfields and land. And the Journal is noting that, yes, no decision has been made yet to put boots on the ground. But these could be boots in question should the president so choose.
With our eyes on Karg Island, if not the actual strait itself, where it's been suggested we would need to line the coastline with troops. Kaylee, this would be in addition to the Marine Expeditionary Unit that's on its way. So by the end of this week, there could be a sizable increase in the number of forces.
At least.
That's right, coinciding essentially with the 5-day deadline that the president initiated when he kind of changed his tune on striking power plants yesterday. The problem is it's been 24 hours. We still don't have a sense, certainly following our conversation with Ambassador Fried, of exactly where talks lie right now. And maybe we'll learn more from the president. He's going to be in front of reporters a short time from now.
Yeah, for the swearing-in ceremony of the new secretary, or will become the new Secretary of Homeland Security, Mark Wayne Mullen. But yeah, the president certainly is likely to be faced with questions about what exactly is going on, as many are suggesting that this 5-day deadline that matches up with more troops arriving in the Middle East may indicate that the president could just be buying himself time here.
Well, anything's possible. And as the administration says, everything remains on the table. So let's assemble our panel and get their take on this, along with a potential breakthrough in DHS funding. Bloomberg Politics contributor Jeannie Shanzano is with us, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, and Republican strategist Maura Gillespie of Blue Stack Strategies is with us as well. Ladies, it's great to have you both. Maura, give me a sense of where this conversation is headed, because when you start talking about boots on the ground, it certainly changes the tenor on Capitol Hill. Attempts to invoke war powers have failed at every turn so far. What would that mean for Republicans and Democrats on the midterm campaign trail to have a say in that decision?
Well, it really puts Republicans in a position to either to defend the president's decision to do that and bypass Congress, their very role that they're potentially campaigning for themselves to position themselves in. And then it also creates a question of what's the why? You just pointed out, what is the plan and what's the why? Are we trying to take over Karg Island? Are we trying to just get ships through the Strait of Hormuz? What's the impetus? And making that case not only to Congress, but in effect to the American people is valid and important, and the president seems unwilling to do so. And I think there's going to be a push there. I would hope that Republicans would encourage the president to do so and to try and give the American people a concept of what's going to be, the next weeks ahead, and give us a better sense of stability of what to expect. And I don't think he has done that so far. I also don't know that he knows that right now as we sit here. J.D. Vance and Steve Witkoff are headed towards Pakistan. Reports say that they're going to continue these conversations, but hopefully we'll have a better sense than today when we hear from the president.
Well, Jeannie, you were making the point on this show yesterday that we've continually seen this pattern with the president when it comes to Iran of saying there's negotiations, that they're making progress, that he wants a deal, and then shortly thereafter, usually ahead of a self-imposed deadline, he decides to strike and strike hard. We've seen it twice now. Do you think the stage is being set here for us to see it a third time?
We hope not. I would hope that it is genuine on the part of the president, the administration, and Iran, that we have all had enough and that they are ready to get to the negotiating table. But the difficulty, of course, is can Iran trust us to do that when twice we have struck them after saying we were going to negotiate? And likewise, this is a tyrannical regime, very difficult to know who we're negotiating with. Can we trust them? And that's why I thought your conversation with Ambassador Fried was so important, because when we look at where we are today, even if we do negotiate and we do get a settlement today, what we have done is allowed a tyrannical regime to have control of a strait. And I can't see a universe in which they give that up without real concessions, not just from the United States, but from Israel and the rest of its neighbors in the region. So this is not up to Donald Trump anymore. It is up to Iran because, of course, they are controlling that chokehold in the strait. So I certainly hope the president is right when he says we're negotiating and those negotiations get us to some sort of pause in this fighting. But we are a long way from being in a better position than where we were before we struck. Because, of course, in January, Iran was probably the weakest it had been as a result of sanctions and the rise up of their own population in years. Now we have a more entrenched, dangerous leadership there and people who can't go out and protest their own regime, and Iran controlling the strait. That was a terrible place for us to be.
Well, the president is balancing two potential deals this week. One is to end the war that he began in Iran, and the other is to reopen the Department of Homeland Security, which has proven to be far more difficult, I think, than anyone imagined when we went into this shutdown, which is on track to become a record-long partial shutdown if you're keeping track on your home game. The president spoke yesterday about a strategy to get the Save America Act passed. This is voter ID, and he wanted to attach it to the Homeland Security funding bill. This is what he said in Memphis.
So I'm tying Homeland Security into voter identification with picture and proof of citizenship in order to vote. And those two items are the most important thing having to do with Homeland Security. So it should be part of the Homeland Security bill. And I'm requesting that the Republican senators do that immediately. You don't have to take a fast vote. Don't worry about Easter going home. In fact, make this one for Jesus, okay? Make this one for Jesus. That's what I tell him. That would be a damn good thing.
He may not need to call Jesus because the president has backed off this idea after meeting with Senator Katie Britt, the Republican from Alabama, and others, backed off his demand to link the bills with a plan to come back around and attach that to a reconciliation bill. We'll hold that thought for a moment. As far as DHS goes, you've heard this before. They would carve out ICE funding and basically pay for everything else. It would fund all of DHS except for the arm of ICE that carries out immigration arrests and deportations. And there, of course, has been legislation to that end available for everyone to vote on for months. In this case, Jeannie, what do you make of this latest development here, knowing that if they pass this whole shutdown was for nothing, right? We could have done this weeks ago.
We could have avoided this, Joe, but for Jesus, I will just say that, yes, we could have been here a long time ago. I am waiting to see the details on this because this is a fast turnaround, even for the president. I hope it is true, but it doesn't change much on the ground because, of course, this is what the demand was before. And the details we're talking about are all the reasons that the Democrats wanted ICE reform. Where are we with that? So there's a lot here that needs to be considered. But for Republicans, this would be a best case scenario because the chaos and confusion we are seeing at our nation's airports is just a reminder of the chaos and confusion of what Republican leadership in Washington, D.C. means and everything Democrats want to run on in 26.
But on the Democrats, Jeannie, just quickly, the last shutdown, the longest full government shutdown on record ended with a few Democrats caving, having extracted none of the concessions when it comes to healthcare and rebates that they had wanted to. If this ends this way with no real reforms to ICE, is this Democrats 0-2 essentially?
It really seems like it, Kaylee, and that's why I'm waiting to see, because you're absolutely right. The last time they capitulated on healthcare, this time it would be on ICE. Now, some Democrats will push back and say, NOM is out. We have an agreement of sorts on body cameras, maybe masks with what's going on in the airport. So there will be some pushback. But the reality is for Democrats, particularly primary voters, energized Democrats, this is going to seem like another Democratic attempt to just lay down and agree with what the Republicans want. And that's not good for Democrats.
Wow. Well, this is interesting because, Jeannie, earlier you mentioned that the president tacoed on this one when he decided to not link the two bills together. And Maura, I think you agreed. So we have tacos. We have taco squared today. I guess, Maura, that's the state of Washington.
Under President Trump, it tends to be. I think he does just say these things, and part of it has to do with the fact that he doesn't fully understand how Congress works. He has largely taken, because Mike Johnson has given him the gavel in a lot of ways and in a lot of scenarios. But in this situation, John Thune has had to be the adult in the room and remind him how this works and how this is going to work. And so offering up, as he did this weekend, staying in and keeping the Senate in to work through this and come up with a plan to, what you said, what was offered early on, but now put DHS is ICE funding, attach it to SAVE Act in a reconciliation so that will be kind of kicked down the road a little bit here to get things open, because I am sure that senators, one, are hearing from constituents who from all sides of the aisle angry about what's going on and telling them to please fix this. But two, I think members really want to go home and they are not interested in staying here for anyone over the Easter break that they're, kind of looking forward to having going home to their district. So I think this is going to be the impetus to get things moving, and then reconciliation will be a whole nother battle to endure.
Well, just how quickly can that battle unfold, Maura? We're getting closer and closer to the midterm elections. We know reconciliation wasn't necessarily an easy lift last time around. Do you have real confidence that a second passage is going to be able to get through?
My concern is what else gets added to it. I think that there is because of where this will fall in the timeline, there will be a push to attach a lot of things to this to try and get it done before the midterms. But then it becomes a question about what is the midterm messaging. Again, some of these things on optics sound, okay, great. Voter ID sounds something that sounds common sense. Again, there's additives in the Save America Act that conflate, federal and executive overreach against the states. And so that is a conflicting message for Republicans who pride themselves on being for smaller government. There are also issues with the ICE funding. I think that they are currently still funded because of the tax cuts last year. But what happens when the reconciliation bill comes forward? Are those concessions that Jeannie mentioned going to come into play? Are the masks going to be taken off? Are the body cams? All of those things going to be part of it? And we'll have to see.
All right, Maura Gillespie and Jeannie Shanzano, our political panel today. Thank you so much. And stick with us here on Bloomberg TV and radio. We'll take you live to the Hill and Valley Forum here in D.C. next with Chase Lockmiller, the CEO of Crusoe. That's ahead on Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. Wall Street traders grappling with a range of possible outcomes for the war in the Middle East, leaving stocks wavering. Markets remain firmly at the mercy of geopolitical headlines. Traders hanging on to any signals around whether ceasefire talks are even remotely on the table. WTI now around $93 per barrel. Brent crude topping $104 per barrel. And we check markets for you all day long here at Bloomberg. The S&P 500 down 0.3%. NASDAQ down 0.8%. The Dow little changed on the downside. The 10-year Treasury yield at 4.41%. The 2-year yield at 3.94%. Bitcoin about 2.5% lower, now less than $30,000, or rather $70,000. Growth in U.S. business activity slowed in March to an almost one-year low. Prices paid for materials and other inputs rose, this after the start of the war with Iran. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. It's a busy day in the markets. It's a busy day in Washington. As at the White House, President Trump is getting ready to swear in the new Secretary of Homeland Security, Mark Wayne Mullen. At the Capitol on Capitol Hill, lawmakers seem to be getting closer to a compromise to fund at least most of the Department of Homeland Security. And in between the two today is also the Hill and Valley Forum taking place here in D.C. And that is where we go live to Bloomberg Technology co-hosts Caroline Hyde and Ed Ludlow, who are joined now by the CEO of Crusoe, Chase Lockmiller. Ed, take it away.
Yeah, and it is the intersection of technology and politics, and inevitably there is a conversation about the war in Iran, the role that technology is playing, and how it will impact the industry broadly. And Chase, it's good to have you back with us on Bloomberg Television and Radio.
Good to see you.
I think there is an interesting question to start with, which is when oil prices behave such as they are at the moment, and natural gas prices behave such as they are at the moment, does that have an immediate impact on the operation of a data center?
Yeah, so I mean, one of the largest operating expenses of a data center is the cost of power. What's been interesting to witness is that, with the war happening in the Middle East, oil prices have surged, but natural gas prices, initially surged, but have come back down and have essentially been flat since before the war. As a result, I think this was the result of massive investment and innovation from the U.S. energy industry. The Trump administration's commitment to, having the United States be have energy independence, which has created resilience for people that are operating and utilizing power equipment here in the United States. So, I think it's been reasonably insulated from a lot of these conflicts in the Middle East.
On this program that we're in right now, Balance of Power, we've talked about this administration's priorities and the idea of data centers broadly. Everyday Americans have heard more about data centers in the last year than probably in their lifetimes. I think it's a good moment for you to jump in and explain what Crusoe does, where it sits in the supply chain and build out that we're seeing at the moment.
Yeah, so Crusoe is a vertically integrated AI infrastructure business. And this is everything from, development of the energy, the entitlements of the land, to the construction of the data centers, manufacturing of electrical components for data centers, and sort of building and operating these large-scale AI factories. Beyond that, we also deploy large clusters of GPUs, and we operate a high-performance software architecture called Crusoe Cloud that enables innovators to use large clusters of GPUs effectively, reliably, and at a very cost-competitive rate. And then we serve workloads across the stack. So everything from sort of the electron to the token to basically energize intelligence for the economy is really where Crusoe sits. I think we've taken the approach of being vertically integrated, but not having to do everything, where it's like we can do everything, but we don't have to do everything. So there's certain moments where we'll lease space to someone else, or we will lease space from somebody else in the data center to really scale our cloud platform.
Yeah. How is that leasing going, and how is business more broadly? Look, before the sad fact of the matter of the Iran conflict erupted, we were all fixated on AI, whether there's boom, whether there's bust, whether there's circular financing. You have extraordinary capacity that's being built out in Texas and in Wyoming.
Yeah.
Is there insatiable demand still for that? And because there have been some reporting that maybe there was a changing of who was going to be taking over some of that capacity.
We're seeing very robust demand across the entire AI infrastructure market, from, data centers to large clusters of GPUs. And a lot of this is, these applications really scaling and really requiring this compute infrastructure to serve those applications as they scale. So, on the data center side, the leasing market has been very robust. We don't.
And who are the customers in that context? When you say leasing, who is doing the leasing?
Yeah, so we're really focused on the biggest technology companies for our piece of the business, and this is where we're building, gigawatt scale data centers to lease to the biggest companies in the world. For our AI cloud platform, Crusoe Cloud, that's where we really focus on renting clusters to a lot of the innovators in the space, the AI startups, the builders, the application companies. But for the leasing business and the data center business, we've seen tremendous demand, and I think that's been the case sort of across the entire stack.
Because I think, well, Ed and colleagues have been doing some great reporting around how perhaps when it came to Stargate, what was being built out in Texas in particular, maybe Oracle moves back a little bit, but then Meta comes in, but actually it's not Meta, it's Microsoft. Maybe Google's taking over Wyoming. Can you just tell a little bit about who it is taking these leases? And because it's great news all around, it feels like, to be announcing it.
So we haven't announced anything yet on any sort of expansion in Abilene. I know there was some reporting around, what was happening with the expansion in Abilene. And when we're ready to report that, we're going to come to you guys first and be able to tell you all about who's taking what and when. But I think in the conversations we're in, there's very robust demand signals and no shortage of demand for incremental compute capacity over the next 5 years.
The macro point to that story that we reported is that the industry is trying to be nimble. And I think Jensen once talked about this a bit at GTC, trying to match the demand with the capacity that's actually available. And maybe saying, well, actually, our chances of getting a site online quicker are better here versus there. How difficult is that formula of matching the demand with getting capacity online?
Yeah, I mean, look, it's a very complex supply chain challenge just across the board. This is the culmination of the most advanced engineering efforts and human initiatives, like over the course of history, right? And it's all of these different pieces coming together from, the actual silicon architectures to the networking fabrics to the data center architectures to how we energize them to how we build them. And all of these things have very different lead times. So it becomes a complex orchestra to really bring the full AI factory to life at the right time, at the right moment, exactly when the customer needs it. So I think that's probably a bit of what Jensen was commenting on. NVIDIA is definitely, in the seat where they see the biggest demand forecast picture in terms of, looking out into future years. And, I think Jensen, went on stage last week and said he's going to see $1 trillion worth of
sales off, basically.
Yeah, exactly. However he counts it, but
however he
and
counts
maybe
it.
that's you buying it. And to that end, what you do is very capital intensive, and we're seeing a lot of. You're very interesting in terms of the whole vertical nature, but there are others who are lending at their compute, whether they be neo clouds, whether it's CoreWeave has already gone public. We're talking about others looking to access the market. Is that something you're thinking about significantly at the moment? Are you thinking about relying more heavily on the capital markets, on the private markets?
No, absolutely. I mean, it's we're certainly looking at all ways to capitalize our business. It's not a capital light business. It's a
because
very
you have to front the
capital-intensive
cash,
business.
or how does it work mechanically?
Look, when we're building a data center, there's definitely construction debt associated with the construction phase, and that will be typically underwritten against a long-term customer contract and a long-term customer offtake. So we're looking at 15 to 20-year type offtakes. I think for us as a business, our goal is to be a vertically integrated provider that can deliver the most valuable solution to different customers at different layers of the stack. So for a lot of these big technology companies, they really need data centers, and that's really the thing that they're really focused on with us. For the AI innovators, really what they want is managed, reliable, resilient clusters that have things like self-healing and managed Kubernetes and managed Slurm. So we're really focused on delivering the right solution in the right place to the right customer.
You were here in this building last year when President Trump delivered his AI action plan. And one of the core tenets of it was deregulation, cutting red tape, expediting permitting on the data center side, also the energy side. You probably have the best on the ground view of whether that's been enacted yet or not. What are you seeing?
I think there's a lot of great intentions out there. I think there are some positive signals that we're seeing. I think one of the one of the big initiatives that Secretary Wright had a directive, secretarial order to FERC around a rulemaking effort to basically create an accelerated approval process for interconnection queues. And so FERC's sort of undergoing that rulemaking process right now. That sort of outlines a way for a data center provider to get a 60-day approval process versus, in many cases, this is like 5 to 6 years for a big load study to be done. Now, it's caveated with the fact that the data center must be willing to curtail under certain scenarios. So I think what that really speaks to is this notion that we actually have a lot of generation, we have a lot of power available most of the time. It's really in those sub 1% pinch points when you really need the help of data centers and other large loads to be able to curtail and provide that flexibility so that local ratepayers aren't getting their lights turned off during the moments of most critical demand.
And Tracy, you speak to exactly sort of the anxieties in the public, I think, a lot when it comes to energy prices and also labor. And I know you've been outspoken about how blue-collar work is going to be amplified by the work that you do. But at this moment, we had Chris on from Hadrian who's talking about we need more specialized talent. What would be your one ask right now to the administration? What do you need at Crusoe to keep scaling?
Talent's definitely a major one. I think there's been a lot of big pushes on these regulatory initiatives, which I think are great. Frankly, I think this secretarial order from Secretary Wright was a phenomenal step in the right direction. What we would like to see is actually the rulemaking process unfold and a lot of this being crystallized into rules that we can actually move forward with clarity. An additional concept that was sort of put forth was the ratepayer pledge that was signed on by a lot of the big tech companies, which we think is a huge positive, right? I think as an industry, we don't want to drive up costs of power for everybody. In fact, we think this is a generational opportunity to both invest in new generation and upgrade the grid because of the capital and the really well-capitalized entities that are making these investments. And we've talked about this from this concept of actually having across the meter power. Right. And really what that means is you have on-site generation, you have on-site demand via the data center, and then you have an interconnection point where you can basically draw power from your on-site generation. If it's ever falling short because the wind's not blowing, the sun's not shining, the gas plant's under maintenance, what have you, you can firm up that power through the grid. And then when there's excess generation that you're catalyzing on your sort of behind-the-meter power plant, you can actually provide that power to the grid and drive down the cost for local ratepayers by actually creating this energy abundance for local communities, which we think is like the best case outcome of this is like this. We're investing in the data center, we're investing in the chips, we're investing in the power infrastructure, and this across-the-meter mechanism really enables power prices to go down for everybody.
Important to the Balance of Power audience. We so appreciate you being here for them today. Chase Loveman, it's great to have you. Of course. CEO of Crusoe. And with that, we hand it back to the radio and TV audience.
All right, Caroline and Ed, thank you so much, and great to hear from Chase Lockmiller. Fascinating conversation that certainly ties into what we're talking about here on a regular basis on this program. Really interesting, Kaylee, to hear they started the conversation with energy prices in mind. It just reminds us of the sweeping impact that this has when you start looking outside the bubble in Washington and even beyond gasoline prices. It's affecting everything from data centers and beyond. And as we watch oil prices here at the moment, they have been moving higher. West Texas, New York crude up over $4, approaching $93. Brent is approaching $105 a barrel, Kaylee. So this part of the conversation has not ended.
Yeah, especially as traders within the oil market and elsewhere across financial markets, frankly, are contending with the new headlines and developments from the Middle East, including earlier this hour reporting from the Wall Street Journal about 3,000 troops from the 82nd Airborne being deployed with the potential, though no decision made yet, on ground troops, on boots on the ground, which would be arguably an escalation of this conflict, not a de-escalation as the market was hanging its hopes on yesterday as President Trump talks up the prospect of a diplomatic offering.
Yeah, 82nd Airborne, some 3,000 members of that division apparently set to be deployed or are being deployed, in addition to the Marines already steaming their way from San Diego. They would be arriving right around the time that this 5-day period that the president has outlined would have concluded. So Friday into Saturday, it's going to be interesting to see what's happening over there. Reaction on Wall Street today has not been great. Down 23 points on the S&P 500. We've got a VIX at 27, and of course the energy prices that we already talked about. They'll have a lot more on the markets coming up in Bloomberg Business Week Daily. I'll meet you back here for the late edition.
Yep, we'll see you at 5 p.m. Eastern Time for the late edition of Balance of Power. We should have heard from President Trump by then as he gets ready to swear in the new Homeland Security Secretary, Markwayne Mullin, at the White House any minute now. So stay with us for the latest here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Welcome to Tuesday afternoon. It is March 24th, 2026. Carol Master, Tim Stanovic live here at Bloomberg headquarters in New York City. You just mentioned some headlines.
Yeah, Axios reporting that the U.S. claims Iran had agreed to many of its plans. The U.S. shared with Israel its 15-point plan to end the war, according to Axios. The publication citing two sources with knowledge of potential U.S.-Iran talks. Essentially, the U.S., according to Axios, is waiting for a response from Iran on possible talks. The headline, though, Carol,
yeah,
the U.S. and Iran may hold high-level talks as soon as Thursday. That, according to Axios.
All right, we have that going on, but we also have Saudi Arabia, the UAE losing patience with Iran, joining in on this U.S. and Israeli war with Iran. So we also have the Journal reporting about U.S. planning to send airborne soldiers to the Middle East. It's really a lot of headlines coming at us and trying to make sense of what is going on. In the meantime, we've got a market bouncing around. We're down a little bit on the S&P, down about 0.6% on the NASDAQ 100, but we have seen certainly energy markets move up again.
Yeah, Brent crude up above $104 a barrel. WTI up to $91 a barrel. Both of those up by more than 3.6%. Brent up close to 5%.
All right, so I kind of gave it away. Ahead this hour, we're going to get into who is now joining in on the U.S.-Israeli war in Iran, and whether or not this could be the beginning of a new era when it comes to the Middle East. But we're going to dig into that in just a moment.
Well, on that too, and on the war, a timely interview from our Bloomberg technology team, our BTech team, with the physical AI company Applied Intuition.
Yeah, interesting stuff that they're working on, and working with certainly defense areas. Plus, a big picture view from a member of President Trump's cabinet during his first term in the White House. He's also a longtime distressed investor. Wilbur Ross will join us, very well known to the Bloomberg audience.
And investors, the private credit storm that is lashing the father-son duo at the helm of Cliffwater. A check on private credit, or at least part of private credit, in just a few minutes.
Yeah, there's still so many stories and concerns there. All right, we're going to get to it all. Busy 60 minutes coming your way. First up, though, a check on the trading session. Here is Amy Morris in for Charlie Pellet.
Thank you, Carol. They're calling it the Tehran toll booth. Iran allowing vessels to pass through the Strait of Hormuz if they pay up to $2 million. Sources tell Bloomberg the payments have been handled quietly. The lack of transparency and uncertainty over who might be targeted is adding a fresh layer of friction to the shipping lane. Stocks fluctuated and oil rose as traders grapple with a range of possible outcomes for the war in the Middle East. President Trump claiming talks are underway to end the conflict. We do check markets for you all day long here at Bloomberg. WTI near $92 per barrel. Brent crude now topping $103 per barrel. S&P 500 is down 0.2%. NASDAQ down about 0.75%. The Dow little changed on the upside. 10-year Treasury yield at 4.4% and the 2-year yield at 3.92%. Bitcoin is about 2.5% lower, around $69,000. Ares Management and Apollo Global Management limited withdrawals from their funds to 5% of shares after clients sought to redeem a larger percentage. It suggests investors may be getting anxious about a liquidity squeeze in the private credit market. Limiting redemptions would increase negative sentiment and constrain liquidity further for the fund. That would make it harder to underwrite new loans. ARM Holdings will begin selling its own chips called AGI CPUs for the first time, aiming to claim a bigger piece of the massive spending on AI gear. AGI CPU will have as many as 136 cores and draw 300 watts of electricity and will be produced by TSMC. Meta Platforms will be its first major customer. ARM shares now more than 1.5% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Bloomberg Business Week Daily with Carol Massar and Tim Stanovic.
Amy Morris, we need to get you a cup of hot tea or some chicken soup there because you certainly sound like you're fighting a cold. I feel like everybody is fighting something
I got
right
my
now.
own stash of cough drops today, Carol.
You did. I saw you swiping some last night after our show. No, it's kind of our world that we are living in. There are so many conflicting headlines coming at us. I'm just taking a look at our live blog when it comes to the U.S. and Israeli war in Iran. What are the latest headlines that we are focusing on? You mentioned Axios reporting potential talks between the U.S. and Iran, that they may hold some high-level talks as soon as Thursday. U.S. waiting for response from Iran on those possible talks, and the U.S. claims Iran had agreed to many of its plans, Axios citing two sources with knowledge on the potential of these talks. So I don't know. This is something that I feel like we've been floating around certainly yesterday again. We're just trying to figure it out.
Yeah, I mean, it runs counter to what we've heard from several several Iranian officials who've pushed back on the idea that there is any sort of negotiating going on. It follows a report that we got earlier today, too, from the Wall Street Journal that the Pentagon is planning to deploy a brigade combat team from the Army's elite 82nd Airborne Division to the Middle East to support operations against Iran. This, according to the Wall Street Journal, citing two officials. A written order to deploy the unit, Carol, made up of roughly 3,000 soldiers, is expected in the coming hours, the official said. The decision, though, to put boots on the ground in Iran hasn't been made yet, according to the officials.
Yeah, and I think what's interesting, you know, one of the things you and I were just talking before we came on air, Iran setting a transit fee of as much as $2 million per trip through the Strait of Hormuz. So basically setting up a bit of a toll there and just wondering how much oil, but it is a lot of oil that these tankers, you know, carry. We think about any of these ships that go through these major straits or ports, if you will. I think about the Panama Canal. I've been down there seeing lots of things, but this is what they're doing, I guess. It's just kind of part of our macro setup. The other thing we also want to get to, and it's one of our most read stories on the Bloomberg today, on the U.S. war in Iran. Iran's biggest Gulf Arab neighbors considering joining the U.S.-Israeli war against Iran could be pushed to if Tehran attacks their critical infrastructure. And this is according to several people with knowledge of the situation. So this is kind of where we are.
Well, with a view and an understanding on what's happening in the region, we welcome back Ray Takei, Senior Fellow for Middle East Studies at the Council on Foreign Relations. He's the author of several books, including most recently The Last Shah, America, Iran, and the Fall of the Pahlavi Dynasty, and Guardians of the Revolution, Iran and the World in the Age of the Ayatollahs. He joins us from Washington. Ray, always good to check in with you. We just want to start with the back and forth. What Axios is reporting, the idea of Iran agreeing to some sort of multi-pronged plan to end the war, the pushback that we got earlier this week, the comments from the president that sent markets soaring yesterday. What's your view on the end of this conflict?
Well, on the American side, the president may be looking for an off-ramp with everything that has happened in the markets and so on. However, with President Trump, there's always a large number of options that he can consider. There's a lot of military deployments taking place in the region. And so what we have seen in previous rounds of negotiations in June and in March, in February, they were usually preludes to war. So this may be another one that what the president is saying about discussions doesn't meet the manpower that he's deploying, but he may be looking for an off-ramp from a war that is proving more complex than he thought. I suspect the Iranians, despite their narrative of success and triumph, are also looking for a way out of this. They have suffered a great deal, and they may be essentially trying to figure out how to extricate themselves from this conflict as well. So we'll see if this mediation is real, and we see if it can produce some sort of a agreement not to settle the conflict between the two nations, but at least some sort of an armistice for now that allows everybody to return to their corners.
All right, so let's throw on top of that, Ray, one of our stories, it is our most read on the Bloomberg, or one of our most read, about Iran's most powerful or biggest Gulf Arab neighbors, Iran's biggest Gulf Arab neighbors, considering joining the U.S.-Israeli war. I'm trying to understand that, and help me out here in your understanding or thinking and your knowledge of this region. Did the region know, did Saudi Arabia know that Donald Trump was going to do this, was willing to go along, and maybe this is part of a bigger strategy, a plan? Or are they just looking at it and saying, wait, this could actually be an opportunity for us to change the direction of the Middle East going forward? I'm just trying to understand the steps here. Or is it all just kind of happening in real time with no big strategy?
I suspect the latter. I'm not quite sure if this is a very synchronized, thought-out plan. And in terms of the Gulf states, before the war, they were essentially having a policy of détente with Iran and actually pressuring the administration not to engage in the conflict because the Iranians were quite clear about what they would do should there be an attack on them. They said they would regionalize the war, and they would also target energy supplies as well as the passage to the Gulf of Hormuz, to the Persian Gulf. So there was nothing surprising about what the Iranians did. There are some reports that the Gulf states are becoming more aggressive, but honestly, I suspect at the end of this war, whatever it is, they will return to their practice of trying to balance the two sides, having a relationship with the United States as close but also not necessarily being antagonistic to the neighbor in the north, which would be aggrieved, injured, and quite angered.
Well, the implication of what you just said, Ray, is that we don't see a very changed Iran following the end of this conflict.
Oh, no, Iran will certainly change after this conflict. The Islamic Republic that survives this war is going to be very different than the one that went in before. For one thing, a large number of highly senior officials have been decapitated. And one of the things that has happened with this large-scale decapitation is you're beginning to finally see a generational shift where you begin to see a new group of people gradually coming to power. In terms of the military services, the Revolutionary Guards and others, you begin to see these second-tier officials coming to power. And for them, their formative experience was not the 1979 revolution. They were too young for that. Wasn't even Iran-Iraq war. They may have participated in this latter stages. For a lot of them, their most formative experience was the Syrian civil war. A large number of the Iranian military officials rotated through that Syrian civil war. About 1,000 died. And the lesson they drawn from the Syrian conflict, that what was built for a long period of time collapsed in a matter of 3 weeks. So they're likely to be more vicious in protection of their patrimony at home. The Islamic Republic that comes out of this war, should it survive, which I suspect it will, is likely to be more militant, but also more brittle, in the sense that the elite that's coming to power are less competent in statecraft and management and so forth than the ones that was decapitated. Not that the ones that were killed were exactly managers of competence and so forth. So Islamic Republic is going to be very different going forward. Its entire strategic doctrine may change. The value of nuclear weapons has never been greater for this regime, but everything that has happened. No, we're going to come out of this with a very different regime whose ramifications will unfold over time.
Well, so a different regime that comes out, but if I heard you correctly, that nuclear power is still very important and maybe more important than ever before. Is that
more important than ever? Yes, absolutely. And it was actually one of the tensions between the late Supreme Leader Ali Khamenei and some within the security services. The perception was that the Israelis, after October 7th, Prime Minister Netanyahu certainly said that the rules of the game have changed. And he certainly has proven that. Israel became much more preemptive in dismantling strikes and dealing with threats before they metastasize. And there were a lot of voices within the security services in Iran that were saying, if the Israelis change the rules of the game, we should do so as well and actually cross the nuclear threshold. And they were very public about that.
Yeah. Hey.
And for whatever set of reasons, Ali Khamenei didn't do it. As a result, he lost his nuclear program in June and his life in February.
20 seconds, I just got to ask you, does the U.S. have a bigger enemy now in Iran, or it's a better relationship going forward? Very quickly, if you could.
It has a more radicalized enemy, but in terms of its intent, but at least for now, weaker in terms of its capabilities.
Okay. Always appreciate your insight. Ray Takei, he is Senior Fellow for Middle East Studies at the Council on Foreign Relations, of course, understands this region, former at the State Department. And so that's really the latest on the war in Iran, but we continue to track some of the headlines because they continue to come.
I also want to bring on former U.S. Secretary of Commerce Wilbur Ross. He's well known to the Bloomberg audience and to Wall Street, a longtime distressed investor. He has restructured over $400 billion of assets, everything ranging, Carol, from airline apparel to auto parts, home building insurance, marine transport, oil, gas, shipyard, steel, textile, trucking industries, and more.
Yeah, certainly understands the global market and certainly geopolitics and more, and politics here in the U.S. Wilbur, so good to have you. He is Chairman, President, and CEO of Ross Acquisition Corporation. He joins us from Florida. Great to have you back on Bloomberg and to be talking with you again. Big picture, you told our Scarlet Fu, Wilbur, the action in Iran is long overdue. You're not alone in that thinking. We've heard other people on Bloomberg say that. You also believe that this war is temporary in nature, even if we don't exactly know when it ends. What do you believe is the long-term impact of this war when it comes to geopolitics, when it comes to global markets? How do you think about it?
I think this war will make less likely armed conflict elsewhere, because people have now seen that, at least under President Trump, U.S. is willing to use its enormous military wealth and strength to deal with threats. That was not at all clear under the Biden administration, nor under the Obama. So I think part of the reason so much trouble boiled up was that they viewed us as a paper tiger. But with what happened in Venezuela, what's happening now in Iran, and what's probably going to happen very quickly in Cuba, I think people have seen the sleeping dragon is no longer sleeping. Sleeping dragon is perfectly ready to put its fangs wherever they're needed. So I think the old saying holds true. The best way to avoid a war is if everybody knows you're fully prepared not only to pursue it, but to win it.
You mentioned Venezuela, you mentioned Cuba, you mentioned Iran. At this point, Secretary, who else has been put on notice?
Well, everybody's been put on notice. I think ultimately China and Russia are on notice. Well, we haven't done much about invading Russia and probably won't initiate anything like that. We have provided support of one kind or another to Ukraine, and we certainly have been arming Taiwan, and even more importantly, we've been moving a lot of the semiconductor technology from Taiwan to the United States. So we're becoming both less vulnerable in the event something happens on Taiwan, and yet also showing that we're very interested in it.
You know, I find it interesting, Wilbur, that you went to Russia. And I just think, you know, and maybe you can give some insight into President Trump, because I think there are things that are said that seem to indicate a friendship, a camaraderie with a certain leader, be it President Putin. And yet it sounds like from what you said that Russia needs to be kind of on guard when it comes to the United States. Help us understand President Trump and who he sees as true allies and who he sees as foes.
Well, in terms of Russia, my point is a very simple one. Russia has had a terrible struggle with Ukraine, a much smaller, much weaker country. And in fact, lately, the last report I've seen, the Ukrainians regained 125 square miles of territory that Russia had previously occupied there. So clearly the Russian war, after all these years, all these vast numbers of deaths, all this destruction, both to Russia and Ukraine, they haven't really gotten as far as they thought. I think if Russia had had any idea that the Ukrainian war would go the way it has, I don't think they would have gone in. They thought it would be an easy cakewalk, and they were wrong. Now roll that forward.
Well, is that the same with how you see maybe the U.S. approach on Iran? Forgive me for interrupting, but I think there was a thinking that this was going to be a lot easier. Do you agree?
No, I don't think so.
Okay.
I think, in fact, it has gone better than any expectation we could have had. Who would have thought that within the first couple of weeks we would get total air superiority? Who would have thought we could have knocked out 100 and some odd vessels, virtually the whole series of vessels that Iran has? Who would have thought we could have done as much damage to the missile site and to the nuclear facilities as we have? So I think the war has gone much more rapidly than we could have thought. And I think the most remarkable and fortunate part is that there have been so few American casualties in the war. Now, even one casualty is a horrible thing, and I would have felt a heck of a lot better without it. But when you consider everything, it's been very, very small. My big fear had been American soldiers coming home in body bags week after week after week. I think that would have caused a lot of unrest within our population. But the other big strategic message, we knocked out their air defense mechanism pretty quickly. Iran is essentially defenseless against our attack. And if you roll back to Venezuela, they knocked that out within a few minutes. And guess whose defense system that was? That was the Russian defense system. So you asked, why would Russia give second thoughts? I think they would give second thoughts because they've just seen what it means to have the U.S. push too far.
Right. We're speaking with Wilbur Ross, Chairman, President, and CEO of Ross Acquisition Corp., also former U.S. Secretary of Commerce. Mr. Secretary, you mentioned the movement of chip production from Taiwan to the United States that's happening very slowly, and analysts don't know if it can ever happen completely. But you are known for your investments in industries that were once thought long gone, especially in the U.S., steel plants, textile mills. The president certainly wants to bring back that type of manufacturing to the United States and build it up here. I'm curious on your view about how national security concerns are changing that globally. Apart from semiconductors, how are you thinking about some of these other industries that the president is supporting?
Well, he's supporting all technology, and I think that's the right direction to go, because any future war is going to be fought in space and in cyber. So I think directionally, he could not be more correct than what he's doing. I also think that he's correct in fostering AI, because AI is what will produce more productivity and therefore more economic growth. Every big technological innovation has always had the longer-term effect of adding jobs, but it redefines them. So we need to be sure that our educational system can keep up with the needs for an increasingly technical economy. And as long as it does, I think we'll be there. Now, why is that important? The way we won World War II and the way I believe Reagan won the Cold War was the Russian military and the Russian civilian economy could not keep up with him. And therefore, at the end of the day, a very, very key component of defense strategy is economic power.
We have to leave it there. Wilbur, we appreciate your time so much. Wilbur Ross, he's Chairman, President, and CEO of Ross Acquisition Corporation, of course, former U.S. Commerce Secretary during President Trump's first term. Right now, we want to head down to Washington, D.C. The annual gathering known as the Hill and Valley Forum, bringing together tech and policymakers, is underway, and that's where we find the co-hosts of B-Tech on Bloomberg TV, Caroline Hyde and Ed Ludlow. Caroline, I want to toss it over to you.
Thank you, because we are joined by the CTO of Applied Intuition. It is all about autonomous driving, the future of vehicles and transport and much more in the world of defense. We're pleased to welcome Peter Ludwig, who is, of course, the CTO of that business. And Peter, as a CTO, what does your technology do? Where are you taking us to?
Yeah, so we provide the infrastructure layer for physical AI. And so the complete software stack that enables machines to move, everything from cars to trucks to mining and construction equipment, and then drones and boats in defense.
And therefore, that's what's interesting, right, is that we're at the intersection of Silicon Valley and government. We're at the intersection of, for you, defense and also commercial. How has that movement into the world of defense happened organically?
Somewhat. I mean, we're passionate about the field broadly, so certainly it was a deliberate choice on our part to enter the field. But there's so much commercial technology that we've developed that really translates so well into defense. Just some examples. We do work with the Navy, deploying the same kinds of data collection technology that we use for self-driving cars on Navy ships. And we do work broadly across the DoW on simulation testing. We call it the virtual proving ground, which is also directly taken out of our commercial business.
One of the themes of the Hill and Valley Forum, not necessarily just this year, over the number of years it's run, is how easy or not easy is it doing business with the military apparatus of this nation. And throughout the day, you know, a number of founders have given examples where you see decisions made in days where previously it had been months. What's the experience been like for Applied in getting autonomous software stack integrated in various pieces of hardware that our military apparatus relies on?
Things are accelerating. There's no doubt about that. I think that in our own case, we've seen similar things where things maybe have stalled for even a year or so that are really being unblocked. There is a real desire, I think, by the whole apparatus to bring dual-use tech out to the warfighter more quickly.
Physical AI is hard for some people to understand. You know, it is physical things, hardware in the real world, where your competence in software allows that bit of kit to move around a space and make autonomous decisions. What are some of the real world deployments that you can talk about? Because I think there's great skepticism that it has moved beyond robo-taxis and actually drone technology in the context of weapons.
Yeah, so certainly self-driving cars, that is the big first application, and so we have a ton of technology that's now on a bunch of companies all over the world.
Can you name them?
Our website, we work with 18 of the top 20 automakers. Everyone's using some part of our technology at this point, and we've been very deep in that domain actually almost for a decade now.
Right.
In the defense sector, though, there's a lot more focus on drones and drone technology, and so both the autonomous software that runs on drones and also thinking about the effects that you can have when you can swarm drones together.
From your perspective, the ethical dilemma for companies making the technology and then the use in the Pentagon, how is that something that you've been able to bridge as a company, as a leader of the company?
So we're a technology company, and so we focus on building the technology. We're not a political company. We're not a policy company, and I don't think that's actually our role to play. We want to make sure that we have the very best technology and that technology is available. And then I think through our ordinary political process and democracy, that's how we'll actually set those policies.
I always want to offer the opportunity when a company like yours come to the show to explain what I call core competencies, what they're really good at. You know, Kara and I, for quite a long time now, have been talking about Tesla being very good at autonomy, a vision-based approach where their software stack, they would say, is pretty good. NVIDIA is now wading into the physical AI space, not just with inference chips that are good at the edge, their own software, you know, and libraries and catalogs of custom models. Well, why is it that yours are better than theirs?
So I wouldn't say that we're better or worse than theirs, right? We're acting as an infrastructure provider, and we work with the entire industry. And so our core competency is we've built really great infrastructure technology for physical AI, and we're really great at working with the actual manufacturers of these systems to get that integrated and deployed. We're really not just looking at the technology development, but also actually getting this deployed. And the hard part oftentimes is actually getting it into the real world and then solving all of those difficult problems that happen when you're really making use of those systems.
So it sounds as though you feel that there's a future of partnership, no matter what, with your technology. But how do you make sure...
Or the automakers are rubbish at software, which is a reasonable argument, right?
But why are you not going... The anxiety often is that eventually LLMs will come and eat all of the other professional applications. From your perspective, what makes NVIDIA not able to recreate what you've built?
Well, again, these are huge industries, right? If you think about just the automotive industry, it's like several percentage points of the global gross domestic product. And there are millions of people and employees in all of these industries. And so there's plenty of room, honestly, for many players. And I think no one company is going to dominate the entire industry. And NVIDIA plays an important role with chips, but there's many other layers to the technology stack and actually getting this technology deployed.
What I suppose the different domains have in common, robo-taxi, in the physical AI space or robotics world, you know, the use of bipedal or humanoid robots in the industrial setting. This country is still waiting for sort of thorough federal level regulatory oversight, a list of rules. That's what we hear here, at least. Where do you stand on that and the need for it?
I think for robotaxis, there is strong need for a federal policy. Right now, it is very state by state, and that's absolutely impeding progress, for example, in long-haul trucking, where you actually have truck routes that would go between multiple states. And if you have to plan your trucking routes based on where the laws allow driverless trucking, that really limits the market potential. I think likewise in robotaxis, the legislation would be easier to follow if it were a national framework rather than state by state. And I think we'll see the same thing in humanoids. Humanoids industry is earlier, but it's advancing very quickly. And I actually hope that we can come up with a single framework for all of these physical AI systems.
Peter, it's a joy having you here, bathed in sunshine. I know they're usually on the West Coast where Ed Helm's from, but Peter Ludwig is the CTO, Applied Intuition. Thank you for making time for us today, talking us through your technology stack. That was Peter. I'm going to pass it back to Carol and Tim in the studio.
All right, Caroline, thank you so much. Caroline Hyde and Ed Ludlow there with the co-founder and CTO of Applied Intuition. We do have some headlines crossing, though, when it comes to Iran here.
Yeah, the president speaking in the Oval Office after the swearing-in ceremony for Mark Wayne Mullen. He says we're in negotiations right now with Iranians. He says that Rubio, Vance, and other people are negotiating with Iran. Iran would like to make a deal, and they've agreed they'll never have a nuclear weapon. Let's go to the president now, who's taking questions.
They did, the people that they allowed from prisons all over the world. They came from the Congo, from all over South America. Rough people, really tough people. So, no, I understand what he means. He says, he would have liked to have captured more. I'm not capturing so much as removing. We're removing thousands of people. And many are self-deporting because we're going after them so powerfully that they're self-deporting, Tom, going back. I think that's one of the big unkept secrets. We have thousands and thousands of people, and they're self-deporting. They're going back to where they came from. But what we want really is the criminals. We're really focused on those criminals, getting them out. Yeah.
What's your message right now to Democrats and also to Americans that are stuck in airports? It's really devastating watching it online because Democrats won't fund DHS.
What's devastating?
Your message to Americans right now stuck in airports as we speak because Democrats won't fund
they just don't. They won't. Look. This is a deal that was done in the Great Big Beautiful Deal, which gave you the biggest tax cuts ever, including no tax on tips and no tax on Social Security for the seniors. Think of it, no tax on overtime, tax deductions when you buy a car, you take money, pay interest on the money, you deduct it. We've never had that for people buying cars, if it's an American car, only if it's an American car. But they are just they stick together, the Democrats. I tell you, I give them great credit for that. We have some that they're not good stickers. We have guys like Tom Massey in Congress, who's terrible. He's just terrible person. I call him Rand Paul Jr. But they don't vote. Rand Paul, rarely votes for stuff. Likes me, says I'm a great president. He said the other day, I'm a great president, one of the greatest presidents. But I said, do me a favor, vote for us and don't call me a great. I'd rather have the vote than the statement. But we have people that don't stick together, and those people hopefully will someday be gone. The thing I most respect about the Democrats, even on horrible policy, they stick together. What they do have, though, is horrible policy. Transgender for everyone, open borders, men and women's sports. They have the worst policy that you can imagine. And so whether they stick together or not, they have just this terrible policy. We have great policy. Republicans have great policy. We have common sense policy, but it's great policy. That's our biggest advantage, is our policy is correct. Yeah, please.
Mr. President, are you encouraging our allies in the Gulf to be more involved in the Iran operation?
Say it.
Are you encouraging our allies in the Gulf to be more involved in the Iran operation?
Yeah, a little bit, but more NATO. I think our Gulf allies have been pretty good, to be honest with you. UAE's been hit so hard. He got hit by 1,400 rockets, shot them all out of the air with our great Patriot missiles. Think of it, they shot 100 missiles at one of our aircraft carriers, the Abraham Lincoln, one of the biggest ships in the world, actually. And out of 101 missiles shot, every single one of them was knocked down in the sea. Think of that. Think of what that means. 101 missiles, highly sophisticated, very fast missiles shot. Out of 101, all 101 were shot down, and now, for the most part, lie at the bottom of the sea. Pretty amazing, right? Pretty amazing. Our military is amazing, Pete. You know the attack I'm talking about recently? 101 shot. I said, wow. I saw that. You can see we have sort of pretty good equipment that we see. It's called the red line. Those red lines were thick, right? I said, that's a lot. And then we saw them one by one just get shot. And these guys that do the shooting are the coolest cucumbers ever. You know, most people, you don't have a lot of time. When a missile's going at 2,500 miles an hour, I don't care how far away it is, you don't have a lot of time. But I watched them sit down and think. Great students, MITs, a lot of MITs, a lot of guys like this. They're not as much into the muscle as they are this one right here. And amazing to watch them perform under great pressure, because they have a matter of seconds to do it. If they don't do it properly, it's a big problem, you know, because these were powerful. These were very powerful missiles coming. And so a lot of people choke. They don't choke. These guys don't choke. They're the best in the world. We have the best in the world, yeah.
Mr. President, what would be your message today to the TSA agents who have been staying home in recent days amid this impasse?
Well, some of them are needing money, you know, because the Democrats cut off their money. I blame the Democrats more than anything else. But some of them, you know, they didn't get paid because they're not funded by the Democrats. This is a Democrat problem. In fact, I actually said to the Senate, why would you say this is a Democrat problem? I think the polls are showing it's a Democrat problem. And they'll do anything actually to hurt our country so they can try and win the midterms. And if we ever went back to our old policies, we wouldn't have a country left.
If they get a deal, Republicans and Democrats in the Senate, to fund all but enforcement operations of ICE, to get those TSA agents repaid and to open up the rest of the department, would you sign that?
Well, I don't want to comment until I see the deal, but as you know, they're negotiating a deal. I guess they're getting fairly close, but I think any deal they make, I'm pretty much not happy with it. These guys came in, they wouldn't pay people. You know, they had a deal to pay. They had to break their deal. The Democrats broke the deal that we had. It was all done. Everything was fine. And then they just said, well, we're not going to pay anymore. And they hurt our country. And at a very difficult time because, you know, we are at, as they would say, a war. They call it a war. I call it a military operation, a very successful one, like nobody's ever seen before. Hey, Venezuela was equally as successful. That was a great thing. No, the Democrats had a deal. It was a done deal. And then they said, well, we're not going to pay. And so a lot of people suffered over that and put our country in danger. You have another question? You haven't been here in a while.
Well, on Iran, can you give us any more sense of who exactly in Iran it is, either Witkoff and Kushner and others you're speaking with?
Yeah, we had, I hate to say this in front of these young people. They're not children. I spoke to most of them. They sound like adults to me, even though they are sort of children, right? They'll always be your children. But I hate to say it, but we killed all their leadership. And then they met to choose new leaders, and we killed all of them. And now we have a new group, and we can easily do that, but let's see how they turn out. We have really regime change. You know, this is a change in the regime because the leaders are all very different than the ones that we started off with that created all those problems. So this was, I think we can say, Jason, this is regime change, right?
What makes you trust them?
I don't trust anybody. I don't trust you. I mean, that's only because I know you. But if I didn't know you, I'd probably have more trust. But I don't trust anyone.
Why bother?
Why do you say that? Why do you say what makes you trust? Do you think I trust them? I don't trust them.
Then why bother talking to them?
Because they're going to make a deal. They're going to make a deal. They did something yesterday that was amazing, actually. They gave us a present, and the present arrived today. And it was a very big present worth a tremendous amount of money. And I'm not going to tell you what that present is, but it was a very significant prize. And they gave it to us, and they said they were going to give it. So that meant one thing to me: we're dealing with the right people.
Is that nuclear related?
No, it wasn't nuclear related. It was oil and gas related. And it was a very nice thing they did. But what it showed me is that we're dealing with the right people. because, you don't know, because the leadership was killed, all gone. Khomeini, all gone, as the expression goes, the past supreme leader. And then the new supreme leader was racked up, at a minimum racked up pretty good, and everyone else was gone. And then many of the people in the third tier are gone, but we're dealing with a group of people that I think turn out, and the present, the gift they made to us was very significant, and they said they were going to do it, and it happened, and they're the only ones that could have done it. Jennifer?
Was it related to the Strait of Hormuz and the flow of...
Yeah, it was related to the flow and to the strait, yeah, it was.
Are you negotiating on who's going to control the strait from now on?
No, we'll have control of anything we want. Look, if we can end this without more lives being down, without knocking out $10 billion electric plants that are brand new and the apple of their eye, I'd like to be able to do that, But they can't have certain things. I mean, you know the things. I don't have to go over the list, but again, it starts with no nuclear weapons, and they've agreed to that. There won't be any nuclear weapons. They're not going to have, and they're not going to have enrichment, any of those things. But look, I hate to say that we're in a very good bargaining position, and I hate to say that they're defenseless because, until that last missile is fired, they have little power. But we are in about the best bargaining position. We're way ahead of schedule. And again, they have no Navy and they have no Air Force and they have no missile protection, and most of their missiles are gone. Most of their launches we've killed. We've killed about 82% of their launchers. So even if they had a missile, they can't launch it. We've been very effective. We have the greatest military in the world. Nobody even comes close. We have the best military equipment in the world. Go ahead.
On Saudi Arabia, there's been some reporting that you've been talking to the Crown Prince. Have you been focused on normalization between Saudi Arabia and Israel at this point?
No, we have a great relationship with Saudi Arabia. What do you hear with Saudi Arabia?
Just hearing that you've been talking and that he has been encouraging you to do certain things related to Iran. Can you share a little bit?
He's a warrior. He does, yeah. He's a warrior. He's fighting with us, by the way. Saudi Arabia has been excellent, and UAE, excellent. And I will tell you, Qatar, incredible. Qatar took a hit, a pretty bad hit. Qatar's very close, they're essentially, you can walk right over the border. Qatar took a hit. They've been great. They've been very strong. Kuwait, they had a little mishap. They shot down 3 planes with our missiles. They happen to be our planes, but the pilots made it. Can you imagine the pilots making it? The pilots saw what was coming, and they said, those are patriots. We're not going to escape patriots, and they got out of there pretty quick, Pete, right? Pretty amazing that they got out. The 3 pilots lived. They're fine. In fact, they're flying today.
Was the Kuwaitis that accidentally fired the missile?
Yeah, the Kuwaitis made a mistake. They fired. They thought they were firing at the enemy. It was, as the expression goes, friendly fire. But the pilots are great. They're flying today. Pretty amazing when you think of it. Yeah.
President Trump, on a human level, how hopeful are you that this peace deal will work out? Like as a human,
On what?
On a human level, and not as the President of the United States, how hopeful are you that this peace deal will work out with Iran?
You're talking about to end it? Well, I think we're going to end it. I can't tell you for sure. I don't like to say this. We've won this. This war has been won. The only one that likes to keep it going is the fake news. I mean, the New York Times, you read the New York Times, it's like we're not winning a war where they have no Navy and they have no Air Force and they have no nothing. And we literally have planes flying over Tehran and other parts of their country. They can't do a thing about it. For instance, if I want to take down that power plant, that very big, powerful power plant, they can't do a thing about it. It's like, take me. That's all they can do. And yet, if you read the New York Times or if you watch ABC fake news or NBC fake news, you'd say it's a close battle. It's not a close battle. They're totally defeated. We killed their Navy in, would you say 3 days, Pete? Gone. In fact, I was a little upset with Pete. I said, why didn't you save the ships? We could have used them, right? He said, it's more fun shooting them down. But the Navy was wiped out in a very rapid order. Pretty impressive for you guys, you champion wrestlers, right? When you hear this stuff. But you don't, if you read the news, you don't hear this. You know, you read like, oh, they're doing wonderfully. They're doing terribly. They're wiped out. Militarily, they are dead. Yeah.
Is there a new sense of a timeline? Do you want to get something done before the midterms?
Well, we'd like to see President Putin and President Zelensky sit down and make a deal. I think they're getting close, but I've been saying that for a while. I've settled 8 wars. All of them should have been more difficult than this one. This should have been the easiest one. But these are two people that truly hate each other. You'll find out that hatred is not good for making deals. These are people that they don't like each other very much. Yeah.
I know you said there's a bunch of people from the administration who are negotiating with Iran. There's been reports that the vice president is leading those negotiations. Is that true?
Well, he's involved in them. JD is involved, and Marco's involved, and Jared Kushner's involved, very smart guy, and Steve Witkoff, smart guy, is involved. And I'm involved. I'm involved. Why? Well, I'm going to be so big. Oh, I don't want to talk about it. I'm the president of the United States, Tom, and I'm not going to talk about it. It's beneath me to talk about saving millions of lives, because that's what you're talking about. You're talking about saving millions of lives. If Iran had a nuclear weapon, they would have used it. And if I didn't end the horrible Barack Hussein Obama Iran nuclear deal in my first administration, they would have had a nuclear weapon 3 or 4 years ago. They would have used it. I would have never gotten the chance probably to be president. Who knows if what it would have been so devastating. And if we didn't send those beautiful B-2 bombers, they took them off my desk. They were right there. I don't know why. But if we didn't have those beautiful, the B-2 hit, which was so we obliterated, despite CNN. CNN said, well, maybe the word obliteration. Said, no, we obliterated it. Just obliterated their nuclear potential. You would have had them having 2 weeks after that attack, had we not made the attack, they would have had a nuclear weapon. They would have absolutely used it. And they would have used it on the entire Middle East, including Israel. And you know why you see that? Because unexpectedly, when this war broke out, unexpectedly, they started sending missiles to UAE, Qatar, Saudi Arabia, Kuwait, Bahrain, and elsewhere. And nobody thought they were going to. Were you equally surprised by that, Pete?
Way more than we thought, Mr. President.
Pete, do you want to give about a 3-minute statement on how we're doing in this, as I call it, military operation? People don't like me using the word war, but so I won't. But the Democrats call it a war. How about a little statement? I think he's done a very good job. Do we agree he's done a good job, Mark White? Can we take some of your time?
Well, thank you, Mr. President. You're spot on. Never in history has a modern military, Iran had a modern military, a modern navy, a modern air force, modern air defenses, leadership, massive bunker. Never has a modern military been so rapidly and historically obliterated, defeated from day one with overwhelming firepower. The air campaign that we've conducted, that Israel's conducted alongside us, was one for the history books, truly. And it's because we have a president of the United States that when he sends his warfighters out to fight, he unties their hands to actually go out and close with and destroy the enemy as viciously as possible from moment one. And that's why we see ourselves as part of this negotiation as well. We negotiate with bombs. You have a choice as we loiter over the top of Tehran, as the president talked about your future. The president has made it clear that you will not have a nuclear weapon. The War Department agrees. Our job is to ensure that. And so we're keeping our hand on that throttle as long as hard as is necessary to ensure the interests of the United States of America are achieved on that battlefield. This is not Iraq and Afghanistan. This is not a president who's interested in vague end states. He's been very clear with us about what we need to accomplish, creating the conditions for them never to have a nuclear capability, and that's exactly what we're doing in historic fashion. Thank you, Mr. President.
Thank you. Appreciate it. You know, the only two people that were quite disappointed, I don't want to say this, but I have to. I said, Pete and General Raisin Kane, I think this thing's going to be settled very soon. Here they go. Oh, that's too bad. Pete didn't want it to be settled. It's these guys are doing a great job. That's a good attitude, though, Tom, right? They were not interested in settlement. They were interested in just winning this thing. Yeah, please.
Mr. President, can you, just taking things locally, hopefully not doing international affairs for a second, do you support the construction of the Second Avenue subway in New York City, and will your administration work
That's really a far out question. You know, the Second Avenue subway has been under construction for, you're a young guy, is longer than you are old, okay?
All right, well, the president's definitely speaking about something near and dear to we New Yorkers, anything to do with the New York City subway system. That is, of course, President Trump live there at the Oval Office. And I would say, first and foremost, some of what he said, that it sounds like they're getting close to maybe a deal, or at least there's talks going on. At least that's what he says. But I'm just saying, in terms of the markets, we're pretty much a kind of where we were when he started talking.
Yeah, the president said, we've won this war. It's not a close battle. Iran is defeated. Iran is a dead military. He said that J.D. Vance is involved. Secretary Marco Rubio is involved. He also said that he thinks that Putin and Zelensky are getting close to a deal. You mentioned that markets haven't moved much. We should note Brent and WTI are still up more than 3.4% today. WTI above 92, Brent still above $103 per barrel. So the market signal that we're getting is not necessarily one of quote unquote oil prices dropping like a rock when the war is over.
Right, and to be fair, I don't know that he actually said close to a deal, but he said that they are having success in Iran. We're talking to the right people in Iran. The people we're talking to in Iran want to make a deal. We'll see what happens. And I think, to be fair, we've heard some of this, I feel like, certainly over the last 24, 48 hours. At the same time, we've also had reports and different reporting on the possibility of more U.S. forces going to Iran specifically, whether it's the U.S. airborne groups or whether it's boots on the ground. So this is something we have to be very careful about. But again, that is the president. We'll continue to monitor and bring you any more headlines as they are known. In the meantime, we've got a market where we're down on the S&P, down on the NASDAQ 100, and as you said, Tim, we continue to see energy markets that are higher. So certainly top of mind when it comes to investors. Another story that's top of mind is anything and everything to do with private credit.
Let's get to the father and son team who rode private credit on the way up and who risk falling hard on the way down. It's an exclusive. It's Bloomberg's Big Take today. You can read the story and more from Bloomberg, The Big Take, on the Bloomberg terminal and at Bloomberg.com/Big Take.
Yeah, it's a great story. Two reporters among the team reporting it out. Bloomberg News leveraged finance reporter Ellen DeMoro and Olivia Fishlow. They are both here in studio. It is a great story as we continue to kind of track the concerns when it comes to private credit. And I want to start with you, Ellen. Talk to us about Cliffwater, who they are, what's been their approach, and why we're talking about them, why you guys did a deep dive.
Yeah, so Cliffwater is a sort of pioneer in private credit, really. They started out as a consultant to allocators like pension funds, and then they created their own asset management business, which has grown exponentially over the last 10 or so years. What they do is essentially partner with other direct lenders and take a slice of each of those loans, and that's allowed them to grow very quickly and become hyper diversified compared to other platforms that are just single manager.
It worked out for a while, and it made the founders incredibly wealthy. Olivia, come on in here, because then redemptions started. What can you tell us about why the redemption started and what investors wanted?
Yeah, definitely. So like Ellen's saying, the Cliffwater model is sort of a fund that allows investors to access private credit writ large.
So they're not actually doing loans. They are investing in other funds that are.
They're buying loans from other managers. So it's like a multi-lender model. Okay. So when stress started to come to private credit and investors started to want out, Cliffwater was a big place where now anyone worried about private credit that's invested in the fund maybe decided to pull capital, and that's why we saw record redemptions from the fund this quarter.
We have a great chart, and I want to bring it up. It's in the story, and Tim and I were like kind of blown away about some of the graphics that really help tell the story, because we talk about this kind of fund of funds approach, if you will. It's a circular chart, but what it basically is showing, and it's hard for those folks, obviously, if you're listening on radio, you can't see it, but difficult too on TV. But what it's basically showing is that they owned, about a third of Barings private Private Credit Corp at the end of 2025, but they also were involved with Ares, right? Blackstone. I mean, walk us through that circle and what it tells us.
Sure. So the way that they've been able to partner with so many managers is by investing directly in the funds, and then they set up agreements to be able to be in the underlying loans as well. So they are invested in, I think, more than 50 direct lenders. They're invested in many. This is one chunk of sort of those types of fund investments. This is the non-traded BDCs and the investment partnerships and specifically, but they have a large holding in Barings, Ares, KKR, you name it, like all the big names. Blackstone.
Kind of a who's who, right?
It really is, yeah.
I think the question that a lot of people have, and we're going to be speaking about this a little later in our program to Olivia, is this question of to what extent are the challenges at Cliffwater or a single firm contained versus are they part of a bigger picture when it comes to private credit and this idea of so-called contagion? What did you find in your reporting?
So I think that we've seen recently that firms are expecting this concern among investors to continue. We saw some lenders that capped redemptions signal that they're going to do the same thing next quarter. So I think we've definitely seen any stress at one fund, managers are expecting it to kind of spill over to their fund as well.
That's what I was curious about. When the stories kind of pitch as one of the biggest question marks in the private credit industry, is it because they are so vulnerable, or that if they start to come undone, then you've got to assume that there is that contagion or systemic impact?
I think people were pointing to Cliffwater in particular because of this fund of private credit funds aspect that's very unique to them. And then also, I mean, they're just really big. It's
How big?
33 billion, which is quite large. I think they're second only to BCRED. So that's pretty large in this market. They're touching a lot of different direct lenders. They're in a lot of loans. Everybody's worried about software and AI disruption. They're in a lot of software. So there's a couple of reasons people are focused on.
So is that why, Ellen, it didn't work? It worked until it didn't work. Was it software? What was sort of the straw that broke the camel's back with this?
I think a lot of this comes down to sentiment around software, personally. Yeah. We saw people start to get nervous, and we've reported previously that software is the single largest sector exposure in private credit. It's about 20%, which is sizable. So we're starting to see people get their money out or try to, and we're starting to see gating happen. So a lot of this stems from that.
I will point out, Carol, software companies taking a hit today. The latest example of volatility in the sector, the information reporting that Amazon Web Services is developing AI tools designed to automate functions in sales and biz dev.
Yeah, like we continue to see this on a daily basis, kind of questioning some of the existing models or companies and whether or not, we're going to see more problems going forward. I guess time will tell. Olivia, I want to bring you back in because you've got another story in the Bloomberg that's about Ares Management and Apollo Global capping private credit fund withdrawals as clients want to redeem more. We kind of remind everybody, private credit, not so liquid, folks. You're going to have to park your money for a while, but that's not, so, investors are pushing back. So tell us a little bit more about this.
Right. Yeah. So I think, like we're saying, there's all these fears around private credit, around software, right? But I think a big issue for these lenders is that they went really aggressive into the retail space, and that helped grow their firms a lot. It let them bring in a lot of money, but maybe they weren't prepared for that retail space to sort of turn. And now we're sort of dealing with the first wave of all of these funds having to cap redemptions.
Who's at fault, though? Like, when you think about that, and we've had folks on around this table who say, read the fine print. And sometimes that fine print is pretty early in.
Yeah, James Crombie talks about that all the time. Your colleague on the team. He says this is like literally what it says in the prospectuses. So, read the fine print here.
I think that is true, but what is hard is that we've seen some lenders actually decide not to cap redemptions, and they took special measures to return all of investors' capital. So it sort of set this not uniform pace where maybe some investors felt like, wait, I thought I could get all my money back.
Yeah, I mean, okay, so what are we watching? Let's go back to Cliffwater. So what do we need to watch? What are you guys watching that is an indication that, all right, this storm, it's not just a short storm, it's something much bigger?
Yeah, I think we're going to continue to watch for redemptions. You know, if they stay elevated, we're going to watch Cliffwater's liquidity levels. We reported that they'll be able to manage this, like max redemptions, for at least a year without having to sell any assets or sell any fund stakes or anything like that, any extreme measures. So we'll be waiting to see if they can maintain that liquidity, and maybe investors will get more comfortable again and stop redeeming. Maybe they won't.
Right.
Time will tell.
And I also think about the rate environment, whether we start to see rates go up. We know that higher rates have been problematic for all of the private credit world. Thank you guys so much. Important story, among the most read on the Bloomberg terminal. Bloomberg News leverage finance reporter Ellen DeMoro and Olivia Fishlow. You can read their story and more from the Bloomberg Big Take. It's on the Bloomberg and at Bloomberg.com/Big Take. That's going to do it for us.
It is, but coming up next, it's the close on TV. We're continuing on a Bloomberg Business Week Daily. We're talking commodities and oil. That's next.
This is CBS News on the Hour, sponsored by The Wellness Company.
I'm Jennifer Kuiper. Federal investigators say a runway warning system did not sound an alarm before the deadly collision of an Air Canada jet and a fire truck at New York LaGuardia Airport on Sunday night. NTSB Chair Jennifer Homendy says of the fire truck.
Truck 1, however, did not have a transponder,
and which was needed to trigger the warning system, and she says they still need to interview the two controllers who were in the tower cab.
It is not clear who was conducting the duties of the ground controller. We have conflicting information. We have some information saying it was the controller in charge. We have some information saying it was the local controller.
Airport security lines are getting longer as TSA agents working without pay during a partial government shutdown call out sick or quit. CBS's Nicole Skenga is at Houston's airport, where ICE agents have been sent by President Trump.
We saw them moving and directing some traffic. We saw some of them handing out water yesterday. Largely, they are not screening passengers. They are not checking IDs. They are not looking at the X-ray machines here. From at least what we can tell, there's only so much they can do in terms of really helping out.
The Senate is closing in on a deal to fund the bulk of the DHS and end the partial shutdown. President Trump was just asked about it.
Do you support what appears to be a merging agreement coming out of the Senate to reopen DHS?
Well, I'm going to look at it, and we're going to take a good hard look at it. I want to support Republicans.
Minnesota officials sue the Trump administration for evidence related to 3 shootings by federal officers.
The lawsuit was announced by Hennepin County Attorney Mary Moriarty, who called it unprecedented.
Minnesotans saw Renee Good and Alex Preddy die at the hands of federal agents. Julio Sosa Solis was shot, and ICE agents lied about what happened. Now Minnesotans are seeing their federal government hide evidence and obstruct investigations into these incidents.
The lawsuit says the federal government still has not provided the names of the masked agents who shot Preddy, and Renee Good's car remains in shrink wrap inside an FBI storage facility.
That's CBS's Cammie McCormick reporting. Christians in Jerusalem are bracing for limited celebrations of Holy Week due to the war with Iran. They're canceling Palm Sunday in Jerusalem, where reporter Linda Gradstein is.
Since the war with Iran began almost a month ago, Israel has closed all the Jerusalem holy sites to the public, although clergy are allowed to pray there.
Stocks are mixed on Wall Street, and oil is up over 4%. This is CBS News.
Every home.
A skiing champion is documenting her post-op progress. CBS's Deborah Rodriguez has details.
Talk about a fighter. Lindsey Vonn has posted video showing off her progress 5 weeks after a dramatic crash on the slopes at the Winter Olympics that necessitated 5 surgeries to save her left leg. The Alpine racing champ does her first set of post-op pull-ups to Birdie's song, Keeping Your Head Up. As she finishes, she proudly smiles at the camera, sticks her tongue out, and carefully gets back on her crutches. Vonn was racing on a torn ACL when she wiped out in Cortina, Italy. She's said she's not ready to discuss her future. Deborah Rodriguez, CBS News.
The nonprofit that controls the artificial intelligence maker OpenAI pledges to grant out $1 billion in the next year and to build up its capacity as a philanthropic funder. The pledge represents a major development in OpenAI's philanthropic activities. Jennifer Kuiper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just under 55 minutes away from the closing bell on this Tuesday. Carol Masser, Tim Stenivek, live in our Bloomberg Interactive Brokers studio. Just coming off of some comments from President Trump talking about, hopeful it sounds like when it comes to talks between the U.S. and Iran, but have to say that we've been here before. It feels like over the last 24, 48 hours. So kind of just keeping an eye on the markets and looking for changes. Having said that, slightly lower on the S&P, NASDAQ 100 down about 0.5%. So we're definitely off our worst levels of the session.
Yeah, stocks bouncing from those lows on those hopes for U.S.-Iran talks. The question is what's happening in the commodities market, specifically oil, and what's happening in the bond market. We're going to speak about that with Eric Weiner in just a few minutes.
Yeah, he's got some good insight in terms of the trade and conviction behind it. Maybe there isn't so much. We're going to get into also the energy markets more broadly. That renewed oil advance stoking fears that the war in Iran will exacerbate a global energy crunch. Many have said we're going to see this for years to come just because of what's happened in the Mideast region. We're going to talk with energy with our Bloomberg Intelligence Senior Energy Services Analyst. So we'll get into that a little bit later on.
Shares of ARM Holdings are down now, but they were bouncing higher. This after the company said that it will begin selling its own chips for the first time, aiming to claim a bigger piece of the massive spending on AI gear. We're going to hear from ARM CEO Renee Haas in just about 20 minutes.
And remember when we used to talk about AI all the time?
Yeah, don't we still do?
Not so much, but it still exists. We're going to talk.
I think about it all the time.
I know you do. We're going to talk AI and healthcare specifically. We're going to be joined by the CEO and co-founder of ZocDoc. That's all coming your way.
First up, though, a check on the day's trade and top business story is Amy Morris is standing by. She's in the Bloomberg Interactive Brokers studio in for Charlie Pellet. Hey, Amy.
Hey, Tim. President Trump signaled earlier that Iran had offered a present as a show of good faith in negotiations to end the conflict, and the U.S. and a group of regional mediators are discussing the possibility of holding high-level peace talks with Iran, while the Pentagon is planning to send a brigade combat team to the region to support operations. Now, the markets are watching all of this very closely. WTI now $91 per barrel, Brent crude close to $104 per barrel, and natural gas is 1.5% higher. Now, Canadian Energy Minister Tim Hodgson says he discussed increasing natural gas flows to the U.S. for both the Gulf Coast LNG export and to support AI data center demand with his U.S. officials at CERAWeek in Houston.
We talked about how we could help send more gas down to help you export more off the Gulf Coast and to help you with your AI strategy. Obviously, a key component of winning the AI race is building more data centers. That requires more natural gas. We can provide that natural gas.
Canada's Energy Minister Tim Hodgson tells Bloomberg at the CERAWeek conference in Houston that he had a, quote, wonderful conversation with U.S. Energy Secretary Chris Wright and Interior Secretary Doug Burgum. We do check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the downside. NASDAQ down 0.5%. The Dow up 0.1%. The 10-year Treasury yield at 4.38%. The 2-year yield at 3.91%. And Bitcoin is down just about 2%, around $69,000. Growth in U.S. business activity slowed in March to an almost one-year low. Prices paid for materials and other inputs rose after the start of the war with Iran. Companies passed on higher costs to their customers. The survey shows the steepest rise in selling prices in more than 3.5 years, and headcount in March contracted for the first time in 1 year. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
Hey, thanks so much for that update. Do appreciate it. We mentioned that renewed oil advance, stoking fears that the war in Iran will exacerbate a global energy crunch, spurring a drop in stocks and bonds amid a conflict that keeps dragging on. Equity markets bouncing off those lows. Commodities markets, though, still signaling that they think higher energy prices are here to stay.
Yeah, we're trying to make sense of the trade here. There wasn't a ton of movement, it felt like, off of President Trump's comments from the Oval Office. But let's get to it and see what Eric Weiner is seeing as he digs into the markets every hour. Bloomberg News senior editor, Equities Americas, right here in our Bloomberg Interactive Brokers studio. This trade, we didn't see a ton of reaction off of President Trump from the White House.
We saw a bounce. It definitely, he's giving periodic, much more frequent updates than you would expect.
Do you think he's watching the market?
Oh, yeah.
Yeah.
Oh, yeah.
Okay.
And I think he's got his Bloomberg.
Hello, I'm Captain Obvious.
I mean, he talks about it.
I know, but all right. I want to see what Eric had to say.
Okay. How closely he's watching, though, depends, because he really should be watching the bond market. He's watching the stock market, and he can move it. He's shown that he can move it. So these periodic updates actually work for stock traders very well, because there's a bias toward believing he wants to get out. So every time he speaks and he sort of confirms that bias, people say, okay, hit buy. Whereas in the bond market, it's very different. In the commodities market, it's really different, particularly when you're talking about oil and the different oil prices.
So let's go to the global commodities, and it's GLCO on the Bloomberg terminal. Brent is still about $104 a barrel, WTI above $91 a barrel. Both of those are up over 3.3%.
The divergence between the two.
That's what, talk about that.
Well,
because for a long time they traded very closely.
They were trading very, very closely, and then late last week they sort of started breaking apart.
I'm so glad you're going here.
You can see the divergence today. It's pretty wide, and if you look at it on percentage bases, you look at it on total points bases, it's really obvious. Europeans trade Brent. We trade WTI. If you are more skeptical about what is going on globally, and if you are concerned about the longer term impacts, which tends to be Brent traders, they are going to hit this harder. It doesn't necessarily mean that it's not going to even out or anything like that, but we are seeing this divergence literally as last week started playing out.
Yeah, and let's not forget, Europe has had 2 wars to deal with, and this has certainly impacted so much over there.
So much of the crude that is counted in Brent comes through the Strait of Hormuz. So many of the countries that are in that block are also, affected by the strait. So if there is going to be a large long-term problem getting oil out of there, this is going to cause higher prices for a long period of time.
So is the stock market wrong and the oil market's right?
Well, markets being right and wrong is because it's such a temporary moment, so the stock market is more reactive to minute to minute announcements, and it's really kind of on a hair trigger. When you look at what commodities prices are doing, they're looking at a much longer time frame, and they're looking at risks very differently. So if you're a stock trader and you're looking at what's going on in the Middle East, well, if we do cut and run or whatever, use the metaphor that you want, if we get out of there and suddenly we're not going to have to spend $200 billion on defense or whatever it is that's concerning you about the war, that just sort of ends, right? Our economy comes back to normal. We start worrying about AI again, which those stocks are down today.
Yeah.
We start thinking about all of that. Whereas if you're a bond trader, if you're an oil trader, you're just looking at things very, very differently. If the war sets off long-term impacts, we can leave and those impacts will stay. It may not affect the U.S. stock market. It may not affect the S&P 500, but it will stay and it will affect certain parts of it.
But it would if it affects oil, then it does affect the stock market because the consumer powers this economy. If we're spending $1 more on gas, if we're spending more on airline tickets, if demand destruction happens,
if it leads to inflation,
it does. All of that's true. But if you feel that the Mag 7 is undervalued and will come back, which it is down for the year. So if you're thinking, well, these stocks aren't really inflation sensitive, it's all about the growth of this market, then, you come back and you're like, okay, well, here we go. Let's go up 10% again.
We had a $69 billion sale of 2-year notes, unexpectedly weak demand. So problematic, to be expected. I mean, our analysis is talking about some concerns about inflation, so maybe investors not so interested.
That's generally what we're hearing in across the board, is that the inflation trade is really what's underpinning. Now today, like in the stock market, you have this bias toward buying, but in general, really the concern is inflation, the Fed not being able to come in to help. And then what happens, as you point to, the consumer prices. I mean, we're seeing consumer discretionary down. We're seeing a lot of stuff that's price sensitive down. Or materials stocks going up because those materials are going to cost more. So there's this push-pull going on, but you're talking about different time frames and different traders who view things differently, and they can be wrong combined but right for themselves.
I also think about, as you talk about higher prices, you can create demand destruction as a result of higher prices, and then that becomes problematic for the global economy. I know there was some reporting out on the Bloomberg, and I think we're watching some of the global Purchasing Managers Index that are coming out. This is something that's very real, and that could lead to something more significant longer term.
Yes, and so the Purchasing Managers Index is the PPIs and all of that. That's a flow through. So when you start seeing costs go up at businesses, that will eventually hit the consumer. It doesn't necessarily go right to them. So when you're talking about CPI readings, that is literally what the consumer price is.
Right.
But when you start looking underneath the hood, everything is going up. So, and it's not just demand destruction. It's this pessimism about the economy. We keep looking. I mean, I was driving around this weekend and we're seeing 4s on the gas stations.
Yeah.
And that's the kind of thing that freaks people out. You go to your supermarket and suddenly your bill is, $50 more than you was last week.
Is that because diesel's $5.35 a gallon?
It can be any number of things. It can be, and yes, getting the goods in is expensive. Getting actually getting individual products to you is going to cost more. The individual inputs cost more. I mean, it keeps creeping along and going up.
Any other story in town right now, or is it really the war? That's what matters in terms of the trade. Just got about 40 seconds.
It's the war, although AI is still in the back of all of this. And if you look at the top of the loser board today, it's AI stocks. You have about 2 to 1, on buying versus selling, or advanced versus declining. And the decliners are the big guys. So that's still there. And, when this all ends, that will still be there, and those concerns or that belief will still be driving things.
I hope Eric Weiner will still be here.
I will.
That's what
this is when I say lock the doors, not go anywhere.
Yeah.
People are always like, wait, what are you doing?
We hear the music. It means it's time to go, but we don't want Eric Weiner to go anywhere.
We never do. He is Bloomberg News Senior Editor, Equities Americas, joining us right here in our Bloomberg Interactive Broker Studio. Eric, thank you.
Hey, coming up next, more on energy. We're going to be joined by our Senior Energy Services Analyst for Bloomberg Intelligence. This is Bloomberg.
It's 3:21 on Wall Street. I'm Amy Morris. President Trump signaled that Iran has offered a present as a show of good faith in negotiations the U.S. leader has claimed are ongoing to end a 25-day-long conflict. The president would not detail the gift, which he says is worth a tremendous amount of money, but he confirms it was related to energy flows through the Strait of Hormuz. Now, markets are paying attention to this. Stocks now bouncing off session lows on the hopes for talks with Iran. WTI more than $91 per barrel. Brent crude more than $103 per barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the downside. NASDAQ is down about 0.5%. The Dow is up about 0.1%. The 10-year Treasury yield at 4.37% and the 2-year yield at 3.91%. Bitcoin down nearly 2%, around $69,000. And spot gold little changed on the downside, but facing its 10th straight day of losses. ARM Holdings will begin selling its own chips called AGI CPUs for the first time, aiming to claim a bigger piece of the massive spending on AI gear. The AGI CPU will have as many as 136 cores and draw 300 watts of electricity. It'll be produced by TSMC. Meta Platforms will be its first major customer. ARM shares are more than 1.5% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. We go back now to Bloomberg Business Week Daily with Carol Masser and Tim Stinovec.
All right, so appreciate it. Amy Morris there. Hey, it's time to talk some commodities. We're definitely watching the energy markets. We're going to dig into that in just a moment. It is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, you could just head to goldencrestmetals.com/guide. That is goldencrestmetals.com/guide. We got to talk energy markets.
Yeah, we do. Taking a look at Brent up $103, 46 cents a barrel right now. That's up by 3.4%. The Wall Street Journal reporting earlier that the Pentagon planning to deploy a brigade combat team from the Army's elite 82nd Airborne Division to the Middle East to support operations against Iran. Meantime, United Airlines CEO Scott Kirby spoke with Bloomberg's Lisa Abramowitz to discuss company performance amid a number of challenges that the airline industry is facing, including the increase in oil prices due to the war in Iran.
I do think that oil prices are, I think they're higher for longer. It's reasonable for us to plan for that regardless because the downside is pretty limited. Like we leave a little bit of demand on the table by not flying quite as much this summer. So what? That's not a big deal. But it gives us more optionality on the other side for the recovery. And so we're really focused on what the recovery is going to look like. And I think our forecast of oil going to 175 and staying through up to 100 to the end of next year is reasonable. If our forecast of fuel prices is correct, then my guess is there's going to be an impact to the economy as well. And I hope not, but we'll watch that as it goes along. But we'll be nimble and see what happens with prices and demand.
That was United Airlines CEO Scott Kirby with Lisa Abramowitz earlier today. For more, we're joined by Scott Levine, Bloomberg Intelligence Senior Energy Services Analyst. He joins us here in the Bloomberg Interactive Brokers studio. I'm not going to have you make a call on the price of oil because, you know, that's... I appreciate it. But $175 a barrel forecast from the CEO of United Airlines, that has a lot of eyebrows raised.
Yeah. Look, there's so much uncertainty right now, and yesterday the price of oil is down 10%. Today the price of oil is up 3 to 4%. Right, with every day there's fresh information. The market doesn't know what information is credible. We have a general understanding of what the next that this is supposed to be a weeks or months conflict. Yes. However, we get different messaging every day. Yesterday, Trump comes out and says, we see signs of an agreement here. The Iranians, they come out and say, we don't know essentially what he's talking about. We haven't heard anything. And who knows what's being said behind closed doors. So, oil was at $65 a barrel before we entered this conflict, right? Strait of Hormuz effectively is closed. We shoot up to $100 a barrel. I think that's a reasonable thought as to where we'll be. I think $175 a barrel is a bit nuts.
It feels a bit, but welcome to the world of nuts.
And to be fair, he's planning for the worst, and he said that the downside is limited if they don't hit that.
No. What is it though, Scott? Like I'm looking at a story too. I guess it was earlier this month that talked about the number of oil drilling rigs operating in the U.S. climbed by the most in 3 months. This was back the first week of March as the war in Iran drove up crude prices. What is it that spurs either drillers into action, major oil companies, especially here in the United States, to start doing something differently, to invest in increasing activities because they think this is going to be a higher oil price environment for longer?
Yeah, no, I think we've seen enough to suggest that we'll see an increase in activity. The question is by whom and how much, right? I think before we even saw the conflict break out and oil prices spike, we had seen rig counts stabilize. They had been coming down since 2022. In 2022, we saw the Russia-Ukraine, the Russian invasion of Ukraine, oil prices went as high as $120 a barrel. And so we saw rig counts move up dramatically, and that was in the wake of the COVID-triggered recession. And so, after 3 years, we're down 30% on the rig count from the 2022 peak. And we'd seen indications that we were going to see stabilization at a minimum this year before the Iran conflict broke out. And so, as you say, we're at $100 a barrel. There's going to be an increment. There's always got to be a first guy in the pool, right? Generally, it's the smaller wildcatter, right? The guy who's basically the most price sensitive and who's the most comfortable getting involved in activity. He doesn't have to answer to shareholders. So it's the smaller wildcatters, private guys that are going to be the first ones.
Like a John Hamm in Landman in the first season.
There you go. Okay. That's your first guy in the pool. Okay. Exactly. And so the longer this plays out and the more confidence that the Exxons and the Chevrons of the world think that this has staying power and that they can be rewarded for those investments, which are much bigger, right, they'll start to get a little bit more active, but we're not there yet.
So do you think we could get back to a place where we see that 2022 peak again when it comes to rigs?
I don't think so.
Not in this cycle.
I mean, really not unless, that's a conflict that's been ongoing for 3 years, right? Yeah. And so, it's just going to be ongoing for 3 years. I don't think so. It's going to be ongoing for longer than was initially expected. I think so.
What about Venezuela?
Yeah,
because we talked a lot about this, especially with the type of oil that Venezuela produces, where that oil goes. We know that they have vast oil field reserves. How does that play into this?
Yeah. So I think Venezuela, there's a long-term play there potentially. All of the major U.S. oil companies once upon a time were involved there. It was an active market. It was, between number 10 and 20 in the world. And their infrastructure eroded during the Maduro administration and even before then. And so most of the U.S. companies, I think, at this point think Venezuela is or will be investable. However, it takes a long time to develop there. There's some low-hanging fruit, which you can bring back to the market. And we've already seen the daily production come up 200,000 barrels a day since the arrest. So, there'll be an early phase and a longer-term phase. But based on everything we've seen, as long as the current administration remains in place and the major oil companies see safeguards to protect their investments, they'll start getting in more aggressively there. So I think that is one that is a story that is going to continue for sure.
You follow coal as well, right?
To an extent, yes.
Yeah, okay. So we saw coal stocks soaring in a big way, all your major players, as this war continues, and we saw tightened supplies of LNG, liquefied natural gas. And so that is expected to increase demand for coal. Do you see things like that as a short-term thing, or is this once again that maybe coal is part of the energy picture going forward? It still is in certain parts of the world.
Yeah, no, I think it's times like these you realize you need all the energy sources you can get, right? And so that's the least desirable, particularly in developed nations. However, nobody's willing to live without energy, and it takes a crisis to really be reminded of that and learn that. I think it's probably a short to an intermediate term play, depending on the country and the market that we're talking about.
Right.
But whenever there's a crisis, all hands are on deck.
And I will just say that we've got a story. More than 40 energy assets across 9 countries in the Middle East have been severely or very severely damaged, according to folks in our reporting.
Scott Levine, Bloomberg Intelligence Senior Energy Services Analyst. Appreciate you. taking the time today.
Yeah. All right, right now we want to get to an interview in progress right now across Bloomberg platforms. This is Bloomberg's Tom McKenzie speaking with ARM CEO Rene Haas in San Francisco.
Meta is our lead partner and Meta asked us to do it with them, so we did.
Talk to me about Meta and the partnership then. One of your customers, OpenAI, also a customer. What are the commitments from Meta, from OpenAI to take this chip on board? When do you start shipping?
So as Mohammed said, it's available now, and we'll start shipping at the end of this year. We're not saying anything publicly about the volumes associated with it, but they are material enough that we have to start talking about the product because it's going to start showing up in our revenue this year.
The revenue starts showing up this year, and in your presentation earlier here in San Francisco, you talked about potentially just this one revenue stream, just this one part of the business, potentially $100 billion by 2030. Talk us through how you get to that $100 billion.
So we're looking here then, Tom, at the general purpose CPU TAM, which today in 2026 is about $60 billion, $70 billion, depending on your maths. I talked about agentic AI driving a 4x CPU workload even today. So $60 billion going to $100 billion by the end of the decade in terms of market opportunity is not really that much of a stretch.
How much of this is about that huge demand we're seeing, particularly here in Silicon Valley, for agentic AI? How much of this is aligned to that shift?
I think you have something key that's underpinning everything, and that's the demand for compute, period. And compute has been perceived in AI about just generating tokens. But those tokens need to be distributed, managed, orchestrated, scheduled. That's all work that only CPUs can do. So the more and more compute that drives agentic AI drives huge, huge CPU demand, which is great for the product we just announced today.
The other number that you announced was $1 trillion, and that's the entire business by 2030. You were a $4 billion revenue company in 2025, and you're looking at $1 trillion potentially by 2030. Just unpack that for us. How do you get to $1 trillion potentially by 2030?
Yeah, so what I showed there was a TAM, total available market, of $1 trillion by the end of the decade. And I showed a picture that had some other die photographs of things that we could do with the tagline, we're not stopping here. So more to come, but today's all about the ARM AGI CPU.
More to come. So you have the pipeline of CPUs. Do you move into GPUs? What else is involved in more to come?
The compute demand for AI is off the charts, and ARM is at the heart of literally every AI compute workload. So we have a lot of different ways to go address that.
Can you give me some detail, Rene, in terms of revenues in the next 12 to 24 months coming from this product?
So we're going to be talking about it a little bit later, but the market potential for this product is game-changing for the company. It puts us in a whole different zip code relative to the size of market we can address and the kind of revenues we can drive from it.
Does it come at the cost of margins, the spend on R&D? Is that the pain point potentially?
So one of the things to think about when you get into the chip business is the gross margin percentage may be less, but the gross margin dollars may be much, much larger. So if you think about, let's use the TAM example, $3 billion TAM, 95% gross margin, you'd call that $2.8 billion. Take a $100 billion TAM and apply a 50% gross margin, you're at $50 billion. So $50 billion of gross margin versus slightly under 3. So percentages less, dollars much, much, much more.
The critics might say the hyperscalers are doing custom silicon. Jensen Huang talked about CPUs, their own CPUs, that maybe ARM is late to the game. Are you late on this?
No, I don't think we're late at all. And I think if you just look at what we've seen with agentic AI and the fact that CPUs are being seen again as first-class customers, it's a proof point that there is going to be huge demand for this product. And by the way, Tom, it's not just in the data center. As I talked about, ARM is the heart of physical AI. We're the heart of autonomous vehicles. We're at the heart of mobile phones, edge devices that fit inside your ear, wearables. That all needs compute in a very big way with AI.
This is bad news for Intel, presumably.
I don't know if it's bad news for Intel. I think it's good news for the market that really needs to have extra performance at the same power. So I think for customers who need that extra performance but don't want to spend more in power, it's really good for them.
There was a time when ARM was characterized as the Switzerland of the semiconductor industry, neutrality. Can you really claim to be neutral now that you have your own fully designed manufactured chip?
I think so. The market and the world is complicated relative to customers who compete with each other. You've got Google building phones, yet Samsung is a large Android customer. You've got Microsoft building laptops for things like Surface, yet you've got companies like HP building the same. The thing to keep in mind is why ARM building chips is beneficial is that it lifts all boats for the ecosystem. The better the software is on ARM, anyone building an ARM-based chip can benefit from that opportunity.
At GTC, Jensen Huang, NVIDIA, at their annual conference, outlined the picture for inference. And they've obviously bought the IP and the licensing around Grok, which plays a big role in inference, the way we interact with these models, the questions and the answers. Do we move now from a place where this is less about training and more about inference? And what does that mean? Does that mean more demand for your products or less demand as we start to shift from training to inference?
Well, I think that the shift to training the shift to inference from training is an intellectually obvious one, right? The more models that are trained, the more sophisticated they are, the greater the demand to actually use them. So as workloads shift more and more to needing inference, I think, again, all boats go up. I think we're not done yet with training by any stretch of imagination, but with inference, you're really servicing the models that have been created. So I think both demands go up, which again is good for ARM.
I want to zoom out a little bit to what's happening geopolitically, the Middle East, the war in Iran. What is that supply chain impact having on your customers in terms of their ability to operate in this environment?
I've not heard anything yet. I've read about things in the news about that space, but when I think about customers coming to us or looking at our financials and saying, oh my gosh, we're going to see some impact due to what's going on in the Middle East, we're not seeing it.
When it comes to memory, high bandwidth memory, NAND, and other parts of the memory space, massive supply shortages, do you see a contraction of the smartphone market this year?
Memory is going to be tough to get, period. I think it's going to be a driver of growth for the industry, but to the point we were talking about, more and more of these inference models, more and more compute, means demand for a lot of memory. So do I think smartphones are going to go down? I don't have a good projection on what that looks like, but I do think that the memory supply cycle is going to be pretty tight.
It remains pretty tight until when do you see that tightness in particularly HBM memory, high bandwidth memory tightness? When do you see that being resolved?
Yeah,
how many more years of this?
I think the memory market is going to be a tough market. If you listen to SK Hynix or Samsung or Micron, the next year to 18 months, I think it's going to be quite supply constrained.
Okay. Can we conclude? Is it fair to conclude that we're going to see smartphone prices generally go up and fewer products as a result of this, at least in the short to medium term?
Yeah, I've not seen that yet, Tom. I think for what I've seen for ARM is we've had a lot of questions about it. How is our business going to be impacted by the memory issue with smartphones? And because we've gone to CSS and much higher royalty rates, even a reduction of 15 to 20% in smartphone volume has probably a 1 to 2% impact on our royalties. And that's just because of the mix of where we play. So right now, as ARM's business is going, we're not seeing it, and we've modeled in some bearish figures.
You, in your role, you have to be looking to the future. And I know you do this, Rene, years out. Jensen Huang has talked about this. Elon Musk has talked about this. Jeff Bezos has talked about this. Data centers in space. Do you take that seriously, Rene? And are you and the team looking maybe at servicing at some point with your CPUs, with your architecture, data centers in space?
I think it's quite real. There's some huge benefits you get from it. One of the obvious ones just being power. The benefits you get from power are quite profound. Now, when you think about putting things in space, swapping out boards that have gone bad, a system that needs to be made redundant because something's not working, obviously all those issues come into play. And then there's obviously issues around latency. Can you get the performance you need? But do I think we'll see data centers in space someday? Absolutely.
And I want to loop it back.
We can play there.
You can play that. You can play in data centers in space. There we go. There we go. The ambition remains. Another question on data centers, given what we're seeing in the Middle East. We've seen data centers run and owned by the likes of Amazon in the Middle East being targeted, being impacted. Do we need to rethink security around data centers? Is that a topic that's being discussed in the industry?
I think it is, and yes, for sure. When you think about the scale of these data centers and the value of the intellectual property inside, the amount of compute that it services, absolutely. If you go to data centers in North America, for example, they are very heavily security. They are security devices and personnel around all these data centers. So certainly it's something that has to be done, and it's being done.
Rene Haas, thank you very much indeed. The CEO of ARM on a day, of course, where they have pivoted and significance in terms of designing their own chip with potentially a total $1 trillion TAM or total addressable market. Guys, back to you.
All right, so appreciate it. Bloomberg's Tom McKenzie speaking with ARM CEO Renee Haas in San Francisco. That's at the company's sponsored event, ARM Everywhere. So, yeah, certainly key when it comes to the semiconductor.
You get an arm.
But you think about the semiconductor space, so important.
Yes.
Talk about it so much. This is an important player. And kind of hearing their view and perspective on everything that's going on. As we know, it can be very cyclical, but there's a massive build out that's been going on.
Well, the stock move today. Yeah, the stock move today was really cyclical, up as much as 2.7%, down as much as 2.8%. Now ARM ADR is down about 1.9%.
All right, something we're certainly keeping an eye on as we count down to the close. In the meantime, let's get a check on the trading day. Your top business stories. Let's toss things over to Amy Moore. She's in for Charlie.
All right, thank you so much. It is 3:42 on Wall Street. I am Amy Morris, and we do check markets for you all day long here at Bloomberg. We're in the red. Stocks are lower. Let's go to the first word breaking news desk for today's afternoon call. Here's Jordan Fitzgerald.
Thanks, Amy. The main U.S. averages are choppy as investors continue to parse signals surrounding the war in the Middle East. The S&P cash is down about 0.3%, with the Nasdaq down about 0.7%. And taking a look at the Dow, Caterpillar, Cisco, and Nike leading, with Salesforce, IBM, and Microsoft lagging in the Dow. Alternative asset stocks are down as they curb fund withdrawals, and software stocks are lower as Amazon develops new AI tools. Meanwhile, Barclays strategists have boosted their price target on the S&P 500 to 7650 from 7400, despite current macro risk. Wrapping things up, oil is higher, Bitcoin is lower, and gold is quiet on the day. I'm Jordan Fitzgerald. Back to you, Amy.
All right, thank you, Jordan. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Amy Morris, and that is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the driver's seat. Just drive, baby.
This is the drive to the close.
But we're going, we don't need roads.
On Bloomberg Radio.
All right, everybody, we are just about 17 minutes away from the closing bell on this Tuesday. Carol Master, along with Tim Stanovic, live in our Bloomberg Interactive Broker Studio. Let's bring up shares of OpenAI. Oh, we cannot do that.
I mean, we might be able to soon.
But there is a story crossing from the Wall Street Journal.
Yeah, OpenAI is planning to discontinue the app for its Sora video platform. This is a product it released to great fanfare last year that has since fallen from public view. This, according to the company. I'm reading right from the Wall Street Journal story here. The move is one of a number of steps OpenAI has taken to refocus on business and coding functions ahead of a potential IPO as soon as the fourth quarter of this year.
You know, you have to think about these are companies, a ton of money going into it, a lot of relationships, but at some point you have to think about, okay, what's the path to profitability going forward?
But Sora is pretty cool, and it shows the capabilities of this stuff. I mean, when this came out last year, you could type in, make me a superhero flying around a city, and it would make a video.
Is this what you do in your spare time?
I did this at soccer practice, actually.
I knew it!
Yeah. But it said it couldn't do it because of concerns about copyright.
Yeah. So
yeah, but it can do cool stuff like that. Look, to me, this, at first blush, I only have these two sentences from the Wall Street Journal, but to me, this is about Anthropic and about Claude, and understanding that Claude is making such inroads when it comes to coding and when it comes to reaching those Fortune 500, Fortune 1000 companies.
So OpenAI doubling down and focusing on what it thinks it needs to be?
Because then they, get more money from these companies rather than from people telling it to make weird videos to share on social media.
All right, let's not forget, OpenAI backed big time by Microsoft, so interesting. Hey, let's get to it as we drive to the close. Emily Green is with us, Head of Private Wealth Management at Ellevest. Firm has more than $1.1 billion in assets under management. She joins us right here in our Bloomberg Interactive Broker Studio. Good to have you back. How are you?
Thanks, I'm good.
So
are you using AI?
I do. I pay for all of them.
You do?
I am one of those people who pay for all of them. So, we use Gemini.
So how do you think about it? And how, as an investment play, the money, the investments, the building out?
I mean, as a user, I think a lot of people think about it as efficiency.
Yeah.
I think a lot more firms need to think about it as how does that make your client experience better? As an investor, I think it's super interesting. I think that we've certainly seen that that's the trade to make over the past year and a half.
Yeah.
But you've seen that also, that trade has gotten wider. And I bet, when you look at 2025, when we're thinking about with just everything going on right now, I bet if you were thinking about our policies in the U.S. and America first, you wouldn't have bet that international emerging markets are going to be what dominated the market. So I wouldn't always think about what to expect, and you got to think long term.
How are you thinking long term about this year, and especially in the wake of the conflict in Iran and how that has changed your investment thesis, or has it not?
Yeah, I think it's interesting. The market clearly wants the conflict to be over. You see that, Trump tweets yesterday and the market pops up.
Yeah.
It's ready for the conflict to be over. And I do think, I tell all of our clients that if there's anything to expect, it's that Trump is going to do something unexpected. And so trading on things that we don't know, I find to be really hard. And so when I think about it, it is how do we think long term and what does this mean? And we saw Jamie Dimon talking earlier today about how actually the conflict right now could lead to long-term peace in the Middle East. That's a good thing if we're thinking about long-term investing. And so when we look at it, I still look at it as diversification is key right now. You look at what's happened to gold over the past week. Who would have expected that? And so when you're taking these bets, you need to be thinking long term.
Well, I'm glad you went there because we had a conversation, something we've been scratching our head about, and the thinking our own Ed Harrison saying, listen, gold had such a tremendous run up. We saw a lot of retail investor involvement, and that you kind of got a correction that was needed. And so that's kind of why you didn't necessarily seeing it as a safe haven run amid the war and the volatility. Having said that, his thinking and his view, and we'll see what happens when earnings pan out, is that you're going to start to see more corrections in other asset classes, including stocks. I mean, I look at the Treasury trade, we've got a higher rate environment and people saying not so many rate cuts globally because they're worried about global inflation. What kind of environment is that for the equity play?
I think it is. You have to look underneath the indexes and think about what's going up and what's going down. And so it's a very different story when we actually think about it. And so there's some companies that have still done. I mean, look at small caps, like relatively flat. And so we look at where we really are and what companies are doing well. We look at the halo trade that became really hot. We look at all these types of things. And so I think that you're going to see companies that are going to do poorly in this environment for sure. And there are things that are overvalued. But when you look at valuations right now, they're not that high when we look historically. And so when we think about, where we were a few years ago compared to now, like we've certainly come down, and we look at some of these tech companies.
But that's an assumption that the macro environment is not so bad, right? Going forward. And that there's growth. And, here we are, if you think about this year, the military involvement, stagflation we've even talked about.
SaaSpocalypse.
Complicates things.
Yeah.
So let's just end with the SaaSpocalypse in the last 30 seconds that we have, because software stocks are under pressure today after the information reported that Amazon is working on a new AI product. The effect on AI on productivity. I mean, I know you can't talk specific stocks here, but how do you view that on the economy?
I mean, I look at it, at Ellevest, we always look for as a women's lens, and it's really interesting. And so you look at 86% of the workers that are going to be affected by AI and don't have adaptable jobs are women. And so that is an enormous amount. You compare that to like a financial analyst, which is a 99% chance of being affected by AI, but those workers are very adaptable.
Yeah.
And so you saw Jamie Dimon talking about this again today, and that the government is going to have to give incentives to the business community in order to create adaptability and training for these workers, because we cannot be in a world of this unemployment.
Well, listen, we've had conversations about a universal income that's going to be needed.
I think that's crazy.
Okay. Come back soon. Let's continue.
Yes.
Emily Green, she's head of private wealth management at Ellevest. Hey, guys, we're counting you down to the close on this Tuesday. Stick around.
This is Bloomberg Business Week Daily with Carol Nasser and Tim Stenovec on Bloomberg Radio.
All right, everybody, 7 minutes to go until we wrap up the trade on this Tuesday. Carol Masser, Tim Stenovec, live in our Bloomberg Interactive Broker studio on a day where watching the markets, a little bit of a bounce around here, definitely off our worst levels of the session. President Trump making some comments.